Very good morning. You're watching India Market Open, and I think the big lesson of the day is global equities, gold, silver, Bitcoin, copper, all asset classes, and traders in those asset classes are saying that the way we look at what's happened in Venezuela is and move on.
It doesn't matter.
It doesn't matter.
All-time highs.
It doesn't
All-time
matter.
highs. Everything under the roof is probably giving you returns.
I mean,
right
this is what is called risk-on sentiment, if any. Dow going up nearly 600 points. Gold up 2% overnight. Silver up 5%. Okay, gold and silver I can understand, safe haven. But I wonder what it is. I wonder why there is just no reaction or concern at all.
Well, the oil players in the US reacting positively is a pretty obvious sign. And a few others as well. But also the Venezuelan market moving up 17% in that trade.
Yeah. Are they cheering it, or what are they doing?
No, it seems like they're cheering it. It seems like they're cheering it because, I mean, the fact is that economy was broken. What has happened, I don't think anyone will say it's correct to flout any kind of laws, etc., and go in and swoop in. But the fact is that economy was broken. And maybe people and investors there think that if there are going to be large US oil companies coming in, pumping in money, it's good for everyone.
Yeah, I mean, look at a Chevron. A 5% uptick on a Chevron.
Yes. So that is what the mood is, and perhaps India will take it forward as well. Let's take a look at the setup for global markets before we move ahead. US markets have rallied after the capture of Venezuelan President Maduro. The Dow rose nearly 600 points. Pull up some of those indices, and it was not just energy companies, though energy companies played a huge part. If you look at some of the key indices, all in the green. AI trade is also back. So the NASDAQ also showing that kind of a movement, as was the Dow and the S&P 500. Energy companies are rallying in hopes that US oil companies will begin production in Venezuela. That's why you saw a Chevron rising about 5%. Meanwhile, Treasury yields have fallen after Trump has ousted Maduro. The 10-year was at 4.17%. I wonder if you can pull up the indices from last evening in US markets. That would be nice. Now, all eyes on December jobs report, which is due on Friday. 54,000 jobs expected to have been added for the month. So we'll have to wait out on that. That's going to be a good and a big one as far as the bond markets are concerned. Gold prices hit a one-week high after US has struck Venezuela. And of course, prices remaining volatile as far as oil is concerned over oil supply. Brent was at $61 mark, so you had a bit of a spike over there as well. I want to pull up Asian markets for you and see how Asia is open. Implied in India also looking pretty positive, but Asian markets also largely opened up in the green. And let me go across right now to Natasha Israni, who is our correspondent in US. She's filed this report on deposed Venezuelan leader Nicolas Maduro and his wife, right when they were pleading not guilty in a New York court after being captured.
Deposed Venezuelan leader Nicolas Maduro pleaded not guilty, claiming that he was innocent on the U.S. federal charges of narco-terrorism against him, appearing at the federal courthouse earlier today and also taking copious notes. He appeared along with his wife. Now, outside the courthouse for hours now, protesters as well as supporters of Maduro have been gathering alongside police and a lot of press, often getting into skirmishes. One side arguing, Venezuelan immigrants here in New York arguing that Donald Trump had done the right thing by bringing the Venezuelan president to the New York on narco-terrorism charges, saying that he had destroyed their country. On the other hand, we also spoke to those who said that President Donald Trump has set a very dangerous precedent by nabbing another leader and then bringing him to U.S. soil. So we're going to see a protracted legal fight now start here in the U.S. federal courthouse come March 17th, which is when Maduro is going to make his next court appearance, and he is going to argue that he has sovereign immunity. We'll see how that plays out.
That was a report from ground zero where all of this was taking place. Now, very interesting, right? The questions about valuations come back into the fray. Guys, interesting point, right? The S&P 500, I was reading this, the price to sales ratio at 3.3 is at a record high. So US equities are at all-time highs, and also those valuation metrics, people are starting to talk about it. I wonder if that will reflect in flows at all. It hasn't reflected in yesterday's trade. And that's interesting, right? Because you had a pretty large gross buy number and a pretty large gross sell number for foreign institutional investors, but net negative, just a small number for foreign institutions. Equity markets actually declined, led by large cap stocks, and it was a choppy day of trade. You had the Nifty 50 that lost about 1/3%. HDFC Bank almost single-handedly dragging the benchmark into the red. In fact, if we have that contribution picture, you will get the clear sense of what I'm talking about. And there you go. 88, 89 points or thereabouts contributed by just HDFC Bank's 2.2% or 2.4% decline. The Nifty 50 gainers and losers, though, were evenly split. And Reliance Industries, TCS and SEL Tech also underperformed. HDFC Bank's loan growth was the problem, and that was displayed in their quarterly update. Broader markets actually outperformed, with the small cap index ending up with gains of about 1/3%. You had realty and defense as packs that outperformed with gains of over 2%, and the IT space was a rank underperformer. It lost 1.4% at the end of the day, having recovered quite considerably from the low point of the day, as much as 1%. And the market breadth also favored the declines in a nearly 2:1 ratio, slightly less than 2:1 actually. And the Nifty Bank, this is something that you should watch out for in trade today as well. It showcased quite a bit of resilience, particularly when you consider HDFC Bank's slide. So that 60,000 mark is going to be critical to watch.
Absolutely. You know, that is going to be one of the most important monitorables in today's session as well when you talk about Bank Nifty, because the slide that we saw in HDFC Bank, that led to a lot of other banks also coming under pressure. It was only CSB Bank which was actually holding up really
15%.
strong. Yeah, I mean, 15% is the kind of gains that we saw. So monitorables in terms of HDFC Bank, absolutely key when you're talking about that 60,000 level. But apart from that, if you see in terms of Nifty, I mean, it's record high levels for second consecutive session, right? So that 26,373 now becomes the new Nifty record. So watch out for those levels pretty closely in trade. In fact, you know, the Nifty, if overall, there is that struggle when it comes to sustaining above 26,300 as well. Now, it is Nifty today, so it's going to be important for Nifty to defend 26,200 in trade on the downside and 26,300 in trade when you talk about the upside as well. So those are the levels that you should be tracking. And as Alex and I mentioned, that important to monitor Bank Nifty after the fall that we've seen in HDFC Bank yesterday, because if that pressure continues today, it does take the other banks lower as well. In fact, key driving factors would be the upcoming Q3 result season. We're watching out for Union Budget 2026. The capex picking up ahead of the Union Budget is going to be one of the themes that we should be watching out for as well. One of the things that we want to talk about is Bitcoin. Now, fifth consecutive day of gains for the crypto major. It's up by 6.5% in the last 5 sessions, and it's actually marking its fourth attempt to cross that $94,000 per mark since November 2025. Now, if you talk about January, Bitcoin has given positive returns in 4 out of 5 times in the month of January, and it's really generated around 9.6% in terms of average returns in January in last 5 years. If you talk about Ethereum, it's given positive returns in 3 out of the 5 times in January, and it's return of the popular cryptos in January that has come in as well. So if you look at in the last 4 to 5 years, you'll see the kind of returns that we've seen when it comes to cryptocurrency as well, where 2023 you saw 40% when it comes to Bitcoin versus a 32%. In 2021 you saw 78% on Ethereum. Now let's see what 2026 has in store as well. So it's going to be interesting to see how the Bitcoin play actually comes up as well.
Yep. In fact, I think if I zoom out a little and I look at the factors today, first on list and will be what's happening globally, because that's where the handover really is coming from. I'm going to pull up what's happened to the US markets overnight, because that's where we're getting the cue from, where you've had the Dow go up nearly 600 points, and that's a really positive handover, 1.5% there. The Nasdaq up about 1%. Over 0.5%, so was the S&P 500. That handover moving into Asia as well, and we'll pull up those Asian indices for you, and the kind of euphoria you're seeing. I mean, the Venezuelan markets on one end, I found that astonishing that that's actually going up, but even the Hang Seng, the Nikkei and the Shanghai all up in the green. Pull up the India implied. And, that really sets the pace for what you might see today, a 65-point opening. Remember, the implied yesterday also showed a very positive opening, and that's not how markets open, so this could be deceptive. Keep that in mind. But if you look at some of the updates, the public sector banks were shining yesterday, and there were specific, mid-sized banks also which were doing well, CSB, etc. I think it's the day for private banks to shine. Kotak Mahindra Bank, Axis Bank, the kind of updates they've given are much better than street expectations. We'll talk a bit about Trent and some of those others. Trent is a bit of a mixed bag, but the BFSI pack in the business update cycle starting off strong is definitely a positive sign. Now, even technically, if you take a look, based on the technical data and early global indicators, the Indian markets are looking at a gap-up opening. This is fueled by a record-breaking rally on Wall Street and positive momentum in the GIFT Nifty. Indian markets, meanwhile, face a tug-of-war between strong corporate business updates and technical resistance levels. The Nifty 50s achieved a fresh record high yesterday of 26,373. but closed 120 points lower. So holding on to those gains is a bit difficult. The focus now shifts to whether it can sustain these levels during the weekly expiry. The index is holding above the crucial trend line support at 26,200, keeping the broader trend positive. Immediate support at 26,200 to 26,150. A breach here could lead the index towards 26,100 to 26,070 zone. For resistance, it's stacked at 26,300 to 26,350. A decisive move above 26,400 would open the doors for 26,500. As far as the Bank Nifty is concerned, immediate support at 59,700, 59,800, positional support at 59,300. Resistance needs to clear 60,300 to 60,500 to regain its bullish momentum. So one of the key factors would definitely be the weekly expiry. Let me go across to Puneet for more on that.
Well, thank you for that, and good morning to all three of you. It's been a interesting session yesterday because while for the Nifty there was the bearish candle being formed, likely signaling consolidation at the all-time high levels that we achieved on Friday, it was a day where individual stock movers dominated the news flow on the back of either quarterly updates or news flow, and that's very visible in the stocks also. When you look at the Nifty as well as the Bank Nifty, yesterday we did see an increase in open interest for the Nifty 50, but largely consolidation and downtick below, closing below the 26,300 mark. For the Bank Nifty as well, it has been an area of strength, and as you rightly said, Kotak might be one of the key stocks that will give a positive fillip to the Nifty Bank. While for Axis, I think because the historical trend of the company, largely a lot will be weighted on of what the NIMs are in the quarterly results. So while the update has been quite positive, Street might be a little skeptic in believing what could have an immediate impact on the NIM because of that. Finally, in terms of stocks, both open interest gainers and losers will show you a big, huge trend in open interest of a short build-up being formed in Premier Energies and Vari Energies. Premier and both of these counters are actually down almost 20 to 25% from its highs. So it'll be important of what happens in the trading session for these stocks. While for losers, there's not too much in terms of trend being formed, low single digit. So we'll watch out for those counters, but individual movers continue to have a larger impact. Watch out for Mahindra as well on the back of their new launch, and Tata Motors on a week quarterly update. So the auto pack will continue to be in focus yet again.
Auto pack in focus, that Mahindra & Mahindra launch definitely. Tata Motors updates weren't that great, and I'll come to it. But I'm going to start on my watch list with Axis Bank. And total deposits for the business updates came in ahead of the Q3 numbers. Total deposits were up 15% at 12.61 lakh crore. Gross advances were up 14.1% at 11.71 lakh crores. Citi has maintained a neutral with a target price of 1,323 on the stock. They've said that advances growth has outpaced the system average by more than 200 basis points. LDRs have contracted. Corporate segment is anticipated to have gained traction, while the retail segment also has likely recovered. Deposit growth surpassed advance growth, among the few banks to report an LDR contraction. Definitely a thumbs up as far as Axis Bank is concerned. Now, Kotak Mahindra Bank, let's get to that. Also better than expectations. Net advances were up 16.2% at 4.66 lakh crore. CASA was up 9% at 2.1 lakh crore. That's the current account saving account ratio. Total deposits were up 14.7% at 5.26 lakh crores. Here's what Jeffrey says. They maintained a buy with a target price of 2650. They've said steady growth in loan and deposits. Period end growth rates were similar to quarterly average growth. Average CASA growth was slightly low at 9% year on year. Citi has also maintained a buy with a 2565 target price. They said the third quarter advances are broadly in line with the Q2 trajectory. They continue to handsomely outpace the system average of 11.6%. So expect some positive moves perhaps both on Axis and Kotak Mahindra Bank. As far as Tata Motors is concerned, it's not been great. JLR retail sales were down 25% at 79,600. JLR wholesale were down 43% at 59,200 units. Volumes in Q3 were initially impacted by production stoppages because they had that big cyber incident. So that really has impacted more than anything else as far as JLR is concerned. They have followed a similar mid-20s fall in sales in Q2 FY26, and the year-to-date sales picture now looks bleak because wholesale volumes for the financial year to date were 212,600, which is down about 26%. Retail volumes for the financial year were also down about 19%. So, you can expect a weak Q3 in terms of financial numbers. So this is Tata Motors PV impacted by JLR, as we have been saying. So those are the first three on my list.
Just a quick point on Tata Motors. It's interesting that this is all coming at a time when things are not going well for the PV business.
Yeah.
The CV business being separate is actually a good thing for investors.
Them. Yeah. On hindsight, this has been a good split.
Yeah, and the way people are actually betting on Tata Motors CV, they're actually calling it a multi-bagger.
100%. Yeah. An important point. It's getting its due. A lot of people in the company as well arguing about a decade back, why are we not getting our due as a leader in the space? Let's talk about the stocks on my list. L&T Finance is up front and center for me, and this because the disbursements numbers in the retail space look incredible. 49% increase on a year-on-year basis, 22,690 crores. Some might argue, yes, it is a relatively low base when you consider the kind of lenders in the industry and the kind of bases that they're sitting on, but 49% still is a very, very handsome number. The retail loan book has grown by as much as 21%, standing at 1.12 lakh crore rupees. Citi has weighed in on L&T Finance. It has maintained a buy with a target price of 330 rupees per share. That's not too far away from the current market price. But what are they saying? They're saying that the disbursement growth was robust at over 40% and 19% growth sequentially. The retail AUM growth surpassing 20%. The borrowing costs may improve further. Remember, we're in an interest rate declining scenario, and this is good for companies like L&T Finance. Operational expense ratios are set to be broadly stable going forward, and Citi is expecting a return on assets at 2.4%, which is pretty healthy as well. The second stock on my list is MV Photovoltaic. This is on the back of a brokerage note that has come through. It is actually an initiation by Jefferies with a buy rating and a target price of 320. That's quite the upside that they are seeing. The brokerage note is actually titled Riding on Tech and Too Cheap to Ignore. They say that India's solar installations are set to grow at 24% compounded over the course of FY25, that's the last financial year, to FY28. And MV's early entry into a few of these segments is actually going to benefit them. They are they've got an adequately funded balance sheet and they have a competitive edge. The industry profitability should normalize going forward is what they're saying. And from FY28 onwards is when this normalization will take place. They expect that the company will have a steady state high teen return on capital employed, and they're also projecting a 56% EBITDA compounded annual growth rate over the course of FY25 to 28. And what's more, they say that the stock trades, according to them, at a 50% discount to peers. Let's talk about Utkarsh Small Finance Bank. Not the best numbers. And there's actually a story to tell here, and there are a few possibilities. I'll get into that in just a bit. The gross loan portfolio has actually declined year on year by 4% and 2% sequentially, and that loan portfolio drop is on account of a fall in the joint liability group portfolio. Now, what does that mean? Essentially, these are loans to groups of individuals in the microfinance space, they're non-collateralized. So basically, these are microfinance loans. That portfolio has dropped 34% year on year and 15.7% sequentially. What does that tell you? There are three possibilities in my opinion. Of course, that is going to come through in the earnings. One is that people have repaid their loans and these have been closed. Two, there are write-offs of loans that have gone bad. And three, there is a sale to an asset reconstruction company, in which case this is explained. The deposit growth is actually pretty steady, and the concerns about the delinquencies in the space, or microfinance space, are easing somewhat. Why? Because the collection efficiencies for current borrowers, and that means that those that don't have any existing loans that are overdue, that stands at 99.1%. So at least the current borrowers here are giving the money back. So that's a positive.
A positive there as well. In fact, the ones which I have are all from the consumption pack on the back of the business update. It's very interesting because optically when you look at a trend, a 17% growth looks pretty strong. But when you adjust for the adjustments that they've made, it actually comes down to 15%. And that is a downer which the street is not really liking. They've opened around 17 stores in terms of West Side and 48 stores of Zudio. In fact, the West Side store opening has been strong, whereas Zudio is tracking lower versus what you saw in FY25 as well. Now, the average revenue per square feet trend is also remaining weak. That's what it comes across. You have City, which has maintained a sell. They have a target price of 4,350 on the counter. And what they're saying is it's the higher store additions that is driving the revenue beat. However, your average revenue per square feet trend is still weak, and they remain cautious on trend given a still weak revenue per square feet trend. They're seeing increasing competition, impact of cannibalization, and new store expansion in tier 2, tier 3 towns as well. Morgan Stanley has maintained an overweight. They have a target price of 5,456 on the counter. They're saying that according to them, it's an inline quarter. And from here on, they're expecting the standalone EBITDA margins to decline by almost 97 basis points to 17.5% in the third quarter as well. UBS has maintained a buy with a target price of 6,200. They're saying that no respite from weaker growth trajectory is what they're saying. Q3 is weak again at 17% and has missed expectations. Moving on, you have AWL Agribusiness. Now, it's again below expectations, dragged by weak performance in the industry essentials oil segment. In fact, your food and FMCG has seen a recovery, but it's industry essentials which has dampened growth. And they've said that the festive demand remained muted during the quarter as the trade operated with lean inventory levels. The sales value increased by 5%. Overall volume growth grew by a modest 1%. And your edible oil and food and FMCG segments both saw a 3% year-on-year volume growth as well. And it was a 7% decline when you talk about the industry essential segment. In fact, the alternative channels, particularly quick commerce, saw significant growth with a 65% increase in volumes, and the company is expanding its distribution network. Moving on, Dabur again. Now, you have your HPC and international businesses which have been very strong. Beverages have remained weak, but in spite of this, it is kind of a thumbs up is what brokerages are indicating so far. They're expecting consolidated net profit to grow faster than the revenue growth going ahead. And the revenue is expected to grow in mid-single digits. India home and personal care business is expected to grow in double digits, whereas your healthcare business is expected to report low single-digit growth. Approximately 95% of Dabur's portfolio has continued to outpace the category growth is what they have indicated in their update, leading to a further market share gain. If you talk about their channel and international trends, they've said that the rural demand continues to grow faster than the urban demand. So that is something which could be a dampener because expectation or all eyes have been when will the urban demand actually pick up pace. Digital commerce, including e-commerce and quick commerce, has maintained strong double-digit growth, and your international business, they've said, is expected to achieve near double-digit growth in rupee terms. And they've seen strong performance in regions like MENA and Bangladesh. So a thumbs up coming in on Dabur as well. But it's going to be interesting to see how FMCG actually pans out, because it's been a very topsy-turvy cycle for consumption right now.
Yeah, I mean, some views that FMCG could be the contra play.
Yeah.
But the business updates are truly a mixed bag. One thing that caught my eye yesterday was this exchange filing by a company called Hudson Agro.
Yeah.
And I don't know if you guys saw this.
I saw it.
I mean, talk about unfortunate fat fingers. But, you know, credit to the company that they have put out all of those details, and otherwise their corporate governance track record so far has been good. So, you know, here's what's happened, guys, and this is why it's a bit of a blooper. Hudson Agro put out an exchange filing saying that one of their key managerial personnel uploaded the first cut draft of their unaudited financial results on their WhatsApp status by mistake, is what they're saying, at 5 in the evening, and it was seen by 19 people, including insiders of the company, before it was deleted. They've decided to inform about this to the audit committee and the board of directors, and will also initiate an internal inquiry as per SEBI regulations and the company's insider trading code. So I think this is a good idea to err on the side of caution. But you know, in this day and age, when you work so much on your phone and you press the wrong button, these things can happen.
Yeah. I mean, it's just butterfingers.
Butterfingers, but also the Security and Exchange Board of India has the ability to track everybody in that individual's phone book, and if there are trades that have taken place,
or not.
Yeah.
So then culpability comes into play.
I suppose so. Has it ever happened to one of you guys when you are typing a message about someone but have sent it to them by mistake?
No,
you've been careful about it. Yeah, so careful about your WhatsApp updates, because they can turn into something that is violating SEBI regulations. All right, another story that we are tracking this morning. It was a big win for Adani Power. The Supreme Court has granted relief to the company, setting aside the customs duty on SEZ electricity. Varsha joining in for more details.
Thank you so much for that. You know, yes, this is a big Supreme Court win when it comes to Adani Power, because Supreme Court has ruled out that no custom duty is payable on electricity by Adani Power from its SEZ plant at Mundra to the domestic market. Now, in simple terms, the court said that the government had no legal authority to charge this tax. Now, here's the background. Electricity imports, if you see, were exempt from custom duty since 2002, but in 2010, the government imposed a custom duty on power sold from SEZs to domestic areas, while foreign power imports were exempt or were remained duty-free, and the Supreme Court said that this was discriminatory. Back in 2015, if you see, the Supreme Court had already struck down this levy. Despite that, custom authorities have charged Adani Power almost 500 crore in continued collecting duty after 2010 as well. Now, the Supreme Court had made it very clear that this tax itself is illegal and the government cannot retain the money. The Gujarat High Court's 2019 order has been set aside, and the court has directed custom authorities to refund the entire amount, that is 500 crore, within 8 weeks. So this is a major legal and financial win when it comes to Adani Power.
Okay. All right. Thanks so much for that, Varsha. And it's a stock that you should keep on your radar. Standard disclaimers, of course, that Adani Power is part of the Adani Group, and so is NDTV Profit through NDTV Group. We have to slip into a very quick break. We'll get you more stocks on the other side that you should watch out for, so do stay tuned.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
expert advice,
The latest trends. It's a lot simpler. We'll help people make the right auto decisions.
it's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew.
Welcome back to India Market Open. We've just pull up implied open because it is seeming absolute positive day. How sustainable it is going to be is the question. We have Parag Thakkar from Fort Capital and Kush Bohra in our studios as well. Welcome to the show, gentlemen. You know, Parag, let me come to you first before I take levels from Kush, because currently the situation in the markets is where you are seeing a lot of buying interest, but there is that little bit of cautiousness that does come in, right? So sustenance at levels of 26,300, 2 days we've hit record high levels. And a lot of shift that's happening in terms of sectors as well. There is sector rotation. Currently, I think all eyes now are on IT as well, because you have IT that will start reporting numbers. How are you looking at markets, and do you think IT is going to be a play that you should be watching out for?
No, clearly. So IT this quarter is seasonally weak. For Infosys, for example, H2 is seasonally weak. Of course, so we have actually lightened up our position. We have just bought Coforge into our portfolio after the fall, after this acquisition announcement, after the fall. So we are positioned that way. From market perspective, I agree that there are a lot of things happening, and so one cannot take a blanket market view. Right now it is stock specific, result season is there, so you have to back results where companies where the results are going to be good, commentary is good. For example, Marico's business update was good, commentary was good. Those kind of stocks, or somewhere where you are seeing a bottom. In this quarter, for example, there will be a bottom, like I said, cement and steel, where I feel that this quarter result will mark the bottom of the earnings. So it is stock specific, sector specific. As you rightly said, sector rotation has to be there. Because there are a number of moving parts. The trade deal is not yet announced. Plus, there are a lot of negative noises. So I would say that, yeah, it is time to be very, very stock specific actually.
What did you think of the business updates of private banks? I know yesterday you said this is only trailer, picture is yet to come. But for Kotak and Axis, it was indeed an exciting trailer.
So Axis deposit side was very good. 4.8% QOQ, 15% YOY. They have done fantastic. They have also done well, and of course the CRR cut also helped. So because there was liquidity in the market. So they have done very well on the deposit side. Kotak was also very good on the advances side. The only thing is that CASA growth of 9% was little bit muted YOY. Because Kotak has a superb franchise in terms of capital markets. So many IPOs were there. So I would have imagined that CASA would have grown at a higher rate in Kotak.
How do you compare that to an HDFC bank in terms of performance? Because that was the stock which actually dragged the bank.
So yesterday we discussed, right, that HDFC bank might see little bit of underperformance because their CD ratio is above 99% now. So market will doubt that whether they'll be able to grow ahead of the system which they have guided for or aspired for in next year. So, but one thing is that in historically, Q4 has been good for HDFC Bank in deposits. So if they actually can garner more deposits in Q4, then this doubt which has been raised yesterday will go away. But that we'll have to see, because that entire quarter has to pass.
Yep. What about technical levels this Tuesday morning? How is it feeling in the studio on Tuesday, Kush?
I was just going to say that this is what a Tuesday in the studios feels like. Huh?
Well, so what are you usually doing on a Tuesday morning, which is more exciting than this?
Definitely not this. No, but equally excited to be here. Look, yesterday we did have a pullback, but then mind you, we did speak of that, in yesterday's show, which is
1.46 का PCR overstretch थोड़ा तो हो ही गए थे. Some pullback was likely, and the markets were kind enough, for whatever reason, be it Venezuela or just a technical pullback, markets were kind enough to give us that. Now, if we again open, with the kind of cap up which the SGX is suggesting, I'm afraid the risk-reward ratio from a very near-term perspective, which is, you again go back to those 26,300, 350 levels, that just goes out of the window, and the very near-term trade is lost again. If you open flat, then you go out and take a long trade on the Nifty for about a 100-point target and about 50-60 point kind of a stop loss. Still remain very constructive on Bank Nifty. I mean, yesterday, if anyone would have told that Reliance, HDFC and the IT pack being down and the Nifty is just down about 60-70 points, we would have grabbed that with both hands, right? Higher high, higher low formation, PCR reset to about 1.1 again on the Nifty. So I think the structure is very much positive. Still maintain the medium-term target on 26,500, 26,800 on the Nifty. Buy on declines is the strategy. And if you want to go long, Bank Nifty is still the preferred index over Nifty.
Yeah. What about top picks this morning?
Yeah, from the broader space, since I realize that's the conversation that's been going around on the internet and on your social media feed as well. Shriram Pistons and RR Kabel, both of them very good run. Shriram Piston, after a brief bit of consolidation, has had 2 sessions of gains. Volumes also picking up, but the move itself is very exciting from the price action point of view. So for Shriram Pistons, 34.40, 35.25 are your targets, 32.80 is where you keep that stop loss. RR Kabel, this one's had a good run. 20-day moving average support kicking in, 4 sessions of gains, volumes fairly decent, and every day the stock goes up, volumes are also going higher. 1570, 1605, these are your targets. 1500 is where you keep that stop loss.
Okay, so interesting stocks, and we've already spoken about the financial space as well. We've spoken about a number of stocks, but what else is on the watch list? Take a look this morning, and quite a few interesting stocks. First up, you have Adani Power, and we've spoken about this. Significant relief in the way of custom duties, and this is on account of that court verdict. The second one is gold prices affecting gold lenders. You saw CSB Bank react quite positively to its business update. Watch out for Manappuram as well as Muthoot in trade today. 2.5% increase in gold yesterday. Hind Zinc, silver prices rising by 5%. All of this has to do with Venezuela, and Hind Zinc benefits because it is the only producer of silver in the country. Hind Copper, LME prices have also for copper have surpassed that 1,300 mark as well. What else is on the list? You have Brainbees Solutions, a significant purchase by SBI Mutual Fund. NBCC has got an order of about 134 crore rupees. Rajesh Power has gotten a BESS order, and you have D-Dave Plastics that is forayed into the BSS space as well. Suraj Estate Developers has sent out a notification saying that it's booked about 200 crore rupees of gross bookings in a new project over the course of 45 days. Body Energies has raised over 1,000 crore rupees for its lithium-ion battery business. Tata Power has installed as much as 1 gigawatt of solar power in the rooftop project. This is an important one to watch because of the potential that it has for various power companies going forward and office space developers. This is something that could be a negative reaction that you should watch out for. The CFO has resigned. By the way, we speak to the company later today, and we could well get an update on that. But let me go to Kush on this one. Kush, any of these stocks that stand out to you? Of course, you have been watching the metal counters. We spoke about Hind Copper. We spoke about the metal counters yesterday, and you said that they're actually poised for a decline. They could decline from this point. What do you think?
Yeah, very similar. The view remains the same. They're overheated. There is no favorable risk-reward ratio in most of these names to go out and buy now. Look at Hind Copper, Hind Zinc, even Hindalco for that matter. They are all overstretched. So you want to buy them on declines. So wait for some meaningful corrections, even if it's as deep as maybe 3 to 5%. That's when there'll be a little healthy and meaningful base formation, and then these stocks could move higher. So wait for that decline on the metal names. And mind you, markets have been volatile and kind enough to give us those declines, every now and then. So I wouldn't jump into the metal trade just yet. The index itself is overheated. As far as the stocks that you mentioned, those, Tata Power did give a big move, last week. But then yesterday's session, there was some consolidation. So I will definitely have this on my radar, but I won't go out and buy. If it's able to take out the last 2 days high, which is close to the 390, 395 mark, that's when some momentum could pick in. Otherwise, then there's a good possibility that this spike could well be an exit opportunity for whoever's been holding on to this for some time.
You know, a few other stocks that we should focus on this morning and see if they're going to have any action. I wonder in the oil and gas space, Pranav, I want your take on this, because after we've seen what's happening overnight with global oil companies, we didn't have too much of a reaction on an ONGC or an RIL in that sense. Do you think that that story is yet to play out if Venezuela does open up the way it seems it's going to?
I think it is going to take its own time. That's what market realized after the initial move up. So it is going to take its own sweet time for them to ramp up the production, for ONGC to get back its $500 million. All that is going to take some time. So
not necessarily you look at right now.
In fact, yesterday's move of oil companies in US, like Chevron was up 5%, is also a knee-jerk reaction, right? That suddenly US companies will invest in Venezuela and increase the production immediately. All that is going to happen.
You know, we were talking this morning, and we were talking about how equities, and not just equities, all classes have reacted to this news, and most have reacted positively. And you would not think that would be the kind of reaction to something this big. What is your take on that?
So basically, see, all this kind of geopolitical tensions, once again there is a safe haven buying. And on one hand, US interest rates are going down, dollar index is also at 98. So definitely it will push the precious metals even further more higher. But as Kush said, it is all, I think, overbought zone. So I will not get into this euphoric move of buying metals at this price.
Okay. To add to this, how are you looking at the consumption basket? Because the anticipation was that there could be somewhat of a revival when it comes to urban India. Rural is strong, but people are still not very, constructive when it comes to urban demand. You saw what's happened to a Trent. I mean, we're talking about a 17% growth, but if you correct for the previous base, it's around 15%. Analysts are not happy with that one. You talk about AWL Agri as well, again, below its expectations. Dabur commentary for rural is strong, urban is weak. If you have to put all of this together with what's already happened when you talk about GST cuts, which could have benefited, how would you advise?
So I think very clear, I am positive on this space. For auto, I was very positive earlier. Now I am turning to FMCG, but very select names. Marico, Godrej Consumer, Tata Consumer, Pidilite.
Okay.
These are my 4 bets where I am expecting double-digit EBITDA growth. And these are the names which I would like to...
What's the rationale?
So basically, I'll see Marico, for example, copra oil prices have corrected 30%. They are still correcting. So gross margin will further expand.
We talked about it yesterday. But Marico did not have that kind of an up move beyond a point.
No, that's okay, but it recovered from the low. When we were talking, it was 755 or 753. It closed at 773. Yesterday.
Are you disappointed with what you're seeing in Trent? Is Trent becoming DMart or going through the same problem as DMart?
No, not problem. I would say it's a 17% growth. I think analysts were expecting 20%. The stock still trades at 54 times FY28 earnings. So I would like to buy it at close. Last time when we discussed, I think it was 4,000, 4,100. That is a price where I will buy the stock.
And
Trent.
What about your charts?
There's definitely early signs of bottoming out. Volumes aren't supportive. There is price action because of the entire pack perhaps doing well. There is a falling channel resistance that also comes in. So I remain watchful, but not very constructive. I mean, the down move isn't really complete for me. There are some key levels that need to be taken up, perhaps 4550, 4600, that zone when the resistance will be taken up. So I remain watchful, but not very constructive. Yeah, on the names that Parag Bhai mentioned, something like a Marico. Marico actually yesterday gave you that rounding bottom formation breakout, with the kind of closing that it did. 765 was the previous swing high, even the previous day high was 765. So that rounding bottom formation breakouts come about. So there's a good possibility that this momentum could continue. And anyway, I think, the common stocks that we had in this space were Tata Consumer and Godrej Consumer, both anyway.
And I would add Pidilite to that. Please, continue.
So Pidilite is in your list of consumer
Yeah, because
plays.
it's a great company, right? 30% ROC, almost a very highly moated business, Warren Buffett kind of business, which you want to have.
Wow.
And now I think it will also show double-digit growth, at least on the EBITDA side, because they also have some tailwinds from margin benefits due to raw material weakness.
I would say Pidilite in the last 1 year, 6 months has been a negative and 12 months has been
It's
just
not
about
done too
4%
much.
I mean,
growth.
nothing
Yeah, so all these stocks have not done anything. As she was saying, that this consumption space has not done anything. So this is, but I'll be very selective. But all these four are my high conviction.
And
buys.
valuations are also stacking up well according to
So in these companies where you have a day-to-day usage, right, and longevity is very high, I agree that to pay 40, 50 times FY28 for 10, 12, 15% growth is not great in terms of PEG. But the longevity of growth is high. Marico, for example, you have a fantastic management, no corporate governance issue. Pidilite also same, right? So Godrej Consumer,
And
Tata Consumer.
On the valuation point, it's currently at 68 times trailing, and 3 years P average is what, 85 times?
Marico is 42 times FY28 in my view. And Pidilite will be higher. Godrej Consumer will be again 42 times. And Tata Consumer will be again little bit higher. But I think in this companies, what you have to look at that, see, your all the constituents of earnings are at the bottom.
Sure.
Volume growth is bottoming out and margins are bottoming out.
So eventually the multiples will look better.
Yeah. They might surprise people on the upside in terms of, and these are high quality companies. If you have it in the portfolio, there is no problem. They'll protect your capital.
Okay, so that protective seal kind of a job function for some of these companies. All right, more news coming in this morning. The Electricity Appellate Tribunal will hear IEX's challenge to the CERC order on market coupling in the day ahead. What we're hearing is that you might not get a final conclusion today, but it will be an important development to track. Varsha joining in to explain why this is key.
Well, thank you so much for that. You know, this case challenges CERC's order on market coupling when it comes to day-ahead market, and the outcome can change electricity price discovery in India. Now, IEX had moved APTEL against CERC's market coupling order, and CERC wanted to implement this order. While if I were to talk about the serious allegations raised in November, on November 28th, IEX said that they claimed illegal gains amount to 173 crore when it comes to CERC, and said that such claims had an impact creditability on independent regulator, and indicated need for a deeper legal scrutiny before enforcing new rules, and hence the hearing has been scheduled on 6th Jan, that is today. Now, what is IEX stand when it comes to market coupling orders? They say that market coupling will hurt its market leadership, and it can disrupt its 17-year-old proven market structure. Why? Because if you see, this will reduce IEX pricing power, and the volume may shift to the rival exchanges, as 85%, IEX has 85% share when it comes to spot market, and the core revenue which IEX derives is from transaction fees and price discovery, and this market coupling can pressure margins and intensify competition. And hence, if you see, the stock is down 4% since last hearing, that is November 28, and it is down 33% in the last 6 months. So overall, you know, we need to wait and watch what the outcome comes today. While also there's a second news when it comes to IEX on the Q3 business update, wherein if you see, the electricity traded volume is up almost 12%, and the December electricity traded volume, if you see, is up 2.8% at 11.44 billion units, and IEX traded 18.63 lakh renewable energy certificate, and the real-time electricity market volume, if you see, is up almost 36%. So overall, Q3 business updates or Q3 numbers seems to be good when it comes to IEX.
All right. So that's one to watch. I believe it's around 2 p.m. that you'll get some updates on this one. Don't be surprised if there's no verdict today, but it'll be interesting to hear the proceedings in court, and we'll bring you live updates from there. We are in time for Heard on the Street. Before we do that, let's take a very quick watch on IEX. How does it look on the charts?
I'll make it quick, even I'm looking forward to hearing Somit. Ever since the stock fell late July, 130 has been the support range, very close to that, and on the upper side it's 150. So if you want to make a range play on IEX, this is a good opportunity. Small quantity, tight stop loss, you could consider a long trade, but like I said, high risk, high trade, small quantity, and a tight stop loss at 130.
Okay, what else should you keep on your radar? Somit Sarkar joining in with Herd on the Street. Somit, very good morning to you. What's on your list today?
Good morning, Alex. Multiple stocks that remain in focus. Firstly, it's Sammaan Capital. Now, we had seen a surge in the share prices in the last half an hour of trade yesterday. Now, what dealers are indicating is that there is a possibility of a positive news flow coming in regarding an RBI approval. So keep an eye out for Sammaan Capital. For MTAR Tech, there are buy flows on large HNI desk, and dealers are indicating that the third quarter numbers could be quite strong for this company. When it comes to NMDC, there are sell flows on institutional desk. Both foreign and domestic institutions have been selling this counter. So keep an eye out for NMDC as well. And when it comes to MCX, there are buy flows on PMS desk. Dealers are indicating that the strong volume trend that we had seen on the MCX platform in the Q3 is continuing even in the month of January. So that is one stock that we need to watch out for. And CDSL, that stock was under pressure for the last 1 month, but now dealers are indicating that the selling pressure is largely over on this counter, and this stock could see a bounce from the current level. So keep an eye out for CDSL as well.
Okay, so interesting names that you're watching out for. Thank you, Somit, for taking us through these names. But anything, Kush, that comes to your radar? Because I think MTAR was something which saw some strong move in yesterday's session. In fact, the entire defense pack was buzzing in trade. And you have IEX, which is in focus, and now some bit of information coming in on MCX and CDSL as well from a capital market perspective.
Right, so IEX we already covered, tight range play on that. MTAR not very constructive because there are multiple resistances and the stock's not able to hold the highs of the day. So you're seeing rejection and supply pressure from 25, 30. That zone is seeing selling pressure, not just yesterday, a few days back as well. Two stocks that excite me from that list. One is Sammaan Capital. The stocks had a deep correction, 200 moving average just about tested, and then the stocks on the way up, volumes also very healthy, very favorable risk reward ratio. So if you want to enter a trade, a positional long trade by the way, then Sammaan Capital is something that you can consider with a stop loss at 140. Also MCX, this is a buy on dips kind of a stock. Every time you get any kind of a 3 to 5% dip, you should go out and enter. Right now, momentum indicator is a little soft. The stock going through a consolidation phase. I honestly hope that you don't get any kind of a gap up opening after what Somit's mentioned. If it opens flat or maybe a little soft, then you'd actually have an opportunity to go long on MCX. So MCX and Sammaan Capital, these are the two stocks that I have on my list from what Somit mentioned.
Yeah, I don't know if you guys have seen what Avendus Spark has said on NSDL, and I thought this is something they were talking about. They've initiated a sell with a target price of 900 rupees, and the reason they say is that NSDL lost market share in demat accounts. Demat account market share decline led to market share loss in most revenue streams. Annuity and recurring income from annual issuer charges is growing at lower pace. Benefit of mandatory dematerialization of shares of private companies has played out. NSDL is now more dependent on pledge income versus settlement fees to report growth in transaction income. EBITDA margin to be lower versus CDSL, and generously valued at 40 times FY28 estimate core PAT. I just also want to pull up what it's done since IPO. It listed in August of 2025. So since we were talking about CDSL as well, NSDL, just your views on some of these observations that have been made?
No, so basically I don't cover this space too much in depth, and as such I have told you that I am not very big bull of capital marketplace, really, except for IPO, except for ICICI Prudential.
I think it's been the biggest trend in the last 12 months.
It's okay. So some of the trends, it's okay. But I would say that, and especially as you are saying, right, markets will be a little bit choppy here or there, and in such times I don't know how capital marketplace can do, except for AMC company like ICICI Pru or
Any view on a Sammaan Capital? Because Kush is talking about the charts, but there were a lot of question marks which led to that price erosion.
That were all the issues of past, so I don't think that should get reflected in the future. The issues were all past issues under the previous management.
Correct.
And now to IHCL, this fund has acquired a big stake. So I think things will change, and the valuations are very, very cheap.
Yeah.
I don't own the stock, just to put a disclaimer, but I'm saying.
Yeah.
Right now, my view in the market is stick to quality, stick to what you know.
Yeah.
And as much as possible, stick to domestic themes.
I mean,
Well-
you can't get more domestic than capital market plays. Just
That
saying.
is true. No, but ICICI Prudential Mutual Fund is my pick for playing
2026?
the capital market space.
Yeah, yeah. NSDL, you have enough data for take on the charts? I think August is when it IPO.
I do, and in fact, that's when even when Somit mentioned and Hiral asked, CDSL was there in the mix, but that didn't pop because it's just not going anywhere. If at all, it's just seeing some correction and a negative biased consolidation. The same thing applies for NSDL also, by the way. Ever since it listed, there's been a falling channel, and right now the stock's attempting to break out. Now with this news, perhaps that breakout attempt could fizzle out, and it could just consolidate with this negative bias. So I wouldn't really buy into it. But one space where Parag and perhaps I differ is the capital market space. Could be the fact that I hail from the industry, the capital market industry. We all do.
You're
I'm in
biased.
the broking industry. I am biased, so I look for opportunities. So BSE, 361 WAM, Nuvama, some of the pockets that I still find attractive.
Okay, that's fair enough. All right, let's talk about BFSI, and we've spent a little time talking about it, but then it bears repeating in certain cases and bears talking about because there are so many updates. Let's bring in Sharad to give you a wrap of what you should look at before the start of trade. Sharad, morning.
Good morning, Alex. Yesterday we saw HDFC Bank and Bajaj Finance on the lower side on the BFSI space, but today, surprisingly, the updates have come on a very stronger basis. Kotak Bank, if you look at it, the CASA growth is expected to improve because of the cost of funds in Q3 odd numbers, and the NIMS, that's expected to improve from the third quarter as well. Looking at the headline numbers, the total deposits went up 15% on a year-on-year basis, and even advances saw a strong growth. Up next, Axis Bank, strong numbers coming in. Advance and deposits growth were better than the Q2 estimates. And also, the same story plays out that NIMs are bottoming out in the third quarter. Deposits up 15% and advances up 14% on a year-on-year basis. Surprisingly, L&T Finance, the retail numbers were very, very strong in the operational update. The retail disbursements went up 49%, and the loan book, look at that, that's up almost 20% coming in at 1.12 lakh crore rupees. The retail AUM growth has surpassed the 20% mark. But IndusInd Bank, there are mixed trends coming in. The net advances was down 13% and deposits also fell 4%. But net, the operational data is suggesting a kind of a mixed trend going ahead.
Very interesting. Thanks so much, Sharad, for that. And I want to focus in on L&T Finance because that 49% retail disbursements growth, Parag bhai, it sounds incredible. Of course, the base is much smaller. 22,000 crore rupees disbursements. What do you make of that?
No, so see, basically, as in the past, I have told like Piramal Finance, PNB Housing Finance, where we have made, by God's grace, a very good alpha on them. L&T Finance was also one of the stocks which we like, but now it has run up a lot. Sure. I would say that I would not read too much into 49% disbursement growth. In fact, I would say that any financial company should not grow at more than 25% CAGR.
Okay.
Because your entire ecosystem, your team, your collection efficiency is not geared to grow at more than 25-30%.
You can make mistakes.
And we have seen in the past, right, that there are many shocks. There are many shocks when somebody was growing at about 30-35%, and then there was an accident after 3-4 years.
Yeah.
So I would say that one has to have a control. For example, this time Piramal Finance has a 25% growth. Right? I think 25% growth, where is it in the world? So if you grow at 25%, it's fine.
Yeah.
So I would say that just to conclude,
doubling
L&T
every
Finance,
3 years, it's fine.
Just because it has rallied a lot, I will not be a buyer at this price. Otherwise, the business update was good.
Okay, all right. So bear in mind that absolutely frenetic growth may not necessarily be a good thing. We have to slip into a very quick break. We will also speak to Sumit Jain of CLSA later on in the show about the trends in IT and more. But first, the pre-open session and market open. Do stay tuned for that.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends.
It's a lot simpler. We'll help people make the right auto decisions.
It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
New year. New power panel. India market open. Now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Welcome back. You're watching India Market Open. Pull up the implied and you will see that we may see a better start than was expected. But remember, this was what was promised yesterday as well from the implied, and that's not quite how we went. We did hit an all-time high though yesterday and then retrace. 62 points up is what we're saying. Before we move ahead and get you the top calls before markets start in the next 15 minutes, just want to highlight what CLSA is saying on its India strategy. And this is a note by Vikash Kumar Jain. He says we could see another year of muted returns. 2026 feels only a bit different. Reduced relative premium to peer markets should improve the acceptance of India as a portfolio hedge against global risk from consolidation in the AI bull market or an unwinding of the yen carry trade. He argues for extended absolute valuations may keep absolute returns muted yet again in 2026. This year may also lack new policy news, but this depends on the benefits from the announcements made in 2025. Favor the consumption rate sensitive and IT segments. Boost consumption exposure by adding Eternal and DMart to the India focused portfolio and exit from Reliance and Nestle. So that's the take coming in from Vikash Kumar Jain. In some senses, echoing what you're saying, Parag Bhai, on the consumption question. So he is going in for Eternal, which is not in your basket, so to speak. But I don't know if that is tad more pessimistic than is warranted. We have yet to see how Q3 plays out, and the first signs are pretty good.
Yeah, so basically we'll see the budget. I think budget is very important. See, government...
You think so? Yesterday we spoke to someone, Sandeep Tandon said budget is not important. Why do you say budget is important?
My view, it is very important. So because you know, government and RBI, we have seen the trend, right? They are doing whatever it takes to keep our growth above 7% in irrespective of tariff uncertainty, irrespective of geopolitical tensions. Like RBI giving liquidity to the market, cutting repo rates by 125 bps, government doing GST cut, income tax slab increase. So I will say now the government, now budget has to continue this reform journey. And I think there'll be something, this is my wishful thinking, something for stock market also. In the budget, this is my wishful thinking. I don't have any access to any information. But I'm saying that government and RBI will, you know, they are doing whatever it is good, whatever is good for economy and markets. So they'll continue that trend.
But very quick point on this, because markets are already open. The first ticks are on your screen. This is a pre-open session, remember, quarter of a point, a percentage point in the red. But if you can say last budget was the focus on consumption, right, and trying to bolster that leg of the economy, would you say that it's likely that this time they'll focus on expenditure?
I feel that they will do whatever it takes to unleash private sector capex.
Okay.
One is by boosting consumption, which they have done by reducing GST and interest rates by 125 bps. Something more, you know, reforms in terms of, you know, ease of doing business side, something they'll do to attract investments in manufacturing, which will create jobs. Otherwise, this AI will take away jobs.
No, I just on the point of a breather on taxation for capital markets in the budget. That's what the entire market always hopes for every year, but it's not entirely off from making a case for it basis, because the way volumes have shrunk after F&O squeeze and those regulations, a lot of retail investors who were there just for F&O have moved out, which is not necessarily a bad thing, but then it has impacted volumes overall. So they might be, let's incentivize people in equity.
Plus, I think government would also want a strong capital markets because they would also like to, raise some money by, doing some OFS in their PSU companies also. So I would say that there'll be something. So government will try to do whatever it can. That much I am confident.
I'm going to be curious to watch that STT collection figure because I don't think that it's going to come to what 75-80,000 crore that was budgeted.
Which was budgeted in. Yeah, maybe not with the kind of drop in volumes that we've seen. Okay, pre-open are beginning to trickle in, and you're once again seeing some of the metals shining. Look at the wire companies today. Motherson Wiring about 3% up. Hind Copper, we told you copper prices have zoomed overnight. That is playing out as well. On some of those updates, I want to see what's happening with a Kotak. I want to see what's happening with an Axis. Some of those business updates were quite positive. Kotak Mahindra Bank about 0.5% right now. Axis Bank 1.5%. Let's pull up a Trent, see what's happening there as well with some of those business updates coming in 3% down. We told you Trent is facing some pain points, especially in Zudio. We asked the question, is it facing slowing growth as well? Remember, these are pre-open rates, so these will settle. I want to look at Tata Motors as well. Let's look at Tata Motors very quickly. Tata Motors PV, because they had their updates coming in, slightly negative right now. And like I said, all of this will settle. But time to go across to the big brokerage call of the morning. And LTI Mindtree is on the radar of Citi. Sharad Dubey joining in with more.
Well, already we are seeing a lot of downgrades coming in the IT names. Yesterday, CLSA also downgraded a couple of names, and today Citi has also downgraded LTI Mindtree. They have maintained sell rating target prices of 5,480, but interestingly, they have opened a downside 30-day catalyst watch. That means by definition the next 30 odd days the share prices will be on the lower side. Now they have stated that the investors' expectations of a double-digit exit revenue growth for FY26 and double-digit growth for FY26 looking difficult right now. Further EBIT margin improvement may not be easy given the sectoral pressure which is coming in, and the valuations, speaking about that, they are closer to a faster growth companies like Coforge and at a significant premium trading to the large caps as well. They're expecting that the Q3 numbers might reset the expectations going ahead, and the risk reward ratio is not favorable for LTI Mindtree.
Okay, interesting. A few of the names that stand out, right? Very interesting names at that. And from the ones that are losing ground, I'm looking at the broader market index. You have Trent that is now down 5%. HDFC Bank for a second day in a row might just be a culprit that will pull back the benchmark and keep it grounded, or if at all in the red, because it's losing over 2% right now. You have SBI Life that is down about 1% or thereabouts, but not too much in the way of big losers apart from what I've mentioned. Hind Copper gaining about 2.8%. Cera Sanitary Ware, one of the top gainers in the broader markets, up about 3%. That might just settle. It might just be the pre-open session that is giving you a little bit of Chalawa as Kush mentions.
Kush is expanding Alex's vocabulary.
I'm always happy to add. But any of the names that I pointed out that stand out to you, Kush?
I'd actually like to make a comment on Hind Copper and Hinzing. We were just having that discussion right now as pre-open started, right? That कुछ भी करो हर दिन हम कुछ भी बोले ये ऊपर ही जाते रहते हैं, right? In fact, Parag Bhai and I were having a discussion off air yesterday is that this is a market that's hungry and that wants to go up, and that's why what you often see, and I've seen this since last November, is that the pockets that show strength, they go, they rise, but the momentum is so fast that they go into overheated territories and then fall off a cliff. Remember November end, you had the IT and the entire banking pack, even if I can broaden that discussion, the financial pack running up so high so fast, the markets came close to the new highs. And then the index and some of the stocks became overheated. Same thing is happening with metals right now. Same thing happened with auto. So point being that there are these bouts when the market that really wants to go up finds areas of strength, but because they are far and few in between and limited, they just go overheated. Hence the suggestion that if you have a position in these names, metals especially right now, continue to hold. But do you make fresh ones? Not really, not now.
So no fresh positions when you talk about Zinc, Copper, both. I think Kush is having an IT moment right now, that you had a couple of weeks ago, right? Parag bhai, metals is a cyclical, but do you think this is the time, maybe for the next shorter term period, could be a good opportunity yet?
So basically, just to be this thing, I had Hindalco and JSW Steel in my portfolio. Steel, I think, is at the bottom of the cycle. Aluminium, structurally there is a deficit-ish thing, so it might continue to go up. But I might book profits also in Hindalco because it has given a very good returns in last 3-4 months.
You hold it though?
Yeah. But from 675 to say closer to 900, I think it's a very good return. So, and yesterday also aluminium was up significantly. So I think it should do well today also.
I think we need to talk a bit about Trent. And look at what Trent has done in the pre-open session, which was ended 5% down. Undoubtedly, you're going to see weakness when it opens. Those business updates. So Zudio basically tracking lower. There's no respite from weaker growth trajectory. That's what UBS is saying on Trent. Q3 is weak again at 17%, misses expectations. Citi has maintained a sell. In fact, Citi's target price still above where the stock is right now at 4350. They are cautious given a still weak revenue per square feet trend. See increasing competition impact of cannibalization and new store expansion in tier 2 and 3 towns. That's Citi's take. Now, just want to come in on, and I'm revisiting Trent. I know I spoke to you about it earlier also, Parag bhai, but if you see this kind of an opening for Trent, do you think that you will go in and buy if there is a conviction on the company, or you would stay away right now?
No, as I said, 4,000 to 4,100 is a decent price to start looking at it.
Not too far away.
I'm not saying it is a table thumping buy, but to start looking at it. It's a decent price. So I would not be an aggressive buyer.
Let me ask you this. You spoke about the 17% growth and the street expectations for 20+%, right? What according to you is a reasonable expectation for growth at this base for Trent?
Yeah. So that is it. Now, see, when stock went to 7,000, it was showing 30-40% growth. That is the problem, right? That market extrapolates it, that this 30-40% growth will continue. Yeah. Like, for example, today everybody will extrapolate that copper and silver will just continue to go up. Life is not like that. Nah? It cannot continue forever. So it will fall also.
17% is okay for you?
So as a company on this base, 17% is okay. But for 17% growth, whether I'm ready to pay 54 times FY28 earnings is a question I have to ask to myself.
No, I think the cannibalization question is also important. Trent starts lab-grown diamonds, then Titan also starts lab-grown diamonds. So, what really is happening? Is tier 2, tier 3 expansion, the whole Zudio story, has that played out at current valuations? I think some of those.
But I think it is not something which I would say clearly avoid. Okay. I'll start. It's a great quality company. West Side and Zudio store openings are good. So definitely it is worth a look, but not aggressively. I would say it's not an aggressive contra buy.
And 4,000, 4,100. What about you, Kush? Levels for Trent? If you're going to see an opening like this and maybe lower, would you look at it?
No, I'd wait. And Parag bhai is constructive at the 4,000 level. I am a little skeptical at the 3,950 mark. The reason for that is if you look at the last 2 years chart for this, that 3,900, 3,950 band has been the long-term support zone. And then you've got a descending triangle formation, which is not a very healthy sign, by the way. So while the 4,000 and 3,900 mark remains a strong support zone, my concern is that if that is broken, then you're seeing the downturn of a 2-year long negative biased consolidation trend. So that's when things get a little tricky. So I will be a little watchful. 3,900 is a very strong level for me. If that's broken, things could get worse.
Okay, another stock that we should talk about is L&T. This is Incred's view on L&T. Stock is flat today, but I thought what they're saying is interesting and we'll highlight it for you. Incred is saying near-term order flow has likely peaked. Core segment, that is domestic, they expect a 19% year-on-year dip in the second half of orders for FY26. Core segment of global, they expect order flows to dip as well in the second half. Risk of moderation in sales growth in Saudi Arabia post FY27. I thought this was worth highlighting because L&T was the hottest stock in the last 2 or 3 months, and a lot of it bases the kind of orders coming in from Saudi Arabia, expansion, etc. Do you think that cycle may have peaked?
So basically, stock hit the 52-week high very recently, and so we have booked out some profits in L&T, and will be a buyer on dips. But let's see. But I would not rule out what you just mentioned, that there are many lumpy orders in last 6 months. Especially last quarter the order inflow was above 1 lakh crores. I don't think this number will get repeated again and again.
So if you were a viewer or someone who's watching this and holds L&T, would you say book out?
So basically, if you are a very large fund, definitely, of course, you will hold on to your L&T position. It's a large cap stock, nifty weight stock. But I would say that at these high levels and after seeing such large order books, see, company is doing everything right. From management perspective, full marks to them. They have divested their stake in Hyderabad Metro. They are going to sell non-core assets. They are going to improve ROE to 18%. The intention and everything is superb. There is no doubt about it. But the order inflow thing, and they'll meet the guidance also, because first 6 months already itself the order inflow growth was very high. So I would say that, but the order inflow amount will start to moderate. That I agree with in this particular note.
Okay. One more I want to ask you is with regards to where ITC goes. I mean, we have been seeing pressure. You have Macquarie as well, which has now downgraded the stock to a neutral from a buy. They've cut the target price to 330. So pretty close to the current market price right now. And they're seeing a 15% hit when it comes to cigarette volumes. They're cut their FY27 and 28 EPS by 18% and target multiples as well, to actually factor in unfavorable growth environment. Parag bhai, with this kind of a scenario on ITC, would you now be a buyer? Because your stance has been really different all this while. Yeah. You have been a buyer of ITC. Is this an overhang which probably is now going away, which, street is digesting?
So I am saying that, see, we have to change with the data, we have to change with the facts, right? And the facts and data both have changed. So I was liking it at 400. But luckily, by God's grace, I was having just 1% in the portfolio. And in this correction, I have added another 1%. If it falls to say 330, 340, I'll add another percent. That is my view on ITC, because the facts have changed. Of course, the volume will degrow now.
So there you have that countdown to the opening bell this Tuesday morning. We were hoping for a positive opening, but that's not quite what the markets are showing us. We'll see the Nifty here in the middle place. The Nifty about 0.25% down. The Sensex about 0.5% down at this point. So you are seeing some pain point coming in. The Nifty about 0.25% down. Now I want to see the Nifty IT and what is happening there. You're seeing the broader markets also not too good. Some recovery in the Nifty ID. That's interesting. We'll pull up some of those individual stocks as well after we come into the heat map. Let's pull up the heat map for you very quickly and just take a look at what's happening there. So, you are going to see some uncertainty coming in, and maybe that pull down coming in because of Trent, 7% down. We've been talking to you about Trent for the last 6 minutes on before markets have opened, because there is a problem. There is a problem with growth that their business updates are showing, and the street is definitely seeing it. The reason why you have so much green on the screen and still the Nifty in the negative is because the heavyweights are not playing ball. HDFC Bank about 2% down. Reliance Industries about 2% down. Tata Motors PV, we told you about those Jaguar Land Rover updates. We gave it a thumbs down this morning on our watch list. That's not working either. So between these 3 or 4 stocks, that's where the pain is. Meanwhile, what's moving on the positive side? Hindalco about 1.5% up. HDFC Life doing okay. We told you Kotak Mahindra Bank, fabulous business updates. The street is taking it well. Some recovery that we are seeing in IT as well. So TechM is doing okay this morning. And you're seeing some of the banks also fine. ICICI Bank coming in. HDFC Bank really is the dragger there. Bajaj Auto shining in. JSW Steel, Tata Steel, some of the steel pack shining in. So overall, the breadth is actually fairly positive. Why it's not managing to pull the Nifty up at least is because the heavyweights are not coming in. Let me pull up the contributors for you, and that becomes an even clearer picture of where the pressure really is. HDFC Bank, that heavyweight really dragging down the markets. I think in a contrast of what the street has now seen with business updates of Kotak Mahindra Bank and Axis, HDFC Bank is looking maybe even weaker. RIL also there, adding some pressure, as is Trent. There was a clarification this morning from RIL about a news report about some Russian bound or tankers from Russia bringing in oil to RIL. They have said that this is not true at all. Nevertheless, you're seeing pain on that stock coming in, as is ITC. So quite a remarkable kind of an opening, Alex, because I'm sure if you pull up the advanced decline ratio when that data is available, you'll see broadly it's not half bad. See, there you have it. It's not that bad. Advanced to decline is closing in though very quickly, but it's the heavyweights that are definitely not joining.
Absolutely, and Reliance Industries, HDFC Bank, two of those proving to be a drag. HDFC Bank for a second day in a row proving to be a drag. Let's talk about the sectoral indices and just see whether that's mirroring what you're seeing on the benchmark as well, because you had more green on the screen for the benchmark. Remember, you have metal index that's once again up and about, and we'll talk about a few of those constituents in just a bit. What else is doing well? PSU banks once again in the limelight, and that continues to be the case. On the other end of the spectrum, this, I would hazard a guess to say, this is on account of Reliance Industries, just purely basis the weight that it has in that oil and gas space. Infra not doing okay. Media, don't pay too much attention to that. It is not that large an index, but having said that, not too much in the way of big losers. Let's talk about individual stocks, and there is this bevy of stocks that are in focus on account of updates. So let's run through the list. You've already looked at Kotak Bank, you've looked at Axis Bank. Axis Bank was up about 0.5% or thereabouts. Let's talk about L&T Finance. 49% increase in retail disbursements. It's up in about 2% or thereabouts. IEX, remember, it's in focus on account of that court case with regard to the market coupling, but it's also sent out an update about its increase in traded volume by about 12%. So it's up in the green, up about 0.8%. Dabur reacting to updates. It expects that there will be an improvement in the PAT number, but there are concerns about a few segments that it operates in. The stock is down about 3%. We highlighted this for you before the start of trade. Adani Ports reporting an increase of about 9% in cargo handled in December. The stock is down about 0.6%. SAIL, there's a report that came through that spoke about an increase of as much as 37% in December. Is something to watch out for. Tata Motors PV, this is on account of Jaguar Land Rover losing about 2.5%. Woeful set of numbers in terms of volumes, and that's going to reflect in the third quarter results as well. IndusInd Bank, all told, it was actually a positive because they're not losing as many deposits as they might have otherwise. So this is better than expected from that perspective. It's up about 0.2%. Utkarsh Small Finance Bank has seen a reduction in their microfinance loan segment by as much as 30% or more than that. And there are questions about how that has come about. Maybe there's a little bit of concern ahead of the results. What else is in focus? Trent, we've spoken about that. Where does it settle right now? It's gone further lower. We should speak about this in more detail. 8% is where it's at right now. AWL Agri also not the best set of numbers in the updates that is shared. Volumes have grown in single digits, low single digits at that. Other updates, Adani Power, there is a tailwind in the form of customs duty relief. Muthoot Finance, Manappuram Finance reacting to gold, which has moved higher. It is at a 1-week high. Hind Zinc, let's pull up that if we can possibly. Silver prices are up and about. Hindustan Copper also doing particularly well. Then Metal Pack as a whole reasonably doing well. Brainbee Solutions finally reacting to an SBI mutual fund purchase. it's down about 0.8%. NBCC has a small order win, about 130 odd crore rupees, and office space down about 1.8% on account of a CFO resignation. We will speak to the management in just a bit. All told, some pretty recognizable names taking it on the chin today, among them Trent. It has to be the story of the day.
Trend has to be the story of the day, and that consecutive sessions of decline on an HDFC bank is also catching my eye right now, because that pressure has continued. Apart from that, KSH on the back of the business update is also in focus. If you pull up that one on the screen, you'll see the kind of reaction that's coming in on that counter. Apart from that, the metal pack continues the upward journey. So Moil, Hindalco, Vedanta, Nalco, all of them seeing a strong day of trade. Hind Copper on the back of copper again hitting record high levels is also seeing a strong day in today's session. MB Photovoltaic, we've already mentioned on the back of a brokerage note. Interesting day of trade coming in when you talk about MB Photovoltaic, 8% up move on that one. And apart from that, few of the other names that we've been tracking as well from the broader markets, SAIL is one. Let's pull up Swiggy Eternal, because on the back of the entire gig worker strike, there is momentum in both these counters. Let's see what Swiggy and Eternal are also doing in trade. Eternal down around 0.6%. Swiggy 3.5% downtick coming in on that counter. So it's going to be interesting to watch out for. But I think Trent.
Swiggy, there was a large trade as well. So which details came out yesterday. I think Cyrus Poonawalla has taken up a stake. But anyways, there's some slide. I can't take my eyes off Trent. Trent is the story this morning. 7%, nearly 7.5% down at this point. What was so painful in their business update? Mahima joining in with more details.
Right, so Tamanna, overall, if you take a look at how Trent has performed in the last year also, it's down 40% and the top loser on the Nifty 50 for 2025. And overall, from its list, inclusion in the Nifty, it's almost down 48%, including today's loss as well. So, I mean, it's been 6 consecutive quarters where Trent has done that sub 50% growth, and that growth has been declining every quarter, and that is the reason as to why the stock has been continuously facing this kind of pressure. Overall, if you take a look at the Q3 business update coming in, the standalone revenue growth is at that 17% mark, but at the rebase numbers, that is including GST and their operating revenue income, analysts are expecting that this could be around 15%. Westside store opening was strong, but Zudio store opening was less than what was done in FY25 Q3. So that is also something that probably the analysts are not liking, because that will probably hamper their total store additions happening for the target that they've set for FY26. Plus, average revenue per square feet has been declining, and this is of course because they're expanding a lot in terms of Zudio stores. In terms of the past 6 quarters that I've been talking about, Q3 FY25, the growth still stood at 34%, of course sub 50% that the street was not liking, but still at 34%. Then it came to 27% in Q4 FY25, to 19% in Q1 FY25, to around 16% in Q2 FY26, and Q3 FY26 at that 15% mark. So I think that declining trend of growth in terms of where the revenue stands is one of the reasons as to why the street is not happy. Plus, what is the reason behind this decline in terms of where the revenue stands? Of course, on a very high base of that above 50% mark is what we saw, plus aggressive store expansion happening in Zudio, which is hampering the overall average revenue per square feet sales. And lastly, store cannibalization. Now, this could be one of the major factors that we'll have to watch out for once all of these store additions that take place, operate at full capacity, that store cannibalization is happening in tier 1 cities or not. So this is the overall view of what's not working for Trent.
Quite a few things. Apparently, the street is definitely not happy. Very quick call, Parag, by Trent, 4130. Is it a buy?
So it is in my radar now.
Now it's in your radar.
I will not comment further. It is on my radar.
RIL, HDFC Bank, the other 2 culprits.
So again,
on the
Reliance
Nifty.
we hold, so basically I think it is
huge knock. Huge knock this morning.
Check that why it is so much down. Of course, because of this Russian cargo thing, I think.
Yeah, there was a Bloomberg report saying that there
3 containers.
3 containers carrying Russian oil are heading for Jamnagar. They have come out and clarified, no, that this is not the case.
Yeah, so I think any such big fall is a buying opportunity in my view. If the situation is not going to escalate further, so I'll have to do my channel check also.
HDFC Bank.
So HDFC Bank again at around 950, 960, it's a decent buy, but the market will look forward for March quarter deposits.
Sure.
Seasonally, historically, March quarter deposits have been strong.
Will you buy any of these three before we wrap?
Reliance. Reliance is something that's on my radar. HDFC wasn't doing much anyway before the fall. So from a long-term perspective, sure. But if you want to make a positional bet, I think Reliance is the stock to go to. The medium-term structure was positive, and then the breakdown came about. So if any clarification comes about, you could see the stock recover quite sharply.
Okay. So those were the three big losers this morning.
And I think the deal in terms of today's day of trade is all to do with the large caps. I think it's the broader markets which are very silent, but the swings in large caps is very...
No, and the pain is concentrated.
Yeah.
So
two of your heaviest counters.
Three of the heaviest, HDFC and RIL.
Both of them. And you have, you look at the contribution, if you can just have a quick contributor slide in terms of Nifty 50, and that will tell you the entire story. There you go. RIL, HDFC, 175 points contribution is what you're talking about from the top.
Just the two.
All right,
that's all the time we have. Kush and Parag Bhai, thank you so much. We'll see you back tomorrow. You're going to meet Kush Bora and Parag Thakkar every morning on India Market Open. So make sure you stay tuned for their views, analysis. But we're focusing on the IT sector right now. I'm quite excited about this conversation. CLSA has come out with a detailed report on the IT sector outlook and Q3 preview. The report signals caution after the recent rally, with muted growth ahead and selective downgrades. HCL Tech and Tech M see ratings cut, while Persistent and Coforge remain top picks. We'll dive into what's driving the calls on this with Sumit Jain, Senior Research Analyst at CLSA India. Sumit, thank you so much for coming in. And, IT stocks took quite a tumble the day after your report was out as well. Just let's understand why you think some of the major names or the larger names are going to see pain.
Well, I guess clearly the broader discretionary demand has not revived in the markets, and obviously December quarter is seasonally a weak quarter in terms of furloughs and holidays. And I guess other than the BFSI vertical, we are not actually seeing any strength in the other verticals, particularly for the large cap players. And that's where, based on our discussion with the company management going into the silent periods, we could sense that there is further constant currency growth estimate cuts for most of the large cap players. And that's where, the sector did relatively well, I would say, in the last couple of months, on the back of expectation that the US economy will remain resilient next year going into midterm elections. And that's where, we could see that HCL is trading at a premium to Infosys and TCS, and obviously going forward for the next 2 quarters they are weaker than the December quarter. So that's where we have downgraded HCL. On Tech Mahindra, we still have a outperform rating, but I guess the near quarter is going to be weak. The conversion of order book to revenue has been slightly muted for the last couple of quarters. And then in terms of the margin expansion ramp up from here for the next 4 to 5 quarters, the ask rate is pretty high for them to achieve their FY27 vision. And that to some extent is in the consensus estimates as well as at the price. So that's where, we removed it from our high conviction list, but still remains one of the outperform rated stock, and along with Infosys, the top 2 picks in the large cap space.
Interesting. Okay. Sumit, morning. Alex here. I specifically want to ask you about Coforge because this acquisition has led to a bit of a divided opinion. Some have actually said that it is accretive, and despite the price that is being paid, it's actually going to be quite positive for the counter. And you've actually maintained an outperformance. You've hiked your target price. Are you in the camp that says that it is positive, and why do you say that?
No, clearly, I think, we see a lot of complementarity and synergies out of Encora for the Coforge combined entity. Now, if you look at the geography cut or industry vertical cut or the capability cut, almost on all 3 fronts, there are a lot of cross synergies between Coforge as well as Encora. So clearly, if you look at what management highlighted, Encora is largely focusing on Midwest and the western part of US, whereas Coforge is concentrated more on the eastern part of US. In terms of industry verticals, high tech and healthcare will become a scaled vertical going forward. And Encora is more around AI engineering, cloud, and data. And I guess this is what you need going forward in the next 5 to 10 years, when the AI applications will be up and running in almost all the devices we are using, as well as on desktop. So we clearly see that there will be a lot of synergies, both on revenues as well as on cost. Maybe, in terms of the price they have paid, we clearly see that to be slightly stretched. I think that's sort of one concern, but overall, we believe Coforge will continue to deliver a mid-teens kind of earning growth going forward. And I think the recent correction in the stock because of this large acquisition and potential fundraise, which the company is still not very sure of, it gives a great opportunity to, buy into a great quality asset.
Right. Sumit, good morning. Hira on this side. It's a very interesting time where you've come out and said that this is a time where you should reduce your position in the sector, where majority of the fund managers that we've spoken to, at least I have spoken to, have come out and said that probably 2026 is going to be a year where IT will be one of the top performing sectors as well. Now, it really contradicts both the scenarios, right? At this point in time, what is it that will make you change your stance to a buy or start adding positions when it comes to IT? What are those factors that you will be watching out for?
Firstly, I think in terms of the contradictory statement, just want to clarify the money that we are talking about to take away from IT sector is more to do with the couple of downgrades we have done. We are still outperform rated on TCS, on Infosys. Even Tech Mahindra is still outperform, but not a high conviction outperform. So on a relative basis, we are recommending within the sector to reduce the positions. But yes, for the overall IT sector, our India strategist is quite positive on IT because of potential India-US trade deal resolution, plus the rate-sensitive sectors as well as consumption story. So in that sense, CLSA as a house is still positive on the IT sector. But within IT, of course, we are recommending to reduce positions in certain names. But yeah, I think there are a lot of triggers for the sector going ahead in terms of the US macro, the tariff resolution of US with various countries, the H-1B visa rhetoric fading away, and the expectation. I think the most important point is whether this sector will see earnings upgrades going forward. And there we believe the downside risk to street estimates for FY27, which is building in a 4 to 6 or 5 to 7% kind of constant currency growth, the downside risk is fairly low to those estimates. So yeah, for the overall sector, we are still quite constructive as a house.
Just trying to understand some of the factors you've talked about, Smith, and wanted to come into them. In terms of the India-US trade deal, arguably, the tariffs, etc., and everything that's happened in the last 12 months did not impact IT directly in any real way. Is there truly an upside if there is a resolution on the trade deal? And if so, in what substantive manner would we actually see it coming through? Because the issues seem to be what's happening in the US economy, discretionary spends, etc., which don't seem to be going away.
No, I think from the earnings standpoint, you are right. It doesn't really change the needle. But from the sentiment standpoint, from the narrative standpoint for export-driven sectors out of India, I think the valuations do take a knock whenever these geopolitics play out. We have seen when H-1B visa fee was hiked in September, there was a significant cut to the valuations of the sector. And I think over the last year, we have seen whenever the India-US trade deal resolution or otherwise is in the news, the Indian IT sector valuations do react to it. And that's where we believe, that the India-US trade deal resolution would be sentimentally positive for the entire export basket out of India. Maybe for IT sector, it doesn't impact the earnings directly.
Just to round things off, you've spoken and we have spoken primarily about the large caps, but if you were to extend it to the entire space, then what would the pecking order be from your perspective?
No, I think great question, and that's where we are more positive on the mid cap names like Persistent, Coforge, LTI, Mindtree. So we have like almost 18-20% upside on LTI, Mindtree, and almost 40 to 45% upside on Coforge and Persistent. where if you look at persistent Coforge, I think for the last 5 to 7 years, they have been consistently delivering a strong double-digit earning growth and a sort of de-linked to macro, created their own niche and delivering almost 3 to 4% kind of a sequential constant currency growth every quarter. So I guess both those companies have their unique strengths, but I think given the revenue size they have of $1.5 to $2.5 billion, they are in a very sweet spot to capitalize on the AI tailwind going forward, where for the large cap players, they are probably facing revenue deflation on the legacy business. So we have seen time and again, whenever these technology cycles every decade play out, the mid cap players who are executing well, they are actually able to repivot their business towards the new technologies much more easily. And LTIMindtree, I guess, under the newly appointed CEO, has shown signs of improvement. They have won 4 large deals in the space of 6 to 8 months and are now guiding for a high single to a low double-digit growth in the next 3 to 6 months. So, of course, LTI and Mindtree, before the merger, both of them had performed brilliantly well. And I guess now, under the stable management, they are again recouping those losses and able to consistently deliver probably a high single to low double-digit kind of an earnings growth.
Interesting. I'm sure we're going to speak soon enough. The earnings season kicks off next week, and I'm going to be very keen to read what you think about those numbers. Thanks so much for joining us today. All right, let's talk about the primary markets, because 2025 was a blockbuster year for the Indian primary market with, take a breath, 1.76 lakh crore rupees raised via IPOs by 103 main board companies. 2026 also promises to be an action-packed year, with over 200 companies eyeing the primary markets and set to raise as much as $30 billion, with names like Flipkart, PhonePe and Reliance Jio set to hit the Lal Street. We're going to talk about some of this and what it means for the secondary markets as things stand right now, but to set things up for this very interesting chat, we've got Sharad Dubey joining us. Sharad, what are the key numbers to focus on?
Alex, 2025 was big. It seems like 2026 will be much bigger. Looking at the numbers, of course, first let's look back. The IPO mobilization, the numbers was at 1.76 lakh crore rupee. That's an all-time high levels I'm talking about. Also, approximately 103 odd companies has raised this amount, and this is largely from the main board IPOs. The fund raised at 10% more than the preceding year as well. But overall, if you take the definition of fund mobilization, it also includes QIP rights. Over there, we see that public equity fundraising has declined by 18% on a year-on-year basis. This equity fundraising declined on a lower basis. This is because of mobilization through FPOs and OFS. Let's look at the digital numbers, how it's actually panning out, and we have taken the numbers on a calendar year basis to see where the momentum is happening. Overall, the total equity raise, this also includes IPO and other secondary deals, that was at 3.73 lakh crore, and that's coming in at almost 3.06 lakh crore rupees. So that's where the secondary market, we saw some kind of fundraising emotions were dented. A fresh capital, almost 57% of the total equity mobilization was there compared to 65% coming in. Also, the largest IPOs in 2025, let's take a look back. Tata Capital, 15,512 crore rupees was raised, followed by HDB Financial, and from the MNC place, we had LG Electronics. Also, the retail investors' interest, that's also very much important. The interest levels dampened compared to the previous year itself. Average number of applications was roughly 15 lakh in 2025, and 2024, it was on a higher side. It was more than 18 lakh. That's where the retail interest was coming in. Apart from that, the applications, LG Electronics, Misho and Standard Glass Lining come into this picture. But overall, the outlook 2026 remains really strong.
The outlook remains strong from the point of view of the companies. Definitely, they will be raising a lot of money. Does the outlook remain strong for you as an investor? I think is also the valid question. Thank you so much for that, Sharad. Pranav Haldia, Managing Director, Prime Database Group, joining in this morning, as is Deven Choksi, Managing Director of DR Choksi Investment Managers. Welcome to both of you, and thank you so much for your time to us here at NDTV Profit. Pranav, I'm going to start really with your take. Do you think that appetite remains after what we've seen through 2025, which was listing pops getting weaker and weaker, and maybe subscription levels also dwindling in some select IPOs.
Yes, good morning, Tamanda. Thank you for having me. As your colleague rightly pointed out, 2025 was a blockbuster year, and one of the things which we pointed out was this is the first time in India's IPO history that you've seen two back-to-back years of all-time highs. Because if you go back, 10, 15, 20 years, you've always had an all-time here and then a couple of years of relative quiet. Now, where is this coming from? So, to answer your question, much of this is obviously being funded by, retail investors, either directly or through mutual funds. That's where the demand is coming and which is creating the supply of companies that you see. As you correctly also pointed out, in 2025, you've seen a slight tapering of demand. If you look at oversubscription figures, if you look at applications, if you look at listing needs, because ultimately you have to realize that most of the retail investors come in for a listing pop, and you've seen a reduction from 30% to 10% from 2024 to 2025. My view remains that, there is, of course, a lot of demand for fresh paper. We have to realize that, mutual funds are flush with money. They're continuing to get crores of rupees on a month-on-month basis. There's only a limit to which they can invest in the secondary market where there are already valuation concerns. So, of course, there is a requirement for fresh paper to be invested in. But I think for this trend to continue, and of course, while the pipeline looks extremely strong for 2026, I think, valuations, of course, need to be kept in check, and the secondary market needs to support. Given that, we could perhaps look at another blockbuster year in 2026.
Okay, interesting comment there. Pranav, I wonder what Devin Bhai thinks about this, because the numbers, let me put a few numbers there, right? If you look at the recent flows for SIPs, we're talking about 30,000 crore rupees on a gross basis, and some might argue that the net number is lower, but we're still talking about fresh deployment of 30,000 crore rupees, most of which heads into equity mutual funds. There is no question about ammo. So therefore, Devin Bhai, do we see another year where valuations get questioned on an ongoing basis for this primary market issuance?
Good morning, Alex. Well, I think 2026 is going to be the year of execution. As I see it, I think vis-a-vis the exuberance that we saw in 2025. In fact, in the second half of 2025 itself, I think the reality check has come in, wherein most of the companies who priced themselves higher in the IPO, they saw the reality check, and probably I think most of them, I think, had to come down below the IPO price, given the kind of valuation at which they were quoting, versus the valuation, I think, which is a realistic valuation. Fortunately, in 2026, I think we're starting the year with some of the large cap companies available at a fairly attractive valuations, I think in a vicinity of around 20 times price earning ratio. So that's where probably I think you're likely to see the equal amount of allocation of money, if not more, from the mutual fund side into some of those companies, because they're proposing to have higher amount of return in the portfolios of the investors, including in mutual fund. Whereas I think the reality check would prevail upon in this year, wherein some of the large companies like Geo Platform, NSC, Flipkart, Oyo, those kind of names, I think, which are likely to hit the market in 1 or 2 quarters from now. Given that kind of a situation, I think they would possibly be, I think, pricing their IPOs, I think, at a realistic level. As against, I think, they priced, earlier companies priced, I think, in 2025 at a significantly higher premium. So that's going to be one change in 2026 that I'm expecting, believing that 2026 could be a rewarding year to quality companies vis-a-vis, I think, the number of companies which came in 2025. So those quality companies could possibly command, I think, higher amount of take from the investors, both the retail as well as institutional segment of investors.
That's an interesting point to make over here as well, and the kind of IPOs that are coming in. Pranav, let me come to you as well. Now, if you have to look at, the markets versus the kind of returns you're looking at from IPOs, there is a frenzy and valuations are very steep, and that's what we've seen in history as well. At the juncture where equity markets are, where people are expecting a further upside to come in, would you say it is more lucrative to enter into the secondary markets or in the primary markets?
Well, my view remains that I think we should stay away from generalizing as far as the IPO market is concerned. Yes, there will be all kind of IPOs, some which would be richly valued, some would be moderately, and some would be attractively valued. So we should, not generalize. My view remains that if an IPO gets subscribed even a single time, it shows that there was enough demand for that IPO at that price. And, ultimately valuation is an art. It's not a science. And, it is because of this fact that we have a stock market. If everyone had a consensus on valuation, there would not be any stock market. At the same time, we need to understand that both companies, which are the issuers and the merchant bankers, they don't want the IPO to fail. So as such, they would always price the IPO in a manner that at least guarantees a minimum one-time subscription. This is even more true in the current market where you're seeing a plethora of choices as far as investors are concerned. We also have to realize that promoters, most of the IPOs which come to the Indian market are promoter-controlled, family-owned businesses, where even post-IPO, promoters continue to own 75, 80, 85%. And if the stock price does well post-IPO, it is actually them who will gain the most. Even the merchant bankers, they have to face the same investors time and time again, and hence, they would not, continually overprice, so to speak, the IPO. In my view, the real proof of the pudding also lies in the fact that you've seen in the last 3-4 years, which have been a boom time for the IPO market, you've still seen about 94 companies which are looking to raise 1.4 lakh crores, which did not launch their IPOs, which led their approval lapse. So we have to realize that, getting the SEBI approval is literally the last step before an issuer can launch the IPO. And if there were 94 companies which did not launch, what was the reason behind that? That was purely because of valuation, because the valuation which they were expecting is not what the market was giving to them. So I think we have a check right there that companies which are expecting a higher valuation and investors are not providing it, they let their approval lapse.
Yep. It's a fair point. Devin, my last word to you, and I'm going to extend this beyond the primary market to ask about the secondary market. We're poised at a time when we've seen a time correction. The question is, how far does that go? One of the arguments that was made last year is that the primary market issuance and the amount of paper that was hitting the market was proving to be a drag for the secondary market. Does that continue in your opinion? Does that prove to be a major weight on the heels of the Indian equity markets, or does that change on account of earnings in your opinion?
So frankly, I think the domestic investor did their bit in the last year also by way of investing into the secondary market. It was largely the foreign investor who pulled the money out of the secondary market, and that's where I think the larger fall had taken place. In my viewpoint, I think 2026 starts with the promise that I think the money is going to flow in and not going to flow out from the foreign investors. So that is the first proposition. Second, given the kind of SIP book growth that we are seeing in the mutual fund, is expected that I think this chunk of money is going to get invested equally into the secondary market, largely because of the fact that the valuations are giving too much of comfort today to most of the fund managers. So that is where probably I think we are likely to see, if not more, I think the balanced amount of fund getting invested into the secondary market with the primary market. The new issues in the primary market certainly are some of the large ones, and I think that's where, which I mentioned, I believe that I think that's where majority of the fund investors would be putting in money, because I think those people deserve to be in the portfolios of the investors. So from that perspective, I would not say that I think the secondary market would get the same rough treatment which it got in 2025. On the contrary, would believe that 2026 would probably give a fair allocation to secondary market as well, given the kind of flow that we are talking about. Also, the fact that I think the retail consumer and the investor is getting more amount of money left in his hand, given the kind of tax break that they got last year. So that money is also likely to come into the market, I believe.
So I think the money that's going to flow into the primary markets is something we need to watch out for in 2026, and that's the key. Thank you, Pranav. Thank you, Devin, so much for joining us on the show. Always a pleasure to speak to you, both of you as well. But let's quickly slip into a short break. Up next, we'll be speaking to the management of Office, multiple upgrades and target price increases that are coming in this space as well. Let's understand from the management what's in store for 2026.
New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit. Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends.
It's a lot.
Welcome back. You're watching India Market Open. All right, corporate focus, and we're speaking about and to office. Now, after the company announced a leadership change and a major business restructuring, the board has accepted the resignation of CFO Ravi Dugar effective February 2nd and appointed Sumit Rochlani as the new Chief Financial Officer. Before we speak to the management, not just on this, but also their outlook for the year, let me bring in Anushi to set up that conversation.
Hi, morning Tamanna. So a couple of updates is what we are seeing from Office Space Solutions. Firstly, you just mentioned about the managerial key personnel change that we are looking at. So that is one aspect that we should be seeing. But apart from that, the board has also approved the disposal of its design and build business. And do note that it is going to, this was a vertical which contributed about 23% of its FY25 revenue. This slump sale is expected to be completed by February of this financial year itself. But here the catch is that the buyer is Office Transform Private Limited, which is a wholly owned subsidiary of the company. So how this recheck in terms of now this business being transferred to the subsidiary will enhance the operational capabilities of the business or efficiencies is something that we should be asking the management from. Apart from that, if we just talk about what has happened in the quarter gone by or at the first half that was there, the company reported operational seats and total seats growth of 33% and 23% respectively. In fact, they added over 8,000 seats in the second quarter and 14,000 seats in the first half. Currently, it has a portfolio of around 247 centers. This includes about 170,000 seats. Do note that it retained its revenue growth guidance of 30% and raised the capex guidance of 220 crore versus 180 to 200 crore seen earlier. So this is the overall perspective that we have for Office Space Solutions.
Okay. In fact, I'm going to take that question to Amit Ramani, CMD of Office Space Solutions. Amit, hi, Tamanna here. How are you doing? And good to chat with you again. Yeah.
Same here.
Let's start with this change in key managerial position with the CFO. What has happened there?
So Tamanna, obviously, transitions are part of our business continuity. Sumit Rochlani joins us. It's Ghar Wapsi. He was with us for almost 2.5 years during some of our toughest times during COVID. And he's coming back, 15 years plus of experience, can hit the ground running, has the complete experience of the business. In fact, set up the business to a level where we in 2024 went in public, right? So I think that's great from that standpoint. So we don't see any challenge because the finance team is well structured. Our foundation, our overall teams, including our CEO, Sumit Lakhani, our COO, Manu Dheer, our head of real estate, Dipayan, have been there from the start with us. So I think this is part of the transition, and I don't see any challenges going forward. The financial discipline that we have maintained, the governance levels that we are strong in we'll continue to be strong in those areas.
Sure. What is the reason, though, that Mr. Dugar is moving on?
It's better personal opportunities. I think he was the one who took us public, and he was the one who drove us to that, and clearly he is looking for opportunities for his personal growth. So no other reason.
Okay, I'm going to take a cue from my research analyst, and very good morning to you. Thanks so much for taking the time, and wish you a happy new year. Alex here. So I want to ask about the design and build business that you are moving effectively to a wholly owned subsidiary. As my research analyst pointed out, it contributed about 23% of your revenue in FY25. I'm just trying to understand what the implications will be on the margin and the bottom line heading into FY26.
So overall, at the holdco level, it's a 100% owned subsidiary, right? So when you look at the overall financials, there would not be much of a difference. But now you will be able to clearly see the co-working managed office business and its margins, EBITDA and PBT, as well as in the design build business, you will be able to clearly see the margin profile, right? Both businesses are complementary. Clearly, I think I've said it in the past that the design build business is a key ingredient to a successful co-working and managed office business. Clearly, quality of design and the speed of execution are key differentiators. And I think with this, the leadership of the design build business under Office Transform Public Limited will be able to focus on not just delivering for office, but also for third-party design and build solution for other companies. Today, out of the overall business, about half of it comes from our own centers that we build in a managed aggregation format, and the other half comes from what is an independent third-party design build opportunities. 200 odd crores is what we spend. So the subsidiary itself, day one, would be a 500 crore revenue business. And we have built that in the last 3 years, one of the fastest probably ever built in the country in the design build space. Very few companies have been able to build a brand. We believe that ATPL will be one of the first ones to build a very strong design and build engine. And we feel that like the global markets where there have been multiple companies that have built a strong brand, we will be one of the first ones to build the largest design and build company and one of the strongest brands in the country, just like we have done with Office.
Good morning, Hiral. So, you've reaffirmed a 30% revenue growth target for FY26, aiming for 1,600 odd crores. Which micro markets or client segments will drive this growth? And to add to it, the roadmap for scaling to higher margins of 25 to 30% relative to the traditional seat rentals.
So clearly, as it's been there out in the market that GCCs are driving a large portion of the growth. 50 to 60% of flex growth over the next 3 to 4 years is going to come from essentially GCCs. We are very, very strong in that area. On the first time GCCs that came to India, almost 10 plus of them we service today, eBay, Meltwater, many others. We do integrated offerings to them. And I think as been claimed by a couple of reports that have come in recent times, we will grow, the flex industry will grow almost 3 times its size from about 2 billion to about 6 billion on the back of the GCC growth. We are very strong in that area. As I said, we today, 25 to 30 GCCs are being added every quarter. And we hope to take at least 25% of that market share towards our growth. Second, you mentioned about the high margin services. We set up these services at independent verticals last year, which was the platform approach that we took. We set up Office Cafe for our food and beverage cafeteria management. We set up Office Tech Labs for our IT solutioning. We set up Ecos Mobility transportation solutions in their partnership. We also set up essentially Frame by Office, which is our furniture business. All of these verticals will deliver integrated solutions to not just GCCs, but large enterprises. These come with higher margin. And as our portfolio stabilizes with almost 3,500 plus client companies that reside with us, our opportunity to offer is multifold in all of these areas to them.
Understood. Amit, thanks so much for taking the time, and look forward to speaking to you after the Q3 numbers. I think a lot of the numbers we'll be able to talk to you in more detail at that point. But thanks so much for taking the time.
forward. Thank you, Alex.
All right, let's jump straight across to Mahindra, which has launched a new XUV 7XO, which is starting price of 13.66 lakh. We've got a conversation with the executive editor Siddharth Sharma, caught up with Velusamy R, who's the president of Autotech at the company. Listen in.
So the car has been there in the market. We have been seeing both the technological trends that are taking place. Also, of course, when we are developing the electric organization, we know what technologies we have to bring great to this. And we said we will do a significantly transformative new offering soon, and that's what we did. Our effort is to bring that significantly transformative and that's why we call it as 7X.
All right, so now a little bit of name change. What are those things that you found to be missing in the previous model? And you said, hey, we're going to get these now in the 7X.
But I'm not sure it's a little bit of name change. It's a massive transformative technology. It's not a technology that was available. The Da Vinci temper system is not a technology, or the suspension system is not a technology that was available outside. We have to develop over 2.5 years to 3 years. If you remember last year, August, we had reviewed this Da Vinci temper system, and it was in works for all our passive system, suspension system cars. The real feedback is, how do we get the plush ride, yet firmer handling? That's the idea. And we cracked this code, and now that's the system we had. Of course, the 8155 Snapdragon chipset is the backbone of the complete computing system for the SDV, for coast-to-coast screen, and this screen has got so much of capacity to have bring your own device, and you can play 5 screens, 3+2, 3+1 device. You can parallelly run the YouTube for videos, 4K videos, Full HD videos, or HD videos you can run. ADAS system is a phenomenally 2-generation jump from generation 4 camera with 1.7 megapixel. It's a seeing ability of a camera, radar camera, to the 8 megapixel. So it can detail out so nicely the objects in front of the car and recognize very early. 40% more distance it is able to see it and recognize it very early. So the ADAS performance, the standing cows in India, in the highway, this is the biggest thing, that it is able to recognize. Standing people it is able to recognize. And all the ADAS features, the performance of the
So one thing I think you forgot was the ChatGPT integration.
Yeah.
What is that all about? Like, how did that idea entirely come up? Because we've seen Alexa.
The user manual is in the system.
Yeah.
In the
Okay, all right. So that's the new M&M launch, but we need to look at what's happening with the markets. And like we said, it's the heavyweights today that are dragging down the markets. 2 or 3 stocks that are seeing that pain point. Some recovery in the Nifty, that's heartening to see. ICICI Bank, Hindalco pulling up, but RIL, HDFC Bank, and Trent continue to be the 3 culprits as far as the Nifty is concerned. I want to pull up the intraday charts of all 3 of those, and I'm going to start with RIL. Some clarifications have come in, and that doesn't seem to be helping the stock too much. The RIL stock is what I'm talking about 3% down. Trent really is the accident of the morning. Those initial reports or business updates ahead of the third quarter numbers have not enthused the street at all. 7% down at this point. HDFC Bank, again, business updates is what has hurt the stock for a second day in a row, though it's actually recovered from the lows of the morning. So those are the 3 ones which are seeing the worst pain right now. But let's go across to our conversation this morning. Kenneth Andrade, founder and CIO of Old Bridge Mutual Fund, joining us this morning on Talking Point. Kenneth, great to speak with you, and great to have this conversation in the first full working year of 2026, just to set the pace of what we can expect. I mean, we've started with, I would say, a lot to chew upon with what's happened geopolitically in this Venezuelan heist, as I like to call it, and how global markets have responded to it as well. What do you think is going to be the outlook for the year? First, let's start from a geopolitical point of view. More of the same with what we saw in 2025, a lot of uncertainty?
Well, that's really not my domain. So I assume that what's happened in the last 1 year and what's happened at the beginning of this year will more or less be in continuation for the rest of 2026 or probably longer. So it's going to be an uncertain environment as far as that is concerned, and we just have to play it by ear and see which side of the fence we as an economy come out on. So no predictions out there. Expect more of the same and cross it and hope nothing dramatic happens.
Believe me, Kenneth, even those who are in the business of predicting what's happening geopolitically right now are choosing not to do so. My question more in the aspect of how do you prepare as an investor? One thing that we've seen, at least in the last few months, is Indian equities shrugging off some of those concerns and focusing on what companies are doing and how they're performing. Is there optimism going into Q3 and Q4?
So let's put it in perspective, right? India is coming out of a phenomenal run between 2020 to 2024. Right, 2025 was slightly sluggish, and 2026 you see more of the same. So it's not like the Indian markets are not doing well. We're just taking a small break out there. We were the most expensive market amongst our peers, and I think the rest of the world is catching up with us. I think that's what's happening out here. So we're taking a breather. It's a time correction. Everything else remains static. Balance sheets are good. Demand is plodding along. We're not excessive, or we're not falling off the cliff. The government's doing its bit. Trade wars are uncertain, or the trade cycle is uncertain. So we're dealing with uncertainty out there. There's no predictability, and you had high valuations. So those valuations are having a time correction. That's all that there is to it all. Maybe 7 months of incremental amount of sideways movements. It's going to be a little difficult trying to pick a trend out right now. But I think patience is largely the game out here. Single digit return still on the table, but I don't think you're going to get anything dramatic out there.
Interesting take, Kenneth. Good morning. Hiral on this side, wishing you a happy new year as well. You've been talking about a time correction until early 2026 as well, and that was your expectation since quite some time. With FI outflows actually hitting record high levels in 2025, do you believe that a return when it comes to FIs in 2026 is a necessary condition for the Indian markets to actually get a healthy double-digit market return, or will the DI inflows suffice the domestic growth story?
Well, Hira, put it together. Firstly, a very happy new year to you and the team also. Firstly, to put it together, what attracts investments into the country, whether it's DIs or whether it's FIs, right? So DIs have a constraint on the fact that they can't take money into any other asset class but the domestic market. And that's what's driving allocations into the domestic market, which is at the back end, a lot of flows coming through. FIs have no such compulsion. FIs can move to markets wherein they find safety of capital and reasonable amount of growth, but at a certain amount of valuations. I think what's happening in India is a little bit of both. You had 1 year of time correction, you're going through the second year of some part of that will be time correction, and then valuations will start becoming attractive. Look, net, the breadth of the market has completely collapsed. There are more losers than there are gainers this year. While the index has been where it is, the product markets are not that great. And the IPO markets or the new issue markets that are there, that's taking a drain of liquidity out from the system itself. So put it all together, once you get valuations within the framework that is acceptable by most international investors, they will come back into the economy or they will come back into the market. Every investor likes to see growth, but every investor is not going to pay upfront for it. The investors who are paying upfront for growth on the market in the market today are the ones that have got surplus liquidity. So I think that's the dilemma that we are in right now. Another 1 year of what we saw in 2025 to 2026, and by the way, 2025 wasn't as bad. You're getting a low double-digit return, which I don't think is terrible. And if you get another 1 year like this, and valuation should be more or less palatable for by the end of the current calendar year.
Okay. So, Kenneth, the valuations are going to be palatable at the end of the current calendar year. Which sectors are you eyeing? Because all eyes from a couple of fund managers that we've been discussing is that 2026 is going to be a year for Indian IT. Do you think we could benefit from the AI advancements? And if so, which specific segments are you looking at from the Indian IT space?
So look for underperformance of companies, businesses, sectors over the last year and a half to maybe 3 or maybe a cycle. Look for industries where there is a reasonable amount of pressure of margins that are there and do not have the pricing power at this point in time. And then you just have to wait, build a portfolio around that, and wait and have some patience till the cycle reverses itself. I think that's been our style, and that's how we've been adapting to it. So IT has been there; it hasn't done anything. It's come back to valuations which are great, but it's not really a growth business out there. It's a nice place to be in. It's a good allocation trade. I could say the same thing about the financials of the lending business out there. At least the big banks are in a zone wherein, again, valuations are okay. There's some element of growth that is coming through, and the risk on the downside doesn't seem that doesn't seem too high. Then there's pharmaceuticals, especially the manufacturer-driven pharmaceuticals. Nothing has happened out there for a long period of time. So another place where I think will attract a reasonable amount of allocation during this year. So you got to go out there and pick and choose industries that have not done anything. Look for valuations which are okay. The first thing is that you do not lose capital in that cycle, and then incrementally you look at growth. I think the momentum out there today is basically discretionary spends, more specifically the automotive side of the business. I mean, that still, my sense is that still has a little bit of legs, at least for 2026. Valuations have come up quite sharply because a lot of these companies are up high double digit in terms of percentages over the last 1 year. Telecom is pretty much okay, driven by cash flows. It's got the momentum behind it. You've seen price increases and profitability and cash flow growth that's there. So it's not a place where you can't find ideation, but yes, you'll have to make sure that you contain your expectations going into this 1 year.
Containing the expectations, yes. I'm just wondering if there are any possible upsides, especially in the BFSI space, Kenneth, from the initial readings that we're seeing in Q3. BFSI and FMCG or consumption baskets seem to be in focus. Spillover of all of the policy action from last year. Are you feeling optimistic about some of these sections?
So a large part of that blip is already in prices.
Okay.
The trade that you saw that happened in the last quarter is largely around what policy actions that the government's taken or the local government's taken. So a lot of that is already in prices. I think they will just follow the momentum of the news flow currently. But if you're looking at big compounders in this entire industry, you'll get one or two names out there, but it's largely stock picking. I can't see an entire category of businesses that are growing dramatically ahead of themselves, a category of businesses. So basically, the whole consumption basket is not going to grow significantly, or profit pools in the consumption side of the business is not going to grow dramatically. Same thing holds true for banking. So it's largely a pick and choose market. Again, at the beginning of this conversation, I said you'll have to pick and choose in this marketplace. It's very hard to find a trend. It was consumption the last quarter. This quarter, our sense is that you will have government spending come to the forefront, but that will have its own pitfalls that are there. So you just have to wait till valuations across the spectrum actually stabilize. And with the market formatting it itself the way it is, which is the advanced declines against you, I think you will get a valuation spectrum which is far more attractive somewhere in the middle of the year.
What are the key sort of, and you've put it well, Kenneth, that there's no trend per se to pick. You're going to have to do some work for stock picking. And so for our viewers who are tuning in and wondering how they go about it or some of the filters that you apply, what would you tell them?
So it's anything that hasn't done well over the last couple of years. Okay, may not be the last 1 or 2 years, but on a longer time format. I think any industry, business, company that has been struggling with a bad cycle, and using some of these companies in a fairly decent valuation matrix. Okay, and there are quite a few out there. So without naming names, I could I've put together some industries that haven't done well over the course of the last couple of years. So that's where you start looking at, and then it's a patience game.
Kenneth, my last question coming to you is, you have been looking at a strategic focus when it comes to a capex-led growth for 2026, right? With the kind of upcycle that's already come in when it comes to the metal space, how are you looking at it, and your view when it comes to pharmaceuticals and automobiles?
So we've been constructive on metals for a couple of quarters, if not a couple of years, right? And like I said, investing is all about buying when no one's talking about it, and then riding the cycle on the upside. And I think that's all started playing off. For us, it was not so much commodity prices. For us, it was actually volume growth for the capacities that some of these companies are putting on the ground. And the icing on the cake was if commodity prices did well. In this case, volumes are coming through and commodity prices are also up. And that's how the metal pack is done well. When it comes to pharmaceuticals, again, it's a business wherein there are a lot of headwinds this year with in this space with one product actually going off patent. That's going to damage industry profitability quite significantly in the last quarter, in the last 6 months, which is essentially is December and March quarter. And that should be the bottom of this entire business. This is a category, or this is a segment of the market we think profit for the entire industry will be dramatically high compared to what they've seen in the last 5 years. So it's a space where you buy into underperformance and then wait till profitability kicks back. There's a lot of capacity on the ground. There's a lot of opportunities as patents actually come off, and the Indian generic manufacturing capabilities will come to its forefront. So that's where we got positioned. So metals played out, pharma is out there, automotive is got a momentum cycle. IT is coming off low valuations, but it's a fairly mature business, so it's not going to be something very dramatic so as to say. Consumption is building up, but these are largely company-specific names out there. They've already hit rock bottom in terms of how low can the business go, how bad the business can get. Now it's consolidation time. You're seeing it with a couple of segments out there, but you really have to see demand revive and inflation come back into that segment. So consumption is on standby. Pharma is going through its down cycle and basing out this year. Commodities and automotives doing reasonably well.
All right, Kenneth. That's going to be interesting, and the metal upcycle is something that the street is watching out for. But thank you so much for joining us on the show. Always a pleasure to speak to you at NDTV Profit. One stock that is actually impacting the way Nifty is looking like today is Reliance Industries. And now they've come out and issued a clarification over a media report claiming that 3 vessels laden with Russian oil are heading for Reliance Industries Limited's Jamnagar refinery, and that is incorrect. The company said its Jamnagar refinery has not received any Russian crude oil cargo in the past 3 weeks and is not expecting any deliveries in January as well. Soumit Sarkar joins us with more details. Soumit, what are you picking up? The stock seeing cuts of what, 3.5%?
Well, the only reason why Reliance Industries has been trading in red is because, as per a Bloomberg report, they have again started procuring Russian crude for their refineries. Now, back in November, the company had clearly mentioned that they will stop using Russian crude in their refineries for export purpose from December 1st. They had clearly mentioned that all products that will come out from the SEZ refinery will be obtained from non-Russian crude oil. And the latest Bloomberg report, which is actually sourcing data taken from data analytics firm Kepler, says that around 2.2 million barrels of crude is headed towards Reliance Industries refinery in Jamnagar. Now, what Kepler does is Kepler tracks a movement of vessels based on live signals sent by captains detailing their current location and upcoming discharge ports. But it also mentions clearly that destinations can change as the ship approaches India. So at that point of time, there could have been a report gone ahead from Kepler's side that this Russian crude must be going into Reliance Industries refinery. But as the data analytics website clearly says that the destination can change even going forward. So that might have happened is what currently the street is saying, and that could be the reason why Reliance Industries have also come out with this clarification, and they're clearly saying that none of the Russian crude is said to be delivered or will be delivered to the Jamnagar refinery. But at this moment, the stock is clearly down because it seems like the company has gone back on their earlier commitment of not using Russian crude, and this is completely based on a Bloomberg report which is sourcing Kepler data as well.
Okay, and that clarification has come in, but you're still seeing pain in the stock. All right, another special report from our end. We're deep diving into India's 5-seater SUV market, where the competition is heating up fast with new launches. Puneet joining in to talk about the fierce battle in the 5-seater SUV space and the showdown ahead in 2026.
Well, it's a big one because there are three key questions that we're looking to answer with this. Why this particular thing matters, which brands dominate this space, and what is our analysis of what you should look at going forward as an investor and also probably as a consumer as well. So there are two key updates that led us to, go deep into the 5-seater space. One's, of course, that the Victoris has got 70,000 bookings. This comes after the Sierra got a similar number in the month of December. So there's a healthy competition now with these two brands entering the fray yet again with more models. The other key aspect, that unlisted player Kia, of course, has introduced the Seltos as well. Now that has also gotten a huge upbeat as well, and it's undercutting the Sierra in terms of pricing while offering more premium features. So the competition is really heating up, and all impact will also be seen on the listed players. Now, why essentially does this space matter? Because, it is that all major companies now have at least one successful model in this space based on the sales numbers, and that's largely between 4 to 4.4 meters. And it's important because a lot of India still buys cars below 4 meters, and they are upgrading right now. This is almost 7.7 lakh units or cars which were sold in FY25, represents 18% of the overall sales that was sold in the country. So almost 43 lakh cars were sold, 7.7 lakh were almost of the 5-seater SUV space, and this is set to grow in 2026. When you also look at which brands largely dominated this particular space, you have the Creta, which is an undisputed leader with one model effectively selling almost 1.9 lakh cars in the last year, while you have the Seltos and the Elevate also doing very well. Amongst others, you have the Citroens, the Skodas, all doing very well in this particular space as well, and that's largely been the competition with heating up. Mahindra has a differentiated strategy with their Thar largely in this particular space. They've not diverged in any other model apart from the Thar, but it's a key one that they continue to do. And finally, for Maruti as well, they're the only player which has 3 to 4 models in this particular space. So the Vitara, the XL6 and the Ertiga have been doing well, but the Victoris is the final nail in the coffin, which is expected to do well for the company apart from the booking numbers as well. Finally, for Maruti Suzuki, very quickly, 70,000 bookings. The company confirmed that in the month of December, with rival Sierra also having a similar number. While for Kia specifically, if you can pull that graphic up, it will show you that perspective of how it's undercutting the other players. So, of course, for Creta, 1.94 lakh vehicles were sold for just one model in this space in FY25. Let's quickly move on and show you for Kia as well why it's important to track the unlisted space. Now, you look at the base model for Kia, which is launched after the Sierra at 10.99 lakhs. For Sierra though, it's coming at 11.49 lakhs. So it is undercutting on the base as well as on the top end model. And this will have some impact on the Sierra going forward. Finally, our analysts, our own views. Why does this matter going forward? Hyundai as a stock price actually has not been doing well over the past few months, largely on the back of slow growth in the domestic space. So the Creta becomes very important to succeed. Although the growth has been strong, it will have to lead the way for the company. And on Tata Motors, they will have to cement their leadership in this space because the Curve failed to do so. They're trying to do that with the Sierra now. And that's our research and our analysis putting in forward of a space that will continue to dominate the automobile sector going forward.
Interesting pace, and it's going to be an interesting year indeed. We have to see if all of that appetite boost for this space, which came because of GST, continues. Thank you so much for that, Puneet. All right, with that, it's pretty much a wrap on this edition of India Market Open. But stay tuned. The action continues all day on NDTV Profit, and of course, Ask Profit up next.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतूसा, और वो भी हर 3 महीने बाद।
Not banking with AU?
AU? AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने। एवरी मंथ।
सोच बदलो और बैंक भी।
70-75 वर्ष के मुँह ये कोई कागज नहीं थे। अब जो है अपन साइट हुई, अपन ले अपन धारो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with 2 major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Maan. This has generated employment for 4.5 lakh people in the state. Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2,600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
राइट टू बिजनेस हर एक कह दिंदा बट ईज ऑफ डूइंग बिजनेस ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast-track Punjab portal with priority.
पहले के ज़माने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफ़ी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
Punjab government foremost in public welfare.
And welcome. You're watching Ask Profit here at NDTV Profit. I'm Mahima Vacharajan. With me is Puneet Javeri. Puneet, I think it's the second day in a row where markets are a tad disappointing. The Nifty 50 especially is down by about that 0.1% mark, below the 26,300 levels, of course, and largely I think dragged by Trent today. It's the biggest.
It's one of the other stocks that you track are consistently taking the
yeah,
strain of the
taking the
markets.
heat. Yes, absolutely. I mean, it's down what 41% in 2025 already. The biggest loser on the Nifty 50 in 2025. Since its inclusion in Nifty is also down by about 45%. Today also down 7% as we speak, and this is on the back of its Q3 update, of course, coming in, where it's the 6th quarter in a row where it's given that sub 50% growth in terms of where revenue stands, and that growth has been declining from 50% to 34% to 27% to now almost 17% coming in. So I think that's the reason as to why the street is completely disappointed with the counter. But with regards to where the other counters are concerned on the Nifty 50, let's try to pull up the heat map and see as to what are the other counters that are doing well on the flip side. You have something like Hindalco, some metal counters still doing very well. Hindalco up 3.5%, Apollo Hospitals, ICICI Bank, Bajaj Auto are some of the counters which are up in that 2 to 3% range. So both in terms of ICICI Bank as well as HDFC Life, ONGC, Tata Consumer, these are some of the counters which are also up 1% each. But on the flip side, you have Reliance, which is down 3.4% as well. Tata Motors PV also down 1.8%. HDFC Bank, Eternal are some of the counters which are also in the red and putting pressure on the Nifty. But let's pull up the sectoral heat map and see as to how sectors are faring. Metals still topping that chart, up 1.3%, followed by banks, PSU banks to be specific. And Nifty Pharma also doing fairly well. But on the flip side, you have Nifty Oil and Gas, second day in a row, taking that beat, down 1.8%. Nifty Media, Nifty Energy and Nifty Defense is seeing some profit booking today. So that's with regards to where the sectoral performance is concerned. But please, I think the broader market's still under pressure.
Under pressure yet again, and we have seen that individual bottom-up stories have actually been dominating the news flow. Yesterday it was Wari as well as Premier Energies. What's interesting is Wari's got 1,000 crores for the lithium battery venture. Stock's still down 2%, so it's sub 2,700 now and consistently under pressure. Let's quickly look at the BSE 500. It'll give you a picture of the overall breadth of the market and what's happening with those individual names. Polymedicure, Ather Industries, Embassy Developers, all these stocks are up over 5% in trade today, and so is Hindalco, up 3.4%. While on the losing side, Trent as well as V-Mart, while the quarterly update actually looked quite strong, it's down 4.2% in trade, and Sapphire yet again. Yesterday was the top loser of the BSE 500, consistently under pressure post announcing the merger with Devyani International, and there's no relenting that aspect. But let me now welcome in Swati Hotkar, the EVP Technical Research at Nirma Bang, as well as Astha Jain, the Senior Research Analyst at Hem Securities, to take forward your queries. So do start sending them, viewers. Both the numbers of WhatsApp, you can also call us, are flashing on the top of your screen. Ladies, thanks so much for joining in, and a very good morning to both of you. The first query is coming in from Bengaluru, and Murli has a stock query for us. He's asking a question on Action Construction. It's a stock we haven't discussed too much over the last 3 to 4 quarters, but he's bought it at roughly about 1,266 rupees per share and holding 600 shares. So he's sitting at a loss of almost 2 lakh rupees. Asking what he should do since he's sitting on a huge loss. Astha, very good morning and welcome to Ask Profit.
what should he do with ACE here? Because the stock's actually been quite sidewards. There has been a lot of dumping from China in terms of cranes, and that's impacted the company as well. Your view of what he should do with ACE, is it a good time to buy now since it's down almost 25% from his buy price?
Hi, good morning to everyone out there. Talking about Action Construction Equipment, it is one of the leading material handling equipment company established in 1995. Now, why I'm talking about the year of establishment, so it shows that the company has got a long year of existence. Plus, what I am seeing is that there were certain issues which have not, worked well for the results, and that is why we have seen that the company was not able to post good set of numbers. There were some emission norms due to which the company's results were impacted. But we believe that going ahead in FY27, the growth will gonna be pick up because the capacity expansion is on the card. So I believe that this company will show some strong numbers going ahead. We have to just wait for some time. Idea here is to stay invested, not to get out from the stock. Stay invested in the stock. I believe that the stock will again move above 1100, 1150 odd levels. So hold is a strategy which is recommended from my side for this counter with a price target of 1150 to 1200.
Okay, all right. So that's with regards to where Action Construction stands. The next question is from Viraj, who is writing us from Vijayawada, asking about Vikran Engineering. He's holding 300 odd shares at the levels of 90 rupees. From a short-term perspective, we can hold or exit. Swati, enough data on the charts?
Yeah, at the current levels, my view is positive. No wonder we are witnessing a double tops bottoms nearby 110 levels, and from there onwards we have witnessed some sort of a profit booking. But I believe 95 levels will act as a crucial support levels provided by 20 DMA. So by keeping that as a 95 rupees your profit stop loss, you can carry your long positions. I believe a pullback rally can be witnessed back towards 210, and beyond that level 120 levels can be seen very soon. So it's a hold from my end by keeping a tight stop loss of 95 rupees.
Got the view, Swati, but we have a first caller for today, Ask Profit, of course, the morning edition, and this is coming in from Hyderabad. Dheeraj has a stock query for us. Dheeraj, very good morning and welcome to Ask Profit. What's your query?
Good morning, sir. My query is regarding Premier Energies. I purchased 392 shares at 779 rupees.
Okay.
So I'm currently trading at some loss. For short-term investment, is it better to stay invested in the same counter, or should I shift to something like Tube Investment and CG Power? Or should I split my amount?
Got it. So Dheeraj, it's a short-term investment point taken. And have you bought it in the recent fall that's happened over the last few days?
Yes, sir. Yes, sir. Got
it. All right.
In the recent fall, I have purchased.
Got it. Swati, let me come to you on this one. Then on Premier Energies, the brokerages are also coming out with mixed views on the renewable energy space. Yesterday we had a downgrade. Today Jefferies has initiating buy call on a different company in the space as well. So your view of what Dheeraj should do with Premier, he's on a loss, and is it advisable to switch to CG Power as he's asking as well?
Yeah, at the current level, no wonder the counter is facing a very strong selling pressure, but both the counters are trading at the lower levels. Premium Engineering currently trading at a 52-week low, and the buying price is not far away from the current market price. So I will suggest to hold on this particular counter because we have already witnessed a large sell-off from almost 1100 to now 760 levels. I believe that the 750 will act as a crucial support levels. Counter has already entered into the oversold zone, so depth is limited from here onwards. So we'll suggest not to book the losses at the current market price, but if possible, take more risk of 10 rupees ahead. Keep a stop loss of 750. Any pullback rally can be witnessed up to at least 780, 820 to 850 levels. Up to that level, a bounce back rally or pullback rally can be witnessed. So book your profits at that level, but currently you can hold on this particular counter by keeping a stop loss of 750 rupees.
Okay, all right. So that's with regards to where Premier Energy stands. The next question that we have is from Sudhakar, who's writing us from Bengaluru, asking about Glottis. He's got around 114 odd shares, bought at the levels of 129. Wants to know if it's okay to hold the counter or not. I'm not sure if you've taken this counter before on Ask Profit, but Astha, basically it's a logistics solution company that offers comprehensive transportation services through ocean, air as well as road logistics. Any view on this particular counter?
Yes, because I believe that issue came way back in September 2025,
Yeah.
and the IPO price was around 129. So now what we have seen, the IPO was not able to sustain even its issue price, and we are seeing a continuous downfall. I think the markets are not liking, first of all, the higher valuation at which the company had bought the issue price. Had bought the issue, so issue price was on a steeper side, and along with that, although we know that it is an integrated logistic multi-model solution provider company, but here what I am seeing that logistics companies are not able to perform that strongly on the bourses as the other sectors are. So I think that is also one of the reason, and the valuation, higher valuation was the another reason. Idea here is to exit partially from this counter because I'm not seeing this counter to move to be moving on the higher side. So it's better to book certain losses and exit partially from this counter and make entry into the other counter so where the losses can be recovered. In the other counter, I was like recommending on your channel continuously L&T, and what we have seen is L&T has shown a very strong rise. So again, I'm saying there are certain counters which are still looking very good. Muthoot Finance is there, L&T is there, L&T Finance is there, and ICICI Bank is there along with the Axis Bank. So make entry into these counters so that your losses can be recovered, and just hold partial quantity, which I think he has taken in the IPO. And just wait for the results. In case if results come on the higher side, maybe the stock can move higher from here, and there the investor can get the chances to get out from this counter.
The view asked, and definitely expensive valuations. Issue price was at 129, listed at 80 odd levels, and we've been getting a lot of queries. But because the trading timeline has been so limited, a lot of investors have got caught in this as well. But another query now, another caller coming from Hyderabad, and Anjali has a stock query for us. Anjali, very good morning. What's your query?
Yeah, good morning all. I'm holding 200 shares of BDL at 1505 price. Like it's been from last 3 months I'm holding this price. So what is the short-term target for this counter? Because last time it fall back from the 1600 level. So and what is the long-term aspect? Shall I hold or exit?
And when you bought into this counter, Anjali, did you buy it with a short-term or a long-term outlook? I know you want both views, but what was the rationale before buying Bharat Dynamics?
Yeah, it's basically long-term only, but more times I observed like once it is reaching 1600 level, it is falling back.
Got it. No, fair point, Anjali. And Asta, on Bharat Dynamics, any kind of price targets that you have, and if not, is it a good time to accumulate more because it's back to where Anjali had actually bought it initially at 1504?
Right. So talking about Bharat Dynamics, I want to tell you that now there is a time again we are seeing a traction in the defense space, and Bharat Dynamics being one of the top gainers. Even yesterday also we have seen a very strong price momentum. Another point which is very much crucial about this counter or this company is that their management is continuously guiding very strong CAGR growth in the top line. I think it is more than 20%, I suppose, at this point of time. Third point which I'm liking is they have got a very strong order book. So the kind of environment right now which is playing on, I'm talking about the geopolitical front, the kind of environment which is right now there, definitely these companies going to benefit. So there is no need, first of all, to get out from this counter. Yes, she's talking about accumulating. So my idea here is accumulate at the lower level, 1542 it is what quoting right now. Maybe accumulating at the level of around 1520 to 1500 is a better choice. So yes, start accumulating, but slightly lower from these levels. And this is a counter which again will move till the level of 1650 to 1700. So there is no need to worry. Just stay invested and start accumulating at some lower levels.
Okay, all right. So that's with regards to where Bharat Dynamics stands. The next question that we have is on Heritage Foods. And the viewer wants to know if, he's already purchased at the levels of 485 and wants a long-term view on this particular counter. Astha, I'll take this up with you, considering, it's the value-added products that's actually auguring growth for this particular counter. How are you viewing this in competition? Because it is also playing with other southern players.
Yes. First of all, what I believe that now they are moving beyond the, dairy things, and now they are starting restructuring also. So they are playing strong on the FMCG growth. So this is one of the point which I'm liking about this company, and their vision for the 2030 is also looking good to us. So my idea here is to stay invested in this counter, because this company will going to show some sort of margin expansion backed by the operating leverage which it will going to enjoy. So idea here is to stay invested in this counter for the longer term. However, just just keep a close watch on the results also, which will be coming, I think, few days down the line. So start just looking after the results. Till then, stay invested in this counter.
Okay, all right. So that's with regards to where Heritage Foods is concerned. But it's time to take a look at the F&O space and setup and what are the cues indicating. And we have Sharad joining us as always. Sharad, yet another day of range-bound trade, but Trent is something which is the casualty of the day.
Well, by far, Trent is something which we are looking at. Sensex, it's down as well, especially the downtick coming in from Trent, as Mahima pointed out. But largely we see today is another day of range-bound trade, a choppy session coming in. ICICI Bank, SBI holding up in trade, but on the other hand, HDFC Bank, second straight day of selling. But Reliance, Trent is of course there, but Reliance is also dragging the index down as well. Largely we'll see a choppy day of trade, and options data is also suggesting for intraday option players, for them there is some kind of a bearish sentiment building. This is the overall numbers looking at. Also the open interest, that level is also going up slowly as we are progressing in this series. These are the important contracts which should be focusing on. BankX also we see some good moves coming in, especially from SBI, and IndusInd Bank also surprisingly doing well as well after a mixed trends were observed in the Q3 update. Apart from this, other stocks also in BankX we look at, but the long build-up is the day of metals today also. We see the risk-on sentiment is there globally happening, and Nalco and Hindalco, both of them are a strong momentum coming in this counter. Short covering for MCX is expected that there will be a very strong January numbers as well. IFL Finance also making it to the list. Apart from this, long unwinding trades, they include SRF and SAIL. That's pretty much interesting. And lastly, I'd like to point out the short build-up, largely Trent as we had discussed, and Swiggy also makes it to the list. That's down almost 5% yesterday. There was an important block also in this counter. So these are the important stocks which should be on the radar and this F&O developments.
Okay, all right, Sharad. Thank you so much for getting us those details with regards to where the F&O space is concerned. But viewers, time to slip into a very short break, but we'll be right back answering all your queries on the other side. So do stay tuned.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ। सोच बदलो और बैंक भी।
जब विकास जी के लिवर का ऑपरेशन हुआ तो पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर 50 लाख रुपए का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
70-75 वर्ष के मुँह ये कोई कागज नहीं थी। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर की महिला सदस्य को यह अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
Hello, Moto.
Welcome back. You're watching Ask Profit. If you haven't already, do start sending in your queries and we'll get you the tech as well as the fundamental view for your queries. The next one that's coming in is on Vari Energies, another key stock that's taking the brunt essentially of the bearish trade today. This one's from Basharat Hamid, and he's asking what he should do with the counter. He's asking because he's holding at 2,900 rupees per share, so he's sitting on a loss. Astha, considering that we have multiple listed players now in the solar and the renewable space, do you think that the ones that listed earlier, the likes of Vari Energies, could see some kind of derating, or is it largely that whatever the factors have been happening with the business and the US tariffs is one of the key concerns that are having a bigger impact on the stock price today?
Yes, I think uncertainty over the US renewable energy policy is definitely, leaving an impact on the stock prices even yesterday and today, what we are seeing. So this is one of the major reasons, because if I'm talking about Vari Energies, it is, one of the very, very strong solar manufacturing play. If we have to talk about this story, then definitely this is one of the key player in the industry. And what we believe that this company is well poised to show strong upside in the financial performance from here. But the only thing, the kind of industry or headwinds which this company is facing, along with the macro concerns, that is really impacting. So idea here is to stay invested in this counter. Maybe in the long term, it may not move as faster, or the frequency of moving upside is not so high, but I still believe that it can show some more upside momentum from here. So rather than exiting from this counter, stay invested, because it is one of the leading player in the solar industry.
All right, so that's in regards to where Vari Energy stands. The next question that we have is from Anil, who's writing us from Mysuru, asking about Yes Bank, whether this is a good time to make an entry from a slightly long-term perspective after seeing the pullback that we've seen in the recent times. Swati, what do you suggest on the charts?
Yes, my view is definitely positive on the Yes Bank. We have seen a very strong pullback rally from 19 rupees. Now the stock has entered into the 22 rupees zone. Still, upside is remaining on the high side. I believe the stock has a strong potential to reach up to at least 30 to 32 levels. So at least 20-30% quantity can be accumulated at the current market price. So the run-up rally cannot be missed out. But any dips towards to 20 rupees, you can definitely add on. My target sets at around 30 to 32 rupees.
So that's in regards to where Yes Bank stands. But Swati, Astha and viewers, it's time for our first rapid fire round. Try to keep your answers as short as possible to buy, sell and hold. The first one that we have is from Angad, who's writing us from Indore, asking about DOMS Industries from a short-term perspective. Swati, on the charts, how is it faring?
Stock looks positive. Upside rally can be continued towards 2750 to 2800 levels. It's sold from my end.
Hindustan Copper or Zinc is a good time to enter, Swati, on the charts?
Definitely, Hin Copper can be avoided at the current market price. Any dips towards to 450, one can add on the Hin Copper.
Okay, Ashok Leyland at an average price of 136. 160 shares is what Manisha from Bangalore has. Should she continue to hold for the next 3 years? Astha, your view?
Yes, definitely from next 3 years it is a hold with a price target of more than 220.
ITC, a long-term viewer, Ashwin is holding at 400. Astha?
Hold from my side. Definitely you'll see his cost price.
Okay, Tata Capital is the next one. Shankar from Bengaluru is holding 100 odd shares. Wants to know if he can add more at the current price and what's the sell target. Swati, on the charts?
Not to add at the current market price. Any dips towards to 335 to 330 levels can be attractive levels to add on.
Aisha Motors is a good time to enter or add on to the earlier position, Swati?
Definitely you can add on at the current market price. 20-30% are recommended to take a buy call.
Okay, the next one is on HDFC Bank. Prasanna has bought 500 odd shares at the levels of 1005 from a short-term perspective. How are the charts faring, Swati, for HDFC Bank?
Yes, charts looks positive. Upside rally is 1050 to 1100 rupees, so you can hold on the long positions.
Excelsoft Technology, Astha, do you have any coverage on this one? Your view?
Excelsoft Technologies, we covered this counter when the IPO came, but our view was not very much positive. My idea here is being into the SaaS company, this company's growth is a real issue. So I don't think that one should enter into this counter. Yeah.
Okay, Westman Corp is the next one. Aparna wants to know if she can continue to hold from a long-term perspective. 870 is a buying price. Astha, your view?
Yes, definitely a hold from my side.
Ambuja bought at 560 by Astha. Should she continue to hold?
Yes, we are seeing a traction in the cement company. Ambuja will going to benefit from it.
Okay. Transrail brought at the levels of 610, 200 shares. Rajesh wants to know if we can continue to hold for the next 3 months. Swati on the charts?
Yes, you can hold on for a target of 640 to 650.
Godfrey Phillips bought at 3,200. Should he continue to hold, Swati?
Yes, you can definitely hold on this particular counter because I believe this stock has a potential to reach up to at least 2,500 to 2,600 levels.
Okay, Reliance had bought at an average cost of 1540. Siva from Toronto wants to know from a long-term perspective what's the target price. Astha, your view?
Long-term perspective is positive and the target price can be seen above 550 to 1,600 levels.
Oracle Financial, Swati, would you recommend continue to hold? Swaminathan is down 20%.
Yes, you can definitely hold on this particular counter. A potential up to 8,000 to 8,200 levels can be seen.
Okay, Godrej Agrovate is the next one. Kishore from Mumbai wants to know from a long-term perspective we can continue to hold or not. Astha, your view?
From a long-term perspective, I'll hold from my side.
Alright, so that brings us to the end of this rapid fire round. First rapid fire round of Ask Profit. We'll slip in a very short break, but we'll be right back answering all your queries on the other side, so do stay tuned.
छुट्टी पे तो चिल कर। मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतना सा, और वो भी यार 3 महीने बाद। नॉट बैंकिंग विद एयू।
एयू एयू सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
एवरी मंथ। सोच बदलो और बैंक भी।
पंजाब गवर्नमेंट foremost in public welfare. Aam Aadmi Clinics transform healthcare. The Aam Aadmi Clinics set up in August 2022 have transformed the primary healthcare system in Punjab. A total of 881 Aam Aadmi clinics, 565 in rural areas and 316 in cities are offering free of cost medical consultation. 107 essential medicines and 47 diagnostic tests to the people in Punjab. Facilities include anti-rabies injections and free consultation, tests and treatment for expecting mothers. Each Aam Aadmi clinic provides free of cost medical care to 80 to 85 patients daily.
मैं पंजाब सरकार और मुख्य मंत्री साहब भगवंत सिंह जी मान ਦਾ ਬਹੁਤ ਹੀ ਧੰਨਵਾਦ ਕਰਦਾ ਹਾਂ ਕਿ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਦਵਾਈਆਂ, ਫ੍ਰੀ 'ਚ ਹੀ ਰੇਬੀਜ਼ ਦੇ ਇੰਜੈਕਸ਼ਨ, ਡੇਂਗੂ, ਮਲੇਰੀਆ ਸਾਰਿਆਂ ਦੇ ਇੰਜੈਕਸ਼ਨ ਸਾਨੂੰ ਉਰੇ ਫ੍ਰੀ 'ਚ ਹੀ ਲੱਗ ਜਾਂਦੇ ਆ। इते सानू फ्री ची सारे टेस्ट भी हो जाते हैं।
The scheme has benefited around 4 crore 25 lakh people so far. Chief Minister Bhagwant Singh Mann has decided to add 236 new clinics to take the total number of clinics to 1,117. Some of the clinics will be equipped with AI-enabled instruments and mobile medical care. WhatsApp chatbots are being used to set up follow-up reminders and send test results to patients.
WhatsApp पे आपको मिल जाएगा, पर्ची भी नहीं रखनी पड़ेगी, कोई दवाइयों की लिस्ट, कोई दवाई कब लेनी है, याद करानी है, तो उनको याद कराना, ये सब कुछ WhatsApp पे कर दिया हमने। दिस इज अ ड्यूटी ऑफ ए गवर्नमेंट एक्चुअली। हेल्थ केयर में ड्यूटी बनती है हमारी लोगों की सेहत की चिंता करना, ख्याल रखना, चिंता करना।
Punjab government foremost in public welfare.
You still haven't opened a bank account. I have been telling you this for a long time.
Today, I'll do it.
Today is Sunday. Which bank is open on a Sunday?
At Bank of Maharashtra, through the video KYC facility, you can open an account even on Sundays and holidays. See, account opened. Open a savings account with Zen Life without visiting the bank. Making life simpler with Zen Life by Bank of Maharashtra.
Welcome back to Ask Profit. The next query, and it's been the talk of the town, is ITC. Now, Siva Reddy from Andhra Pradesh is actually asking this question. He holds at 403. And Swati, while you did answer that in the rapid fire round, of continuing to hold. Do you think that these levels, all those who are holding it at a similar level, and we've got a lot of queries around 400 rupees is what they hold at, is it a good time to average down on ITC at this point of time according to you?
See, already we have seen a very strong selling pressure from the last 3 to 4 trading sessions, from almost 400 to now 330 levels, 340 levels. I believe that the stock has entered into the oversold zone, so the depth is limited. So if you want for a longer term horizon investment, so definitely you can add on at the current market price. I believe 330, 320 will act as a crucial support levels, and from there onwards, we will see some sort of a reversal, which will take a stock back towards 380 to 400 levels. So definitely for a 6 months to 1 year view, you can take a fresh long position at the current market price as well.
Okay, all right. So that's the technical view with regards to where ITC stands. The next question that we have is from Madhusudana Rao from Hyderabad, and he wants to invest 1 lakh for the next 1 year in certain stocks. And what would those stocks be? Astha, which particular counters are on your radar at the start of 2026, and where can he go and invest?
Okay, so first of all, we are liking banking counter. So definitely banks are looking good to us, especially PSU Bank. SBI is looking very, very strong to us. So he can put a certain amount of money in the SBI. In NBFC, we are still positive on the gold financing companies, in which Muthoot Finance, IIFL Finance are looking good to us. So there one can have a look upon. In capital goods space, again, L&T is looking very, very strong to us. In pharma space, Cipla is looking good to us. So see, these are some of, and in the real estate space also, because we are liking of late real estate a lot. So in that space also, we are liking the counters like Sobha, Prestige. So there also one can have a look upon, apart from microtech developers.
Okay, all right. We've got our next caller. Shayan is calling us from Kolkata. Shayan, hi, a very good morning to you. How can we help you today?
Hi, good morning. I have Nalco shares, 500 quantity at the price of 171.
Okay.
So, should I book partial profit? If I book partial profit, where should I invest in the metal counter? Actually, the metal counters all are trading in high valuations.
That is
true. So, should I invest in gold ETF or continue to hold? I mean, if I book profit, where should I invest? That is the main query.
Sure. Okay, Shayan. Got your question. I'm not sure if Astha will be able to answer whether to invest in gold ETF or not, but Astha, he's not wrong, right? He's already sitting on handsome profits of over 88,000 rupees, and we've seen all of these metal counters rally a lot. Do you think it's time to book profits for something like a Nalco and shift to something else?
So I believe that rather than booking the whole profit, it's better to book partial profit at this point of a time, because what we are seeing that Nalco has performed on the basis of the strong momentum in the LME prices, in the alumina prices, and that is what have driven counter also. Going ahead also, what we believe that now some big capex are awaiting. We are awaiting some big capex announcement from this counter, and definitely if they're going to commission that, then it will also be a beneficial to the company. But partial profit booking is always recommended at this point of a time, since the profit is high. So partial profit booking is what we are recommending at this point of time for Nalco.
Got the view, Astha, but the next question that's coming in, it's again very interesting, because retail investors always spotting this opportunity where there's correction in spot prices, and this one's coming from Siddharth Chaturvedi from Jaipur. He's asking that Blue Jet Healthcare as well as Cohance Life have taken it on the chin over the last few months. Is it a good time to enter either of those stocks? Astha, what would you recommend, either Blue Jet or Cohance? Cohance, of course, had the management change, but your view?
So what I believe that Blue Jet is looking good to us at this point of a time, because there were certain reasons due to which we have seen a poor quarterly performance from this counter. But going ahead, because there was certain delayed revenue recognition which happened in the counter in the company, and that is what we have seen have shown some sort of impact on the revenue for the quarterly results which we have seen. But going ahead, we believe that Blue Jet is looking better to us in the way the kind of expansion it is doing, and it is one of the leading pharma intermediate company. Now they are entering into the high intensity sweeteners also. Capacity expansion is also on the cards. So on the basis of these very much point, we are liking Blue Jet over Cohance.
Okay, all right. So that's with regards to where Cohance Life Sciences is concerned. The next question is from Satyan. And this is an interesting one. What he's saying is that he's got both Sterling Tools and Sundaram Fasteners at the current market price. So Sundaram Fastener at the current market price, but Sterling Tools he's sitting on a loss of 20%. Should I hold both of them for at least a 20% upside in the next 3 months, or should he switch to some really beaten down counters, or switch from Sterling to Sundaram? He can wait for the next 3 months is what he's saying. Swati, if you've gotten the query right, what should he do?
Yeah, at the current market price, he already holding the Sterling Tools. I believe he definitely should hold on this particular counter, because the counter has shown a very strong corrections and founding a bottom level or the supports nearby the 260 levels. From slowly and steadily, we are likely to witness some sort of a positive move, which will take a stock towards to 320 to 325 rupees. So I believe rather than switching this particular stock into the Sundaram Fast, hold on your tools at the current market price as long as it sustains about 260 levels. So keeping that as your stop loss, you can hold on the long positions, and if the stop loss get triggered, try to invest into some other company rather than the Sundar Fast. I believe that the Cipla really looks good at the current market price. ICICI Bank and the Bajaj Auto, these are the top picks we are recommending for the new year as a new year pick. So try to divert those funds into these quality counters.
Got the view, Swati, but the next caller now is coming in from Lucknow, and Udbhav has a stock query for us. Udbhav, very good morning and thanks so much for joining in. What's your query?
Yeah, actually, sir, I have a NTPC green share. Value average price is 130, and I have around 1,500 shares. But right now, the share has been like continuously in a decline, like 100, and now it's around 94 or something for today. So like I'm at a loss of around 50,000. So I'm actually in quite a dilemma, like whether I should like think of it as a long term and continue averaging out a little bit every month, or should I like book my losses and like
Now, Udbhav, do you have any other renewable or power name already in your portfolio apart from NTPC Green?
I have Tata Power.
Tata Power, got it. All right. Astha, let me come to you on this one. NTPC Green, even when the company listed, there was a lot of promise that was going to come over the next 18 to 24 months. So, should Udbhav continue to hold at 130, or should he sell out or average out right now? What would your view be?
I would recommend a hold for this counter rather than booking out losses or averaging at this point of a time. I'm not suggesting averaging because I am believing that this counter may be moving somewhat more downside from here. So this counter will give the chances of doing averaging. So right now, idea here is to just stay invested in this counter, wait for the numbers to come in, because now what we are hearing from the company that they are commissioning, their solar capacity projects in the Gujarat. In fact, they are, tendering also and issue certain tenders also. So I believe that these news will definitely help in showing good financial performance in the longer term, not in the shorter term. So stay invested and wait for the numbers.
Okay, all right. The next question that we have is on Greaves Cotton, and this is from Mr. Kumar, who is writing us, and he's holding 50 odd shares at the levels of 171. Should he hold or exit? Swati, on the charts?
I would suggest to hold on this particular counter by keeping a tight stop loss of a 185, because if it's break those level, then more profit booking can be witnessed, which will take a stock back to us to 175. So hold this particular counter by keeping a tight stop loss of a 185.
Got the view, Swati. Another one on VA Tech Wabag. Jay Krishnan from Kerala, who is also a regular viewer. So thanks so much for sending across your query, Jay Krishnan. He's holding at 1411, currently sitting on a loss. Should he continue to hold or exit and shift to Maruti is what his question is. What would you recommend, Swati?
See, exiting from the buyback and entering into the Maruti will not be a right decision. Definitely, the view for the buyback is really cautious at the current price, because today the stock has given the breakdown of the 20 DMA, which is a little bit cautious sign on the technical front. I believe that the selling pressure is likely to be intensified in the near-term future. If you want to put into the auto company, definitely Bajaj Auto looks very promising at the current market price, and the Hero MotoCorp. Try to diversify your fund into those two particular stocks rather than the Maruti. For this particular buyback, I will suggest to keep a tight stop loss of a 1230. If it's triggered that stop loss, then just transfer your funds into the Bajaj Auto and the Hero MotoCorp.
Okay, all right. The next caller that we have is Bindu from Vijayawada. Bindu, hi, a very good morning to you. I believe you have a question on Vishal Megamart.
Yes, yes.
Go ahead and ask a question.
I hold 1,000 shares at 135.
Okay.
Should I medium term or should I exit?
Bindu, when you bought this, was it from a long-term perspective or did you see the charts while buying it?
It's like I just want to see the other quarter numbers.
Okay. All right. Okay. Got your question. Then I'll take this up with Swati. Swati, considering, V2 retail, your V-Mart, Bazaar side, etc. have come out with the business update. This is yet to come out, of course, with its business update. But on the charts right now, how is it faring?
See, short-term view is a little bit cautious. The selling pressure is likely to be seen in the near-term future as well, and which will take a stock back towards to 125 to 120 level. So the depth is really limited. From here, probably 10-15 points more downfall can be seen. Positive momentum can be seen only once the stock manages to give the breakout of 135 to 140 levels, because that level is acting as a crucial resistance, or we can say the cluster resistance zone is there at 140. Any move above that level on the closing basis will see some change into the trend, and which will take a stock towards to 160 level. So I will suggest to hold on. If you are holding for a period minimum at least 6 months, then definitely you can go long at the CMP as well for a target of 150 to 165 levels on the high side.
Got that view, Swati. We have a next query on Techno Electric. It's a counter that's done well for us investors who bought into it over the last few years. Currently seeing a consolidation phase. So when you look at the last 1 year chart, it's down 30%. And possibly Mahesh from Bengaluru has gotten caught on the downtick. He's bought it at 1,300 rupees per share and asking for a long-term view. Astha, on Techno Electric, a lot of what was made up until October 2024 and then the fizzle out. Should he continue to hold, average down? What would you recommend?
Recommend a hold on this counter, and my price target for this counter is more than 1,200 at this point of time. So we are giving a price target of around 1,400 to this counter, but in the long term. So now there are certain drivers which can be, help the company in posting very strong growth, and one of them is the data center. Another thing is that there are certain tailwinds which are driving the growth for this company, especially their EPC-led business. So I believe that, and their order book is also very, very strong. So on the basis of these factors, I believe that this counter is well poised to move till the level of 1,400, but this is quite a long-term target in which a 1 year perspective can be there. So if investor has a 1 year perspective, then definitely one should hold this counter.
Okay, all right. So that's the regards where Techno Electric is concerned. Viewers, it's time to slip into a very short break, but we will be right back answering all your queries on the other side.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी। 70-75 वर्ष तक ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धारो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करने। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
शिव प्रकाश जी सिर्फ 35 साल की उम्र में हार्ट अटैक से अचानक चले गए। टर्म लाइफ इंश्योरेंस के पैसों से उनके माँ बाप को सहारा मिलेगा। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
Welcome back. You're watching Ask Profit here at NDTV Profit. For viewers who are just tuning in, you can either call us or WhatsApp us on the numbers that are flashing on your screen up there. The next one, I think, is a much awaited query. A lot of people who are Trent investors would want to know as to what should they do today. Suresh from Kerala, although has bought at the levels of 4,925 shares, is what he's been holding in his portfolio from a long-term perspective. Asta, with the business update that it has come out with, I was just telling at the start of the show that the 6 quarters so far sub that 50% growth, and the growth has been falling from 37% to 27% to now almost 17% this quarter. Just want to get a sense, because valuations still don't look cheap, plus the stock is beaten down quite a bit. It was the biggest Nifty loser in 2025, and since its inclusion in Nifty 50, it's down almost 45%. Do you think it's found its bottom now? And going ahead, do you think it makes sense to make an entry? Because all the target prices that analysts have had, it's below. It's trading below that point now.
So as you have asked that it is that this company or this stock has found its bottom now, I don't believe that this is the bottom as of now. Maybe this stock can fall more downside from here, and maybe we can see the levels below 4,000. So right now, I don't feel that there is a bottom, and one should start, bottom fishing at this point of a time. Second point, which I believe about this counter, that there were certain reasons there, and that is why the company was not able to perform strongly. But now they have come out with, more youth-based launches. In fact, the kind of expansion they are doing, more launches, etc. I think these will help the company in posting good set of numbers, not in immediate 1 or 2 quarters, maybe 6 months down the line. So there are certain reasons. That's why I believe that this counter will not move uprightly, up from here. Maybe it will take some more downside and then again starting moving upside. So I don't believe that this is the right time to make entry into this counter. Wait for some more downside to come in and then start accumulating or averaging or make any sort of fresh entry into this counter.
Asta, a flurry of queries coming in on the consumption space. So let me toss to you very quickly on them. One is Swiggy. Vishwa from Bengaluru is actually holding 800 shares at 416. Stocks at 360 today on the back of that block deal. Should he add some more today? What's your view for the next 2 years?
I don't believe that one should add some more at this point of a time, because outlook, at least for coming few years, is not as positive. However, for the long period of 2 years, maybe the kind of happenings which will take place may decide the fate of the company. But right now, I believe that it may show some more downside from here, because first of all, valuations are high. The company is still not able to show very, very strong, turnaround in their financial performance, and the kind of news flow, the competition, we all know that Zepto is also coming out. So all these things are not making this is a good investment at this point of a time. Wait for some more downside to come in and then make entry into this counter. Those who have this counter in their portfolio can hold it, but I'm not recommending any fresh entry.
The next caller coming in from Hyderabad, and Vardarajan has a stock query for us. Vardarajan, very good morning. Please go ahead with your query.
I hold 1,000 shares at 120 of Union Bank of India.
Okay.
I'm a long-term investor. I want to know the future.
And Vardarajan, do you have any other banking names, both private and public, in your portfolio?
Yeah, I have State Bank.
Okay, you have SBI. Okay,
yeah.
All right.
Asta
okay, got it. Asta, on Union Bank, your quick view is bought at 120, also holds State Bank of India in his portfolio. What should Vardarajan do?
So for SBI, I've already said that we are liking this counter and recommending one of the investment pick from our side. Talking about Union Bank also, this is a way, our old bank. It established in 1919. So a very, long history this bank is carrying. Now, if I talk about their asset quality also, asset quality has shown some sort of improvement. We are seeing some sort of traction in the PSU banking space. So on all these factors, we believe that this counter may move till the level of 180 to 185. Stay invested in this counter.
Okay, all right. The next question that we have is on Avenue Supermarts. Do we have the name of this person? Okay, I don't think we do. But he's been holding 7 shares of Avenue Supermarts at 3836 and wants to know if this is a good time to accumulate more shares and hold till profit comes into picture. Astha, I'll come to you on this one. It came out with its business update yesterday. And slowest growth in 20 quarters is what we saw this quarter, right? So overall, for them, aggressive store expansion is what is hitting their overall average sales per square feet. And plus e-commerce and quick commerce competition is still hitting them. What's the view like?
Yes, and because we all know that this company was planning a very strong store acceleration, and I think that is not playing well for the company at this point of time. But here the quantity is less because, as I have heard it correctly, it is only 7 number of shares which the investor is holding. So idea here is to remain invested, but don't expect any big gains from this counter. This is a counter which may yield some returns, but in the long term, not in the short term.
Got your query. The next one is Swaraj Engines. Now, in this one, Dinesh from Noida, he's a senior citizen. He's asking if it's a good time to enter this stock. What would you recommend, Swati?
I will not suggest to take a long position at the CMP because the stock is under the selling pressure, trading in a downward sloping channel. A fresh momentum can be created, long positions can be created. Any deep stores to 3400, 3450 levels are the attractive levels where the risk-reward ratio is favorable. From there onwards, we can see some sort of a strong momentum rally on the upside towards 24,000 to 4200 levels. So wait for some.
Got it, Swati. But viewers, it's time for a second round of the rapid fire in this edition of Fast Profit. We're going again for that magical 15 queries in this 1 hour. So Swati as well as Asta, request you to keep your answers on buy, sell and hold. The first one is coming in on from Devendra, K Fintech or CAMS. Asta, what would be your preference?
CAMS.
Okay, Irida is the next one. Bought during the IPO. Ganesh Natarajan wants to know if you can continue to hold from a long-term perspective. Asta, your view?
Hold from the long-term perspective.
Varun Beverages bought at 520. What would you recommend, Asta?
Hold. I think we will able to see the cost price of 520. A hold from my side. Yeah.
Anantraj is the next one. Quantity is 1000. Bought at the levels of 620. From a short to medium term point of view, Swati on the charts.
Hold target will be 640 to 680 levels.
Dr. Love, for the long term, should she continue to hold, Asta?
Yes, hold for the targets of 1550.
Okay, Reliance Industries is the next one. Sankar Narayan wants to know if he can continue to hold the 200 shares that he's bought at the levels of 1262. Swati on the charts?
Yes, you can hold on for a target of 1600 to 1650.
Wakefit, it's a recent listing, Asta, but any view?
No, we are not liking that counter. So if anyone has a holding, try to exit from this counter.
Okay, Navneet from Patiala wants to know about Allied Blenders. He's bought at the levels of 653 and sitting on a loss right now. Swati, on me on the charts?
I would suggest to hold on by keeping a stop loss of 545.
Zentek bought at 1691. Swati, should he continue to hold or add more?
You can hold on for a target of 1420 to 1450.
Okay, TCS is the next one. 400 shares bought at the levels of 4000. Chitranjan wants to know if you can continue to hold from a long-term perspective. Asta, your view?
Yes, hold from the long-term perspective. Targets are 3400 at the initial levels.
Netweb Technologies bought at 3700. Swati, what's your view on this counter?
You can hold on. Initial targets will be 3600 and beyond that 3800 levels can be seen.
Cupid is the next one. Sai Kumar from Visakhapatnam wants to know if this is the right time to make an entry. Swati, found its bottom?
No, hold on for some more time. 350 to 300 levels zone are the good levels to take a fresh long.
Nestle, a fundamental view, Asta, is what Afreen is asking.
Yes, we are positive on this counter. Fundamental view is positive. We believe that definitely this counter will be able to move 1350 to 1380 levels from here.
Okay, Sterlite Technologies, 1000 shares bought at the levels of 118. Medium term view on this. Swati on the charts?
View is positive. You can hold on for a target of 105 to 110 levels.
South Indian Bank, Swati, would you recommend any target price in the near term?
Yes, near-term target price will be a 47 rupees and beyond at 50 levels can be seen. So it's a hold from my end.
Okay, Colgate Palmolive is the next one. Niva from Chennai is holding 10 shares bought at the levels of 2530. Can she continue to hold this from a long-term perspective? Asta, your view?
Yes, definitely a hold from my side.
HLE Glasscoat, Swati, your view?
At the current levels, view is a little bit cautious, but one can definitely hold on. 425 will be the stop loss. Upside 450 to 460 levels can be seen.
Okay, RBL Bank is the last one. Sarthak from Noida is holding at the levels of 320. What should he do from a 6 months perspective? Swati on the charts?
Hold 360 to 380 levels can be seen soon. So it's a hold.
Alright, okay, so that brings us to the end of this rapid fire round of Ask Profit. Asa and Swati, thank you so much for taking out the time and helping us answering those queries. Viewers, if you've missed your queries in this show, you can ask us your queries at 2 p.m, which is the afternoon edition of Ask Profit. But do stay tuned. KYC on the other side.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
सोचो आप सुबह उठते हो, अपना ट्रेडिंग ऐप खोलते हो एंड योर पोर्टफोलियो इज एम्प्टी। स्कैरी है, राइट? दिस इज द नाइटमेयर ऑफ गेटिंग हैक्ड और स्कैम्ड ऑनलाइन। एंड हियर आर सम बेसिक्स दैट यू ऑलवेज नीड टू स्टिक टू। हमेशा याद रखिए, डिजिटल हाइजीन इज अ की फैक्टर टुवर्ड्स सेफ एंड सक्सेसफुल इन्वेस्टमेंट।
An investor awareness initiative by SEBI.
Punjab government foremost in public welfare. Crackdown on drug abuse. In order to stamp down on the decades-old problem of drug abuse among the youth in Punjab, the Punjab government launched the Yudh Nasheyan Viruddh campaign in February 2025. The campaign works on 3 fronts: crackdown on drug smuggling with the help of people and panchayats, stringent action against drug dealers and de-addiction and rehabilitation of drug addicts. Around 24,000 FIRs have been registered, 36,000 accused have been arrested and 1,500 kilogram heroin has been confiscated so far.
ਛੋਟਾ ਵੱਡਾ ਕੋਈ ਵੀ ਕੁਝ ਕਰਦਾ ਹੈ, ਜਿੱਥੇ ਤੁਹਾਨੂੰ ਜਾਣਕਾਰੀ ਮਿਲਦੀ ਹੈ ਵੀ ਇੱਥੇ ਆ ਕੰਮ ਹੋ ਜਾਂਦਾ ਹੈ, WhatsApp ਦਾ ਨੰਬਰ ਹੈ, ਇੱਕ ਵਾਰੀ ਸਾਨੂੰ ਦਾ ਮਿਸ ਕਾਲ ਮਾਰ ਦਿਓ, ਤੁਹਾਡੀ ਜਾਣਕਾਰੀ ਬਿਲਕੁਲ ਗੁਪਤ। ਉਸ ਤੋਂ ਬਾਅਦ ਉਹ ਬੰਦਾ ਘੰਟੇ 2 ਘੰਟਿਆਂ ਬਾਅਦ ਤੁਹਾਨੂੰ ਕਿਸੇ ਨਾ ਕਿਸੇ ਥਾਣੇ 'ਚ ਦਿਸੂਗਾ।
More than 4,500 villages in Punjab have declared themselves drugs-free. As part of the crackdown, the government has demolished 104 illegal properties of drug smugglers, besides freezing 144 properties worth 75 crore rupees belonging to corrupt officers and drug smugglers. In order to disrupt the supply chain of smugglers using drones to ferry drugs from across the border, the government decided in August 2025 to launch 9 anti-drone systems worth 51 crore rupees. The capacity of de-addiction centers has been expanded to include skill development, employment and rehabilitation of drug addicts.
जो एडिक्टेड हैं लोग, उनको नशे से दूर करने के लिए जैसे सरकार ने ओट सेंटर खोले हुए हैं, बड़े अच्छे उपराले कर रही है सरकार, जो कि पंजाब को ड्रग फ्री कर दे।
Punjab government foremost in public welfare.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos this January on the NDTV network.
Powered by Government of Andhra Pradesh and EDB.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Hello, Moto.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Also, let's guess the company which will be coming today in KYC. And the first hint I would like to give you is it's one of the largest steel wire manufacturers in the country. Also, the second important hint which would be there, that would be that the company operates in the infra and the automotive segments and a lot of other segments as well. But these are the new areas which they are focusing as well. They recently came out with their quarterly sales number and they were at the highest levels in the third quarter. So we will be asking the management what led to this growth. And the stock, however, is on a punishing mode. It's down 20% in the last 6 months. Why that has happened? But keep guessing the company, and I would like to point out the company which we are in focus is Bansel Wires Industries. This is the company which you are talking about, the Bansel Wires, and this is what we'll be looking after. But there are key questions. Why have we called this company? A lot of news flows are coming in and likely their volume growth guidance, that's what I'll be interested, because they have posted some good numbers. Also going ahead, other important guidances which will be important will be the revenue and the EBITDA guidance which we'll be looking out for the company. And interestingly, the company is shifting to its specialty product portfolio as well. So that's something which we'll be looking out as well. The margin and the revenue guidance ahead, we'll ask Pranav, where does the company actually go from these important levels? And also, apart from this, the expansion and the capacity plans, that's very much important. Company is going through some specialty products which are there in that capacity additions which are happening. Also, apart from this, why we have called this company is that Sanand backward integration. What are the key timelines? Currently, it has been scrapped, but will there be any other future outlook? Whether this integration will go up or not, that's what we'll be asking. And here it is. Pranav Bansal, the MD and CEO of the company, where we will be asking him a lot of questions. But apart from this, let's understand the details about the company. What's everything all about and what are the key details you should know before you go ahead of this KYC segment. Okay, so the company itself, let's just put out the key numbers. It's the largest stainless steel wire manufacturer in India, and in terms of volumes also we see it is a big player as well. The company is second largest steel wire manufacturer in India by volume, and looking at the installation, it's around 6.18 million tons per annum installed capacity, and currently as per the Q2 numbers ending, 74% of capacity utilization has come in, and roughly 5,000 odd customers are also there. And also, let's see how the industry breakup is there of the revenue mix as such. And this is the breakup coming in. It's kind of even Stevens. Automotive is on the higher side. That's around 22% coming in, followed by general engineering, infrastructure, consumer durables, and I think more industries are there. The smaller ones includes cable, agriculture, poultry as well. These are the other industry, companies where there is kind of a support coming in, but a lot of miscellaneous revenue mix is also in place. Apart from the revenue mix, let's go ahead and see what else is in store. Yeah, just show the other thing. Yes, see the revenue mix. Largely the domestic one is 90 odd % coming in, and just a smaller number, that's around 10%. That's the revenue mix coming from the export markets. Also, the business update was there and stock was of course buzzing on that. The numbers year-on-year basis looks strong. Both of them are 30% odd momentum growth coming in. Sequential, however, on the lower side. But whenever you judge a company, there is lumpiness. So I have taken the year-on-year basis. The next phase of growth, this is very much important for the company. You should understand induction, hardened and tempered wires. We'll understand more from Pranav on this, why they're going into this segment. And this is the second one where the announcement and the capacity expansions are taking place. So this is something which we will be watching out for. But before we start, I would like to give you the rating parameters for the show. There are roughly 8 rating parameters where we judge a company. This also includes your income statement, your balance sheet, cash flows, the return ratios. These are one of the most important things which we take in focus. And now, of course, we see this is the important 4 parameters coming in. Apart from that, the remaining 4 parameters, they also include shareholders, street cred, analyst stake, and even outlook. Analyst stake is nothing but how much analysts are bullish on the stock, while street cred, to define, It's how the stock has moved, be it 1 month, 6 months, or even the last 5 years, to show you what the returns have come in. But the most important rating parameter is the outlook parameter. Also, apart from the outlook parameter, let's move into the first parameter, that is the income statement. And largely, the history is just 2 years. That's why I've taken the 2 years CAGR numbers for this. Revenue and EBITDA, both of them, look at the numbers, what the growth has come in. 121% for revenue, and even for EBITDA, it's 100% growth. The H1 numbers also I'll get you in, but Q3 numbers were also rock solid, which I had mentioned earlier. Net profit has been significantly good as well. And Q2 numbers, look at it, revenue, that's up almost 12% sequentially on a year-on-year basis. These numbers are showing a good tick. But the profit, there has been some impact, and that is where my little bit of concern comes in. But net, the elevated margin levels is something what the company is coming across, and over the last 3 years they have maintained this band around that 7.3 to 7.5% margin band. So we'll ask Pranav, will this go and touch the 8%? So overall, for the income statement, I'll give a very, very strong thumbs up when it comes to Bansel Wires. Also, let's see the second parameter. This is also very much important, the balance sheet. And of course, the balance sheet itself, the company is going through a big capacity kind of a spending as well, and there might be some pressures also in the balance sheet. That's where I kind of have a neutral rating on this parameter. Largely, we see the borrowings, they have remained somewhat similar, but from FY24 it has come down around 700 odd crore rupees to around 600 crore rupees. You expect this to be a bit elevated only. The reason is company is going through big capacity expansion plans, and at times there are pain in the balance sheet, and eventually the return ratios you will see will be very dismal because of what the construct is happening. There are cycles, when you understand the company. Cash bank balance, nothing much to be there, and so it's a neutral rating for the balance sheet. And the cash flows also nothing very significant coming in, but a little bit of concern definitely comes in from the operations and the PAT as well. And so overall, we have seen, given that a neutral rating, the return ratios which are coming in, those ROC, ROE numbers, that's where my concern also comes in. And from FY24, it's gone down to 15 odd %, and the ROE numbers also that we see, that's also gone down. So now I will be giving this a strong thumbs down when it comes to the return ratios. Also, apart from the return ratios, the shareholding pattern, let's look at over here. That's around the promoters is stable around 78 odd %, and nothing much has changed for the FIs and DIs as well. But interestingly, the concern for this public, that's very low, and because of that, I think I would be giving this a thumbs down when it comes to the shareholding pattern. Also, apart from this, let's move on and show you something more for the shareholding pattern segment. After that is the street cred. That's also something we'll look out for. And just pull out the street cred, how the stock price movement has happened, and that's where the concern starts coming in. The last 6 months, stock is down 20%. Also, let's see stocks, how it has performed. Last 1 year is down 29%. So after 2024 September, most of the small caps, mid caps have fallen, and this company is also not that different from them as well. And that's why 5 years, of course, the listing history is less, so we have taken it around down 13 odd %. So this is the street cred also, and it's coming in with a kind of a thumbs down. But return potential is very much important, and around 5 analysts are tracking the stock. They have given a buy rating for it, and still from the current prices, a 44% return potential is expected. So that's why I've given a strong thumbs up when it comes to the overall, analyst take on it. But outlook is something which everybody wants to talk about. Company is giving a lot of future related statements, and that is where a lot of our conversation will lie around, because future what lies for Bansel Wire is very much important. They're expecting a 30 to 40% volume growth in FY26, and also looking at the other growth parameters, they are reiterated 20 to 25% long-term growth for the revenue and the EBITDA front as well. That's all we'll be talking about. And also looking at how the ROC numbers are panning out. They are looking at some good strength over there. If you could just show the other outlooks also. and that's where we'll show how the company is moving. EBITDA per ton that's targeted to reach double digits within the next 3 to 4 years, and that's something to look out for. Around 600 crore positive cash flows expected in FY26 and 27, and also a 25% plus ROCE business is expected by FY27. So these are the important outlooks, for Bansel Wire. But to give it in perspective more, talking with the management, I'd like to give you a small hint about the management for Pranav. Pranav himself, he started entering the business at a very young age. The promoter I'm talking about, Pranav Bansal, he's the MD and CEO of this company. In the last 10 years, he has been associated with the company, and he started off as an operator of machines in the company. So that's a very interesting history, and he has focused only on the business as for my conversation with him. But this conversation goes more now. Now I'm joined in by Pranav Bansal. He's the MD and CEO at Bansel Wires. A warm welcome and a happy 2026 to you, Pranav. To start with, Q3 updates. They have been on a very strong, momentum which has come in. The volumes are coming at lifetime highs. My first question to you is the volume growth outlook, what you have given earlier. Will you reiterate that guidance, or with a very strong performance, can we have an upward movement of this guidance for volume growth?
Sure. Thank you for having me. So, as far as volume is concerned, we started the year thinking that we would be able to do 30% additional volume. But after the first 2 quarters, we increased our guidance from 30 to 40%, because that's what we are now looking at. And it looks positive. As of now, demand is good. We have good capacities coming on stream every quarter. So, as of now, I think I would like to stick with the 30 to 40% kind of a volume growth. Definitely, we will try to achieve the exact 40% number as well.
Pranav, that's an important update coming in. But Pranav, there's a concern also. Looking at the financials, the ROC, the ROE numbers, they are constantly under the pressure. And that's where my concern has also come in. And of course, you are expanding, and that's why we are seeing those numbers getting impacted. But when will these, ROC, ROE numbers, which are, down, when will they bottom out? Can you give us a period, next 1 year, 2 years, when will that happen?
Sure. So, in fact, as a company, if you look at our history, we've grown at 20-25%, but that has always been true-headed. Now, in the first 2 quarters, we have taken a very strong target for ourselves, wherein we are now looking at a 25% ROC number that we want to achieve within FY27. And the journey for that has already started. This is the first time ever this year that we have generated cash. That too, in the first 2 quarters, we've generated about 150 crores of free cash already. Our target of 600 to 700 crores for these 2 years, I think we are on track to achieve this or to better that as well. And as and when we do that, our ROC, ROE numbers would anyways improve. ROE, of course, because we have just gotten an infusion of equity, we are not tracking that as much as the ROC numbers, because that's the core business. And 25%, I think, is a reasonable target. We should be able to achieve it within 27. We have already been seeing upward movement on that trajectory now, quarter on quarter.
All right, Pranav, that concern is definitely ticked down. But apart from that, the company is moving to specialty products. And whenever there is a company moving to the specialty products, the margin profile also changes. So I have 2 questions to it. What are these specialty products? There are some expansions also which have taken place, the IHT and the steel cord. So give us the more details about this, and how will the margin profile change once they start coming in?
Sure. So IHT is a new vertical that we've added only this year. These are very highly technical products and used for growing industries like for EVs, we've gotten IHT, and steel cord is one major product that is used in tires. And we are the only company in India manufacturing it now, the only Indian company today to manufacture it. So yes, these are high growth areas for us. As a company, we've grown at 20-25%, and in the future also we want to grow at 20-25%. That is where specialty will really add value for us. These products are products which take a longer approval process. So we are looking at maybe 1 to 3 years of approval, but we should start seeing numbers from specialty within the next year, definitely. And once you see those numbers, our margin profile will definitely increase. Our per ton EBITDA and the percentage of EBITDA both will start increasing.
We have spoken about the percentage growth, Pranav, but if we had to quantify that, don't give me an exact number, give me a range. Like right now, if your margin is at X for FY26, for FY27 or for FY28, what will be the margin change? And this will be a consolidated margin, if you could just give us that.
So, see, our business is structured in such a way that percentage of margin is always dependent on my raw material price. We have a cost plus model. So if there is an increase or decrease in my prices, the same is passed on to the customer. So we are essentially acting as a converter of products. My margins are intact. Therefore, percentage is not something we track. On a per ton basis, we are at about 6,000 to 7,000 rupee a ton. And our target for the future in the next 5 years maybe should be to reach double digit here. From 6 to 7, we would like to go to 10,000 plus kind of a margin in the future. But that being said, honestly, the way we want to look at it is we want to grow at 20-25% even on the absolute EBITDA front. That's the main target.
All right.
So 5% or 10% does not make a lot of difference as long as I'm able to get 20-25%.
Correct, Pranav. But since you spoke about a lot of raw materials which are there in your company, the key raw materials, what are those? And are these prices also elevated as how most of the, global prices are elevated across most of the assets? Is it same for you? Is any pinch coming in?
Sure. So for me, I have only one raw material, and that is my majority of cost overall. That's steel. And for steel, we have a pass-through model. We are a largely B2B business, wherein any increase and decrease there is in my raw material price is passed on to the customer with maybe a lag of 1 month, or in most of the products the very same day. Therefore, if there is an increase in raw material or decrease, my business is not really impacted much.
All right. So there is a pass-through models. A lot of our viewers at KYC had written about how this business model of the company is working, and a lot of queries came on your customers. One of our viewers stated that 5,000 plus customers are there, and it's very difficult to track which are whose. But if you have a big customer, what does the customer profile actually looks like? These are all Fortune 500 companies, or these are basically your Indian companies which are the top 500 companies by market cap. What are these companies? And if any big addition has happened over the last 3 odd months?
Sure. So we are very well diversified when it comes to our customer base. We are servicing today customers from different industries, whether it is power and cable, automotive, consumer durable, general engineering, infrastructure. So we have customers all across. And one good thing here as well is that we have no customer centricity. So there is no customer that accounts for more than 5% of my sale. Therefore, that gives me a lot of power when dealing with a customer. I'm able to get the right price for the kind of service that we provide and the quality that we provide. Customers here would range from maybe a company buying 500 kgs a month to 1,000 tons a month. So that's maybe a 1 lakh kind of a 1 lakh product a month to about 20 crores a month. Those are the customers that we have.
And Pranav, the debt levels are elevated, and of course, company is going through important transformation as well. But will you be taking some more debt in FY27, or that's it? Some debt reduction will start now.
Hello.
Yeah, Pranav, you can hear me? Yeah, Pranav, I wanted to know about the debt reduction strategy for the company. It's still at elevated levels.
So as far as debt is concerned, as I said, till now we have grown through debt. This is how the 20-25% has come in. But from here on, our focus is completely shifted to cash flows. Therefore, now we want to make enough cash flows to reinvest in the business and keep growing at the same pace. To grow at 20-25% every year, we need about 150 to 200 crores that we need to invest every year. And more than that should be our free cash coming in. So in this year and next year, if we are able to generate upward of 600 crores, I think that should be enough to fund all our expansion. Therefore, we are looking at, in fact, a debt reduction going forward, even after growing at this pace from next year.
Yeah, and Pranav, one more query is there. Like what happens to your core business? Of course, stainless steel wire manufacturing is definitely there. You're going to value added. What's the ratio looking like? Current profile, value added, and your normal products, and maybe in the 2 years down the line, what will be the revenue profile if you just have value added and your normal business?
Sure. So today we have three main verticals that we operate in. Stainless steel is one of them. Stainless steel, high carbon, and low carbon products. So high carbon is a product majorly for automotive. Stainless steel is more consumer durable side of things, and low carbon is more agriculture and cable related, power and cable segment related. Now the fourth vertical is specialty wire, which will start next year, and if everything goes well, this has a potential to contribute a large chunk of my EBITDA and my revenue going forward. If a very aggressive or a very optimistic figure is that I would want specialty wire to contribute maybe 30-40% of my total business in the next 5 years. And I think if our approvals are, if we get approvals from our customers timely, I think we should be able to achieve that.
All right, so 40% revenue target is coming in for the specialty wire segment. That's what Pranav has stated. But for our viewers, I want to revise the KYC ratings which I had done earlier. I had given 8 parameters where I had judged the company, and largely I would like to say the income statement has been very strong, balance sheet cash flow largely neutral, but the concern for the street is return ratios, and maybe that's why the street cred also is under pain, because largely we saw a big sell-off in the last 6 months in the stock. Stock is down 20-odd%. Shareholding neutral, but analyst is still bullish, all 5 of them, and the outlook, that's where the strength lies. So total KYC rating of this company comes out at 4.5 out of 8. But yes, the outlook is bullish. The management has also given a bullish outlook going ahead, but it will take time. 2 years, 3 years for important capacities to come, the change in the product profile also. But just to end our conversation, Pranav, I would like to get you back in to this conversation. And Bansel Wire Industries, we spoke about the entire specialty segment, the commodity segment, or the core business which was there. But the Sananand integration, the company has actually put the plans off. That's what is there, if I'm not wrong. But will you try to regain this integration? Because whenever an integration project is there, that also helps the margin profile, or too many things at once for the company?
Sure. I think as of now, this was a very good decision that we took to hold off on that backward integration. That is really helping us focus on our core business. And in fact, I think that is the main reason why we've been able to increase our guidance and being able to perform better than our expectation. And without backward integration, I think our focus is now more on cash flow and return ratios. So first, I think our target would be for the first 2 years is to get 25% plus ROC. Once we achieve that, then we will start discussion of that.
All right. So there are 3-4 odd things, in this industry. But Pranav, this is a query for some young folks who always ask in KYC that if they want to start and come in your area of business, like you are also yourself a college dropout and you choose your passion. If somebody wants to chase their passion, what they do in your industry, in short?
Just work hard. That's all.
All right. It's very simple, 2 words, work hard, but it makes a lot of sense. Thanks a lot, Pranav, for your views on that, and the management showing their candor for the company and the growth outlook going ahead. Of course, the stock has taken a punishment. The stock is down 20% in the last 6 months, and the street might be taking the stress of the lower return ratios coming in as companies are going through capex. And interestingly, the company's utilization levels is at roughly 70-odd%. So the expansion capex makes sense. So these are how cycles play out when you do a business. So that's the entire management talking about it, and we have given 4.5 out of 8. So that's all, folks. For KYC, stay tuned to NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
70-75 वर्ष तक ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर की महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
It's fresh, bro. Straight from the jungle.
I'll take the whole pumpkin. Make seamless UPI payments with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
Punjab government, foremost in public welfare. High-tech ambulance brings speedy help. The government led by Bhagwant Singh Maan has deployed more than 400 high-tech ambulances to provide rapid emergency assistance across villages and cities. Equipped with GPS tracking and digital communication systems, besides medical equipment like oxygen cylinders, ventilators and ECG machines, these ambulances provide critical care similar to the hospital emergency ward. This helps the doctors and paramedical staff to provide the best care to critically ill patients while in transit.
325 ਐਂਬੂਲੈਂਸਾਂ ਜਿਹੜੀਆਂ ਨੇ ਉਹ ਮੁਫਤ ਸੇਵਾਵਾਂ ਪ੍ਰਦਾਨ ਕਰ ਰਹੀਆਂ ਪੰਜਾਬ ਦੇ ਵਿੱਚ। ਸ਼ਹਿਰੀ ਖੇਤਰ 'ਚ 15 ਮਿੰਟ ਤੇ ਪਿੰਡੂ ਖੇਤਰ 'ਚ 20 ਮਿੰਟ ਔਸਤਨ ਟਾਈਮ ਹੈ ਉੱਥੇ ਪਹੁੰਚਣ ਦਾ। ਕੋਈ ਕਿਸੇ ਕਿਸਮ ਦੀ ਜੇ ਕੋਈ ਰੱਬ ਨਾ ਕਰੇ ਇਸ ਤਰ੍ਹਾਂ ਦੀ ਐਮਰਜੈਂਸੀ ਹੋ ਜੇ, GPS ਸਿਸਟਮ ਲੱਗੇ ਹੋਏ ਨੇ, ਆਪ ਵੀ ਅਸੀਂ ਚੈੱਕ ਕਰ ਸਕਦੇ ਹਾਂ ਕਿ ਗੱਡੀ ਕਿੱਥੇ ਹੈ।
In order to run this high-tech ambulance service efficiently and provide rapid assistance in villages and cities, the government has established a network where a dedicated helpline number 108 and 24/7 call centers help direct immediate assistance to patients in an emergency situation.
ਐਂਬੂਲੈਂਸ ਦਾ ਤਾਂ ਬਹੁਤ ਜ਼ਿਆਦਾ ਫਾਇਦਾ ਹੈਗਾ। ਐਮਰਜੈਂਸੀ ਦੇ ਵਿੱਚ ਐਂਬੂਲੈਂਸ ਦੇ ਥਰੂ ਆਪਾਂ ਪੇਸ਼ੈਂਟ ਨੂੰ ਬਚਾ ਸਕਦੇ ਹਾਂ।
This is proving very helpful in saving lives in critical cases of road accidents and heart attacks. Punjab government, foremost in public welfare.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be at the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Powered by Government of Andhra Pradesh and EDB.
Market continues to trade in a range. Nifty falls below 26,200 while Sensex drops 300 points today. Nifty PSU banks continue to gain the most, followed by metals, oil and gas, and metal falls lose the most. RIL faces sharp selling pressure, marking its biggest fall since April 7, 2025, after Bloomberg reported the company may buy Russian crude, raising questions around supply strategy and risks. Trent faces heavy selling pressure post a weak Q3 update, with markets flagging concerns over aggressive expansion and falling revenue per square foot, triggering a nearly 12,000 crore rupees erosion in its market cap. Nifty Metal extends gains for the fifth straight session as copper hits record highs, boosting Vedanta, Hindalco, Nalco and Hindustan Copper. Regulatory relief from the RBI as it softens related party lending rules. Final norms exempt the equity investments, retain curbs on debt exposure and allows legacy non-compliant loans to continue till maturity. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take it straight to the markets at this particular point at 12 noon. Well, Nifty 50, it's under pressure today, and a large part of that is really coming in from big boy Reliance Industries seeing a massive selling pressure. So 0.3% down when we talk about Nifty 50, and it's 26,200 levels that has been really given up. If you really look at all the sectoral indices, well, it's Bank Nifty which is outperforming the key indices and is 0.25% up in trade. IT is also reversed and is in the positive momentum. In fact, it's one of the better performing segments of the market in trade today. Of course, metals are another. When we look at the top contribution to Nifty 50, well, ICICI Bank, SBI are the two big gainers in the trade. And also remember, because of metal rally, copper hitting the all-time highs, Hindalco is also gaining in momentum. Bajaj Auto, Axis Bank are some of the few. But the biggest drag in the market is really coming in from big boy Reliance Industries, and it is contributing to a negative downtick of Nifty 50 by over 100 points in trading session. And so is the other big heavyweight, which is HDFC Bank, which is eroding about 45 points from Nifty 50. So that's a snapshot of the market. A lot happening today at the beginning of the year. Nishal Maheshwari, market expert, joins in to put more perspective on the trade today. Nishal, always a pleasure to welcome you on NDTV Profit. Now, my first question, of course, RIL is putting a lot of pressure on the markets today, and a lot of uncertainty as well as the geopolitical tension really receives 2026 quite emphatically, it seems.
Yeah. Afternoon, Nisha, to you and your viewers. Yes, I think there has been some news on Reuters as well as, I think, Bloomberg that there were some supplies in January, which Reliance is buying from Russia. And I think the company has come and denied it. But I think there has been an obvious reaction after what yesterday President Trump came out, said that they might look, if there is a resumption of trade, basically, they might look to do tariffs again. So I think that's a reaction, basically, which we are seeing in the Reliance in the short term.
Right. So, Nishal, in an environment like this, how should one really tread in the market with, the number of uncertainties that were legacy from 2025? It only got accentuated in the very first week of 2026. How should one tread really in this kind of a market? And what are the main themes and factors to watch out for?
So I think one should be totally focused on the domestic consumption stories, basically. Domestic is the only safe thing, basically, which is sort of under control. Everything else seems to be, I'm saying, there is a huge amount of uncertainty around that. What's going to happen? I think the things are, especially the politically sensitive situations are becoming more aggravated rather than actually easing out. And one should be very cautious in this kind of market. Don't do anything, basically, which is where valuations are totally out of whack. I think that's one very, very cardinal thing, basically, and it will become more accentuated in the current year. So be cautious about the valuations. and secondly, focus on to the domestic themes.
Right. When we talk about the domestic themes also, Nishchal, all doesn't look well with the consumption and the demand space coming in a spotlight after the kind of pressure we have seen on Trent after its business update. So what is your view on the consumption pattern and the demand?
So I don't think so. Basically, Trent has done anything wrong. Basically, 17-18% growth on a large base is a very good number. The problem is basically the market has been saying that they are going to continue to grow at 40%, whatever the base is. And they took it up to 150 times, if I remember it right, when the prices went to around 58,000 rupees. So I'm saying that's the over exuberance of the market basically, which is getting corrected. As far as the company's numbers are concerned, I'm not really worried. 17-18% growth, basically, it's a very decent number.
All right. So the market has trashed it and punished it a lot more than required is what Nishchal says. Nishchal, as we talk, the market is really seeing a lot of weakness. How do you expect it to, really trade in the near future? And what are the aspects on your radar?
So I think one of the biggest things is obviously the current quarter result around the corner. I think that's going to really verify the themes which have been playing in the last 2 or 3 quarters, whether those numbers are going to hold on, whether the GST impact is going to play out, and whether the consumption, which we had all spoken about basically last quarter, whether that's going to play out or not. So I think that's an important part basically as far as the current quarter is concerned in the short term. But one has to be very cautious about the valuation, which I've been highlighting. I'm saying this has not gone away. We are still very costly.
So even in a weak market, Nishchal, and 26,200 levels given away by Nifty 50 in the weakness today, you still find the market valuations expensive. Any targets that you have in the near term or middle of the year, the way this market trend should really go ahead?
So I'm not saying the broader market is costly, but the stocks like Trent and all, which you said just now, basically, I'm saying even at these prices, basically the stock is trading at around 75 times. Now, if you are looking at a PEG with a 17%, 20% growth also, if we assume, then you are saying there is a PEG of something like 3.5. So I'm saying that's very, very high. And that's what is actually going to keep on driving these stocks down. So one has to be cautious. Broader index seems to be okay. Basically, we are looking at a 10 to 12% kind of an earnings growth in FY27, and we are coming off a low base last year. So I think market broadly should be okay, maybe around 8 to 10% kind of a growth on the broad market, but some of these stocks may not perform at all.
All right. Thank you so much, Nishchal. The biggest takeaway from this discussion is stay away from the high valuation stocks, but also earnings backed by the lower base of the last year is going to give some momentum to the overall market. So all eyes would be on the earnings season coming up in a few days. Thank you so much, Nishchal, for joining us with your expert take on the markets. But one stock that has been in focus today is the big boy Reliance Industries. It faces sharp selling pressure, marking its biggest fall since April 7, 2025, after Bloomberg reported that the company may buy Russian crude, raising questions around the supply strategy and the risks. In fact, my colleague Somit, who tracks this story very, very closely, the space very, very closely, standing by with all the details. Tell us, Somit.
Well, if you look at the Reliance Industries share prices, they were down as much as 5.2% at one point of the day. And this is the biggest intraday fall that we have seen in the share prices of Reliance Industries since April 7, 2025. On April 7, 2025, the stock had fallen nearly 7.5% on an intraday basis, and today it's down nearly 5.2%. Now, why this sharp fall is something that we are seeing in Reliance Industries. Now, this is post the Bloomberg report, which mentioned that Reliance Industries is buying Russian oil oil for its refiner. Now, as per the report, refiner has restarted some purchase for domestic production, and at least 3 tankers carrying Russian crude are indicating that Reliance Industries refinery as its destination. Now, this data has been taken by Bloomberg from Kepler, and Kepler gives this data which has been taken by the port services, and they also mention in their data that the destination could change going forward, but at this point of time the destination as per Bloomberg report was Reliance Industries refinery in Jamnagar. Now, why is this negative? Because few months back Reliance Industries had clearly indicated that they have stopped using Russian oil, and whatever production will happen going forward will not be done using Russian oil. And despite that, now there are these reports which suggest that Reliance Industries might be using or might consider using Russian oil. However, the company has come out with this clarification where they're saying that in the last 3 weeks they have not used any Russian oil and they do not intend to use any Russian oil even going forward. But despite this clarification coming in, the stock has fallen nearly 5.2% on an intraday basis. Now, today there were a couple of brokerage action as well that happened on Reliance Industries. Firstly, CLSA removed Reliance Industries from its India portfolio. That is the India strategy report that had come in from CLSA side, and they had removed Reliance Industries post the outperformance that we had seen of late. And secondly, there was an Axis Cap note which had maintained the buy rating on the counter and had hiked the target price to 1,916 from the earlier target price of 1,828, and they are seeing multiple key triggers coming in for Reliance Industries going forward. Overall, the brokerage view, 95% of the analysts tracking the company have a buy rating. Consensus target price stands at close to 1,700 rupees, which suggests an upside of nearly 14% from the current levels. And if you look at the valuations, the 12-month forward valuation is largely at par with its 2-year average currently at 23 times.
All right, Somit, thank you so much for all that number crunching as well as also the deep dive into the analysis of Reliance Industries, the biggest stock of the day and the biggest talking point of the day. Reliance Industries with a massive selling pressure seen in the market. There you go. A slight lift up from over 5% downtick, but no consolation at this particular point. All right, let's shift focus to one more theme that has really caught the attention of the markets in the year 2025, and it's going to be bigger and better in 2026. That's going to be the VC exits as well as value unlocking through the startup IPOs. So venture capital space has become a very important space in the country because of the backing that they have given to the startups, to the entrepreneurs, and they have now the harvest time of getting their money back that they betted on these entrepreneurs through the IPO route and many other dynamics of their investment as well as future tech play in the country. Let me welcome two important venture capitalists who will put focus on the outlook for 2026. Let me welcome on NDTV Profit Sanjeev Bikhchandani, who is the founder and executive chairman of Info Edge, and Sasha Mirchandani, who is the managing director and founder at K Capital. Gentlemen, so good to have you on the show. Now, Sasha, my first question to you, how's the outlook for the VC investments in 2026 looking for this particular year for you?
The venture capital outlook remains very robust and strong for 26, and it takes forward from the positive activity in 25. So I feel overall it remains strong. Exit environments have clearly reopened, as you saw at the end of 25, and we expect IPOs to continue in 26. And India's strong GDP growth outlook and place in the world are all positives for the ecosystem.
Right, so robust outlook for 2026, but Sanjeev, startup IPOs were the main theme, and that looks like it's going to continue for this year as well.
Absolutely. I think one of the big issues in VC in India is that you weren't getting exits because strategic sales typically don't happen at a kind of valuation that will make VC investors happy. And IPOs were not happening. But I think post the Zomato policy with the IPOs, from then onwards, and there was a steady number of IPOs. And this last year was a very good year for IPOs. There were more than 40, I believe, many of them new age companies. I believe the pipeline remains robust. I think India today is possibly the best market in the world for IPOs below $4 billion. Because NASDAQ has become so large that if your market cap is less than 4 billion, nobody talks to you. investors, research analysts, nobody's interested. And for the smaller companies, the smaller IPOs, India remains like very, very good market, the best in the world. So actually, India, if the government, if SEBI handles things right, can be a global destination for IPOs, NASDAQ in India, and that is a really good thing.
So Sanjeev, being one of the pioneers as a VC investor in India, a very big comment coming in from you that India has become the startup IPO world, country of the world. So Sasha, definitely you are smiling year to year on this. What is your exit plan in your portfolio through IPO?
Yes, so we have a couple of pipeline IPOs in place for 2026. Whether it be the beginning or mid or later, time will tell. But companies like Zectwork, Fractal are in the pipeline for us. As you know, other high quality companies like Zepto, Oyo, etc. also in pipeline for 2026. So it looks robust with solid businesses.
All right, so a strong IPO pipeline and K Capital also there. But Sasha, there has been a lot of debate on the valuation concerns as well. How has been your experience on the valuation mismatch in the past?
Yes, so we did one strong IPO in the last cycle, which was Nazara. As you see, Nazara has performed really well over the last couple of years because it's very well-run, profitable business. And I think that theme continues into 26. If you're well-run, profitable, unit economics are strong, the market gives you a good price. That's what's happened with Nazara. In the US, we had done Zeta Global, which had IPO'd last year. So overall, if the company is well-run like these two companies, you've seen very good outcomes for us.
So VC exit as well as value unlocking is fine, but Sanjeev, for a more sustainable IPO play for the startups, don't you think that the valuations should be a lot more balanced to keep something on the table for the new investors?
I think I've always sort of maintained, and at InfoEdge we've always maintained that don't be aggressive on pricing because what you don't want is your IPO underwater post-listing. That is not a good narrative. That is a failed IPO. If investors get hurt, the ones who come in the IPO, it's not a good thing. So it's good to be a little conservative on pricing and let there be a decent pop in the aftermarket. And as the company grows, valuation will take care of itself.
So Sasha, as Sanjeev mentioned, that the IPOs will have to be priced much better for this whole controversy and the debate to really stop around startup IPOs. Majority of these startup IPOs are trading below the IPO price. Only in the last year, we have seen some really hold above the IPO price. What is the solution in your view?
There was also a lot of exuberance in 21, 22 when some of these companies listed, right? So they were way more valued than they should have been. So they've kind of climbed back into their valuations over the last couple of years. This cohort of late 25, I think, as Sanjeev rightly said, valued themselves quite fairly and even took, small haircuts if required to make sure that the pricing was fair to all investors, including the new investors in the IPO, the retail investors, who I believe strongly should be making money in your IPO. So you must leave something on the table for them.
Right, but what will also create the next generation of value creators? But because it looks like, Sanjeev and Sasha, that one whole value chain has already been capitalized upon. What's the new wave of technology and new ideas that you're really building on right now?
First, I want to agree with Sanjeev. All my life, we've been investors focused on the entrepreneur. And like Sanjeev, we are very long-term investors, at least 12 years minimum, hold periods, if not 14 or 15 years. But some of the themes that we like, at least for the next cycle, are manufacturing, industrialization, AI, intelligent automation, cybersecurity, frontier tech / deep tech, rising domestic consumption, as you know. So these are some of the themes we are looking at for 2026.
Right, and what is your investment strategy then, Sasha, for this year?
Yeah, we continue to be a very early stage focused fund. The first $2-3 million is what we like to do. We are first investors in most companies that we fund. It doesn't have to be institutional, with the first investors. That will continue across the themes I just mentioned.
One important aspect I wanted to also check, while there is a lot of concern around the global economics for the year 2026, and we've seen FIIs, FPIs pull out of India as well, is LP fundraising a concern for 2026, Sasha?
I think, first of all, India remains a big positive for most LPs for us. I've traveled the world in 2025 just talking to LPs to understand sentiment. I've never seen India more at the top of the scale than in this period. The genuine enthusiasm with a lot of logic around it. So therefore, that's good news for Indian GPs like us. One of the key things is ROI on AI. I think that's a big thing. The hyperscalers have been spending a lot of money. So now people are looking for ROI. Companies like ChatGPT, Anthropic, etc., will go in for large IPOs, SpaceX, etc., in 2026. So that's going to be interesting to see how these IPOs happen. There could be humongous IPOs, literally hundreds of billions of dollars raised among these companies. So overall positive, but AI, are we going from the hype to reality, or is it going to continue to be hype? And that's where the concern is. And therefore, ROI and AI, I feel, our companies at the enterprise level actually using AI will be tracked very carefully.
Right. So you raised a very important point, Sasha, and I'll take that same question to Sanjeev. What about AI capability, and is it overhyped, Sanjeev?
I have a comment on AI, Nisha. See, and the funds going in there. You see, a lot of these LLMs and these big investments in AI have not happened from venture funds. They've happened from the balance sheets of large operating companies, from their profit flows. For them, therefore, it is not a VC investment from a fund which you have to have exit in 7 years or 10 years. It's a strategic investment from their balance sheets where they are in a war that they have to win, they will not give up. So to that extent, while valuations may seem high and a large amount of money may have gone in, is it a bubble that's going to burst? I don't know, because these are all players with a lot of staying power, and they can keep on investing, and they need to win, so they will keep on investing. So I don't see it ending very soon as a bubble bursting.
Yeah, I would agree, because this money is really coming from their balance sheet. Yeah, go ahead, sir. No, I just want to agree with you that the balance sheets of these companies are very strong, and from this cycle, the money for most of this is coming from their strong balance sheets, unlike in the past where it was debt or some sort of loan to really raise capital to throw money away. This is coming from very strong balance sheets of these top 6 companies. Therefore, I agree with Sanjeev that it's not going to be a situation where it's going to suddenly collapse.
All right, it's not going to suddenly collapse, but there is some semblance of a bubble when we talk about AI valuations. And those were some very important takeaways coming in from two very big investors and venture capitalists and the startup experts, Sanjeev as well as Sasha. Always a pleasure to speak to you right here on NDTV Profit. All right, that was the outlook for venture capital action for 2026. Let's stay with the startup space. In a recent conversation with influencer Raj Shamani, Zomato CEO Dipinder Goyal addressed two of the most debated topics around the platform. That is, how much gig workers actually earn and the recurring accusation of worker exploitation. Let's hear a slice of that interesting conversation.
How much do you pay on an average? 7.5 lakh gig workers हैं. अगर डिलीवरी बॉयज हैं 7.5 लाख के आसपास, तो कितना कमाते हैं वो मंथली?
अगर आप सोचो कि लेट्स से मैं रेगुलर आवर्स करूं, अगर मैं 6 दिन काम कर लूं 8 to 10 hours a day, तो 25,000 की प्लस बनता है.
And people say that you exploit them. Why do they say so then?
I'll tell you my theory on this.
हाँ, क्यों बोलते हैं लोग आप exploit करते हो?
We are ना Zomato, Swiggy, we created a very peculiar social phenomena आया यहाँ पे हमारा. So there is this rich class, okay, moneyed class, who actually कभी भी worker class या less moneyed class के साथ face to face आई ही नहीं है इंडिया में.
Okay.
कभी भी नहीं आई है. हाँ श्योर, हमारे पास एक ड्राइवर होता है, हमारे पास एक मेड होती है, ठीक है, एक नैनी होती है, पर ना हम उनको ना वो एज ए आउटसाइड इन वर्कर क्लास नहीं देखते हैं. हमारे लोग हैं, हमें तो लगता है हम उनका ध्यान तो रख ही रहे हैं, करेक्ट, लेकिन ये पहली बार हुआ है कि यार we got these two classes face to face, right? So now the reality of India visible हो गई है और लोगों को लगता है कि हमने बनाई है ये ना रियलिटी. नहीं, ये हमने नहीं बनाई है. ये एक्चुअली आप इंडिया की रियलिटी का बेटर वर्जन देख रहे हो हमारे कारण. ठीक है, ये आप यहाँ पे डेल्यूजनल हो. जो लोगों को आपको लगता है कि ये खराब है. खराब इससे पहले था. ये उसको ठीक करके ये बना है. बट वी नेवर सॉ दैट. ऑब्लिवियस है हम उन चीज़ों को कि एक्चुअली हो क्या रहा है. पॉवर्टी है कितनी. हाउ डज इट लुक लाइक. वी डोंट नो दीज थिंग्स.
ट्रू.
It's a 10x upgrade for these folks. They are able to send their kids to school.
Yeah.
Okay. And then, but this is the first time our moneyed class just came face to face with the reality of the country. And then they're like, wow, this is so bad. These guys exploit. No, we are empowering a generation of people to educate their children to have a better future, which would have otherwise not been possible. There are no jobs out there.
But people then say that you don't even create good conditions for them to
we have
do
shelters.
jobs.
We have shelters. We treat them nicely. We pay them on time. We pay them fairly. They can switch off whenever they want to switch off. They can switch back on whenever they want to switch back. What kind of conditions? Social security बोलते हैं नहीं है. हम देते हैं. हम सब करते हैं. Insurance provide करते हैं. हम all the benefits that social security में बोले जाते हैं हम खुद privately करते हैं उनको. Right? Because we care. ठीक है, accident insurance, health insurance, blah blah blah, all of those things we do. Okay, probably, and we like administer them so well.
All right, that was an interesting chat. With that, completely out of time on Markets at 12. Thanks so much for tuning in.
जब से दुकान खोली है मैंने तब से बैंक का ही तो काम कर रहा हूँ. लो बन गया ना चपरासी.
Not banking with AU.
AU.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम.
AU.
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी.
From the heart of Punjab, a new era of education is unfolding. The Schools of Eminence scheme is transforming government senior secondary schools into vibrant centers of excellence that foster innovation and top quality learning. This visionary initiative is transforming education by introducing new ways of learning that children truly enjoy. It is turning classrooms into vibrant, technology-rich spaces equipped with state-of-the-art furniture, equipment, and interactive panels, creating dynamic environments where young minds can thrive. But the change extends far beyond infrastructure. Punjab's Department of School Education is empowering educators like never before. Principals and teachers are receiving world-class leadership training in places like Singapore, IIM Ahmedabad and Finland, while headmasters hone their skills domestically at IIM Ahmedabad. Adding to this momentum, Chief Minister Bhagwant Singh Mann has inaugurated multiple new libraries, enriching schools with inspiring spaces that spark curiosity and open the doors to knowledge.
मैकेनिकल इंजीनियरिंग करके जावे डिट्रॉयट तो जो उन्होंने पूछा जावे डिग्री कितनी की है तो मान ना कहे मैं 50 की डिग्री है तो फिर क्यों भी उन्होंने यही जवाब दिया अच्छा 50 की फिर तो आ जा फिर काम ठीक ही होगा सारा इस तरह का ਅਸੀਂ विश्वास बनाना चाहते हैं.
This visionary program is bridging gaps, motivating young learners and building a brighter future for Punjab's youth.
70-75 वर्ष के हम हुए कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर की महिला सदस्य को यह अधिकार दिया गया उसके नाम को रजिस्टर करने का। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
Hello, Moto.
Hello and welcome to NDTV Profit. This is Hiral Dadia bringing you all the new offerings that we have. Trending stocks. With me is Sharad Dubey standing at the NDTV Profit market pit with all the action in the market today. Sharad, it's an interesting day of trade. You have your heavyweights which are under pressure, which is actually becoming a very precarious situation for the benchmarks.
Well, you are right, Hiral. The market pit out here is very busy, especially Reliance and HDFC Bank. That's where the concern is coming in. At one place, you're seeing ICICI Bank giving a strong contribution. On the other hand, Reliance has single-handedly, you could say, taken down the overall index as well for the Nifty. Look at the points downtick coming in. Reliance and the second one is HDFC Bank, 150 point downtick, and the pressure coming in for Nifty as well. Largely ICICI Bank and SBI, they are trying to save the face, but it's not happening. And remember, today is the first expiry of 2026 for the Nifty index. I also did check some of the options data, and they are largely suggesting a range bound movement in the day's trade as well. Now this is a stark contrast when you put it and compare the global cues where the risk on sentiment is on the higher side as well. Nifty Bank, you look at it, largely the overall sentiment is on the positive side, and that is where, these are the important factors you should know in this market. Global risk is on precious metals, your metals, global equities, even Bitcoin, all of them are doing well in trade. But the Q3 updates, that is where the most movement is happening, either up or either down. And overall, that's the entire market check. Even the Nifty PCR levels, they are stable at 0.7 to 0.8. But interestingly, the India VIX, that has also gone up past the 10 for the last 2 trading sessions. So of course, some volatility is definitely coming back to the overall markets. Back to you, Hiral.
And I think that's something which is making everyone happy, because Sharad was always crying over the last couple of weeks as to what's happening with the VIX. Why is it at record low levels, and what would that actually mean for the markets, right, Sharad? So from here on, it's going to be an interesting day of trade. But let's quickly take you through the watch list that we will be focusing on in terms of trending trade today. First up, Trent. It's missed growth expectations. The stock is seeing cuts of over 7.5% in trade. You have RIL that is in focus. It's seen the biggest intraday fall, in terms of RIL, where since April 2025. So that's what you're tracking with regards to RIL. HDFC Bank, a second consecutive session of fall coming in there. It's interesting to see what's happening with the HDFC Bank, because there are a couple of parameters which are weak as compared to the post-merger numbers that we were watching out for. Tata Motors PV. Now, the weak JLR business update is what has impacted the stock, and that's the reason why you have a Tata Motors that is trading under pressure. We will be talking about that as well. Dabur. Overall, it seems okay, but the commentary that we've been picking up in terms of where urban demand goes is what is impacting the counter. And you have a Swiggy, which is down nearly 8% in the last 5 trading sessions. In fact, today itself, it's down around 3 to 4%. So that's a stock that we will be focusing on as well. On the positive side, strong Class 8 truck orders, a revival coming in there. Bharat Forge and Ramkrishna Forgings are the ones that are in focus. MV Photovoltaic, Jefferies has initiated a buy and strong moves coming in on this counter on the back of that initiation report. HDFC Life, now the December life insurance data is expected, so there is some bit of momentum when you talk about insurance companies. HDFC leading the pack in today's day of trade. Metal stocks continue the upward journey. We will be talking about that as well, a couple of them for the 5th straight day. Apollo Hospitals, the stock is at the highest level in 3 months, and lots brewing post the demerger that has announced, and a lot of developments happening on that front as well. Cupid is also in pretty much of a recovery mode after that crash that we saw. So we will be talking about our analyst on Cupid as well. And 2 other stocks, Poly Medicure and KIOCL. Poly Medicure has witnessed the best intraday gains in 8 weeks, and KIOCL, the volumes have actually doubled in trade today. So these are the stocks that we are focusing on in today's sessions, Sharad. Let's look at the rapid fire.
Well, interesting. And now joining us is Vinay Rajani as well. A warm welcome to you, Vinay. First, rapid fire is Poly Medicure. What's your view on that?
Poly Medicure. It will take some time to open the chart first minute. Yeah. So yes, it has bounced back by 4% and volumes have been quite good. So I'm expecting a bounce back, but yes, today's low should be the stop loss is at 1718.
And also HDFC Life Insurance. What's your view on that?
Sorry, I won't be able to comment on any group company.
Stocks, all of them have been rallying, be it the copper, be it the silver, and even the aluminum related stocks, all of them are buzzing. What will be your pick here?
Yeah, so Nalco and Hindalco have been moving up. They are into continuation of an uptrend. So there is no fresh breakout. But yes, still I see some sort of breakout in the Hindustan Zinc, which is related to silver. So Hindustan Zinc with a stop loss one can concentrate on.
And the delivery is looking good for Apollo Hospitals. Kind of a defensive play, good positional setup for medium-term holding.
Yes, it is a good position setup. Not only the pharma but healthcare space has also started outperforming today's trend. Today it has up by 3%. So looking strong on the charts, surpassed the crucial resistances. So yes, it is the short to medium-term upward bias play.
And Vinay, what about KIOCL? Largely this counter, you can see there at times the volumes are less, but movement is happening now. So what will be your view on that?
Which is the stock? Can you repeat?
KIOCL.
Okay, KIOCL. Yeah, that is gradually moving up right now, holding strong. The strong support I see is around 369 positionally. So that should be kept as a stop loss. But yes, it is one of the stock which is improving on the charts.
And one of the most volatile stocks of the week, the name is Cupid. What's your view on that? Stay away from this counter or nibble a little bit?
Yeah, I would suggest stay away from the counter, the very volatile move, and it is better to avoid this kind of setups technically also and fundamentally also. We are not confident enough on this particular stock.
All right, so that's the view coming in this rapid fire section. And one more pick is there. That's a query coming in. Swiggy. What's your view on that? The stock has taken a beating. Of course, yesterday there was an important change of the hands from Serum Institute to itself. But now is the street factoring in something more?
Yeah, it is looking weak. In fact, it broke down below the crucial support of 378 and has been sustaining below that in today's trade, and volumes have also been on the higher side. So it looks like that in the short term it should extend the fall. The immediate support for the stock I see around 343 to 346. So 20 to 25 rupees downside could be there. So 5 to 7% correction extension we can see in the chart. So don't anticipate the bottom right now. It is into a downtrend and I'm expecting extension of the downfall.
All right. Thanks a lot, Vinay, for your views in our rapid fire section. Now over to Varsha on MV Photovoltaic. There is a broking report also and stock is buzzing. Varsha.
Well, yes, thank you so much for that. MV Photovoltaic is actually buzzing on the back of Jefferies initiating a coverage for the stock. Even if you see what they say is that their company is actually riding on tech, and this is too cheap to ignore. The valuations are very attractive when it comes to this counter. What Jefferies is pointing out when it comes to sector, so India's solar installation are set to grow at 24% CAGR over FY25 to 28, and MV's entry into the TopCon superior DCR driven technology will actually aid profitability for the company, and also industry profitability should normalize FY28 onwards, but they expect high teen steady state ROC when it comes to MV. Now we all know the crunch or the demand supply mismatch that is going on when it comes to the overall renewable sector, but Jefferies is expecting a high teen steady state ROC when it comes to MV, and they're projecting 56% EBITDA CAGR over FY25 to 28, and the stock is trading at 50% discount to PS. So overall, if you see, Jefferies is actually playing out when it comes to the valuation of MV photovoltaic.
Thank you, Varsha, so much for that. Let's also get in Prashant Apse, Senior VP Research Analyst at Mehta Equities. Prashant, welcome to the show. This is one of the trending stocks in trade. You're talking about MV Photovoltaic. What is your view? A 7.5% up move already coming in there. Jefferies has initiated a buy and they have a target price of 320. How are you looking at it?
Very positive. Again, we know how the demand and supply is going on in the solar PV manufacturing, model manufacturing sector. From the listing of Vare, again, a lot of other companies have also listed into the same segment. Again, after listing, MV did not perform well. I think that gave a good valuation comfort for a new investor like Jeffrey also rightly pointed out. The way how it has corrected from the post-listing, it is giving some kind of valuation comfort for us, despite having a lot of good ratios with respect to ROCs, ROECs and all. So I think the main catalyst which I am looking for MV photovoltaic would be on the TopCon solar cells, which they have the largest capacity to manufacture, and the ongoing demand is more on the TopCon solar PV manufacturing. So that is one reason why I am very, very much bullish. Valuation is really comfortable. I think one should go long on this company right now.
All right, let's just see the BFSI update, how things have actually panned out. Axis Bank and Kotak Bank largely in line to good set of numbers had come in. LT Finance, the retail disbursements, their numbers were very strong. Almost you could say 49% growth coming on a year-on-year basis. And IndusInd Bank, also importantly, some operational parameters did really well as well. Prashant, I want to get you on this. One side, 2 days ago, HDFC Bank took a beating and today also it's taking. And today, strong updates also coming in, especially for Axis Bank and your Kotak Bank. What of these banks would be your top pick over here?
I think Kotak should be the one stock which we are very much aggressive in terms of valuation and the way how it has grown when we compare Kotak with Axis with again HDFC. So Kotak is doing better than all these two private big companies. But again, NBFC as a sector is also looking really good, I think. And L&T Finance has done really well. And even I am expecting Bajaj Finance to do well going forward. So overall, NBFC private space can do better. And with respect to large private banks, Kotak looks very good at this point of time.
It's Kotak which is looking the best so far. That's what Prashant is indicating so far. The next set of companies that are buzzing in trade, Reliance Industries. The stock is trading almost at the day's lowest levels. Intraday, it actually saw a cut of around 5.5%. And this is the biggest single day fall that we've seen since the 7th of April, 2025 on intraday basis. In fact, the stock fell nearly 7.5% on the 7th of April, 2025. What's happening? They're buying Russian oil for its refinery as per what Bloomberg reports are indicating. And 3 Russian crude tankers have RIL refinery as the next destination. In fact, the refiner has started some purchases for domestic production and nearly 2.2 million barrels of Urals are getting supplied to RIL is what Bloomberg has indicated so far. In fact, CLSA has removed RIL from its India portfolio. Axis Cap has maintained a buy, though they've hiked the target price to almost 1,916. And in the loop, the consumer businesses, what they've said is will drive further upside. The retail available is at discount. The key triggers will be pickup in growth and the tariff hike as well. In fact, Prashant, a quick view in terms of where Reliance Industries go. What would you advise? Would this be an opportunity to buy a Reliance Industries or are you seeing further pressure?
I think we should see some more pressure going forward. I think even though the company has clarified with respect to the news, though the prices are coming down, I think there is something really what's happening in the Russian crude oil disbursement. So I think we have to wait and watch. Maybe 1470, 1480 can be a level to watch.
So, this is going to be interesting. Around somewhere close to 1400 is the kind of levels that Prashant is looking at as an opportunity. But let's come back to MV. That's been a stock which is buzzing 7.5%. Suhas Donti, President and CEO at MV Group, joins in. Suhas, welcome to the show and a pleasure to speak to you as well. And what a day. A 7.5% up move is a day when we're talking to the management. If you could help us understand first up in terms of what's working, because the demand, it seems, is really shaping up well for solar modules and cells. What is the outlook looking like if you have to look at the next 2 to 3 years?
Thank you for having me on the show. And I think that's a very valid point. We have had 3 decades of manufacturing experience in solar industry today, and our order inflows are for performance have been consistent as we have been the leaders in adopting the latest technology. We have a TOPCon cell manufacturing capability of 3 gigawatt and a module capability of 10.3 gigawatt, and we've been time and again delivering quality products, which is why our key account customer base, like all blue chip customers that you can see, have been with us for a long time. So that is the differentiator that the market looks for on what is the technology, how advanced the technology you're able to deliver, and what kind of quality you've been able to deliver, and how consistent you've been. And that is what at MV we are doing. That be it backward integration or the kind of delivery that we do.
Hi Suhas, this is Sharad here, and happy 2026 to you and MV Photovoltaic family. But one query is there that there are some concerns regarding the commoditization of the space. Now, each company we talk with, they say we are different. So what's your moat here, if you have to give it a fundamental perspective to it?
Hi, Sharad. Thank you. It is a product that I would call looks like a commodity, but really is not. It's a pseudo commodity because there is a lot of difference when it comes to the quality aspect of the product, right? So, for example, in 2024, there was a Kiva PVL test that happened where more than 300 modules were tested in a laboratory in Napa, California for 7 reliability tests. And out of that, only 4 modules globally passed all 7 reliability tests as a top performer. And MV was one of that. So these kind of differentiators are something that it is recognized by the industry, where our customers acknowledge that, they respect that. That is why we have a healthy order book. You might have seen in our quarterly earnings call last after listing, we have a 5 gigawatt of order book that we have today, and this is something that has been consistent as we've grown from very humble capacities to the capacity that we have today.
So, Suhas, you're talking about a confirmed order book of 5 gigawatts plus so far. What is the kind of revenue recognition that you have out of this order book in the remainder of FY26, and if you have to look at FY27 in terms of visibility? And the part 2 of my question is, what is the target for new order wins when you have to look at 2026 as a year as well?
So absolutely. I mean, not getting into how this year or the next year looks like because of the timing of the discussion we're having today. But usually about 5 gigawatt of order book translates to about 8 to 9,000 crores of revenue. And this is a 12 to 18 month period of order book that we have. Always our order books are backed by advance and definitive contracts. So any delivery usually happens in 12 to 18 months. And getting into the inflows, right? We have seen that MV in the first half of this financial year, we delivered 2,100 crores of revenue. And that is something that is equivalent to the entire year of performance in 2025. So irrespective of the deliveries that we are doing, as we've added capacity, the company's been able to get the inflows of orders, and in fact more than what we are delivering. So that talks about how strong our order inflows have been.
Suhas, but let's just talk about the pricing. What's happening in the pricing right now? Is it still, there's a downward pressure in the pricing and some more overcapacities are coming from China? What's your entire ground channel check suggesting for the industry and also for the company?
Yeah. Very valid question. And you might have seen that the prices for solar modules, right, has changed drastically. Like, we started off, when we started our business, we were at like $3 per watt. And today the price of a module is about 20 cents per watt. And that is the drastic changes that you have seen, because this is backed by technology. That doesn't mean that the companies are bleeding or the money is happening. This is all to do with the improvement in technology that's bringing the cost of the solar panels down. And that is what is constantly happening as we are increasing efficiency, as we are utilizing the resources better. But the company's performance is something that you have seen consistently as the prices have come down. We have seen money cycles and we've been strong.
Suhas, my question coming to you is now with the backward integration that you're planning as well, you have guided for an EBITDA margin of around 30 to 35%. In light of this overall global oversupply and falling module prices, what structural cost efficiencies are you looking at that could further boost margins?
So basically, backward integration becomes extremely important here. And you have seen that change that our financials have changed from the time we were a pure play module manufacturer to the time when we backward integrated into cell. And further, our expansion by expanding further 6 gigawatt of cell manufacturing along with module will further strengthen this backward integration for the entire supply chain that we have. And as we are also discussing about backward integrating, the company also intends to get into further backward integration of ingots and wafers. So these are the certain steps that we are directionally thinking and working towards to have the entire strength of the supply chain to take control of the costs.
So lots to watch out for, and I think it'll be best to speak to you once your earnings come in as well, Suhas. But thank you so much for joining us on the show. Always a pleasure to speak to our management, whose stock is seeing gains of little over 7% on a day like this. So that was the management of ME Photovoltaics, seeing some smart gains. But in consonance to this, a similar kind of downtick coming in on one of the top Nifty companies. Trent has had a rough ride, emerging as the worst performer on the Nifty 50 with a 41% drop and a 44% slide since its inclusion as well. What is not working after the quarterly update that has come in? Let me head across to my colleague, Mahima, who's standing by with us to tell us more. Mahima, what are you picking up? It's kind of disastrous right now, right? Didn't really expect a 7% fall. What are you seeing?
Right, so absolutely. Nobody expected a 7% fall coming in, but I think it's multiple times that Trent has gone ahead and disappointed the street, and that's why we've seen the kind of underperformance on the stock as well. The stock is down 41% in 2025 itself and 44% since its inclusion in Nifty, and this is excluding the fall that we're seeing today. Plus, the RSI is trading below 30, so it is in the oversold zone right now, and the least target given by analysts stands at that 4350, and the stock is trading even below that. Now, considering what has disappointed, last 6 quarters of consequent decline in the revenue growth is what we've seen. Before this, they were doing plus 50% growth in terms of where revenue stands. But since Q2 FY25, the growth came down to 39%, then 34%, then around 19% in Q1 FY26, and Q3 FY26 has come in at 17%. And if we rebase the earlier quarter, the growth is at that 15% mark, and that is something that the street is not like. But the guidance that the management has given is that they're going to have a growth anywhere between 20 to 25% in FY26, and that's nowhere near even in terms of visibility. In terms of management, they've said that they expect demand traction to kick in from the second half of FY26. Now, reasons why growth is weak, of course, they're going through an aggressive store expansion when it comes to Zudio. Reduction in revenue per square feet sales is happening because of that. There's store cannibalization, which is also happening because they're opening same Zudio stores in the same city in the near locality, and there is increasing competition, of course, playing its part as always. In terms of FIs, they've also been reducing their stake in the counter. In March 23, FIs were holding around 24%. Till September 25, the holding has come down to around 16.8%. In terms of where the valuation stands, where valuations were never cheap for this counter, and considering that it has seen a significant downtick in the past 1 year, valuations still don't look cheap. It was trading at 101 times in the start of 2025, and 1 year forward is looking at that 73 to 72 times, but current PE at 93 times is nowhere near cheap. The 5-year average has also never been cheap at that 130 1 times. Lastly, in terms of where Trent versus Avenue stands, Trent versus Avenue, I think the only difference between the both of them is that growth here is hampered by aggressive store expansion, but Avenue growth is hampered by the advent and pickup of e-commerce and quick commerce. Lastly, analysts still are bullish though on Trent, but the return potential is consequently coming down. Whether re-rating will happen or not is a question that we'll have to wait and watch. Lastly, of course, they are also expecting a 20 to 25% CAGR and overall steady margin expansion on the back of leveraging happening going forward once the store come into picture. And lastly, in terms of improving ROC, that is the one thing that's been improving for them, and we'll have to wait and watch out for as to how things pan out for Trent going forward. So this is the overall view, but of course, I think it'll take, just like Asian Paints, Hiral, it'll take a year probably to get the stores up and running, right? And then on a low base, we'll have to see
it's going to be interesting to watch out for a Trent. Yeah. And in fact, with this, you have a Dabur also, which is trading under pressure. And I think it's the commentary when it comes to the urban market is what is putting pressure when you talk about a Dabur when we started off the day. And now you're seeing that recovery at the day's highest levels. In fact, the HPC and international businesses have performed really well. The beverage segment, however, has remained weak for Dabur. What they've said is digital and quick commerce are seeing double-digit growth and strong performance across MENA and Bangladesh. Prashant, how are you looking at a Trent and Dabur? Because analysts, there is some bit of positivity for Trent as well. And as Mahima was mentioning, it would probably take a year of pain. But do you think this is then an opportunity to buy?
Again, not at this point of time. I am very much positive on the future growth of Trent. But now, currently looking at last 6 to 7 quarters, the growth is slightly coming down on quarter-on-quarter basis. Maybe they are going very aggressive right now. That is keeping some kind of pressure on the all the margin level data points. So again, valuation still remains very expensive. 1880p cannot be justified with the current growth what they are presenting right now. Again, increasing competition from the local brands. Plus again, high hopes in the market of delivering better earnings for Q3 was the reason why the stock was trading slightly up on last 10 to 15 days. But again, considering the numbers when they declared yesterday, I think that went very wrong in the market and the reason why the stock is down. Dabur, again, I think there was a high hopes of getting a better overall volume growth in all the segments, but again, 1 or 2 segments did well, but the other segment did not do well. Overall, the trend still remains very positive. The way how GST benefits is going to help FMCG going forward may not happen immediately by 1 quarter, maybe fourth quarter of this financial year and first quarter of next financial year may see some kind of good growth as well as some improvement in the EBITDA margins.
Okay, thank you so much, Prashant, for that. So that's with regards to Dabur and Trent as we speak, but completely out of time. With that, it's time for a quick break. Thank you from Sharad, the team that put that show together, and myself. Every day we will try getting you as many stocks on a rapid fire and with a fundamental view, but lots more lined up on the other side with lunchtime trades with Shreyansi Singh. Please stay tuned.
Punjab government, foremost in public welfare, campaign to enrich youth through libraries. The Punjab government has taken a far-reaching decision to build modern libraries in the villages of Punjab in order to inculcate the habit of reading among the youth. The aim is to bridge the gap in the level of education and general knowledge in the rural areas. Since the inauguration of the first village library in Isru in Ludhiana on 15th August 2024, 275 modern libraries have been opened and 58 more are under construction.
घर कई बार माहौल नहीं बनता पढ़ाई का, सिटिंग नहीं बनती,
ਇੱਥੇ ਸਾਨੂੰ ਇਹ ਫਾਇਦਾ ਹੈ ਕਿ ਜਦੋਂ ਇੱਥੇ ਅਸੀਂ ਆਉਂਦੇ ਹਾਂ, ਖਾਸ ਤੌਰ ਤੇ ਕੁੜੀਆਂ ਇਹ ਗੱਲ ਦੱਸ ਰਹੀਆਂ ਸੀ ਕਿ ਅਸੀਂ 4-4 5-5 ਕੁੜੀਆਂ ਇਕੱਠੀਆਂ ਹੋ ਕੇ ਇੱਥੇ ਆ ਜਾਂਦੇ ਹਾਂ ਤਾਂ ਸਿਲੇਬਸ ਦੀਆਂ ਕਿਤਾਬਾਂ ਸਾਨੂੰ ਇੱਥੋਂ ਵੀ ਮਿਲ ਜਾਂਦੀਆਂ ਨੇ, ਘਰੋਂ ਵੀ ਲੈ ਆਉਂਦੇ ਹਾਂ ਤਾਂ ਸਾਡੀ ਸਿਟਿੰਗ ਬਣ ਜਾਂਦੀ ਹੈ ਇੱਥੇ।
Each library costs about 35 lakh rupees and offers books on literature and diverse topics, besides those related to competitive exams. These modern libraries offer services like Wi-Fi, solar backup, digital and analog resources, so that the youth can connect with the world of knowledge right in their villages.
मैं इस लाइब्रेरी में डेली आती हूँ, 7 से 8 घंटे के लिए पढ़ती हूँ। मुझे यहाँ पर आना बहुत अच्छा लगता है क्योंकि यहाँ का वातावरण बहुत अच्छा है। मैं और मेरी जैसी जो लड़कियाँ घर पर नहीं पढ़ पाती थी वो यहाँ पर आकर पढ़ सकती हैं।
यहाँ सारी किताबें मिल जाती हैं, कॉम्पिटिशन के एग्ज़ाम की तैयारी के लिए ज़रूरी होती हैं। यहाँ का इंफ्रास्ट्रक्चर बहुत ही अच्छा है और यहाँ पे वाईफाई भी लगा हुआ है। अगर हम पढ़ना चाहें तो अपने फ़ोन या लैपटॉप को वाईफाई से कनेक्ट करके ऑनलाइन भी पढ़ सकते हैं।
The Village Libraries project is not merely about constructing buildings. It's a campaign for the intellectual and social rejuvenation of rural Punjab. Punjab government, foremost in public welfare.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
Punjab government, foremost in public welfare. Campaign to enrich youth through libraries. The Punjab government has taken a far-reaching decision to build modern libraries in the villages of Punjab in order to inculcate the habit of reading among the youth. The aim is to bridge the gap in the level of education and general knowledge in the rural areas. Since the inauguration of the first village library in Isru in Ludhiana on 15th August 2024, 275 modern libraries have been opened and 58 more are under construction.
ਘਰ ਕਈ ਵਾਰ ਮਾਹੌਲ ਨਹੀਂ ਬਣਦਾ ਪੜ੍ਹਾਈ ਦਾ, ਸਿਟਿੰਗ ਨਹੀਂ ਬਣਦੀ। ਇੱਥੇ ਸਾਨੂੰ ਇਹ ਫਾਇਦਾ ਹੈ ਕਿ ਜਦੋਂ ਇੱਥੇ ਅਸੀਂ ਆਉਂਦੇ ਹਾਂ, ਖਾਸ ਤੌਰ ਤੇ ਕੁੜੀਆਂ ਇਹ ਗੱਲ ਦੱਸ ਰਹੀਆਂ ਸੀ ਕਿ ਅਸੀਂ 4-4 5-5 ਕੁੜੀਆਂ ਇਕੱਠੀਆਂ ਹੋ ਕੇ ਇੱਥੇ ਆ ਜਾਂਦੇ ਹਾਂ ਤਾਂ ਸਿਲੇਬਸ ਦੀਆਂ ਕਿਤਾਬਾਂ ਸਾਨੂੰ ਇੱਥੋਂ ਵੀ ਮਿਲ ਜਾਂਦੀਆਂ ਨੇ, ਘਰੋਂ ਵੀ ਲੈ ਆਉਂਦੇ ਹਾਂ ਤਾਂ ਸਾਡੀ ਸਿਟਿੰਗ ਬਣ ਜਾਂਦੀ ਹੈ ਇੱਥੇ।
Each library costs about 35 lakh rupees and offers books on literature and diverse topics, besides those related to competitive exams. These modern libraries offer services like Wi-Fi, solar backup, digital and analog resources, so that the youth can connect with the world of knowledge right in their villages.
मैं इस लाइब्रेरी में डेली आती हूँ, 7 से 8 घंटे के लिए पढ़ती हूँ। मुझे यहाँ पर आना बहुत अच्छा लगता है क्योंकि यहाँ का वातावरण बहुत अच्छा है। मैं और मेरी जैसी जो लड़कियाँ घर पर नहीं पढ़ पाती थी वो यहाँ पर आकर पढ़ सकती हैं।
यहाँ सारी किताबें मिल जाती हैं जो कंपटीशन के एग्ज़ाम की तैयारी के लिए ज़रूरी होती हैं। यहाँ का इंफ्रास्ट्रक्चर बहुत ही अच्छा है और यहाँ पे वाईफाई भी लगा हुआ है। अगर हम पढ़ना चाहें तो अपने फ़ोन या लैपटॉप को वाईफाई से कनेक्ट करके ऑनलाइन भी पढ़ सकते हैं।
The Village Libraries project is not merely about constructing buildings. It's a campaign for the intellectual and social rejuvenation of rural Punjab. Punjab government, foremost in public welfare.
Weakness continues on Dalal Street. Nifty falls below 26,200 while Sensex drops 300 points as well. Nifty PSU banks continue to gain the most, followed by metals, oil and gas, and metal lose the most in fact. Meanwhile, Reliance faces sharp selling pressure, marking its biggest fall since April 7, 2025 after Bloomberg reports that the company may buy Russian crude, raising questions around supply strategy as well as risks. And it's Trent that is facing heavy selling pressure post a weak third quarter update, with markets flagging concerns over aggressive expansion and falling revenue per square foot, triggering a nearly 12,000 crore erosion in market cap. On the flip side, it's Nifty Metal that is extending gains for the fifth straight session as copper hits record highs, boosting Vedanta, Hindalco, Nalco as well as Hind Copper. Meanwhile, regulatory relief from the RBI as it softens related party lending rules. Final norms exempt equity investments, retain curbs on debt exposure, and allows legacy non-compliant loans to continue till maturity. Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show where we, on your lunchtime, when you're grabbing lunch, we get you a snapshot when it comes to the world of commodities and markets and a bunch of other things. Thank you so much for tuning in, and let's kickstart the show by taking a look at the markets first things first, because of course this Nifty 50 that you've got to take a look at with that level close to day's low is something that you're looking at as far as Nifty 50 is concerned. Sensex is the one that is down about 300 odd points as well, and that's something that you're looking at quickly. Let's also take a look at the sectoral picture before we take a look at some of the losers as well. So the sectoral picture is, in fact, you do have oil and gas that is leading losses, media as well on the downtick, energy, defense, consumption. Those are some of your top losers. On the flip side, there's actually pharma that's holding up quite well. PSU Bank, Metal, IT as well add to that list of gainers on a sectoral basis. But when you take a look at some of the key laggards, you do have Trent that makes it to that list with a downtick of about 7.5%. Reliance, of course, heavyweight Reliance down about 5%. 4.5% as we speak, but you did see a bigger fall coming in earlier as well. And you do have Swiggy, Sapphire Foods, as well as HDFC Bank, ITC, bunch of these counters that are actually on the downside. But let's also quickly take a look at the world of commodities, because you do have copper that is actually in good shape, shining quite bright, and you do have oil, of course, where there is a geopolitical risk premium that you're pricing in. Bunch of those factors that we've got to be discussing with Vandana Bharti, Head of Commodity Research, S&C Group, also joining us. Vandana, thank you so much for making time, and a very good afternoon to you.
Hi, good afternoon to you and all the viewers.
You know, Vandana, it's actually a good afternoon for copper as well, and I think that's something that I'm going to be starting with. I think first things first, let's take a look at some of the key triggers, because you're not just looking at today in terms of the strength here when it comes to copper, because you did have a very good year coming in for copper previously as well. Right now you're looking at that strength also being maintained in the first half of 2026 as well.
Yeah, Shanshi, if we take back the story 2 decades back, we have stopped exploring new mines. We haven't did any kind of mining activities in from last 2 decades. And the old mines, they are getting depleted. So this is a kind of a structural shift in the copper availability supply side. Along with that, we haven't heard about AI 1 decade back. Now the new demands, they are coming, and they are coming sharply here. AI, electrifications, and photovoltaic, solar, clean energy, green energy, and everything they demand here copper. And above that, the data centers, the new data centers demand, it is driving up, and it is making the miners as well as the consumers crazy these time. So yes, now this is not a base metal, simply an industrial metal. This is a strategic metal. Now it is in the critical minerals list for many countries, including US, China, even India is accumulating copper. And even companies like Samsung, they are directly contacting the mines of Canada for the consumption, for the supply for 2 years. So this is a historic time, not only for the bullions, but for the base metal as well. So for copper, I'm expecting that there should be a deficit. There can be a deficit in 2026 as well. And some mines, they got disrupted in 2025, and the disruption will continue in 2026 as well. And Codelco here, the production is going down. And even China, it is doing contracts on record high prices, and TCRC ratio, which is showing the the price of copper, it is on zero side. So weaker the TCRC ratio, higher the copper prices. So everything is signaling a structural shift in this metals, and we are expecting that in LME we can see the level of 14,000 kind of level in LME, and even on MCX it will reflect the same, because even in India we need coppers in tons. Even a Vizag, it will require copper of 65,000 tons in coming years.
Right, absolutely, Vandana. And actually, before we move on, I quickly wanted to take a look at a couple of counters. So there's Vedanta that is buzzing away in trade right now. That's up about 1.5% as well. You do have Hinsync as well. Bunch of those counters that are buzzing away, Vandana. But the view that I wanted to get here was in terms of the tariffs, because there's a lot that we're pricing in on that front when it comes to copper, because you do have Donald Trump also saying that he's asked the Department of Commerce to give an update by June 2026. So that's also something that you're penciling in. It's quite the silver lining for copper prices as well when it comes to that particular tariff factor. What do you expect particularly on tariffs then?
Before that, every country like from China to India, they are accumulating metals. So this happened in silver. They have accumulated silver before this tariff will happen. So same thing is with India, but we will require copper throughout the year. So they are making it, that's why the deal is getting delayed here. And the impact we can see on like metals shares. Every shares, they are on record high, either record high or they are about to make the high. So it will reflect in the share prices as well. But yes, tariff will going to give impact on the prices. This time we are also approaching miners to get directly do some kind of agreement with them and get direct metals from them. So for copper, US is not so important. What is important, more important is it is Peru and it is Chile. So two countries, they are providing around 70% of metals to India. So these two countries are very important when it comes to copper. Yes, we are exporting some of the refined products of copper to US. So that is a matter of concern for some companies here in India.
All right, then, Vandana, and I also wanted to move on, take a look at oil as well, because, when it comes to the entire Venezuela story, it makes up for a small fraction. Earlier, you did have a little bit of a concern there, at least as far as oil is concerned. But now, do you think that the geopolitical risk premium is right now a little bit baked in the pie?
Yeah, Shanshi, and US is not going to stop on Venezuela and like Greenland, Colombia, they are on the list of Trump. So geopolitical tension, it is going to increase in 2026. And but despite that, it is not giving any kind of premium to crude oil prices, because we know that we have ample of crude supply, and OPEC to maintain the price outlook, they have cut the crude oil production few years back. Now they have increased, now they have stopped. So they are changing their strategy as per the price of crude oil. But yes, barring crude oil or energy, we are going to see upside move in any commodities. But yes, for Venezuela, the free crude will come after 2 or 3 years, because from last 50 years, nothing happened in Venezuela. So even US oil companies, it will take years and billions of dollars to restart or reopen in full-fledged way in Venezuela. So yes, Venezuela crude oil will take another 2-3 years to come in the open market. Till then, US oil will get the benefit, because the prices will rise by say 2 to 4%, 5% here. But ultimately, the outlook for 2026 for oil is little downside, and we are expecting $50 or $55 kind of move, and ultimately it is going to increase the supply side of crude oil, global supply, and it will actually positively impact the Indian economy, because every $10 of move, downside move in crude oil will add 0.5% in Indian GDP. So anyway, it's a good news for India for crude oil prospect, not for political.
Well, absolutely, and Vandana, this is something that is anybody's guess. The swelling surplus seems to be at the top of the agenda when it comes to the market. That's what is in the spotlight. If you go by the prices as well, quickly before we let you go, just one last question I wanted to ask you. In terms of silver as well, where are you seeing, what are you expecting when it comes to silver? Because you did have overnight 5% uptick that we saw coming in right now. Also, you do see some little bit of strength as well when it comes to silver. And this is after a very strong year. We were expecting a little bit of a pullback if you go by a few brokerages as well. Because, you did see that strength coming in 2025 in full swing when it comes to silver.
Yeah, it's a very unique year. It was very unique year, and it is going to be very unique year 2026, because we have bombardment of news for silver. Earlier, it was metal of jewelry, fabrication, and investment. Now it is in critical minerals list. And now, few days back, US they have put this mineral in national security list. So this kind of news, it is scaring the market. Yeah, that okay, there is real supply deficit in this commodity, that they have put it in national security list. So this is the news which is giving upside to the silver prices. And physically, even India, they have accumulated 25% of the total production in 2025. So this is a kind of metal war in silver, because we need silver and there is no replacement, or because of that we are accumulating from everywhere. So this time we can see a rise of around $100 to $115 in silver, because ultimately the supply side is scarce, and we will see the premium. Whoever will provide the more the biggest premium, they will get the silver. This is happening, and that's why China, even it is taking silver on $78 to $82 kind of level, because China, it is known for to make a deal on very cheaper price. Now China is accumulating silver from COMEX on $82, $83 kind of level. So it is giving indication that the demand is going to be high, and supply side will enter into the 6th year of deficit, and nothing will change in 2026 from 2025. Ultimately, it is giving rise to the silver prices. On MCX, we are expecting now 3 lakh to 3 lakh 15. Earlier, we were expecting only 2 lakh 15.
No, absolutely, Vandana, and the 6th year of supply deficits is anybody's guess at this point in time. It's a little premature to call it that, but you do have that demand factor totally reflecting in the prices as well, just as you've pointed out. Thank you so much for joining in on this show as well this afternoon. But time now to slip into a very short break. More news and updates on the other side.
छुट्टी पे तो चिल कर।
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? इतना सा, और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू।
एयू एयू सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने,
एवरी मंथ। सोच बदलो और बैंक भी।
Punjab government has taken a heartfelt step to bring relief to thousands of Dalit families burdened by old loans. Now, the loans they had taken before March 2020 will be waived completely, giving them a fresh start and peace of mind.
ਕੈਬਨਿਟ ਦੇ ਵਿੱਚ ਇੱਕ ਫੈਸਲਾ ਕੀਤਾ ਗਿਆ 68 ਕਰੋੜ ਰੁਪਏ ਦਾ ਕਰਜ਼ਾ ਬਕਾਇਆ ਸੀਗਾ ਐਸਸੀ ਪਰਿਵਾਰਾਂ ਤੇ। ਨਵੀਂ ਸ਼ੁਰੂਆਤ ਉਹਨਾਂ ਲਈ ਅੱਜ ਇੱਕ ਹੋਊਗੀ। ਪੰਜਾਬ ਸ਼ਡਿਊਲ ਕਾਸਟ ਲੈਂਡ ਡਿਵੈਲਪਮੈਂਟ ਐਂਡ ਫਾਈਨਾਂਸ ਕਾਰਪੋਰੇਸ਼ਨ ਵੱਲੋਂ 31 ਮਾਰਚ 2020 ਦਿੱਤੇ ਗਏ ਸਾਰੇ ਕਰਜ਼ੇ ਉਹ ਮਾਫ ਕੀਤੇ ਜਾ ਰਹੇ।
This decision will lift a heavy burden off the shoulders of families who have faced financial struggles for years. It opens doors to new opportunities, hope and dignity for many deserving households.
मेरी सरकार ने बकाया राशि माफ कर दी, इसलिए मैं सरकार का बहुत-बहुत धन्यवादी हूँ।
Under the visionary leadership of Chief Minister Bhagwant Singh Mann, this initiative stands as a promise to support and empower the Dalit community, helping them rebuild their lives without the fear of debt.
कोरोना काल ਦੇ ਕਾਰਨ ਮੇਰੀਆਂ ਮੱਝਾਂ ਦੀ ਡੈਥ ਹੋ ਗਈ ਜੀ, ਮੇਰੀਆਂ ਕਿਸ਼ਤਾਂ ਟੁੱਟ ਗਈਆਂ। ਉਦੋਂ ਬਾਅਦ ਮੈਥੋਂ ਕਿਸ਼ਤਾਂ ਵਾਪਸ ਨਹੀਂ ਹੋਈਆਂ ਤੇ ਹੁਣ ਮੇਰਾ ਸਰਕਾਰ ਨੇ ਲੋਨ ਵਾਪਸ ਕਰਤਾ। ਧੰਨਵਾਦ ਜੀ ਬਹੁਤ ਸਰਕਾਰ ਦਾ।
This loan waiver is more than just financial help. It's a new beginning, a chance for brighter and better days ahead for Punjab's Dalit families.
Hello, Moto.
Welcome back. Thank you so much for staying tuned into Lunchtime Trades. And it's time to take a look at some other news and developments. Mahindra has launched the XUV 7XO in India, replacing the XUV 700. Prices, in fact, start at 13.66 lakhs rupees. And that is ex-showroom price that I'm talking about, with bookings also opening January 8th. The SUV, in fact, packs a triple 10.25-inch screen dashboard. You're looking at 19-inch diamond-cut alloys as well, integrated ChatGPT and Alexa voice assistants. That's also very interesting. In fact, let's go across to Siddharth Sharma for some more details before we see what Velusamy, the president Auto Tech, Mahindra and Mahindra also had to say about the new model.
13.66 lakhs, that's the introductory price of the Mahindra 7XO. Now take it with a pinch of salt, because only first 40,000 vehicles are going to get that introductory price. Now, on the base variant itself, you get that coast-to-coast screen on the inside. You also get Mahindra's Adrenox platform, and earlier you used to get like 18-inch wheels to the top end variant, but now 19-inch wheels are also there on the 7XO. Now, people might not see a lot of difference, but there have been very minute differences that have been put on the 7XO as compared to the 700, the outgoing 700. The grille is completely new. You also get these small accented turn indicators up front. The overall DRL design kind of remains the same, and the changes are majorly on the inside. So let's hop in. Now, interiors is where the major difference has been there. It will look very similar to the XEV9S, the EV variant of, you can say, the 7X over here. You do get Boss modes, you do get like plush materials, a lot of piano black finishes, you get that coast-to-coast screen here as well. But here's something special that you get Dolby Vision on the XUV 7XO, and you also get for the first time Alexa and ChatGPT integration. So you can actually sit inside this vehicle, and if there are things that you can't figure out, you can actually ask ChatGPT how you can, operate this vehicle there as well. So that is something which is really cool, and we will see what are those more capabilities that ChatGPT and Alexa can give us here as well. Of course, it has Snapdragon's chipset on it as well, and it is quite a feature-loaded, tech-loaded vehicle. XUV 700 was made for a lifestyle enthusiast, someone who likes to go glamping, someone who likes to have luxury in their SUV and 7 seats. The 7XO takes it slightly a notch above.
All right, and so, that was a very interesting interaction when it comes to this one, because this, of course, is a very important launch, because you do have that integration coming in when it comes to ChatGPT. You do have this particular car that is XUV 7XO that is packed with ChatGPT and Alexa. So if you don't understand something about what the car is going to be doing at any given point in time, you can fall back on AI to help you out with that. Other than that, there's of course a bunch of things that you have when it comes to this particular car, but that was a very interesting look at that particular car right from Jaisalmer. That's Siddharth Sharma joining us as well. But let's also move on and keep it going with the world of autos. You do have my colleague Danish who's joining us with the key details in terms of the comparison of M&M's new model versus the peers. Danish, what do you have for us?
Well, if you look at the new launch of Mahindra, that is the XUV 7XO. First of all, if you look at the nomenclature of this car, this is the second car in Mahindra's portfolio with this new, the 3XO, like the XO in its name. And since this car is basically the facelift of 700, this car comes with major cosmetic changes. And moreover, the biggest USP of this car is the fact that it is very smart when it comes to the digital infra of this entire car. The car comes with a triple screen setup inside the dashboard, which is not seen in the other rivals. And this car, competes with the Hyundai Alcazar, the Tata Safari, as well as the MG Hector Plus. So, and if you also look at the entry level price of a 7XO, the price is very aggressive, and the car starts from 13.66 lakh rupees, and this is the extra showroom price I'm talking about. And this gives a major lead to Mahindra in comparison to the other brands. And in fact, another feature of this car is the fact that the company has integrated ChatGPT in 7XO. They already have their own smart car connected tech OS system, which they call Adani But besides that, we're also seeing that it has ChatGPT as well as Alexa. So this gives drivers further assistance when it comes to normal driving. And as far as the connected car features are concerned, 7XO comes with over 70 connected car features, which actually gives a better driving experience. But when we look at the engine, in fact, the engine of 7XO is also the most strongest in comparison to the other cars in the segment. It produces a higher power output of 200 PS, so which is also good in the segment. Besides that, 7XO is the only car in the segment which offers an all-wheel drive option in the higher variants. So if we overall sum it up, 7XO is a big bet by Mahindra. And this is one of the top-selling export cars of the company as well. And the company hopes that with this premium segment car that the company has just launched, it will give them an edge over in the overall market share of the Indian auto industry.
All right, and it's a sign of the times, Danish, because you do have AI power coming in full throttle with this particular car as well. But let's also move on. Big regulatory move coming in from the Reserve Bank of India. The central bank has eased related party lending norms for banks and NBFCs, and the final guidelines exclude equity investments from the definition, but debt investments will still count as related party exposure. For more on what this really means when it comes to lenders and borrowers, let's go across to Vishwanath for some more details on this one.
Yeah, so the Reserve Bank of India has come out with a fresh set of guidelines for banks and NBFCs to monitor and regulate their lending to related parties. Essentially, what the RBI has done is that it has eased certain conditions for these loans. Back in October of 2025, the Reserve Bank of India had released a set of draft guidelines in this matter. Now, finally, the final guidelines in this issue has come out. So some of the easing that the RBI has done is, first and foremost, it has exempted any equity investments in related parties from these guidelines. The second important thing that the RBI has done is on the NBFCs. Essentially, any NBFC or core investment company that does not depend on public funds for its business will be exempt from these guidelines. In fact, the RBI has also said that any existing related party lending that might be there, which are non-compliant with the current guidelines, they can continue till the contractual maturity has been achieved. After that, of course, the RBI has insisted that banks and NBFCs do not extend this or review these conditions till they are compliant. As far as the deadline for these guidelines are concerned, April 1st, 2026 is when they become effective. Banks and NBFCs are, of course, free to do it beforehand. However, from the 1st of April 2026, all related party lending must be compliant with the fresh set of guidelines that have come out.
All right, and thank you so much, Vishy, for joining us with all of those details. So there you go. That's an update coming in as far as the RBI is concerned. But that, in fact, is all the time that we have on this edition of Lunchtime Trades. Thank you so much for tuning in. Better stay tuned, because on the other side of that very small break, you do have small cap buzzers that takes all of the action forward.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी।
Foremost in public welfare, transformation of land and property registration. Punjab government has transformed the process related to registration of land and property in Punjab. The complete digitization of easy Jamabandi and easy registry processes has significantly curbed red tape and corruption in the state. Online tools like Draft My Deed and Calculate My Fees has helped almost 40 lakh people avoid queues at the offices of Patwari, Sub-Registrar and Fard Kendra or Land Revenue Records.
ਜੇ ਸਾਰੀਆਂ ਸਰਕਾਰਾਂ ਨੂੰ ਹਟ ਕੇ ਕੰਮ ਹੋਇਆ ਜੋ ਈਜੀ ਰਜਿਸਟਰੀ ਹੋਈ ਆ ਇਹਨੂੰ ਹਰੇਕ ਬੰਦਾ ਬਹੁਤ ਹੀ ਸਖਾਲੇ ਢੰਗ ਨਾਲ ਸਮਝ ਰਿਹਾ ਹੈ ਇਹਨੂੰ ਯੂਜ਼ ਕਰ ਰਿਹਾ ਹੈ
The digitally certified Jamabandi receipts have QR codes and digital signatures. Besides downloading them from the website or WhatsApp, these receipts can also be received from Seva Kendras or helpline number 1076. In cases of death, citizens can apply for mutation or registry in any sub-registrar's office in the district. Online tracking and time-bound resolution has been set up for every application. For instance, a time limit of 2 days has been fixed for registry and 30 days for mutation.
ऑनलाइन रजिस्ट्री आप भी लिख सकते हो गवर्नमेंट वालों लिखा हुआ एक ड्राफ्ट माई डीड एक आंदा उते क्लिक करके तो उते विच सीधा सौखा पंजाबी च करती रजिस्ट्री भी आ बेचण वाला है आ खरीदण वाला है इन्ने पैसे इहदा कलैक्टर रेट है इन्ना ते हुण इहदा मालक आ हो जाऊगा तुसीं आप सबमिट कर दो ਜਾਂ ਫਿਰ ਸੇਵਾ ਕੇਂਦਰ ਉੱਥੇ ਖੋਲ੍ਹਤੇ ਤੁਸੀਂ ਉੱਥੇ ਕਰਵਾ ਲਓ ਲਿਖ ਕੇ 1 ਮਿੰਟ 'ਚ ਆਨਲਾਈਨ ਹੋ ਜਾਊਗਾ
Punjab government, foremost in public welfare.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Every winter, the World Economic Forum at Davos becomes the world's thinking room, where power, policy and purpose converge, where the future is examined and reimagined. In January 2026, NDTV will be the heart of this conversation. NDTV Ignite at Davos, this January on the NDTV network.
Powered by Government of Andhra Pradesh and EDB.
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. Well, in the next half an hour, Mahima will take our viewers to the most important small cap stocks that have been buzzing in trade, either in the back of price or volume action. But before that, let's see what's on the show today. Firstly, we'll be taking a look on the axle companies, that is forging companies, that is JNA Axles and MM Forging. Now, JNA Axle and both MM Forging will benefit from the higher number of Northern America truck orders sale that we have seen for the month of December. For JNA Axle specific, they get nearly 1/4 of the revenue coming in from North America, and MM Forging's management will also be joining us and they will give us more detailed outlook for 2026. Second on the list will be a stock called Pace Digitech. Now the stock was up nearly 5.6% on intraday basis. That was the biggest move that we have seen for this counter since listing. What's the way forward is something that we'll be discussing today on the show. Also we'll be talking about a stock called Raju Engineers. The stock has been gaining for the last third consecutive session, and in the last 3 sessions the stock has moved up nearly 25%. And lastly we'll be speaking about All Cargo Terminals. Now the company came out with the December monthly update, and the numbers were up and the volumes were up nearly 18%, and the stock also reacted positively on the same. So that is what we'll be discussing on the show today. But before that, if you look at the markets, the Nifty 50 that has been declining for the second consecutive session from the day's highest point that we had seen yesterday, which was also an all-time high of 26,373. We have declined by more than 150 odd points. And even the Nifty Bank Index has been trading in red, largely led by the sharp fall that we have seen in HDFC Bank, while the Nifty IT Index also is trading in red. But Mahima, what's been buzzing when it comes to the small cap segment?
Right, so the index is also down by about 0.3%, the Nifty small cap 250. And if you take a look at the entire small cap space, you have counters like Mindtech, which is doing fairly well, up 16%. Then something like Best Agro, which is up 11%. Hardwin, which is up 11% as well. Some counters like MRC Electric, Bliss GVS, Arihant Capital, also seeing gains anywhere between that 8 to 10%. But on the flip side, something that's not been doing well in terms of counters that are under pressure. You have counters like Mindtech, which is up 16%, but you also have counters like you have also counters like Systematic Corporation, which is down 12%, Nitco, which is down 7% as well, Kamdenu, which is down 5.8% as well, and Madhav Copper, which is also down by about 5%. But that's with regards to some of the counters which are not doing very well in trade today. But as Somit mentioned, GN Axles is on our radar on the Small Cap Buzzer show today and is seeing improved demand visibility, with North America contributing nearly 1/4 of its revenue. And Puneet is here to give us more perspective on the growth drivers and what are investors watching out for next. Puneet?
Well, thank you for that. It's been a couple of years that actually the stock has not done well for investors, and you really have to see the chart over the last 6 to 7 years. The stock's almost hit a high of almost 1,000 rupees on the share and then corrected all the way down to 330 odd levels. This is the first move or first sign of positive move on the stock today, and largely could be linked, as Somit highlighted, on the movement that we're seeing in the North American truck orders. Now, this is of course the preliminary numbers, but 100% month-on-month growth is something that the street will take positively of this aspect. Now, when you talk about this company itself, around 25% of the revenue comes from North America, so that will be something to watch. But the other half also has almost, regions like South Africa, which are a key revenue contributor, and something to watch out for in terms of growth momentum for the company. If you look at the company, of course, it's one of the leading auto component makers in the four-wheeler industry. Rare shafts, rare axles are one of the key products for the company, as they mentioned. Spindles are some of the other products that they manufacture as well. When you look at the clientele, it's quite detailed across domestic as well as the international space. Class India, TAFE, Escorts or Axles India, Mahindra and Mahindra amongst others are the company's clients. But over the last 3 years, their financials haven't done too well in terms of growth. It's absolutely been flattish. 1,500 crores of revenue is what they did in FY25, and it was a similar number in FY24 as well. Margins largely operating in a band of 13 to 14%, with the profits also almost flattish for the last 3 years at almost 100 crores. So the company's growth drivers have been missing. But what is something that we continue to watch is the growth that we are seeing in the Class 8 orders, and how that can translate to growth for GNA Axles, and also that India share, currently at 47% of revenue, is growing at a faster clip compared to the export market. So that share will be something to watch as well. But overall, a counter that's buzzing in trade after a really long time, and something that investors should have on their radar.
Okay, Puneet, thank you so much for bringing us those details. The stock is up 7.5% as we speak. Let's welcome in Lancelot Dikuna, who's the CEO of ValueX Wealth Connect, joining us now. Lancelot, a very good afternoon to you, and thank you so much for taking out the time. Puneet was just talking about GNA Axles, and what he mentioned is not wrong, right? Past 3 years, overall performance has been muted, but considering that this number that has come in for Class 8 truck orders, do you think that this augurs good growth for the company going forward?
At least it indicates that there are better sales outlook for the coming quarters, but we need to actually see how that gets translated into higher profits and higher margins as well. Because Aima, if you looked at the margins of this company, they've been practically, and the net profits have been roughly in about 10%, which is a fairly low margin, and we are seeing increase in, let's say, steel prices, increase in freight rates. So maintenance of this margin is a key factor to look at. And I think, we also need to see whether the sales growth is going to continue across, over and sustain over the next 2 to 3 years, because that would then mean that the company has moved to a different level of operations. Otherwise, if it's only for a quarter, it could, slide back into its old range of sales and profitability. which then doesn't justify any re-rating of the stock.
Right, taking forward this discussion on the improving North America Class 8 truck order, let's also welcome in Vidyashankar Krishnan, the Chairman and Managing Director of Forgings. Sir, firstly to start off with, a strong set of numbers that has come in for the Class 8 truck order for the month of December. Does this mean that there are some initial signs of a recovery that we could see in 2026?
Hi Samit, good to be here. Thank you for having me. Yes, we have seen an uptick from December onwards. And what has happened is that for probably Indian forgers supplying to the North American heavy truck market, we've seen a lot of inventory there, and that inventory is now running down. So we're seeing offtake of several parts, and customers who have been off the radar in H1 are coming back from December onwards.
I believe the North America contribution to your revenue had come down to single digits. So can we see that improving, and does that also mean that margins could improve going forward?
Yes, we would see an improvement in North American share of overall Forgings' business. But we are also looking at strong growth in India and other areas. So we have to see how all this will play out. But volume-wise or sale value-wise, definitely North America is in for a big jump at our end.
What are things looking like when it comes to the European markets, sir?
Europe is range bound, chugging along. Nothing negative, nothing great either. Overall, Europe looks to be positive. See, one thing what has happened in Europe is that energy costs there have gone very high. And we hear of very many forge shops shutting down in Europe. Now, all that represents an opportunity for Indian forgers.
All right, Mr. Krishnan, hi, Mahima also joining in. Just want to understand that, you have this Class 8 truck data coming in, which is on a very positive note. Plus, you have the entire industry recovery being seen in the CV space. Just want to understand, if I'm not wrong, you had guided for 750 to 800 crore in second half of FY26. Do you think there is a change in that guidance going forward? And if yes, what would that number be looking like?
So far, we'll be holding those numbers, the same numbers that we have mentioned earlier. That did take into account an uptick in Q4 and a return of exports. So we are seeing a stronger second half.
That means that overall, if you take a look at your overall FY26 earnings, that will be around that 1500 plus crore mark. Considering that the growth as compared to last financial year, that's going to be around 3 to 4%. Would you like to help us understand as to how visibility is looking beyond FY26? How is FY27 and 28 shaping up?
Yeah, I think FY26 will be even Stevens. This was that way a couple of percentage points. Not 3 or 4% as I think, but somewhere lesser than that. But positive nonetheless, which itself is a big change over the last couple of years. On FY27, we are seeing considerable growth in both domestic and exports. We should see growth in the region of about 15% plus.
Mr. Krishnan, all right. Any particular development with regards to tariff that you're seeing? Any particular impact that you're seeing on your business?
So far, none. And from our discussions with customers, they are prepared to wait it out, and they are prepared to sit it out should the tariff situation continue. And they are not in a hurry to make quick decisions on this. And also considering that China and India are currently at the same levels of tariff, the options for customers to go outside are also limited.
That was all about the export market, but when it comes to the domestic market, we are seeing signs of pickup when it comes to the CV upcycle. We are seeing signs of CV upcycle coming in. So how does that help the company? Any large orders that you expected to win? Any ground check or report that you could share with us on the same?
Sure. We have already penetrated reasonably well into the Indian CV market, and uptick will benefit Forgings, no doubt, in terms of sales. But we've also expanded and are continuing to expand our product offering to not just the CV market, but also PASCAR, as also the off-highway markets globally. So overall, I would say our off-highway, which stands at about 10% or under 10 would enter into the double digits and slowly grow probably into the 12, 13, 14% mark next year.
Right. Just wanted to understand on your balance sheet side as well. You have a debt of around 840 to 850 odd crore rupees. Any timelines if you could share on how do you plan to repay the same?
Yeah, this debt is first of all, I think, a peak debt number. We are not intending to add any further debt at these levels of operations. As you know, we have invested quite a bit in the last few years, and that has to pan out into higher revenue first. Higher revenue and consequently higher earnings. Once that happens, we can maybe take a relook at the debt. But for this, at this point of time, I would say we have kind of hit peak debt. We'll hold these numbers over FY27, and from FY28 onwards, these levels should come down regardless of our top line performance. But again, top line looks to be very strong in FY27. At a bare minimum, we see us growing by about 15 to 20%.
Mr. Krishnan, you also plan to do capex anywhere between 100 to 120 odd crores in FY27, if I'm not wrong. And you said that 850 crores is where your net debt is at its peak. So the entire capex is going to be done through internal accruals?
Yes, it will be run largely through internal accruals. There will be some amount of repayment, not some amount, a significant amount of repayment of about 150 to 160 crores every year. And probably for the capex, we might add debt, but net to net, debt will not go up.
I believe your EV subsidiary at this moment is not contributing much, but then you were in the trial phase, I believe, with the customers. So what is the update on that front, if you could share any incremental updates?
We are moving ahead with the trials quite well, and I'm glad to say that the trials are going on pretty strong, and that augurs very well for Abhinava Riser.
Right. And you are also about to monetize and commission the 16,500 ton press. What is the update on that?
That will come up in production in Q1 of the coming fiscal. And we'll start off a little bit softly over there. Once we get commissioned, we will move forward with customers and add revenue. That press overall holds a potential of at least 300 crores for the organization in terms of sales every year.
And what is the kind of incremental revenue that you're looking at because of this?
Yeah, the incremental revenue would be around 300 crores, Mahima, but that may not materialize in FY27. That's a projection at this point of time. But however, the sales potential that I had been telling earlier, this 15% plus, looks it's not a plan or a wish. These are concrete orders in hand that we are expecting to fulfill in this year.
What is the latest update?
FY27.
Okay, got it. And what is the latest update on the DVS Industries mergers? By when are you looking at the NCLT approval coming in?
That is under discussions with NCLT. In Q4 this quarter, we should conclude the merger.
Okay, Mr. Krishnan, thank you so much for getting us those insights and being so candid with your answers, and of course taking out the time and speaking with us at NDTV Profit.
Thank you, it was a pleasure.
Thank you so much. Lancelot, I'll take this up with you. How are you viewing Forgings as right now? You heard the management.
Yeah, I think it is a very interesting proposition because, they are seeing 15% growth in the next year because they're basing in orders that they have received. The debt repayment will happen from internal accruals. The capex, which is there, will also happen partly from internal accruals or from the additional debt that will be taken. But given that, and they also have a new press which is coming up, right, for in operation in Q2 of the subsequent year. So I think all in all, the company is poised to increase its revenues and profitability. So that would be probably a good opportunity. And if you look at even today, it is trading at about 17, 18 times earnings, which is fairly valued. And it probably doesn't take into account all the future growth at this point in time. So I think one can definitely look at accumulating this stock, and monitoring it so that if it plays out, if the production and the sales play out as anticipated, it could be much higher from these values.
Right, moving on, before we move on to the next small cap stock. Let's get in Sharat to understand what's been buzzing when it comes to the F&O side.
Well, Somit, interestingly, Reliance has pulled down Sensex movement, and of course, HDFC Bank also makes it to the list, and that's the concern coming in. Of course, Trent also, we had done a detailed analysis on that. ICICI Bank, on the other hand, they have been doing well. It's up almost 3% in the day's trade. SBI is also holding up when it comes to the PSU banking space. But yes, option data is suggesting that a choppy day of trade would be there when it comes to the large Sensex numbers as well. Also, let's pull out the BankX. That technical position is slightly better than overall Sensex, but there is some divergence between HDFC Bank and ICICI Bank. But net-net, the strength is very much stronger for BankX as compared to Sensex. Stock-specific moves is also something which we are watching out for. Long build-up for Nalco and Divis Labs. And of course, there's a brokerage upgrade also coming in as we see precious metals rally continue. And the short covering, IIFL Finance and Apollo Hospitals make it to the list. And the long unwinding candidates, they include SAIL and Blue Star as well. Short build-up, two counters are there which would be in focus. That includes Trent and Swiggy. So largely unchanged for the F&O positions which we did at 10:45 a.m. today. Back to you.
Well, thank you, Sharat, for that F&O setup. Moving on to our next small cap stock, Page Digitech. Now that stock has seen a sharp buying on intraday basis. In fact, today's move was one of the biggest moves that we have seen in this counter since listing. What's the news here and what could be the reason behind this move? Let's get in Varsha with more details.
Well, thank you so much for that. You know, the main reason why I think the investors are invested when it comes to Page Digitech is nothing but companies entering into BESS where they want to take the revenue contribution to 50% in the medium term. Let's see what this company does. Offers telecom infrastructure solutions. They manufacture, install towers and OFC networks, and they operate 3 plants with over 2.5 lakh square feet capacity. And they're expanding into BESS, as I was saying, that is battery energy storage system with early mover advantage. Now, what are the growth drivers, when it comes to this company? So they have 25+ gigawatt hours best tenders announced in India, and the local manufacturing and EPC strength support policy-led growth. 5 gigawatt Bangalore plant can generate almost 3,200 crore of revenue for them, and they are strongly placed when it comes to capturing the BESS market share. On the outlook, they're expecting almost 2,600 to 2,700 crore of revenue when it comes to FY26, with the PAT margin of around 11 to 12%, and they're expecting energy project order book to increase by 8,000 to 10,000 crores in FY26 itself. For FY27, they're expecting almost 3,100 to 3,200 crores of revenue with PAT margin of 11 to 12%. So overall, BESS is currently the hot segment when it comes to renewables or power sector, and this company is moving towards it and is expecting a growth from this segment in the medium term.
Lancelot, how are you looking into this announcement that has come in from Page Digitech's side of entering the BESS segment?
So I think that entry into the BESS segment provides them with an additional revenue stream, because it's an additional a segment of which they can grow their business. And it has a reasonably good profit margins. The operating margin is over 22%, and net profit margin about 11%. So with an increased business segment getting added on, the company can improve its sales and profitability going forward. Presently trades at about 18 PE, which is a little high for a business that is more related to industrials. But maybe, if there's any correction, that would give an opportunity to accumulate the stock.
Right, so that's the view coming in on Pace Digitech. The other counter that we're putting in, spotlight on is Rajo Engineers, and the stock has gained for 3rd consecutive session now. And we have Anushi joining us with more details. Anushi, the stock is up 8.5% today as we speak. What's the reason behind it?
Right, Mahima. So it's a strong session that we are looking for Rajo Engineers. In fact, in this month itself, it's seen about a 25% of an uptick. And overall, in this 1 month period, we're seeing about a 17% of an uptick is what we are seeing with last 3 sessions only clocking in that 25% of gains that we are looking at. Do note that this is with higher volumes as well. Volumes almost as much as 40 times compared to its 20-day average. Do note that this company is engaged in manufacturing of plastic extrusion machinery. Now, if you just look at the first half performance, they had a solid set of numbers also that we are seeing 65% of growth in terms of where the revenues are concerned. This is with the margin uptick at 20.8% versus 15%, and net profit seeing more than 100% of a growth as well. Do note that recently the company raised 163 crore via the QIP route. Your key participants included Morgan Stanley, Asia Credit, Axis Life Insurance, along with BNP Paribas as well. Along with that, recently they've also signed a non-binding indicative offer, and this is for an acquisition of the machinery segment that we are looking at. This is in line with the organic acquisition, inorganic acquisition it has in line for coming forward. If you look at the order book of the company, that's at 200 crore, around 200 crore, and this is a pipeline opportunity of 1000 crore plus, in which they have a conversion rate of around 8 to 9%. So this would mean about more 100 crore worth of orders coming in picture. In outlook ahead, they see about a 12 to 13% or 12 to 15% of a revenue growth, while margins from the current levels of 14% or odd, so may see about a 2 to 3% of an uptick. So this is the overall take that we have for Raju Engineers.
Rishi, thank you so much for getting us those details. Lancelot, I'll come to you. In the past 1 month, the stock is up almost 14%. The revenue visibility is looking good. The order book visibility is also looking good, and margins are expected to improve. What's the view like?
So I think, it has already risen. It's trading at almost 25 times, earnings, and the market is already factoring in these positives. And one has seen reasonably good sales growth and profit growth from the company in the past. Maybe once we see what are the quarterly numbers for this quarter and maybe next quarter, one can take a view whether, the kind of growth that is expected could be laid out over the next 2 to 3 years. From a profitability perspective, if the profit visibility of the earnings is clear, then one can definitely look at back at this time.
Thank you, Lancelot. Thank you for joining us and giving us your perspectives on the stock that were discussed today on the show. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
जब से दुकान खोली है मैंने, तब से बैंक का ही तो काम कर रहा हूँ। लो बन गया ना चपरासी।
Not banking with AU.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU।
हाँ जी शुक्ला जी, सोच बदलो और बैंक भी।
70-75 वर्ष के मुँह ये कोई कागज नहीं थी। अब जो है अपन साइट हुई, अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करने का। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
For decades, Punjab has been celebrated as the food basket of India. But today,
the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industries can thrive. The focus is clear: ease of doing business, robust infrastructure and a skilled workforce.
ਇੰਡਸਟਰੀ ਲੱਗ ਜੂਗੀ, ਸਾਡੇ ਨੌਜਵਾਨ ਮੁੰਡੇ ਕੁੜੀਆਂ ਨੂੰ ਕੰਮ ਮਿਲ ਜੂਗਾ। ਇੰਡਸਟਰੀ ਤੋਂ ਹੀ ਅਸੀਂ ਸੁਝਾਅ ਲਏ ਨੇ ਸਾਰੇ, ਬਹੁਤ ਸਾਰੇ ਇੰਡਸਟਰੀਜ਼ ਬੈਠੇ ਨੇ। ਇੰਡਸਟਰੀ ਤੋਂ ਅਸੀਂ ਪੁੱਛਿਆ ਵੀ ਕੀ ਕਰੀਏ। ਸਰਕਾਰਾਂ ਤੰਗ ਕਰਨ ਵਾਸਤੇ ਜਾਂ ਸਰਕਾਰਾਂ ਕੋਈ ਮੁਸ਼ਕਲਾਂ ਪੈਦਾ ਕਰਨ ਵਾਸਤੇ ਨਹੀਂ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਹਮੇਸ਼ਾ ਸਹੂਲਤਾਂ ਦੇਣ ਵਾਸਤੇ ਔਰ ਲੋਕਾਂ ਦੀ ਤਰੱਕੀ, ਲੋਕਾਂ ਦਾ ਜੀਵਨ ਪੱਧਰ ਉੱਚਾ ਚੱਕਣ ਵਾਸਤੇ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਦਾ ਕੰਮ ਹੀ ਇਹ ਹੁੰਦਾ, ਜਿਵੇਂ ਲੋਕ ਕਹਿਣ ਉਵੇਂ ਸਰਕਾਰਾਂ ਨੂੰ ਚੱਲਣਾ ਪੈਂਦਾ ਔਰ ਚੱਲਣਾ ਚਾਹੀਦਾ ਵੀ, ਕਿਉਂਕਿ ਸਰਕਾਰਾਂ ਲੋਕਾਂ ਨੇ ਚੁਣੀਆਂ ਨੇ।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise. A land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world. Connect live, ask, decide and invest wisely.
Your portfolio, your future. Ask Profit.
Hello and welcome to Ask Profit, the afternoon edition. My name is Puneet Zaveri. With me is Mahima Vachrajani, and over the next half an hour or so, we'll try and solve all your stock-related queries. So do start sending them on the number that'll start flashing very quickly on the top of your screen. It will be the WhatsApp number. You can also call us on the number that's flashing on the top of your screen yet again. So both numbers on the top now. Get all your stock-related queries answered. Before we move on to the queries, let's quickly look at what the markets are doing, because it's been another day where you have seen consolidation across the board, with the Nifty 50 now down comfortably below the 26,200 level. It was something that we were very proud of defending yesterday. All of that has vanished in today's trading session. When you look at the heat map for the Nifty 50, it will give you a perspective that while there were no points for guessing that a stock like Trent was expected to be under pressure today, down almost 7 to 8%, and that momentum on the downtake has continued. We have seen Reliance Industries as well as ITC taking the brunt of the Nifty downwards. Now, while we have 30 stocks of the Nifty 50 in the green, considerable pressure is seen on the index from the 3 stocks. So the contribution, if you can pull up that also very quickly on the Nifty 50, will show you that perspective of Trent, Reliance, as well as ITC that's under pressure. So you have almost 180 points that downtake, and HDFC Bank also is one of the major contributing factors in that. So hence you're seeing the pressure. Advanced decline ratio will also show you that perspective very quickly as well for the broader breadth of the market. Individual movers, we mentioned that in the FNO setup today morning as well, and that's played out in terms of the declines being almost 2x of the advances. finally, in terms of the BSE 500, before we move on to all those questions that you have sent across to get it answered, of course, on the downtick is Trent. CSB Bank, while the update was quite positive, today seeing some money being taken off the table. Reliance, as mentioned, Privy Specialty, Godfrey Phillips is continuing its downtick, and so is ITC. So the cigarette stocks is not getting any respite. On the up move though, Aether Industries, Nalco, KIOCL, the commodity pack continues its momentum very positively. But let me welcome in the guest for today's show, Vineet Bulinchkar, HOR, Head of Research at Ventura Securities, as well as Gaurav Sharma, the Associate VP and Head of Research at Globe Capital. Gentlemen, thanks so much for joining in today and giving us your time here on NDTV Profit. Let's go across now to our first query for today's afternoon session. Now, this is of course coming in by Sriram Raghuraman from Chennai. And his query is on Jindal Worldwide. It's a stock that we have discussed over the last few days. He's bought it at 46 and asking a one-year view on the stock. Gaurav, very good afternoon and thank you for joining in. Any view on the charts for Jindal Worldwide? Our viewers bought it at 46. Any up move that could still be from the current levels?
Yes. Hi, Puneet. Jindal World, it's just coming to a query after a very long time into focus because the stock is reeling under pressure with no respite coming in anytime soon. I don't see any kind of reversal signs here. Better to avoid this stock.
Okay, all right. The next question that we have is from Shankar, who's got 500 odd shares of Motherson Sumi Wiring and bought at the levels of 51.36 and wants to know if he can add more or sell. Vineet, very good afternoon to you. I'll come to you on this one. What's the view like?
I think it's a little wait and hold because, we are seeing a time correction coming in the markets. Preferences towards higher safety quality stocks. And, so we would want to hold on to this one and look at these results only once we feel that the market is bottoming out sometime in February, March.
Okay, all right. So that's with regards to where Motherson Wiring is concerned. We've got our first caller for the show. Karthik is calling us from Bengaluru. Karthik, hi. A very good afternoon to you. How can we help you today?
Yeah, hi. Good afternoon. I have a query on the Cupid shares. Is it the right time to invest for a long term?
Okay, Karthik, got your question. I'll take this up with Vineet. We've seen constant 2 days of pressure on Cupid. Today also, if we can try to pull the stock up and see as to how it's doing in trade. This is after a week where it saw good amount of traction, momentum coming in. Today, the stock, however, is seeing 12.9% of gains. But with regards to where this counter stands, it's a volatile counter to say the least. Do you think it makes sense to make an entry right now from a long-term perspective?
Actually, it's quoting at 5.5 times PEG. Very, very expensive. The stock defies gravity. There is no fundamental that is supporting this stock. So it's going to be a trap for investors, and one would rather stay away from here and look at more different counters which have got fundamental inherent strengths.
And fair point, Vineet. That warning is quite stern on Cupid because before the move started, stock was trading at a price to earning of 228 and market cap of almost 13,000 crores for a company. They're expected to do profits of just about 100 crores. That's the target for FY26. So some investors have to be really mindful for. Hopefully, Karthik, that answers your question. Then this next one is coming again from Hyderabad, and this one's from Venkat Giri. He is a regular viewer, so thank you, Venkat, for sending across your query. It's on Vari Energies. Another, catastrophe over the last 2 days. Stocks down yet again today. Holding 2,954 rupees per share is what Venkat is holding on the stock on. And considerably facing a loss of almost 1 lakh rupees because he holds 300 shares. Asking what he should do, continue to hold or averaging at the current levels. Vineet, would you recommend this trade on Vari Energies? Is it a good time to average down given the pressure that we've seen on the stock now?
I think, we would want to, let this opportunity go by. We believe that the stock has broken some levels which are not, very positive for the markets. and hence we would like to stay away because we are going to see a lot of pressure coming in the US markets.
Okay, all right. So that's with regards to where Vari Energies is concerned. The next question that we have is from, do we have the name? Murthy. Murthy is writing this question and he's writing us from Hyderabad. He's got 500 shares of Nalco bought at the levels of 250. He wants to accumulate 500 more shares. Wants to know if the current trend is looking positive enough to accumulate more and average out at the current levels from a medium-term perspective. Gaurav, I'll come to you on this one. Would that be the right thing to do?
At these levels, it is very much difficult to answer. Setting someone not to buy and the stock mounting 4-5% every single day, I think it's difficult. I think he should add a little bit more at these levels. With every rise, it is better to keep changing and revising your stop loss upward. That's the best probable strategy from a short to medium term perspective. As far as a few of National Aluminium, Hinzing and Hindcopper, these stocks are concerned, who have rallied too much in the past and still look good.
And that's largely a view coming in from Gaurav as well. The next query that we're getting is from Gautam. Now, he's also a regular viewer. Generally, we see him in the morning because he's writing into us from USA. So, very early morning now. Thanks so much for sharing across a query, Gautam. He's asking if it's a good time to buy State Bank of India at this point and what could be some of the targets to watch out for. Vineet, would you recommend this trade and any targets that you can also give for Gautam to watch out for?
SBI is going to be one counter which is going to surprise the market on the upside. So we would recommend holding on to this stock from 1150 to 1200 levels. But the move is going to be gradual and slow, so you need to have a lot of patience. If you've seen how the stock has performed over the last few months, you've seen that it's a very, very gradual rise. And the stock is also in all-time high territories. So this is providing a very, very good opportunity for investors to get into it and buy into it.
Vineet, that would be your top pick, SBI?
So SBI would be a good momentum pick. I think the stocks that we would like to look at is going to be Yes Bank. We believe that Yes Bank has all the levers in place. They've done a lot of good work. And I think somewhere down the line, we will see the stock gain momentum in terms of AUM growth that comes in.
Okay, all right. So, Yes Bank and SBI, two stocks on Vineet's radar. And I think Gautam stays awake when Ask Profit is going on. So, Gautam, thank you so much for watching us. All right, we've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi. A very good afternoon to you. How can we help you today?
Good afternoon. I just bought Tangamal Jewelry at 10 shares at the rate of 1,420. I just want to know for long-term view, where can I add these shares?
Okay, Mohan, got your question. Any particular reason as to why you've chosen this in the entire jewelry space?
So I've been holding this share from past more than 1.5 years.
Okay.
So I'm doing that because of the trend in the gold. So I just thought it would be a good sector for me to invest on.
Sure.
So I just wanted a view, in long-term view.
All right. Okay, Mohan. Got your question. I'll take this up with Vineet again. Vineet, would Thangamayal be the pick for you in the jewelry space?
So, we did some number crunching quite exhaustively on this stock. And while the momentum is good, the company is guided for good traction going ahead. However, we are not comfortable with the valuations. I think the market has discounted all the earnings, and there is more risk to the downside than to the upside going ahead.
Got that view, Vineet. Largely, and a lot of questions that we have been getting on the jewelry space actually over the last few days. So definitely, Mohan, you are on the right track in terms of having that exposure to that space. But the other question that we're getting is on Bharti Airtel. Now, our viewer has actually bought it at roughly about 2,100. He's also bought Shriram Finance at 1,024 rupees per share, and he's asking, any kind of profits that he can get in the short term from them. Gaurav, on either of those stocks, both have been quite in momentum, to say the least. So has Shriram Finance on the back of the big announcement in terms of a stake sale. Your view on either of those counters?
Firstly, I am very much bullish on both of them. Secondly, I am myself waiting for any kind of a dip of a corrective wave in the stocks to suggest my clients to even add more. So here is the first disclaimer: our clients could be having a position in the stock as we are bullish on both of them from quite some time. Both the stocks are very well placed as far as fundamentals and technicals are concerned. Any dip should be considered as fresh buying opportunity.
Okay, all right. So that's with regards to where Shriram Finance is concerned. The next one that we have is from Vamsi, who's writing us from Hyderabad. She's got positions both in REC as well as PFC, and wants to know if she can add more at the current price for any of these or both of these from a long-term perspective. Vineet, what would be your view like?
PFC and REC, we are very positive. And when you buy these stocks, you should look at them as more dividend plays. Okay, we think that 4 to 5% dividend yields are certain in this. And also we think that, with the AUM growing at 10 to 15%, you can safely assume that over the next 3 to 5 years, you can double your money, including the dividends.
Vineet, another question coming in from you. It's for Bajaj Auto, and we actually had a very interesting brokerage note today from brokerage from MK, where they've upgraded the stock target price now over 11,000. Possibly that led to the positive momentum of Bajaj Auto. Is it a good time to enter this stock, given that it's largely been subdued, and players like TVS, Eicher are more richly valued in the company? Is it a good pick that you think could do well in the near term?
No, I think the stock has consolidated very well over the last few quarters, and now it is showing momentum on the upside. Given these couple of things, I think there is a lot of churn of portfolio which is going to happen from four-wheelers to two-wheelers going ahead, because as the cost, energy cost inflation takes place on the resource side, we will see a little bit of stagnancy in four-wheeler sales and pickup happening in two-wheelers, because government schemes, interest rates, and generally the buoyancy in the markets is going to lead to the two-wheeler stocks staging a boom. And we like Bajaj Auto because they've displayed inherently a good mix of exports and domestic business, which tends to cushion each other whenever there are challenges in the system.
Okay, all right. So that's the view with regards to where Bajaj Auto is concerned. The next question that we have is from Amit Dubrial, who's asking about BHEL and as to what will be the right price to make an entry into this counter. Gaurav, what are the charts indicating?
Clearly positive. The public sector enterprises have of late started giving some good up move. These are good levels. If he wants, he can start adding up now. Take a stop at 275. Hold your position. Look for near-term targets close to 320, 330 odd levels.
Got the view, Gaurav. The next question that's coming in is again from Chennai, and this one's a very interesting one from Savitri. It's on Kaynes Technologies. Now, she's asking if it's the right time to enter the counter. Vineet, your view largely on the EMS space, because it's one which I think Kaynes started the collateral damage and now has spread across the sector in terms of valuation, in terms of cash flow that everybody is monitoring now. What's your direct view on Kaynes Technologies, as well as do you think it's a play across the space, because we've seen correction on Dixon, Amber? What do you make of the space and your top picks also?
I think we quite like Amber, but given the selling that is coming in, it makes sense to let the trend play itself out, and then bottom fish in these segments. And we think that Amber provides a compelling case because of two things. One is the AC business is booming, is going to boom again next year, and its alternative sectors where it is getting into, that is defense and railways. There also we are getting some very, very good traction. So among all these EMS stocks, we like Amber, and we think that there's substantial value to be obtained.
Do you have Kaynes under your coverage right now?
Yeah, but risk reward, I think Amber makes a lot of sense. Kaynes has got a little bit of fatigue in terms of ownership. So the stock is coming out. We are seeing a profit booking come in. And as I said, the entire sector is under pressure. There is, so Trump is also creating the uncertainty around that with his threat of increasing tariffs. So that could be negative for the high valued stocks because high valuations and if the growth suddenly gets squeezed, then markets tend to look overvalued, and that's what the correction is taking place about.
Okay. All right. So that's with regards to where some of these EMS players are concerned. But moving on to the next question, we're getting a lot of queries. In fact, a lot of international queries. We've Ashok, who's writing us from Sydney. He's bought 100 shares of United Spirits at the levels of 1387 yesterday. Wants a view for the next few odd months. Gaurav, I'll come to you on this one. Q2 was particularly very strong for this particular counter. There was a turnaround seen. With their re-entry in Andhra Pradesh, with the Maharashtra policy easing, everything worked in favor for them. But overall, what are the charts indicating as we speak?
Mahima, chart structure is not that encouraging. It is more likely to head down towards 1300 odd levels in the immediate near term. Only a bullish momentum will set in if the stock is able to go past and sustain above 1450 levels. As of now, from a shorter term perspective, I'll advise him to take a stop at 1260 and hold his position.
Gaurav, just curious if you have a view also on the EMS players, anything on Keynes Tech, Dixon Tech, because a lot of investors were invested at higher levels, now bearing those losses. Anything on the charts that suggests a buy call? Because Keynes, I think, has also hit a 52-week low today.
Puneet, as far as the EMS space is concerned, we only prefer Dixon, that too from a longer term perspective. Keynes is not on a coverage list also, but what we of late we have studied is we don't find that much attractive. Dixon is the only one stock that we prefer in this space, and that too should be considered only with a long-term perspective. That is the clear view, is because shorter term, a lot of more uncertainties are there. The stock may come down to test 11,000 odd levels. This is for Dixon coming in. So I think any further decline should be utilized as a gradual accumulate opportunity.
The view, Gaurav, the next one's coming in on Aztec Life Sciences. We don't speak about the stock so much, but Neeraj Wadhwani has this question for us. He's bought it at 829 and the quantity is also 1,000. So it's a big position. He's asking if he should exit or continue to hold. Stock's sub 700 now, so he's sitting on a loss. Vineet, by any chance, do you have coverage on this one?
Covered in the past. Right now, we do not have any active coverage, but we are quite positive on the chemical space, and we think that Aztec is one of the good companies around, so you can continue to hold on to this stock.
Okay. The next question that we have is from Abhinay, who is asking about Avenue Supermarts. He's got 10 odd shares worth rupees at an average price of 4585, and wants to know if you can buy more from a slightly long-term perspective. Vineet, what is your perspective here, considering the Q2 business update coming in, yet another quarter of disappointment, but it's also on account of the aggressive store expansion that they're doing in tier 2, tier 3 cities. What's the view like?
So, we are the odd ones out on the street. We are the only brokerage which has a sell note on Avenue Supermarts. And although the stock did rally to 4,400 very recently, it has come back substantially off. And we think that it still looks expensive. I think a price trend of around 31 to 3,200 is where we think that the stock would look fully valued. Right now, you're seeing some kind of defensive action, and hence, they're supporting the stock. But eventually, I think it will come off. I believe that the company has not got its act together in terms of the apart from the non-pulses space. So I think that is going to be a challenge, and that continues to drag the top line and the bottom line.
Got the view, and definitely one that investors will be watching out for in terms of quarterly results as well. The quick commerce space having a bearing on DMart and its quarterly update. But let's go across to our next query. It's on Route Mobile. Another stock that we haven't discussed in quite a while. So these are very interesting queries coming in. And you viewers, you can also call us in the last few minutes of today's show also if you want to talk to us directly for a stock query. Vijay Kirti from Chennai is asking this question. He's holding at 740. So sitting at a loss of almost 4,500 and asking a short-term view. Gaurav, Route Mobile, any view?
Completely, this stock is off track. 750 is the price point. If the stock is able to go past that level, then it would have certain potential to rise up to 850 and higher levels. As of now, there are no meaningful signs of any reversal. I would suggest to avoid.
Ujjivan Small Finance Bank is the next one. Ramesh from Bengaluru is asking this question. He's bought at the levels of 26 and 700 shares is what he's got in his portfolio. Wants to know if he can sell, hold, buy or maybe book partial profits. Gaurav, what would you recommend?
Hold. Take a stop at 950 and hold your position.
The other one that's also coming in is on MV Solar Photovoltaic, and it's a company that is focusing today was up almost 10% at the start of the trading session. So let's pull that stock up very quickly. And our viewer actually has a question on it. He's asking if it's a good time to enter. He's looking to add roughly 100 shares on MV. So Vineet, any direct view that you have, because I think Jeffrey's also initiated coverage in the stock. Anything that you have on this one? Vineet, I think you're on mute.
Sorry to say that we don't track that stock, so hence I'll not be able to offer a view on that.
But anything in the space that you have your view, because I think we asked you a question on Vari as well, which has been under pressure. So anything that you like in the renewable energy space, because we've seen a bunch of listings come up over the last few months.
Yeah, so I think you should focus with the large players, and I think the one to go with is Adani Green. I think very solid business, quoting at a massive discount to its values, and hence we are quite optimistic on that space. Although the stock has been under pressure and not performing, but we think it's a phenomenal value buy, and they've got a huge pipeline going from 20 gigawatts currently to about 50 gigawatts in the next 3 to 5 years. So I think that is one stock that we would recommend for the long term for massive gains.
Standard disclaimer, viewers, Adani Green is also a part of the Adani group of companies, and so is NDTV Profit. But moving on, it's time for our rapid fire round for Ask Profit. Vineet, Gaurav, try to keep your answers as short as possible to buy, sell and hold. The first question that we have is from Karthik, who's asking if there is any breakout possible in Varun Beverages. Gaurav, your view on the charts?
The stock is almost on the verge of a breakout at above 500.
NCC, a short-term view, Gaurav?
Not looking good. Better to exit.
Okay, our Cargo Logistics is the next one. Hegre S from Bengaluru is holding at the levels of 40 and 200 shares is what he has. Vineet, the business update came in strong. The stock is also up. Your view?
Continue to hold.
Suzlon is the other one that we are putting our focus on. Is it a good entry point, Gaurav, according to you?
Yes, it is a good entry point. Keep at least 2 to 3 quarters view.
Okay, Indus Towers is the next one. Asta from Delhi wants to know if this is the right time to make an entry. Gaurav, your view?
Please come up. What's the name of the stock?
Indus Towers.
Positive outlook.
Bajaj Auto, we did get Vineet's view. Gaurav, if you have one also, because for the next 6 months is what Jay Krishna is asking.
Clearly positive. A good up move towards 10,400, 10,700 is pretty much likely.
Okay, Cube Investment is the next one. Murthy from Hyderabad wants to know if you can continue to hold from a long-term perspective or not. Any view on this, Vineet?
Yeah, definitely one of the stellar manufacturing stocks to hold. We are quite positive on this.
Reliance Industries stock clearly under pressure today. Vineet, your view, our viewers bought it at 1,500.
Today it has given a very bad kind of a breakdown. But the long-term story is very strong. Capex cycle is looking good. Your FCFs are also play in nicely. So, hold for the long term, but wait for this trend to play out.
Next counter is MCX. Kunal from Chennai wants to know if he can continue to hold this counter or not. Gaurav, your view on the charts?
Clearly hold and add.
ICICI Lombard also, Gaurav, any good entry points on the charts?
Yes, current levels are also fair. He can start adding up here and add some more quantity above 2060.
Okay, Blue Dart is the next one. Ram from Bengaluru is holding 200 shares, bought at the levels of 5814. Can he continue to hold for the next few weeks, Gaurav, on the charts?
No, not looking weak. Take a stop at 5400.
Alright, so that brings us to the end of this rapid fire round of Fast Profit. Vineet, Gaurav, thank you so much for taking us through those queries and of course answering them for our viewers. With that, we're completely out of time on this edition of Ask Profit, but do stay tuned. India Market Close on the other side.
Co-presented by National Stock Exchange.
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने।
मनी 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 एवरी मंथ।
सोच बदलो और बैंक भी।
Punjab is the heartland of India's agriculture, known for its fertile soil and rich farming heritage. The state primarily cultivates wheat and paddy, contributing significantly to the nation's food security. Water conservation is critical in Punjab, where groundwater depletion is a growing challenge. These efforts help farmers use water responsibly while enhancing their yields. Crop diversification is encouraged to reduce dependence on water-intensive crops. Farmers now grow pulses, maize, vegetables and fruits supported by government initiatives offering assured minimum support prices and subsidized inputs. The Punjab government, led by Chief Minister Bhagwant Singh Mann, is deeply committed to supporting farmers of all ages. Under his leadership, significant tail and water canal works have been undertaken to strengthen irrigation infrastructure and ensure reliable water supply.
धरती बहुत उपजाऊ है, बहुत फर्टाइल लैंड है, दुनिया में इतनी फर्टाइल लैंड नहीं है किते, कोई घाट नहीं इस धरती से, सब कुछ देता रब ने, ते हुण सरकारां भी थोड़ियां अपनियां बन गईयां, तकनीक बदलनी पऊगी बस, नवीं किस्म नाल, नवीं तकनीकां नाल बीज, नवीं तकनीकां नाल बीजना, नवीं तकनीकां नाल स्प्रे,
Punjab's agriculture continues to grow sustainably, contributing to a greener, more prosperous future.
My bhai, do you know any cool bank जो digital first हो?
SBI coolest है.
What?
Digital loans 30 मिनट में. AI models 140 plus. Yono users 9 करोड़. Daily UPI transactions 33 करोड़.
Cool तो है.
चलो. SBI, the banker to every Indian. Truly.
Hello and welcome to India Market Close with me, Sharad Dubey and Hiral Dadia and Alex Matthews. Today looking at the markets, remember this is the first expiry of 2026. Largely we are seeing Nifty seeing cuts of almost 100 points into trade, but Nifty Bank actually holding the fort as it's above the 60,000 odd levels. There are key factors to actually watch out where the market positioning is looking like. First, I would like to say that Reliance and HDFC Bank, they are dragging the overall Nifty index and roughly by almost 150 points. If you could just show the key triggers, for the factors to watch out for. And let's look at how the Nifty constituents have also come in. Apollo Hospitals, that's doing well, that's up 3.5%. ICICI Bank also holding up, but amongst the losers is where the concern is there in the markets. Their weightage is also higher in the Nifty. We have Kotak Mahindra Bank, HDFC Bank, and of course Reliance and Trent. That is also giving a lot of pressure on the indices. Looking at the key sectors to watch out for, and let's get in the key sectors. We are seeing metals has seen a kind of a good buying happening across the sectors, and also just see these key factors to play, and this is the second factor to watch out for. Of course, after 2026 Nifty expiry at play, we're going to have is the drag which is happening from the Reliance and your setup. Also, apart from this, the key factors are also there, which includes the India VIX, which is down almost 10. And that's the key concern coming in. Options data still very range bound, so we can expect a choppy day of trade. And the global risk on sentiment, it's still there. Be it the precious metals, the metals, all of them have been rallying in trade. Q3 updates are showing larger moves as well. And the European markets, they have also opened up decent as well. And the Nifty PCR levels, they are also stable. So largely we see it's a range bound market happening. But on the broader indices, Hiral, what we are gathering?
Thanks, Sharad, for that. It's an interesting day of trade. Let's pull up mid-cap and the small-cap index on the screens and see what's happening on that front, because a lot of individual stock-specific action is what is on the cards. There you go. The mid-cap 150 is actually seeing a good amount of profit booking, trading at the day's lowest levels as we speak. And if you talk about the small-cap 250 as well, that pressure has continued. We're at the day's lows. A lot of stocks, Alex, if you see in terms of today's session, which probably are moving since morning, but there are a couple of new entrants as well to this kind of moves. But let's take you through the ones which have been seeing some major moves. Ather, a 5.5% up move coming in today's day of trade. South Indian Bank, Nava, Crisil, Rain Industries is also very interesting. The kind of run a Rain Industries has had, if you just pull up a 1 month or a 6 month chart, you will see the gains coming in when you talk about a Rain Industries. That's seen a sudden spike as we speak. Apart from that, on the losing end, Trent, the top loser. Canes also a 6.5% downtake. CSB Bank, a 14-15% up move yesterday, and today started to see profit booking as well. V-Mart, Premier Energies are a few of the other names which have been trading under pressure. But it's an interesting day of trade because categorically it's mainly a BFSIs where there is news. Consumption is where there is news.
Yeah, and interestingly, the sector that was completely underperforming yesterday is in the green today. You have IT that lost about 1.4%, went off the low point of the day. They were downgrades. It has actually moved.
But in the downgrade, I'm sure you're talking about the CLSA note as well in terms of the downgrades. But when we spoke to the analyst today, he was categorically indicating that it's not a
sector-wide
downgrade or a sector-wise call saying that reduce your positions. Few stocks where he is advising reduce your positions. There are few stocks where he has a high conviction buy as well, or an outperform rating. So it's a pretty mixed trend in terms of IT, and a lot of fund managers, Alex, have mentioned that 2026 is going to be a year for IT.
You know what I find very interesting today, and you both alluded to this, but Sharad did as well, but pull up the contribution for the Nifty 50, because even as I look at the screen right now, you have 28 constituents of the benchmark that are trading in the green. ICICI Bank proving to be the one saving grace, because if you put Reliance Industries and HDFC Bank together, then cumulatively 160 odd points being contributed by just these two entities. The heaviest weights on the benchmark right now, proving to be the biggest drags. Rahul Sharma, Director and Head of Technical and Derivatives Research at GM, joining us right now. Rahul, thanks so much for taking the time, and good afternoon to you. Vineet Bolinchkar, also Head of Research at Ventura Securities, with us this afternoon. Vineet, good afternoon to you as well, and to the both of you, happy 2026. Rahul, I'll come to you first on these heavyweights that are really proving to be the drag today. Reliance Industries, there's an update news flow as well, but what are the technical indicators pointing to?
Yeah, so if you look at Reliance, it will come close to its 50-day major support for its gains. I can attribute this also to the fact that we also have the expiry today, which the rebound is slightly used.
Rahul, I'm going to have to interrupt you because we can't really make out what you're saying. We're going to have to repatch that line. The audio is a little unstable. But in the meanwhile, let me go across to Vineet Bolinchkar on this. The news update that came through, it was a Bloomberg report, Vineet, on Reliance Industries that had to do with, allegedly, 3 oil tankers from Russia making their way to the Jamnagar facility. This is something that Reliance Industry has refuted. It even put out a statement after the report was filed, completely denying this report. But the street seems to be smelling something, or it must be finding that there's something to worry about here, especially because of this uncertainty in the trade between US and India. How do you deal with a 4.5% downtick on Reliance Industries?
I'm going to give you 3 macro perspectives which I think are driving this trend. One is that, international printing of money has started on a very big way in the US again, from quantitative tightening to quantitative easing. Second is we have the tariffs, coming into play. And, with what is happening. And, third thing is the trend of the markets typically over the last 3 years, January, February have been disappointing months. So all these 3 attributing to the fall, and even after refuting of these claims, you would have seen that it has taken out more than 3 to 4 weeks of sideways consolidation, and that is a worrying point. And with after refuting today's claim that the stock has not bounced back, we can expect further cuts to come in on the stock.
Further cuts could come in terms of Reliance Industries, and that's the expectation that a lot of people have as well. But moving on, in terms of the stock of the day, it's Trent, a rough ride. It's emerged as the worst performer on Nifty 50 with a 41% drop and a 44% slide since its inclusion. It's mixed views coming in there as well, because there are some bit of positives that are emerging as well. We'll head across to my colleague Mahima, who will tell us what's gone wrong and why there are a couple of bullish views still holding pretty strong. Mahima, what do you have for us?
Right, so Hiral, as you rightly mentioned, it's down almost 40% in 2025, the top loser in the Nifty 50 for 2025, and down 44% since its inclusion in Nifty 50 as well. Even in terms of where the RSI is trading, it's below the 30 level zone, which is indicating an oversold zone, and the stock is below its lowest target price of 4350 as well. So the question really here is whether it is time for brokerage houses to even see some correction here or not. Moving on to what's not worked, right? 6 quarters of consecutive decline in terms of where the revenue growth stands, and sub 50% mark. Before Q2 FY25, they did 50% growth consecutively, but since then, the revenue growth has been declining from the 39% mark in Q2 FY25 to 17% this quarter, and on a rebased working, the growth is coming in at just 15% this quarter. In terms of where the guidance goes, management has said that they're going to do 20 to 25% in FY26, but that's nowhere near in terms of visibility. Management expects demand traction, of course, to pick up in the near future, and that's the only positive commentary that's possibly giving some cushion to where analysts stand. Now, in terms of why the growth is weak, aggressive store expansion is taking place for them. There's reduction in revenue per square feet sales. There's also store cannibalization which is taking place, and of course, there's increased competition which is playing its own part. Now, in the past 2 years, we've also seen FIs reducing its stake in the counter. In March 23, it stood at around 24%, which has come down to 16% in September 25. Valuations are still a concern. It's nowhere near cheap when it comes to Trent. At the start of 2025, it stood at around 101 times, the current PE at 93 times. 5-year average at that 131 times, and 1 year forward also not looking cheap at that 73 times. Moving on in terms of how this stacks up against Avenue, because Avenue has also been under pressure in terms of where the growth stands, but for Trent it's largely hampered by the aggressive store expansion that they're doing in studio, versus Avenue being hampered by the advent and the pickup of e-commerce and quick commerce. Lastly, in terms of what Hiral was mentioning about that analysts still are bullish Macquarie with a highest target price of 6,218 buy calls as per what the Bloomberg estimates are suggesting. And this is largely because the analysts are expecting 20 to 25% of sales CAGR over medium term, steady margin expansion going forward in terms of where operating leverage kicks in once the stores start to operate fully. There is operating cash flow which is growing at a healthy pace, and this is despite of the aggressive store expansion that the company is doing. Zudio's share in home market is lower than other retailers in home countries, and that's a positive thing. And there's improving ROC, which is also on the card. So this is the overall view of what's not worked and what lies ahead, and why analysts are still bullish on Trent.
Thanks a lot, Mahima, for this detailed analysis on Trent. But the story remains the same. If it's a high valuation stock and the growth moderates, the market punishes it. Vineet, I'd like to get you on this Trent, and of course there are other players also which we have seen corrections have happened, high valuations, growth moderating. But Vineet, what will be your view on Trent? Next 1 to 2 odd years, there will be pressure coming in until the next cycle comes on a low base?
So, if you guide for 20-25% and you declare 18% to 17% growth, markets are going to punish you brutally because you're not a cheap stock at 93 times. And we baked in about 20-25% growth. So on a DCF basis, it comes to be extremely overvalued. But having said that, I think one important perspective is that we are quite happy with the segment, which is the high margin segment, which is doing very well. And that would be the only saving grace in this otherwise lackluster and disappointing performance.
Let me ask you a question then, Vineet, just to complete that point on Trent. On the valuations, given that 17% is now in the bag, assuming that this is the trajectory more or less and there is no positive surprise, at what point would Trent start looking attractive to you?
So, before these notes came in on the performance, we had baked in a price of about 40 to 4,300. But it's gone even below what we are expecting. So in one of our later calls, I will update you on the model and talk to you. But I definitely see that stock is headed at least 10 to 15% lower.
That's an interesting take in terms of Trent. In fact, we have Rahul Sharma back with us. Rahul, I don't want to take a question with you in terms of levels because the volatility is absolutely high. It's increased now, finally going above that 10 mark in terms of the VIX as well. What would your top, recommendations be at this hour?
Yeah, so if you look at how January has played out so far, we've had momentum returning back to the markets. And that means we essentially get into a zone where there is a possibility of a breakout happening on the Nifty eventually. So my sense is this is a buy on dip market. Look to buy the dips. The closest support that we have around about is 26,050 on the spot. That would be a good level to enter. Risk reward remains favorable for longs. And I think in this month, we should eventually see the 26,500 being tested and probably taken out as well. In terms of stocks, Apollo Hospital is something that we are liking. We recommended this stock to our clients. Even now, the stock looks pretty solid for a reversal. And we could very well see the stock head towards 7,500 in the short term. So one can look to buy at these prices, have a stop loss placed at 7150 and go long in the same for an 8 to 10 day positional perspective.
Very quickly, Rahul, follow up on Apollo Hospitals. Even at current levels, after a 3.5% up move, is this a momentum play that you're looking at?
Yeah, so see, we also have to factor in that since mid-October, the stock has been underperforming the market in a big way. And today is the first session where we are seeing a volume-based reversal of sorts. So this is more of a reversal play. Yes, the momentum is very high today, could possibly extend over the next 1 or 2 sessions. But structurally, this is a proper reversal, which means 7,500 could be the first target. Above that, possibly the stock could also head towards 7,800 as well. So whether you're an investor or a trader, I think for both the opportunities are pretty decent in Apollo Hospital. And this is something, which is coming out from a prolonged period of underperformance, could now turn into a stock which may outperform the market.
All right, one of the top gainers on the Nifty 50, if not the top gainer. right now for the benchmark Nifty, 53.5% up for Apollo Hospitals. It's that time of the show where we get you all of the news, not news, I shouldn't say news, all of the chatter from the dealing rooms in Heard on the Street. And Somit joining in to tell you just that. Somit, quite a few stocks and large cap stocks getting battered in trade today. What's the buzz there?
Well, dealers are focusing on stock-specific action. Yes, there are some downtick on some big names that we are seeing in trade, but there are multiple other stocks that have been in focus, is what dealers have highlighted. Firstly, we are focusing on Britannia. The stock that we are showing on ticker is not correct. It's 3i Info, but we are talking about Britannia Industries, and there are buy flows on institutional desk is what dealers have highlighted, and dealers are expecting some positive news flow to come in soon when it comes to Britannia. For ICICI Bank and Persistent, there are strong buy flows on large HNI desk on both the counters. Dealers are expecting that the third quarter earnings could be quite strong for both the names. Hence, ICICI Bank is up nearly 3% in trade and Persistent is up nearly 1% in trade today. Apart from that, Reliance Industries, Eternal, Adani Ports, SRF and HDFC Bank. All these stocks are seeing sell flows that are coming in. Dealers have highlighted that a common large FII is a seller in all the counters in trade today, and hence the selling pressure and hence the downtick in trade that we are seeing specifically for these big names. For Northern Arc, there are buy flows on PMS desk. Dealers expect that the third quarter earnings would be strong for this counter as well. For Bliss GVS Pharma, there are buy flows on large HNI desk. Dealers are expecting some positive corporate development anytime soon on this counter. In fact, they are indicating that the company could be taken over by another listed entity. So keep an eye out for Bliss GVS Pharma. And lastly, it's Orient Pro Solution. There are buy flows on HNI desk at lower levels in trade. What dealers have highlighted here is that the company could announce an order win anytime soon. So keep an eye out for Orient Pro Solutions as well.
Right, Somit, very interesting names that you've highlighted for us. I want to focus on ICICI Bank, and the point that Somit just made is that there are buy flows on HNI desks, and dealers are indicating that there is a possibility of a strong Q3. Remember, this is a bank that managed to defend its net interest margin the quarter gone by as well, better than most other banks. The question to you, therefore, Vineet, in a situation where HDFC Bank has just reported its quarterly business update and its credit deposit ratio has once again gone above that 100 mark, which is a cause for concern and seemingly the reason why it's being punished in trade. Would you shift out of an HDFC Bank in favor of an ICICI Bank?
People have already shifted out of HDFC Bank into ICICI Bank, and we've seen that play out for a while because, while HDFC Bank has been an underperformer, ICICI Bank has been a stellar performer, if you take all the listings that have taken place. So we continue to like ICICI Bank. The fact that they've defended their margin profile so immaculately, it speaks volumes about the franchise, and we continue to be very, very gung-ho about this stock.
Rahul, asking you also on the banking front itself, there is of course a divergence. Just show the charts, of course, yes, HDFC Bank and ICICI Bank, that's what I'm talking about. Just show the daily charts of them and we realize both sides of the coin. ICICI Bank, we are seeing a good buying happening. For the second straight session, HDFC Bank is seeing a kind of a selling as well in this counter. Rahul, I want to get you on this. Is there a good trade being made in these larger private banks? And if yes, where is the risk-reward ratio good?
Yeah, so if you look at the way SDFC Bank setup is, multi-month of sideways performance is seen in SDFC Bank. Vis-a-vis ICICI Bank, at least it has some up cycles and down cycles in place. So the question is, if you are a trader, I think it is best to stick to an ICICI Bank rather than an HDFC Bank. HDFC Bank probably, is more of an investing stock. If somebody who loves volatility, ICICI is much better. Now, standalone ICICI Bank looks pretty decent today. Strong volume-based buying happening today. Plus, the best part is the 1400 resistance area has also been taken out, which means the next possible target for the stock is around 1450 on the upside. So my sense is, Bank Nifty is the index which is outperforming. Put call ratio is still very much on the higher side, which means even in a falling market, banks have private banks, particularly ICICI Bank, has sort of led this strength in the Bank Nifty space for today's session. So stay long in ICICI Bank. Even BTST trade can be done, or possibly fresh buying can be done. Stop loss at 1380 and a 1450 kind of a target for the short term.
So that's ICICI Bank. One question I have on Bliss GVS Pharma. Vineet, as Somit was indicating that the company could be taken over by another listed entity. Now, what do you make out of this as well? Because Bliss GVS is looking at a lot of backward integration as well in terms of business. How does the stock stack up if there are buy flows coming in on the HNI desk? Vineet, you're on mute.
So they have got a very good Africa and Latin American business, and this provides a very good opportunity for larger players to gain market share in a readily developed market. So it's a accretive thing for Bliss GVS and could turn out to be quite positive for it.
Yes, Pharma. In fact, let's just pull up IEX on the screens as well. We are getting a couple of updates from the APTEL where the bench has said that the APTEL does not have the power to make regulations right now, and they're expecting the CERC to act independently. That's the latest update that's coming in on IEX. In fact, the IEX lawyer has indicated to the bench that they are just against the order and the order has to go. Transparency is required under the Electricity Act, and that is not there. And there is no transparency on the reports by Power Grid on which this order is based. And, viewers, to be noted that this is with regards to the market coupling case that has been ongoing when it comes to IEX. In terms of any other updates that we're picking up is, the lawyer for CERC, however, has argued on this that they thought that today's hearing is on the back of the allegations. That is what the lawyer of CERC was expecting. And they were informed that the hearing will be based on allegations of corruption. The bench, in turn, has said that they cannot guide any party on what they want to argue on. So again, in terms of the overall arguments right now, this is the latest that we are picking up. And I think because of, no major clarity on what the argument is going to be about, what either parties are going to put forth in terms of their arguments, and two, no further direction coming in. It's absolutely open till the time the judgment comes in. That's the reason why we're seeing this kind of a spike that's coming in with regards to IEX. It's up almost 2.5% in trade. We need a quick view when it comes to IEX because this is just an ongoing case. Since the previous hearing to now itself, the stock is down around 4.5%. A spike coming in probably because of no judgment yet again.
I think it's too early to make any comment on this. It's better to let it go by. The stock has been kind of a laggard in terms of performance. And, unless the judgment is not out, commenting on what can be the outcome is, going to be dicey. So, just leave it out for some time.
Value erosion has taken place after that market coupling announcement came through. On that note, gentlemen, thanks so much for taking the time. Pleasure speaking with you as always. We have to step into a very quick break. We're heading into the last half an hour of trade, but we've got a great conversation lined up on cement. We've had a few commentators on the channel today itself speak about why they might be bullish heading into the end of the financial year. Stay tuned.
Co-presented by National Stock Exchange.
70-75 वर्ष के मुँह ये कोई कागज नहीं थी। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को यह अधिकार दिया गया उसके नाम पे जमीन करनी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the Gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues. Punjab government foremost in public welfare. Transformation of education. Thanks to the Punjab government's new education policies, Punjab has made its way to the top bracket of the National Achievement Survey 2024 in the categories of class 3, 6 and 9. Free books and uniforms distributed to about 27 lakh students of government schools have led to a decline in the dropout rate as well as social discrimination.
हमारी जो बुक्स हैं वो भी हमें स्कूल के द्वारा ही प्रोवाइड की जाती हैं और हमारी यूनिफॉर्म वो भी हमें फ्री ऑफ कॉस्ट ही मिलती है और जो हमारा बस फी है वो भी गवर्नमेंट ही पे करती है।
केमिस्ट्री लैब है, बायो लैब है, फिजिक्स लैब है और कंप्यूटर लैब है जिसकी वजह से हम प्रैक्टिकल करके देखते हैं, अच्छे से समझ भी आता है। इंफ्रास्ट्रक्चर बहुत ही अच्छा दिया है बैठने के लिए, पॉजिटिव एनर्जी मिलती है पढ़ाई में, जी लगता है, अच्छा लगता है पूरा। मैं पंजाब सरकार का बहुत बहुत धन्यवाद करता हूँ।
Regularization of contract teachers and transparent appointments to vacant posts have led to tremendous improvement in the educational environment of schools. More than 52,600 permanent posts of teachers and teaching staff have been filled in the past 3.5 years. 118 schools of eminence are paving the way for a bright future of talented students from underprivileged communities.
ਹੁਣ ਸਾਡੇ ਬੱਚੇ ਸਕੂਲਾਂ ਦੇ ਵਿੱਚੋਂ ਪੜ੍ਹਾਈਆਂ ਕਰਕੇ ਜੇਈ ਐਡਵਾਂਸ, ਜੇਈ ਮੇਨ, NET, ਫੌਜ ਦੇ ਵੱਡੇ ਵੱਡੇ ਐਗਜ਼ਾਮ ਪਾਸ ਕਰਕੇ ਸਾਡੇ ਸਰਕਾਰੀ ਸਕੂਲਾਂ ਦੇ ਜਵਾਕ ਟੌਪ ਕਰ ਰਹੇ ਨੇ। ਹੁਣ ਸਾਡਾ ਅਸੀਂ ਕੰਪੀਟੀਸ਼ਨ ਚ ਆਏ ਹਾਂ। 98.9, 99.4, 99.5, 99.6 ਹੁਣ ਸਾਡੇ ਬੱਚਿਆਂ ਦੇ ਇੰਨੇ ਨੰਬਰ ਆਉਂਦੇ ਆ।
Punjab government foremost in public welfare.
Hello, Moto.
Welcome back to India Market Close, and now joining us is Rakesh Arora, founder at GoIndiaStocks.com. Good afternoon, Rakesh. Cement space has been buzzing again after 2 to 3 years of consolidation. Multiple broking house reports are stating that December is the month of recovery, and slight price increases have also started happening, maybe to the range of 30 to 35 rupees per bag. Rakesh, I want to get you on this. Is this recovery sustainable? Because I think there was the rainy season and the pricing power was not coming for the cement companies. But do you think the cement companies' pricing power is back? And if yes, the recovery has started?
So there were one more factor beyond the rainy season. GST cuts happened and government was monitoring cement prices like any other commodity price, quite closely. And cement industry would not have really, would have challenged that by taking price hikes earlier. But now we are getting into busy season and, normally we see some seasonal price hikes. So difficult to say whether it's a sustainable thing, but I think repeated attempts will be made to increase cement prices. And definitely cement prices will be much higher in Q4 and Q1 next year as compared to what we have seen in the last 6 months.
Rakesh, one of the most important things which is happening globally is that the Brent crude levels are very muted, and slowly the sticky fuel prices are there, but they're under control. So what kind of benefits, can be there for the cement companies for this cheaper raw material costs?
So transport is almost 15% of their raw material cost. So definitely, cheaper crude prices does really help them in a big way. But having said that, cement price hikes normally happen when there's a cost inflation, because that gives an excuse to cement companies to really go and increase price. But yeah, a stable pricing scenario is welcome when they were not able to really increase the prices because of GST cut and rainy season.
And Rakesh, what would be your key pick, if you had to choose a cement company, maybe in the mid-cap space, anything which is looking attractive right now, after this consolidation has happened in the industry for the last 2 to 3 years?
See, while I won't want to name anyone, but I would say that in cement industry, pricing is largely common for all the players. So what really differentiates is actually, one is volume growth. So one just has to figure out which is the company which is growing the fastest, and also include the inorganic growth that these companies are doing. So it's an easy answer. I won't name it, but I think viewers should understand, which company is doing the maximum inorganic growth along with organic growth.
All right. On that note, Rakesh, thanks so much for joining us. And you know what? I think we should do a poll to see whether our viewers can guess correctly what Rakesh was talking about.
Yeah, and to add to that, I'll just shift, conversations where we need to again look at a IEX, a 9% up move coming in on a IEX. Now, the only lines that we have so far is that the argument is still ongoing. What IEX has come out and said is that the coupling decision was based mainly on a power grid report, which wasn't made public. That's the argument that IEX is putting out. And the argument continues to happen right now at the tribunal as well. In fact, the IEX lawyer has continuously said that the report has not been given to them yet, and it was submitted in the first few weeks of January 2025, that it is almost a year ago. And usually the trend is that the reports do get uploaded, and they said that Power Grid came out with what that report was based on the back of historical data. There should have been some data on why did the commission decide to go ahead with market coupling as well. And when the order was passed, the commission said that the report will be made public. So that's what we're picking up so far, on the back of which the stock has actually spiked to almost a 9% in trade today. In fact, let me get an Ajit Mishra from Religare Broking and take his view as well. Ajit, welcome to the show. Always a pleasure to speak to you and Hiral on this side. A 9 or 10% up move coming in on IEX in today's session. What are charts indicating?
Yeah, good afternoon, Hiral. So Hiral, definitely it's a very strong and positive move. But again, the question is whether we are going to sustain these gains or not, because it's been almost 3-4 years that the stock has been witnessing price-wise, time-wise correction. The good part is that we are seeing this rebound from the previous swing lows, which was very critical, close to around 130.35. But still, the stock is not completely has reversed the trend. So for that, we need to sustain above 155, 160 levels decisively. Then probably we can see further relief to the investors or traders who are stuck at the higher levels. So as of now, yes, you can continue to stay put. 140 should be a strict stop. Around 155, one has to relook and review the position as well.
Okay, so clearly that's IEX. In fact, we have Rupesh Sankhi of Elara Capital joining us as well. Rupesh, there is the argument which is ongoing right now, where the IEX lawyer has come out and said that they have not got the report yet, which was submitted in the first week of January 2025. And they said that Grid India had come out with that report based on historical data. My first question to you is, do you think that there will be a stay on the APTEL order on market coupling from the initial comments that we're picking up so far? Because the stock is up 10%.
Certainly, because they have to look at all the observation, whether there is a real benefit for the buyers and sellers if they go for a market coupling. So we have to wait for that order to come. But definitely, if you look at the 2 years back when market coupling announcement was there, stock was around 220 rupees, and we have seen multiple de-rating has happened because of that. Despite strong volumes around 17-18%, the stock has corrected because of market coupling on the two products where the company has around 97% market share there. So certainly markets were not keen to give higher multiple, and we have seen the multiple derating has happened. So in case if there is no market coupling and Aptel comes out with a favorable order for IEX or to give more timeline for more observation and cost benefit analysis, then certainly it is a positive, because on the earnings side we have not seen any kind of a negative impact. Even in the last 2 years, the strong volumes has been very strong. So just because the multiple derating has happened, stock has corrected. So if there is a favorable order or no market coupling, then definitely stock will come back to their previous level. Not previous level, but at least you will see a significant up move from the current level for sure.
Rupesh, this one line that I'm getting from the ongoing hearing, where I'm just trying to understand this and hoping that you will give us some color on this. Apparently the bench is saying that they can't question the power to make regulation. And ultimately this market coupling is a regulation. So by that logic, are they effectively saying that they can't intervene in this matter?
Absolutely, because if you look at the Electricity Act 2003, there is a clear provisions that the market regulator like a CRC has that come out with the intervention in terms for a market deepening kind of mechanism. So there is a provision. So Aptel won't intervene there because it's as per Electricity Act 2003. But only issue is that whether CRC will take time, will give more time to go for more observation, because electricity is just 9 to 10% of the overall volumes. If you look at the international data, is close to 40-50%. So we need more and more products, more participants to get benefit of this short-term market. So there might be some delays, but we cannot rule out whether market coupling is completely out. But I think they might give some time. They will come with one or two products, and they will see the observation there. But that is as per Electricity Act, there is a provision, and CRC can come out with such kind of mechanism in the short-term market.
So Rupesh, my question to you is, at this current juncture, what are the scenarios that you're watching out for? And basis the scenarios, what would you advise investors to do with an IEX?
Yeah, see, definitely when stock was at the peak 220 rupees level, the market, that time stock was trading at 35-40 kind of a P multiple. But in the last 2 years, we have seen very good traction on the exchange volume front. And IEX is continuously again maintain market share there. So in case market coupling comes into picture, then definitely it's a very negative for IEX, because like other products, there could be a market share loss, and that can be a significant negative for IEX. But at this point of time, we are not sure whether market coupling will come immediately, because it has to come in the month of Jan, but it got postponed. So might be some sort of time, they might give some extension of time, more observation will be there, whether infrastructure is in place or not. And accordingly, they will go with this kind of coupling kind of a mechanism. But at this point of time, we have to wait for more clarity whether CRC will go ahead with their market coupling regulation.
So I think clarity on that front as to what happens in terms of market coupling and whether there will be a next case or next date in terms of hearing is the key, because that's what I think even I remember Alex did allude to in India Market Open, that there was no clarity that was expected. I think that's the reason why you're seeing this kind of a spike that's coming in on the stock as well. But thank you, Rupesh, so much for joining us on the show and sharing those comments. Absolutely gives us some bit of clarity as well. 13% up now. 13%. In fact, the CRC lawyer has said that this is heading towards a climax, and whatever you want to regulate, we will draft the regulations and give it to you. Just implement it, and it's going towards that. That is what the CRC lawyer has indicated so far. In fact, another aspect that we want to pick up apart from IEX is Devyani and Sapphire merger, where the conference call was ongoing right now. Let's pull up both those counters on the screen side by side and see what's happening to those two companies as well. Because in the conference call, what they've indicated so far is that the merger will be creating the largest F&B company, and that will have a combined turnover of nearly 8,000 odd crores is what you're looking at. In fact, you're seeing that mild recovery that's coming in with regards to Devyani International as well. And the merged entity to cross $1 billion in turnover after the merger. So that is a big number that you should be watching out for. Very quickly, in fact, we have Sudeep Bandyopadhyay as well who's joining in. Sudeep, welcome to the show. Two stocks I want to talk to you about. IEX on the market coupling case, I beg your pardon. The stock is spiked to 30 to 14% right now on the back of the hearing which is ongoing. And your Devyani and Sapphire Foods merger looking at $1 billion, I beg your pardon, in terms of turnover. How are you looking at both these counters?
Well, as far as IEX is concerned, any delay in this market coupling is good. One doesn't know what's going to happen eventually, but today's whatever has happened today clearly indicates that things will take some time. So IEX will get some time. And that's why I think the stock price is up, and they are getting a breather. It's not going to happen immediately. It's going to take time. And in the interim, I think many things can happen, which can even strengthen IEX further. Introduction of new contracts is one of them. So as far as IEX is concerned, it used to quote at 200 plus levels. It's come down significantly once the market coupling regulations, market coupling issue cropped up. And at current levels, definitely it does look good. Of course, today's spike was kind of a binary event, and that has happened. So we will keep watching the space. I don't think I will recommend a buy or anything at this stage. Too volatile, too uncertain, but definitely a space worth watching. As far as Devyani and Sapphire is concerned, I think this has been discussed earlier as well. I think it's a fantastic deal from a Devyani International point of view. They are getting a very good deal, and I think the conglomerate post the merger will definitely be the largest F&B entity in the country. The custodian of all the Yum brands in India, and the scope for expansion is significant. The margin improvement and performance improvement in Pizza Hut is definitely possible if you compare with other pizza chains or even other fast-moving chains like McDonald's or even a KFC, which is Devyani's area.
Fair point, Sudeep. And I think what you've said about IEX is also pretty valid. Looking at the kind of erosion that is taking place in the capital, don't necessarily jump the gun. Watch the space to see how it pans out. Ajit, we're nearing the end of trade, so why don't we take this opportunity to ask you about any BTST ideas that you might have that our viewers can benefit from?
So, Alex, after almost 4 or 5 months of consolidation, finally we are seeing decisive sign of a breakout in pharma space. So it was sitting on the sidelines for almost 4 or 5 months. While the stocks were witnessing traction, but today it's a broad-based rally that we are seeing. So based on that, Divi's Lab is something that attracts my buying attention. Means after almost in line with the index, it has corrected significantly in the recent month, and now we are set for the next leg of the up move towards 7150 mark. So with stop at 6450, one can go long in Divi's Lab. Alongside with that, from the healthcare space, Fortis, we have seen decent price-wise correction in the stock also. And here also we are seeing strong recovery post this buying pivot formation on the daily chart. So 995 is what we are eyeing in Fortis. So here also you can go long with 920 as a stop loss.
But let's focus on the PSU banking space as well. Over the last 3 odd months, we have seen roughly 15% gains coming in the Nifty PSU banking index part. What's the reason for it? How the stocks have moved? We'll give you that in our special segment of the Profit Intelligence. So let's just see how actually the Nifty PSU bank index has panned out. There are these strong numbers coming in, and this is just not a 3-month story. 1 month story also, it's positive, and a strong outperformance against Nifty and the Nifty Bank Index as well, and also of course performing better than its private peers. Up next, apart from the index tracker as well, let's look at the key concerns which would be in focus, and largely this has been there because there is strong operational parameters which have actually done well. 9 out of 12 constituents have given positive return in the last 3 months, and also looking at the key factors includes this itself, positive returns coming in the last 3 months as well. Also, the operational numbers which I was talking about, that has done well, and this has been largely skewed towards Shriram Finance, especially the MUFG deal which was there. That is where we saw a good rally happening for the Nifty. For the Nifty PSU Bank, these are the key reasons. And also moving ahead, we see what are the key factors. These are the ones. Asset quality improvement, that is something which has really done well. Credit cost, they expect it to remain stable. And that is what are the factors which are aiding the PSU banks. The valuations front, these are the ones which you look at. And right now, they're slightly on the higher side because of the strong up move coming in. And Sudeep, I would like to get you in onto this. The valuation front we spoke about. But PSU banks, is there some more steam left? Because it's undergoing a good change, a structural change. So for long-term investors, should they hold, and which stocks are looking attractive to you? Sudeep.
Hold, and they need to look at acquiring even now. If you look at the valuation gap between PSU banks and some of the private sector NBFCs, even banks as well as NBFCs, I think the gap is huge. And as you rightly said, things are improving rapidly at the PSU bank front as well, on the performance front, on asset quality front, on credit growth front. And I think, the valuation gap, yes, there will be some valuation gap, but the kind of gap which is existing today, even today, I think it's not warranted. There will be some bridging of the gap, and that gives an opportunity. Even if you leave aside the potential merger which the government is talking about and consolidation of banks on the PSU scale, even if you leave that aside, I think some of the PSU banks, even the smaller ones, like a Bank of Maharashtra, we like, Central Bank we like, Bank of Baroda also looks good. And of course, State Bank of India has been our favorite for a very long time. And we still believe that all these banks can be acquired, even at current level, for a 1 year kind of a hold.
We spoke about the PSU banking space, but HDFC Bank is something to look out for as well. Vishy is going to come in. Hi Vishy, what's there for the bulls versus bears scenario for HDFC Bank?
Sharad, interesting developments that have happened over the week. Basically on Saturday, when HDFC Bank released its provisional numbers, at that point in time, there was a lot of doubt whether these are good numbers or are these not so good numbers. And now, of course, the market has spoken. Over Monday and Tuesday, you've seen the stock crack quite a bit, and that is primarily because of the way that the numbers have panned out. If you were to look at the advances growth, now that at 12% is a very good number. Actually, that 12% is a really strong figure because that is matching the industry growth. That was something that HDFC Bank was not able to do in the previous quarters. Deposit growth at 11.5, that's a problem because in Q1, you saw 16% deposit growth. That has dropped now to 11.5%. Below the advances growth. The next important point to look at is on the CASA deposit front. Q3 CASA deposits are up 10%. That's a healthy sign because it was about 7.4% in Q2. However, on the other side, you'll see that the CASA ratio has dropped. That's down by nearly 20-30 basis points to now 33.6%, and that's a problem area as far as HDFC Bank is concerned. Now, what does this sort of come down to, distill down to? Margins likely going to look better in Q3 because you've seen the advances growth coming up sharper. On the other hand, is loan to deposit ratio near 100%. This was something that the bank had tried very hard to come off of. You could see September, it was at 98.8%. It's important that there is that gap between the loans and deposits because if it is close to 100%, the headroom for growth gets limited. And that is going to be a key problem that you'll watch out for as far as HDFC Bank is concerned in Q3 and Q4.
Very interesting. So that bull versus bear case, very well described by Vishy. I have a very quick question. Since we've spoken about HDFC Bank through the day today, Sudeep, very quick question for you. Ultimately, that sword of Damocles or the pain point seems to be the credit deposit ratio, which headed over 100 for HDFC Bank, which the street seems to not like. What level do you see it settling in? Do you see it moving considerably lower heading into Q4? Because it's been pointed out that Q4 is a good quarter for deposits usually for HDFC Bank.
Well, Alex, it's usually, but things have changed. Financialization of saving is happening in a big way. I don't think we'll see remarkable progress as far as deposits are concerned in Q4. There will be attempts, significant attempts by the bank, and some improvement will be visible, but not anything to move the needle. That's what I strongly believe. If they can bring it, around 99 point something, I think that will be good, but it looks very, very difficult as things stand today, considering the momentum as far as mutual fund mobilization are concerned and other different asset classes are concerned. Somehow bank deposits have lost that attraction which used to be there amongst common public. I think they have now other avenues for investment, and they are choosing a lot of other avenues as things stand today.
Would be an avoid at this point. Are you saying that, Sudeep, just to close that point out?
Well, I'm not saying you need to avoid HDFC Bank or any bank in particular because of the credit deposit ratio, but definitely this is a matter of concern. If you don't have headroom of growth, then how do you grow? Amongst the private sector banks at this stage, I have a little contrarian view, and I do like IndusInd Bank. I think, post whatever has happened there and a lot of cleanup, a lot of value erosion, now it looks good at current levels. It will take maybe a couple of quarters more for the bank to really start showing good performance. But if you are a long-term investor, it is probably a good level to buy into.
Very interesting. Okay. It also posted its quarterly updates, and the positive aspect and the reason why the stock is probably up and about is because the deposit franchise for the bank did not erode as much as some might have feared. Now, it's a day for big moves, and one of those big moves is MV Photovoltaic. It's moving up as much as 8% or thereabouts, 8.3%. This is on the back of a brokerage note. Jefferies has initiated coverage with a buy rating at a target price of 320. That's still a pretty considerable upside from this point. And what are they saying? They're saying that it's too cheap to ignore. And that continues to be the case despite the 8% up move. They're saying that India installs solar capacity that grows at 24% compounded over the course of FY25 to 28. They say that it's a well-funded balance sheet and that offers a competitive edge. They also say that the industry profitability is set to normalize from FY28 onwards. And get this, they anticipate that the EBITDA compounded annual growth rate for this company is going to be 56% over the course of FY25 to 28. So quite the growth trajectory for this company. And it also says that as of the previous close, the company was, or the stock was trading at a 50% discount to its peers. So it's quite an interesting stock to watch out for. Already that catch-up has taken place. Sometimes all it takes is a nudge. But we did speak with the management of the company, with Suhas Donti, who's the President and Chief Executive Officer of MV Group, about the company's 5 gigawatt order book. And here's what he had to say.
Usually about 5 gigawatt of order book translates to about 8 to 9,000 crores of revenue. And this is a 12 to 18 month period of order book that we have. Always our order books are backed by advance and definitive contracts. So any delivery usually happens in 12 to 18 months. And getting into the inflows, right? We have seen that MV in the first half of this financial year, we delivered 2,100 crores of revenue. And that is something that is equivalent to the entire year of performance in 2025. So irrespective of the deliveries that we are doing, as we've added capacity, the company has been able to get the inflows of orders, and in fact more than what we are delivering.
All right. So it's a valuation catch-up that is at play seemingly. But on the charts, Ajit, do you have enough information on MV Photovoltaic to give us an opinion? 8% uptick today, does that continue?
So Alex, very limited chart, but based on the available information, yes, we may see further rebounds towards 210, 215 in the near future. And the immediate support lies at around 192. So the risk to reward is 1:1.5 if the time horizon is less than a week. If you're okay with that, definitely you can consider.
All right. A few brokerage notes that you should watch out for, and the reactions are already in. Divi's is one that is running away. Citi has a note on this one. It's maintained a buy with a target price of 9,140. They say that 2026 is going to be an inflection year for the company. It's the top India pharma pick for them. And they say that it has a strong pipeline, catalysts over the next 12 months. Various CS products are maturing and may be commercialized in the near term. The generic segment is expected to witness a recovery in 2026 as well. And so therefore, several positives, including the fact that the revenue and the EBITDA are expected to rise by 3x and 4x respectively over the course of FY25 to FY30. Another stock that you should watch out for, possibly on the downside, though, LTI Mindtree. Citi has maintained a sell on the counter and has a target of 5,480. And a lot of people agree that it's going to be a weak Q3 for the IT pack as a whole. But they're saying that the opening downside 30-day catalyst watch is what they've put it on. Double-digit exit revenue growth for FY26 is difficult to achieve, and that's really the problem. It's going to be a weaker than expected Q3. EBIT margin improvement may not be easy, and valuations are closer to faster growth companies like Coforge, and that is a problem for LTI Mindtree. Finally, on Grow or Billion Brains Garage, MOSL has a buy note. It's initiated rather with a buy note, and the stock is cooled off from the high point of the day, now trading with cuts of about 1/3%, but the target is 185. It says it's the number one player in the brokerage space and multiple optionalities at play for the company. Capital markets are a structural shift towards a discount, or seeing rather a structural shift towards the discount brokers, and the broking business is gaining market share. New segments are also set to drive momentum. So Sudeep, we've spoken about three interesting companies. What would you have a positive view on? And I'm guessing it won't be LTI Mindtree.
No, definitely not. I have a definite positive view on Grow. I think they are in an excellent position to scale up significantly. I'm not talking about in terms of number of customers for broking, but multiple other adjacencies. There can be so many ways they can service the customers and increase revenue. Margin funding, they talked about in the IPO prospectus and post-IPO, margin funding business, they're starting in a big way. That is a revenue spinner for most other brokers, and I'm sure that will work wonderfully for them as well. They have the largest client base anyway. Apart from that, mutual fund distribution, insurance distribution, as well as maybe at some stage wealth management can create fantastic opportunities for them to utilize the existing customer database and existing customers and service them in a very, very profitable and effective manner, thereby scaling up the company's business in a significant way and improve margins as well as revenues.
Point. I do want to ask about Divi's Laboratories. Ajit, any view on the charts? The stock is up and about and reacting seemingly to that note that was positive for them. What's the view on the charts?
So Alex, in fact, we have given the recommendation on Divi's today, right? So 7150 is what we are eyeing as a target, with stop at 6440. So alongside with Divi's, in fact, the entire pharma space should be in your focus. Because after almost this 5-6 months of consolidation, we are seeing a decisive trend unfolding in pharma space. So alongside with Divi's, Sun Pharma, Lupin, Granules, all these stocks should be on your radar.
Thank you very much, Ajit and Sudeep, for joining in and giving your both fundamental and technical views on the stocks in the markets. But moving to the closing, lastly, Nifty has taken a beating of almost 70 points down. Of course, the drag coming in because of Reliance and HDFC Bank. But on the other hand, Nifty Bank, nothing major changes happening. Very flattish move, but with a positive bias coming in. Also, the advanced decline ratio, largely we see it's in the favor of the bears. Almost you could say 1:2 is the ratio. Let's pull up the stocks in the Nifty 50 to see where the action is there. And largely we see Apollo Hospitals, that's up almost 4% in trade. ICICI Bank, Tata Consumer, life insurance stocks also doing well in the trade. But what's not doing well in the trade, that's very much important. This includes HDFC Bank, second day of big pressure coming in after that update. Also ITC, the selling is there, which is increasing. And apart from that, Reliance and Trent, that's where the big fall is happening. Reliance down almost 4% and Trent almost 9% in the trade. Apart from this, also I'd like to point out the overall advanced decline ratio which is there. That's where we are focusing at. and largely this is the entire setup coming in. The mid cap and the small cap indices, let's see how they have closed. Yesterday, of course, they closed near the day's low level. Let's pull up the Nifty Mid Cap 100 index, and yes, it has corrected. It was trying to make a recovery, but of kind of a negative ending. Nifty Small Cap, let's pull up, and then we'll go to the BSE 500. So yes, so second straight day we are seeing the selling is coming more. BSE 500 index is also very much important. IEX showing 9% gains coming in, but some new names are also coming in. It includes CRISIL, Mass Financial Services, Rain Industries, which make it to the list in the top gainers. While amongst the losers, we are having V-Mart, some profit booking in CSB Bank, and also Cummins India and Privy Specialities make it to the list. So these are the important stocks which you should be there in your radar. But that's all for today for India Market Close. Stay tuned to NDTV Profit. Up next is Market Express by Himangshi.
Co-presented by National Stock Exchange.
AU करंट अकाउंट के साथ मिलता है फ्री UPI QR ओवरड्राफ्ट फैसिलिटी और एक ही ऐप से बैंक के सारे काम। AU
सोच बदलो और बैंक भी। शिव प्रसाद जी को बीमारी के कारण 15 बार हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने उनका लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
It's fresh, bro. Straight from the jungle.
I'll take the whole pumpkin. Make seamless UPI payments with Zen Life. Making life simpler with Zen Life by Bank of Maharashtra.
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने double check नहीं किया, तो your money goes straight into the scammer's pocket. SEBI is stepping in with 2 major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. Use कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
Alright team, our new order show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Punjab government foremost in public welfare. Investment of rupees 1.5 lakh crores in 3.5 years. Punjab has seen an investment of 1.5 lakh crore rupees in just 3.5 years of the government led by Bhagwant Singh Mann. This has generated employment for 4.5 lakh people in the state. Tata Steel is setting up a green steel plant in Ludhiana with an investment of 2,600 crore rupees. This plant will produce 7.5 lakh tons of low-carbon steel per annum from recycled scrap to meet the growing demand for sustainable steel. Man-made fiber, power, packaging, food processing, automobile, IT, semiconductor, hospital and services are the emerging sectors for investment in Punjab.
राइट टू बिजनेस हर एक कह दिंदा है, बट ईज ऑफ डूइंग बिजनेस ਉਹ ਤੋਂ ਵੀ ਜ਼ਿਆਦਾ ਵੱਡੀ ਗੱਲ ਹੈ। ਕੰਮ ਕਰਨ ਦੀ ਸੌਖਾਈ। ਸੋ ਸਾਡਾ ਮਕਸਦ ਇਹ ਹੈ ਕਿ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਹਰ ਖਿੱਤੇ ਦੇ ਵਿੱਚ ਅਸੀਂ ਪੰਜਾਬ ਨੂੰ ਨੰਬਰ 1 ਬਣਾਉਣਾ ਚਾਹੁੰਦੇ ਹਾਂ।
In order to give new wings to industrial development in Punjab, the government set up 24 sector-specific advisory committees with prominent industrialists as members in August 2025. The recommendations of these committees related to steel, heavy industry, textile, IT, semiconductor, hospitality, healthcare, packaging, etc. are being implemented on the fast-track Punjab portal with priority.
पहले के जमाने में तो ऐसा होता था कि इंडस्ट्री वालों को पता ही नहीं चलता था कि मेरे को क्या क्या करना चाहिए और वो बेचारे काफ़ी अरसे तक तो उसी में जूझते रहते थे। आज वो स्थिति नहीं है। आज इन्वेस्ट पंजाब के थ्रू एवरीथिंग इज डन वेरी कोहेसिवली इन अ वेल कोऑर्डिनेटेड मैनर, ताकि इंडस्ट्री को टाइम टू टाइम सारी अप्रूवल्स मिल जाती है।
Punjab government foremost in public welfare.
Hello, good afternoon and welcome to Market Express. I'm Makshi Bhogna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and also the global cues that could really shape tomorrow's session. Let's get straight to the top stories and see how the markets have fared today first. So markets were under pressure on the expiry day amid a volatile trade. Nifty has failed to defend its 26,200 level, which broader markets also underperformed, ending with mild cuts. And in terms of the sectoral trades today, pharma and PSU bank stocks have seen fresh buying, while on the losing side, oil and gas stocks have witnessed selling pressure, with oil and gas index ending with near 2% cut. And Reliance Industries is under heavy pressure on the street, plunging over 5% intraday in its worst fall since April 2025. So this sharp drop has erased nearly 1 lakh crores in the market capitalization, rattling investor sentiment, and the sell-off comes amid swirling concerns over the Russian oil purchases and also mixed brokerage actions, even as the company denies the recent crude deliveries to its Jamnagar refinery. With valuations still commanding a premium and volatility rising, Reliance's slide marks one of the most dramatic moves in recent months. Next up, we have Trent that is taking a beating on the street after a dismal third quarter. So the stock has now logged 6 straight quarters of sub 50% revenue growth, with sales per square foot shrinking and also competition heating up. So valuations remain far from cheap, even as the stock is down 41% in 2025 and 44% since joining the Nifty 50. So technically, it's deep in oversold territory. And, it's below 30 and also trading below Citi's lowest target of 4,350 rupees. So with growth slowing and pressure mounting, Trent's premium story is clearly losing momentum here. Now let's look at some brokerage notes. So brokerages are divided on Trent after its weak Q3 show. UBS is maintaining a buy with a target of 6,200 rupees, but warns that there's no respite from the weaker growth trajectory. And on the other hand, Citi is saying that it stays bearish with a sell call and also a target of 4,350 rupees, flagging rising competition in the tier 2 and tier 3 cities. So what's the verdict here? Street remains split as Trent battles slowing growth and also mounting pressure. And viewers, Indian Energy Exchange has surged after a key development in the market coupling case. The Apple bench has ruled that it has no power to make regulations, paving the way for the CERC to act independently on the matter. And this clarity is seen as a positive for IEX, which has been under pressure amid regulatory uncertainty. Now, with the ball now firmly in CERC's court, investors are betting on a more favorable outcome for the exchanges. And it's a third straight day of losses for Swiggy as the gig worker strike takes a toll. Shares have slipped below their QIP price of 375 rupees, raising concerns among investors. An analyst estimate the strike could really dent the EBITDA by 1.4 crores to 2.8 crores, adding pressure to margins at a critical time. So with operations disrupted and sentiment turning cautious, Swiggy is facing a tough road ahead as it works to resolve the standoff and also restore stability. And MV Group is sounding upbeat on its growth trajectory. The company says that the order inflows have been consistent, with a 5 gigawatt order book translating to 8,000 to 9,000 crores in revenue. So the normal execution timeline for these projects is 12 to 18 months, giving strong visibility ahead. And MV also highlights a drastic change in solar module prices, and to stay competitive, it's moving deeper into the backward integration and expanding into the ingots and also the wafers. With a robust pipeline and also strategic integration, MV is positioning itself for the next phase of India's solar revolution. And InCred has turned cautious on Larsen & Toubro, initiating a hold rating with a target of 4,187 rupees. So the brokerage believes near-term order flow has likely peaked, with core domestic orders down 19% year-on-year. Global order inflows are also expected to dip in H2 of FY26 and FY27, adding to concerns. So InCred further flags a risk of sales growth modernization in Saudi Arabia, and this is signaling potential headwinds for L&T's growth momentum. Let's look at some brokerage notes again. Motilal Oswal has initiated coverage on Grow with a buy rating and a target price of 185 rupees. The brokerage calls Grow the #1 brokerage player, highlighting multiple growth levers at play. A structural shift towards discount brokers is driving the momentum here, with Grow's broking business steadily gaining market share. So new segments are expected to accelerate growth, while its existing customer base provides a strong foundation for the wealth management and entry. So Motilal Oswal is seeing that these factors creating a powerful runway for long-term value creation. And Citi is betting big on Divi's Lab, maintaining buy rating with a target of 9,140 rupees. The brokerage calls 2026 an inflection year, naming Divi's its top India pharma pick. So key drivers include a strong pipeline with multiple CS products maturing and also nearing commercialization, alongside a recovery in the generic segment. Citi also believes that the medium to long-term story remains intact, and this is supported by catalysts expected to play out over the next 12 months. Citi has reiterated its sell rating on LTI Mindtree with a target price of 5,480 rupees, citing an unfavorable risk-reward profile. So the brokerage has flagged a 30-day downside catalyst watch, expecting near-term pressures to weigh on the stock. Citi believes achieving double-digit exit revenue growth in FY26 will be challenging amid a slowing demand environment, and it also sees limited scope for meaningful margin improvement. Valuations, according to Citi, remains it's stretched compared to large cap peers and also closer to faster growing mid caps. And next up, we have Kotak Mahindra Bank that has delivered a robust Q3 business update, signaling strength in its core operations. The lender expects CASA growth to ease funding costs, while NIMs are set to improve from this quarter onwards. So on the numbers front, if we talk about, net advances have surged 16.2% year-on-year to 4.66 lakh crores, while the CASA deposits have climbed 9% to 2.1 lakh crore rupees. So total deposit also has grown 14.7%, which is nearly 15%, to 5.26 lakh crores, underscoring healthy traction and strong balance sheet momentum for the Kotak Bank. And Axis Bank has also reported an improved business performance in the December quarter, with advances and deposit growing faster compared to the previous quarter. Total deposits have risen 15% year-on-year, while gross advances have increased over 14%. So the bank also expects net interest margins to bottom out during the quarter, indicating potential stability ahead. The update suggests steady balance sheet growth despite margin pressures seen earlier. So overall, Q3 trends points to improving operating momentum. Next up, we have Devyani International and Sapphire Foods, and they are joining forces to create India's largest food and beverage company, with the merged entity expected to clock a turnover of nearly 1,000 crores, crossing the $1 billion mark. So management is saying that this merger will unlock the capital deployment efficiencies and also strengthen the growth capabilities, setting the stage for a dominant presence in India's QSR space. Next up, we have L&T Finance that has reported a strong business update for the December quarter, led by sharp growth in disbursements and also the loan book. Total disbursements have risen nearly 50% year-on-year, reflecting robust demand across retail segments. So this overall loan book also expanded over 20% compared to last year. Retail assets under management continue to outpace the broader growth, in reinforcing company's retail-focused strategy. So this update points to sustained momentum in lending activity through this quarter. Let's shift focus to IndusInd Bank that has reported a weak business update for the December quarter, with both advances and deposit declining on a year-on-year basis. Net advances have fallen over 13%, while the deposit growth has also remained under pressure. Brokerage Citi has maintained a sell rating on the stock, citing muted loan growth, and also asset quality concerns. So while deposit outflows were relatively contained on a sequential basis, elevated slippages and also higher provisioning are expected to weigh on the profitability here. So core margins are seen remaining largely flat in the near term. Viewers, Supreme Court has ruled in favor of Adani Power, holding that no customs duty can be levied on electricity electricity sold from a special economic zone to the domestic tariff area. So the court has set aside a 2019 Gujarat High Court order and also declared that the duty levy illegal and unconstitutional. So as part of the ruling, customs authorities have been directed to refund about 500 crores to the Adani Power, and this refund must be processed within 8 weeks. So this verdict brings clarity on the tax treatment of power sales from the SEZs. And let's begin with a big regulatory relief from the Reserve Bank. The RBI has eased its norms on lending to related parties, allowing existing non-compliant exposures to continue till contractual maturity. So the key caveat is that there can be no enhancement, renewal, repricing or change in terms. The central bank has also excluded the equity investments in the related parties from the scope of these rules, though debt instruments will still be covered. So in other relief, select NBFCs, including those that don't access the public funds, and also the core investment companies have been exempted altogether. So this move brings clarity and also avoids sudden balance sheet stress while still tightening governance for the future transactions. And from regulatory easing at the central bank to a major shift in how Delhi manages its finances, the Delhi government has signed a landmark MOU with the Reserve Bank of India, allowing the RBI to act as its banker, debt manager and financial agent. So this will enable Delhi to raise funds through state development loans, invest surplus cash automatically, and also access low-cost liquidity facilities, all within the framework of the RBI Act. Now, Chief Minister Rekha Gupta has called it a long overdue reform, saying that Delhi was earlier denied the benefits of structured RBI banking. The move is aimed at improving the fiscal discipline, transparency, and also professional cash management for the national capital. And staying with the government policy support, there's a relief now for India's deep tech startup ecosystem. Central government has removed the mandatory 3-year existence requirement for the deep tech startups to gain recognition under the Department of Scientific and Industrial Research's Industrial R&D Promotion Program. So this change, announced on the DSIR Foundation Day, allows early stage innovators to access support without waiting years. So Union Minister Jitendra Singh has said that the move aims to accelerate India's deep tech ecosystem and also provide early momentum to startups. Now, the exemption is expected to help the founders secure incentives and also scale faster. It also aligns with the broader efforts to boost the research, innovation and technology commercialization in India. And from policy relief to a key legal development in one of India's biggest banking fraud cases, the Supreme Court has granted bail to former Amtech Group Chairman Arvind Dham in a money laundering case linked to an alleged 27,000 crore bank fraud case. So the top court has set aside a Delhi High Court order that had earlier denied him bail, citing the gravity of the offence. The case stems from a 2022 CBI probe following complaints by the IDBI Bank and also Bank of Maharashtra alleging fraudulent loan defaults by the Amtech Group companies. So this ruling marks a significant turn in a case that has long been, under judicial scrutiny. And from food safety to public safety connectivity, gaps are now in focus on India's highways. So the National Highways Authority of India has reached out to the Department of Telecommunications and TRAI, seeking urgent intervention to improve the mobile connectivity across the national highways. So NHAI says that it has identified 424 critical locations spanning nearly 1,750 kilometers where mobile networks are either weak or unavailable. So these gaps are especially prominent on the greenfield and remote highway stretches, impacting emergency response and also digital services. The authority has flagged public safety concerns and also called for a coordinated effort to fix this issue quickly. And bank employees and officers in Chandigarh have took part in a protest demanding the immediate implementation of a 5-day work week for India's banking sector. The demonstration was organized by the United Forum of Bank Unions, which represents multiple bank unions across the country. Unions say that the demand was agreed with the Indian Banks Association during wage talks, but has not been implemented. And they argue that most of these institutions already work 5 days and there would be no loss of productivity if Saturdays were made holidays. And this agitation is, part of nationwide actions, and it also includes a planned strike on January 27 if the demand isn't met. And Uttarakhand High Court has ruled that in check bounce complaints, courts can now serve summons via WhatsApp and email in addition to the traditional methods like the postal delivery. Now, under the new Uttarakhand Electronic Process Rules 2025, complainants must provide digital contact details when filing cases. So the step is aimed at speeding up the proceedings in a system burdened by large numbers of pending check bounce matters, and the court also allowed online payment options to settle the dues quickly when summons are issued. So judges said that misuse of digital details could really attract penalties to ensure the authenticity. Now, this marks a shift towards digitization in judicial procedures as well. And India has rolled out a new e-production investment business visa aimed at Chinese nationals looking to engage in specific business activities here. So called the EB4 visa, it can be applied for entirely online without visiting the embassy or any agents. Now, according to an advisory on the Indian Embassy's website in Beijing, the visa will be issued in about 45 to 50 days, allowing a stay of up to 6 months. So the visa covers a wide range of activities from installation and commissioning of the equipment, quality checks, and also essential maintenance to production. It also, and the ERP ramp-ups as well, training and even supply chain development. Indian companies, inviting the Chinese professionals can apply through the DPIIT's national single window system, while the applicants can submit visa requests on the Indian Visa online portal. Now let's look at Delhi's air quality. That has remained in the poor category as shallow fog and cold condition persisted in the morning hours, affecting visibility and also the outdoor conditions. And according to the data, the city's air quality index continued to linger in the unhealthy levels, raising concerns for residents with respiratory issues. The meteorological department has also noted fog in early hours, which can trap pollutants near the ground and also slow dispersion. So while winds and sunlight may improve the readings later in the day, pollution levels are still above the safe thresholds. And authorities and health experts are advising limiting, prolonged exposure outdoors, especially for vulnerable groups. Now on to some somber news. Senior Congress leader and former Indian Olympic Association President Suresh Kalmadi has passed away in Pune after undergoing treatment. A former Indian Air Force pilot, Kalmadi went on to become one of India's most influential sports administrators for over 2 decades. He played a key role in bringing major international sporting events to India, including the Commonwealth Games. However, his legacy was also marked by controversy following corruption allegations linked to the 2010 Games. His last rites will be held today. And authorities have imposed a curfew in Birgunj, Nepal, and also sealed the India-Nepal border after unrest has erupted over a mosque vandalism incident. Now, the tension began in Sakhuwa Manar village of Dhanusha district in Nepal, where reports of vandalism and burning of holy scriptures sparked protest. Hindu groups later alleged derogatory remarks against their deities during demonstrations, further aggravating the situation. So many Indian migrant workers are returning home as shops and markets remain shut. Security forces have also stepped up patrolling at the Maitri Bridge and also other border points to prevent any sort of untoward incident. Now on to some more global news. Venezuela crisis redraws global fault lines. The Venezuela crisis has taken a dramatic turn after former President Nicolas Maduro and his wife have pleaded not guilty during their first U.S. court appearance following their capture. So back home, Vice President and Oil Minister Delcy Rodriguez has been sworn in as the interim president, facing the dual challenge of asserting control domestically while negotiating with the US President Trump, even as American warships remain deployed in the Caribbean. Now, Trump has warned Rodriguez of severe consequences if she refuses to cooperate, remarks that, contrast sharply with earlier signals suggesting partnership. And Rodriguez has since called Maduro's capture a barbarity. The US action has triggered global pushback. China has condemned the operation, while European allies, including Germany and the UK, are demanding clarity on its legal basis. In Washington, lawmakers remain sharply divided, underscoring the high stakes of America's bold move in Venezuela. An H-1B elimination bill introduced in Congress, a bill seeking to completely eliminate the H-1B visa program, has now been formally introduced in the US Congress. The proposal goes far beyond tightening rules and also aims to scrap the program altogether by amending the Immigration and also Nationality Act. And at this stage, the bill has only been referred to House committees, including Judiciary and Ways and Means, with no hearings or votes scheduled yet, placing it at a very early stage of the lawmaking process. So still, its introduction signals that immigration remains a flashpoint issue, especially for the skilled foreign workers. With that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could really set the tone for the next trading session. Thanks for watching. Stay tuned to NDTV Profit for more market updates.
Agarwal Packers and Movers Limited. Man with the cap. 9 300
छुट्टी पे तो चिलकर
मेरा बैंक मुझे चिल करने देता है। इंटरेस्ट पता कितना देता है? 200 और वो भी यार 3 महीने बाद।
नॉट बैंकिंग विद एयू
AU सेविंग्स अकाउंट में मिलते हैं अमेजिंग बेनिफिट्स, पेपरलेस बैंकिंग एंड हायर इंटरेस्ट, वो भी हर महीने,
एवरी मंथ। सोच बदलो और बैंक भी।
नफीस जी 45 साल की उम्र में हार्ट अटैक से अचानक चले गए। टर्म लाइफ इंश्योरेंस के पैसों से उनके बच्चों की पढ़ाई में सहारा मिलेगा। पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया। पॉलिसी बाजार पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू।
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है। किसान से NRIs तक, Gen A से Gen Z तक, SBI सबके लिए है।
वेरी गुड।
SBI, the banker to every Indian. Truly.
Punjab government foremost in public welfare. Crackdown on drug abuse. In order to stamp down on the decades-old problem of drug abuse among the youth in Punjab, the Punjab government launched the Yudh Nasheyan Viruddh campaign in February 2025. The campaign works on 3 fronts: crackdown on drug smuggling with the help of people and panchayats, stringent action against drug dealers and de-addiction and rehabilitation of drug addicts. Around 24,000 FIRs have been registered, 36,000 accused have been arrested and 1,500 kilogram heroin has been confiscated so far.
छोटा ਵੱਡਾ ਕੋਈ ਵੀ ਕੁਝ ਕਰਦਾ ਹੈ, ਜਿੱਥੇ ਤੁਹਾਨੂੰ ਜਾਣਕਾਰੀ ਮਿਲਦੀ ਹੈ ਵੀ ਇੱਥੇ ਆ ਕੰਮ ਹੋ ਜਾਂਦਾ ਹੈ, WhatsApp ਦਾ ਨੰਬਰ ਹੈ, ਇੱਕ ਵਾਰੀ ਸਾਨੂੰ ਦਾ ਮਿਸ ਕਾਲ ਮਾਰ ਦਿਓ, ਤੁਹਾਡੀ ਜਾਣਕਾਰੀ ਬਿਲਕੁਲ ਗੁਪਤ। ਉਸ ਤੋਂ ਬਾਅਦ ਉਹ ਬੰਦਾ ਘੰਟੇ 2 ਘੰਟਿਆਂ ਬਾਅਦ ਤੁਹਾਨੂੰ ਕਿਸੇ ਨਾ ਕਿਸੇ ਥਾਣੇ 'ਚ ਦਿਸੂਗਾ।
More than 4,500 villages in Punjab have declared themselves drugs-free. As part of the crackdown, the government has demolished 104 illegal properties of drug smugglers, besides freezing 144 properties worth 75 crore rupees belonging to corrupt officers and drug smugglers. In order to disrupt the supply chain of smugglers using drones to ferry drugs from across the border, the government decided in August 2025 to launch 9 anti-drone systems worth 51 crore rupees. The capacity of de-addiction centers has been expanded to include skill development, employment and rehabilitation of drug addicts.
जो एडिक्टेड हैं लोग उनको नशे से दूर करने के लिए जैसे सरकार ने ओट सेंटर खोले हुए हैं, बड़े अच्छे उपराले कर रही है सरकार जो कि पंजाब को ड्रग फ्री कर दे.
Punjab government foremost in public welfare.
Market extends decline on expiry day. Nifty ends above 26,100 while Sensex loses over 350 points. Trent and Reliance become the top Nifty 50 losers. Sectoral indices finish mixed. Broader market indices outperform the benchmarks. Trent ends more than 9% lower after reporting weak growth in the third quarter on the back of aggressive store expansion and reduction in revenue per square feet sales. Supreme Court grants bail to Amtech Group Chairman Arvind Dham in a money laundering case arising from an alleged 27,000 crore rupee bank fraud, sets aside Delhi High Court's order from August 2025. IEX rises around 9% at close after the Electricity Tribunal resumed hearing in the market coupling case. APTEL observes that it was told the market coupling order was done only for some officers to make money. CERC's lawyer says it's ready to take instructions from APTEL. NVIDIA unveils a new AI logic tool for self-driving cars. This technology gives autonomous vehicles something closer to human-style reasoning, announces that it has begun producing a driverless version of the Mercedes-Benz CLA powered by its technology. Congresswoman Marjorie Greene introduces the bill to amend the Immigration and Nationality Act, aims to completely eliminate the H-1B visa program, allowing exemption for medical professionals such as doctors and nurses with a 10,000 per year cap on visas. Deposed Venezuelan President Nicolas Maduro and his wife plead not guilty in their first U.S. court appearance after capture. Opposition leader Maria Corina Machado dedicates the Nobel Peace Prize to President Trump, says Venezuelans want to share it with him. Unrest in Nepal after a mosque was vandalized in the country after the communal tension flared up in Birgunj, India-Nepal border has been sealed. Hello and welcome. A very good evening, viewers. This is Malika Mishra on NDTV Profit, and you're watching Profit 360, a show that gives you all the latest updates on markets as well as national and international news. Let's begin with checking how the Indian markets fared today. Well, the stock markets ended lower, whereas the Nifty closed below the 26,200 mark, underperforming broader indices. Reliance Industries was the biggest drag on the Nifty, falling over 5% intraday. It was also its worst single-day drop since April 2025, losing more than 1 lakh crore in market cap in a single day. Trent was also the top loser, plunging over 8% in a single day. And sectorally, indices were mixed, with Nifty oil and gas dropping over 1.5%. But for a detailed analysis, let's turn to my colleague Varsha.
Well, yes, benchmark underperformed broader market indices. Nifty closes below 26,200 mark. Reliance Industries remains the top dragger, while Trent and Reliance, if you see, are top losers when it comes to Nifty. Trent falls over 8% in a day. Reliance falls over 5% intraday. Worst intraday falls since April 2025. Reliance loses over 1 lakh crore market cap in a day. Nifty mid-cap 150, if you see, falls for the second consecutive day. Cummins India and SJVN fall the most when it comes to Nifty mid-cap 150. IEX jump over 10% in last hour of trade. Next hearing date over market coupling cases on Jan 9th. All sectoral indices closed on a mixed note. Nifty oil and gas falls over 1.5% for the day. MGL and Reliance Industries falls over 4%.
Thanks for that, Varsha. And viewers, Kenneth Andrade, founder and CIO at Old Bridge Mutual Fund, describes the mood of the markets quite precisely. He says, we are heading into a phase where valuations are likely to undergo a time correction. He calls out patience as the game of the moment. Basis his reading, he predicts single-digit returns for at least the first half of 2026. Listen in.
Trade wars are uncertain, or the trade cycle is uncertain. So we're dealing with uncertainty out there. There's no predictability, and you had high valuations. So those valuations are having a time correction. That's all that there is to it all. Maybe 7 months of incremental amount of sideways movements. It's going to be a little difficult trying to pick a trend out right now. But I think patience is largely the game out here. Single-digit return still on the table. But I don't think you're going to get anything dramatic out there.
Let's focus on Trent. Trent had a rough ride in 2025, viewers, emerging as the worst performer on the Nifty 50 with a 41% drop and 44% slide since its inclusion in the index. Growth has been sluggish for 6 straight quarters and guidance remains muted. Add to this the fact that valuations also remain steep despite the correction. However, despite these red flags, analysts still see a potential upside. Therefore, is Trent a turnaround story, or is there more pain waiting ahead for this particular stock? Let's get in my colleague Mahima for a deep analysis of the Trent story.
Start with Dabur, which has also come out with its business update. They're expecting consolidated revenue in that mid-single digit. And this time, what they've said is the profit is going to grow ahead of revenue. Last time they said that profit was in line with revenue, but this time profit is expected to be, the growth in profit is expected to be better than revenue. In terms of segmental performance, home and personal care to grow in double digits. They're expecting majority of the portfolio to register market share gains. Healthcare business is expected to report a low single digit growth. F&B and culinary business is expected to post a double digit growth. Beverages, however, is expected to see a muted set of performance because of course, monsoons getting extended, winters getting extended. E-commerce, including quick commerce, is expected to again grow in double digits, and international business in INR terms is also expected to grow in double digits. In terms of commentary, I think the important one coming in is early signs of demand recovery was witnessed this quarter, and rural demand still continues to outperform.
Reliance Industries has issued clarification over a media report claiming that 3 vessels laden with Russian oil are heading for Reliance Industries' Jamnagar refinery was incorrect. The company said its Jamnagar refinery has not received any Russian crude oil cargo in the past 3 weeks and is not expecting any deliveries in January. Somit is here with more details on this.
Well, the only reason why Reliance Industries has been trading in red is because, as per a Bloomberg report, they have again started procuring Russian crude for their refineries. Now, back in November, the company had clearly mentioned that they will stop using Russian crude in their refineries for export purpose from December 1st. They had clearly mentioned that all products that will come out from the SEZ refinery will be obtained from non-Russian crude oil. And the latest Bloomberg report, which is actually sourcing data taken from data analytics firm Kepler, says that around 2.2 million barrels of crude is headed towards Reliance Industries refinery in Jamnagar. Now, what Kepler does is Kepler tracks a movement of vessels based on live signals sent by captains detailing their current location and upcoming discharge ports. But it also mentions clearly that destinations can change as the ship approaches India. So at that point of time, there could have been a report gone ahead from Kepler's side that this Russian crude must be going into Reliance Industries refinery. But as the data analytics website clearly says that the destination can change even going forward. So that might have happened is what currently the street is saying, and that could be the reason why Reliance Industries have also come out with this clarification, and they're clearly saying that none of the Russian crude is said to be delivered or will be delivered to the Jamnagar refinery. But at this moment, the stock is clearly down because it seems like the company has gone back on their earlier commitment of not using Russian crude, and this is completely based on a Bloomberg report which is sourcing Kepler data as well.
Thanks so much for explaining that to us, Samit. Let's deep dive into India's 5-seater SUV market, where the competition is heating up fast with new launches.
Puneet shares the details of the fierce battle in the 5-seater SUV market and the showdown ahead in 2026. Puneet.
There are three key questions that we are looking to answer with this. Why this particular thing matters, which brands dominate this space, and what is our analysis of what you should look at going forward as an investor and also probably as a consumer as well. So there are two key updates that led us to go deep into the 5-seater space. One's of course that the Victoris has got 70,000 bookings. This comes after the Sierra got a similar number in the month of December. So there's a healthy competition now with these two brands entering the fray yet again with more models. The other key aspect that unlisted player Kia, of course, has introduced the Seltos as well. Now that has also gotten a huge upbeat as well, and it's undercutting the Sierra in terms of pricing while offering more premium features. So the competition is really heating up, and all impact will also be seen on the listed players. Now, why essentially does this space matter? Because it is that all major companies now have at least one successful model in this space based on the sales numbers, and that's largely between 4 to 4.4 meters. And it's important because a lot of India still buys cars below 4 meters, and they are upgrading right now. This is almost 7.7 lakh units or cars which were sold in FY25, represents 18% of the overall sales that was sold in the country. So almost 43 lakh cars were sold. 7.7 lakh were almost of the 5-seater SUV space, and this is set to grow in 2026. When you also look at which brands largely dominated this particular space, you have the Creta, which is an undisputed leader with one model effectively selling almost 1.9 lakh cars in the last year, while you have the Seltos and the Elevate also doing very well. Amongst others, you have the Citroens, the Skodas, all doing very well in this particular space as well, and that's largely been the competition with heating up. Mahindra has a differentiated strategy with their Thar largely in this particular space. They've not diverged in any other model apart from the Thar, but it's a key one that they continue to do. And finally, for Maruti as well, they're the only player which has 3 to 4 models in this particular space. So the Vitara, the XL6 and the Ertiga have been doing well, but the Victoris is the final nail in the coffin, which is expected to do well for the company apart from the booking numbers as well. Finally, for Maruti Suzuki, very quickly, 70,000 bookings. The company confirmed that in the month of December, with rival Sierra also having a similar number. While for Kia specifically, if you can pull that graphic up, it will show you that perspective of how it's undercutting the other players. So of course, for Creta, 1.94 lakh vehicles were sold for just one model in this space in FY25. Let's quickly move on and show you for Kia as well why it's important to track the unlisted space. Now, you look at the base model for Kia, which is launched after the Sierra at 10.99 lakhs. For Sierra though, it's coming at 11.49 lakhs. So it is undercutting on the base as well as on the top end model, and this will have some impact on the Sierra going forward. Finally, our analysts, our own views. Why does this matter going forward? Hyundai as a stock price actually has not been doing well over the past few months, largely on the back of slow growth in the domestic space. So the Creta becomes very important to succeed. Although the growth has been strong, it will have to lead the way for the company. And on Tata Motors, they will have to cement their leadership in this space because the Curve failed to do so. They're trying to do that with the Sierra now. And that's our research and our analysis putting in forward of a space that will continue to dominate the automobile sector going forward.
Thank you so much for explaining the battle in the SUV space. But carrying on with our coverage on the auto sector, FADA, the Federation of Automobile Dealers Association, has released data for auto sector for the year 2025. FADA President C.S. Vigneshwar said that India's auto retail delivered a confident close, with retails registering a 7.71% annual growth. January to August remained subdued despite supportive macro cues such as direct tax relief in the union budget and RBI's cumulative rate easing through 2025. The turning point came from September onwards, when the GST 2.0 rate rationalization, including meaningful reductions for mass segments like small cars, two-wheelers and three-wheelers. It improved affordability and lifted sentiment, loading to a clear upshift through September to December quarter. December 2025 proved to be a strong finish to the calendar year for auto retail. The auto industry saw a healthy 14.63% YOY growth. And also, NVIDIA has unveiled Alpha Mayo, a new suite of open source AI models for autonomous vehicles. NVIDIA says Alpha Mayo powered autonomous and driver assistance features will debut with Mercedes-Benz, which will be launched in the US in the Q1 of 2026, Europe in Q2 2026, and later the same year in Asia as well. Unlike traditional self-driving systems that focus on object detection and route planning, Alpha Mayo moves beyond just seeing the road to actually reasoning about it. Alpha Mayo will train robots and vehicles and design to enhance autonomous systems. Alpha Mayo focuses on helping self-driving vehicles navigate and reason through complex driving scenarios. With 10 billion parameters, it processes video inputs to create driving paths while showing the reasoning behind each decision. NVIDIA CEO shares the details. Listen in.
The world's first thinking, reasoning, autonomous vehicle AI. Alpha Mayo is trained end to end, literally from camera in to actuation out. The camera in, lots and lots of miles that are driven by itself, where we human drive it, driven using human demonstration. And we have lots and lots of miles that are generated by Cosmos. In addition to that, hundreds of thousands of examples are labeled very, very carefully so that we could teach the car how to drive.
And moving on from automobiles and the auto sector to the markets, 2025 was a blockbuster year for the Indian primary market, with 1.76 lakh crore rupees raised via IPO by 103 main board companies. But 2026 is not far behind as well, because 2026 also promises to be an action-packed year, as over 200 companies are eyeing to raise $30 billion. With big names like Flipkart, PhonePe and Reliance Jio set to hit the Lal Street. My colleague Sharad now joins us to tell us what to expect this year as far as the IPO market is concerned. Sharad.
2025 was big. It seems like 2026 will be much bigger. Looking at the numbers, of course, first let's look back. The IPO mobilization, the numbers was at 1.76 lakh crore rupee. That's an all-time high levels I'm talking about. Also, approximately 103 odd companies has raised this amount, and this is largely from the main board IPOs. The fund raised at 10% more than the preceding year as well. But overall, if you take the definition of fund mobilization, it also includes QIP rights. Over there, we see that public equity fundraising has declined by 18% on a year-on-year basis. This equity fundraising declined on a lower basis. This is because of mobilization through FPOs and OFS. Let's look at the digital numbers, how it's actually panning out, and we have taken the numbers on a calendar year basis to see where the momentum is happening. Overall, the total equity raise, this also includes IPO and other secondary deals, that was at 3.73 lakh crore, and that's coming in at almost 3.06 lakh crore rupees. So that's where the secondary market, we saw some kind of fundraising emotions were dented. A fresh capital, almost 57% of the total equity mobilization was there, compared to 65% coming in. Also, the largest IPOs in 2025, let's take a look back. Tata Capital, 15,512 crore rupees was raised, followed by HDB Financial, and from the MNC place we had LG Electronics. Also, the retail investors' interest, that's also very much important. The interest levels dampened compared to the previous year itself. Average number of applications was roughly 15 lakh in 2025, and 2024 it was on a higher side. It was more than 18 lakh. That's where the retail interest was coming in. Apart from that, the applications, LG Electronics, Misho and Standard Glass Lining come into this picture. But overall, the outlook 2026 remains really strong.
Thanks so much for explaining how the IPO market is poised to bring a lot of action in 2026. But let's now bring you some expert opinion. And here's what Prime Database's Pranav Haldia and Deven Choksi of DR Choksi Investment expect from the IPO market in 2026. Take a listen.
there is, of course, a lot of demand for fresh paper. We have to realize that mutual funds are flush with money. They're continuing to get crores of rupees on a month-on-month basis. There's only a limit to which they can invest in the secondary market where there are already valuation concerns. So, of course, there is a requirement for fresh paper to be invested in. But I think for this trend to continue, and of course, while the pipeline looks extremely strong for 2026, I think valuations, of course, need to be kept in check, and the secondary market needs to support. Given that, we could perhaps look at another blockbuster year in 2026.
Reality check would prevail upon in this year, wherein some of the large companies like Jio Platform, NSC, Flipkart, Oyo, those kind of names, I think, which are likely to hit the market in 1 or 2 quarters from now. Given that kind of a situation, I think they would possibly be, I think, pricing their IPOs, I think, at a realistic level. As against, I think, they priced, earlier companies priced, I think, in 2025 at a significantly higher premium. So that's going to be one change in 2026 that I'm expecting.
And moving on from that, IEX shares gained after the Electricity Tribunal resumed hearing in the market coupling case. The ACTL made strong favourable comments against CERC's market coupling order, which was contested by IEX, and that gave a positive push to the stock. Let's go across to my colleague Danish Anand on what transpired in the court today. Danish, what can you add to this?
Today was another day of the hearing of the matter between IEX and CERC. If you look at the overall matter first, the IEX is basically challenging the CERC's market coupling order, and it has clearly stated that they were the oldest power exchange in the country, and after a few years, we saw 2 more power exchanges coming up. And they feel that the order by CERC is just to take IEX off the market leadership, and they want the other power exchanges to also gain certain market share. So this was all that was being challenged in the court. But there were certain interesting arguments that were made by the IEX lawyer. He said that this particular order passed by the CERC was based on a Grid India report, and that report was also made public. And they said that whatever was mentioned about the report, it was clearly stated that that report by Grid India was based on 29 months historical data, whereas when the final order came out, IEX alleged that the data was of only 4 months. So even the other data of the other months is missing. So technically, they cannot pass an order without giving the proper historical data. But later on, during the argument, the CERC lawyers alleged that if IEX basically wants everything to be fair, they can go back to CERC and they can check that whether something can happen on the order or not, whether certain modifications can happen or not. So for that, they sought certain time from the court. And now the hearing is set to continue on Friday. And the bench has also indicated that just in case if CERC decides that they will be likely changing the market coupling order, or they will be tweaking it a bit, then there is a high possibility that on Friday itself, this matter can get through. But we'll have to wait till Friday, and we'll have to see that what the arguments will lead to.
Right, Danish. So it's for more updates, we'll have to wait until Friday, of course. But thank you so much for helping us understand what transpired in the court today. Thank you. And in a major relief, viewers, the Supreme Court has granted bail to Arvind Dham. He is the former chairperson of the Amtech Group who was charged in a money laundering case linked to alleged 27,000 crore bank fraud. Now, the case began with a 2022 CBI investigation after complaints from IDBI Bank and Bank of Maharashtra. They accused Amtech companies of cheating and criminal breach of trust through fake loans, fraudulent loans. The Enforcement Directorate later stepped in, arrested Dham in July 2024 and called him the main beneficiary of the fraud. But for details on the bail given to Arvind Dham now, let's go across to my colleague Nupur Dogra.
Well, now in a major relief to the Amtech Group chairman Arvind Dham, the Supreme Court has granted him bail in a money laundering case in connection to the alleged 27,000 crore bank fraud case against his group of companies. Now, a bench of Justices Sanjay Kumar and Alok Aradi from the Supreme Court has in fact set aside the Delhi High Court verdict of August 2025, which had denied bail to Dham. Now, this particular PMLA proceedings, the money laundering proceedings, stems from some complaints, CBI complaints by IDBI Bank and Bank of Maharashtra, alleging that the Amtech group of companies in fact defaulted on huge sums of a huge amount of loans fraudulently, and Delhi High Court had made very strong observations noting that this is a grave economic offence and caused substantial losses to the public sector. Now, however, the Supreme Court today has granted bail to Arvind Dham. Arvind Dham had moved the court saying that he is a senior citizen and is not keeping well, and on those grounds he had in fact sought bail from the top court. A detailed order from the Supreme Court is still awaited to know that what were the exact reasons and what are the conditions imposed by the top court on him while granting bail.
And on that note, viewers, we've reached the end of this edition of Profit 360, but I do urge you to continue watching the channel for all the news and updates. This is Malika Mishra. Thanks for watching.
सत्तर 75 वर्ष के मुँह ये कोई कागज नहीं थे अब जो है अपन साइट हुई अपन ले अपन धरो
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी अब उस भूमि के नाम पर वह कर्ज ले सकती है व्यवसाय कर सकती है
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues. Punjab government foremost in public welfare. Aam Aadmi clinics transform healthcare. The Aam Aadmi clinics set up in August 2022 have transformed the primary healthcare system in Punjab. A total of 881 Aam Aadmi clinics, 565 in rural areas and 316 in cities are offering free of cost medical consultation. 107 essential medicines and 47 diagnostic tests to the people in Punjab. Facilities include anti-rabies injections and free consultation, tests and treatment for expecting mothers. Each Aam Aadmi clinic provides free of cost medical care to 80 to 85 patients daily.
मैं ਪੰਜਾਬ ਸਰਕਾਰ ਔਰ ਮੁੱਖ ਮੰਤਰੀ ਸਾਹਿਬ ਭਗਵੰਤ ਸਿੰਘ ਜੀ ਮਾਨ ਦਾ ਬਹੁਤ ਹੀ ਧੰਨਵਾਦ ਕਰਦਾ ਹਾਂ ਕਿ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਦਵਾਈਆਂ ਫ੍ਰੀ 'ਚ ਹੀ ਰੇਬੀਸ ਦੇ ਇੰਜੈਕਸ਼ਨ ਡੇਂਗੂ ਮਲੇਰੀਆ ਸਾਰਿਆਂ ਦੇ ਇੰਜੈਕਸ਼ਨ ਸਾਨੂੰ ਉਰੇ ਫ੍ਰੀ 'ਚ ਹੀ ਲੱਗ ਜਾਂਦੇ ਆ ਇੱਥੇ ਸਾਨੂੰ ਫ੍ਰੀ 'ਚ ਹੀ ਸਾਰੇ ਟੈਸਟ ਵੀ ਹੋ ਜਾਂਦੇ ਆ
The scheme has benefited around 4 crore 25 lakh people so far. Chief Minister Bhagwant Singh Mann has decided to add 236 new clinics to take the total number of clinics to 1,117. Some of the clinics will be equipped with AI-enabled instruments and mobile medical care. WhatsApp chatbots are being used to set up follow-up reminders and send test results to patients.
व्हाट्सएप पे आपको मिल जाएगा पर्ची भी नहीं रखनी पड़ेगी कोई दवाइयों की लिस्ट कोई दवाई कब लेनी है याद करानी है तो उनको याद कराना ये सब कुछ व्हाट्सएप पे कर दिया हमने दिस इज अ ड्यूटी ऑफ ए गवर्नमेंट एक्चुअली हेल्थ केयर में ड्यूटी बनती है हमारी लोगों की सेहत की चिंता करना ख्याल रखना चिंता करना
Punjab government foremost in public welfare.
70-75 वर्ष के मुँह ये कोई कागज नहीं थे अब जो है अपन साइट हुई अपन ले अपन धरो
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन कर दी अब उस भूमि के नाम पर वह कर्ज ले सकती है व्यवसाय कर सकती है
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the Gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat, while in cases of objections, the concerned officials resolve the issues.
Nice, yeah.
Hey Mahi, suggest a cool bank जो environmentally conscious हो.
SBI coolest है.
Really?
SBI ने लाखों पेड़ लगाए, वेस्ट मैनेजमेंट प्रोजेक्ट्स को फंड किया, EV लोन्स पे कंसेशंस दी और रेन्यूएबल एनर्जी को मैक्स सपोर्ट किया.
Wow, that's cool.
SBI, the banker to every Indian. Truly.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Also, let's guess the company which will be coming today in KYC, and the first hint I would like to give you is it's one of the largest steel wire manufacturers in the country. Also, the second important hint which would be there, that would be that the company operates in the infra and the automotive segments and a lot of other segments as well, but these are the new areas which they are focusing as well. They recently came out with their quarterly sales number and they were at the highest levels in the third quarter. So we will be asking the management what led to this growth. And the stock, however, is on a punishing mode. It's down 20% in the last 6 months. Why that has happened? But keep guessing the company, and I would like to point out the company which we are in focus is Bansel Wires Industries. This is the company which you are talking about, the Bansel Wires, and this is what we will be looking after. But there are key questions. Why have we called this company? A lot of news flows are coming in, and likely their volume growth guidance, that's what I'll be interested, because they have posted some good numbers. Also going ahead, other important guidances which will be important will be the revenue and the EBITDA guidance which we'll be looking out for the company, and interestingly the company shifting to its specialty product portfolio as well. So that's something which we'll be looking out as well. The margin and the revenue guidance ahead, we'll ask Pranav where does the company actually go from these important levels, and also apart from this, the expansion and the capacity plans, that's very much important. Company is going through some specialty products which are there in that capacity additions which are happening. Also, apart from this, why we have called this company is that Sanand backward integration. What are the key timelines? Currently it has been scrapped, but will there be any other future outlook whether this integration will go up or not? That's what we'll be asking, and here it is. Pranav Bansal, the MD and CEO of the company, where we will be asking him a lot of questions. But apart from this, let's understand the details about the company. What's everything all about, and what are the key details you should know before you go ahead of this KYC segment. Okay, so the company itself, let's just put out the key numbers. It's the largest stainless steel wire manufacturer in India, and in terms of volumes also we see as it is a big player as well. The company is second largest steel wire manufacturer in India by volume, and looking at the installation, it's around 6.18 million tons per annum installed capacity, and currently as per the Q2 numbers ending, 74% of capacity utilization has come in, and roughly 5,000 odd customers are also there. And also, let's see how the industry breakup is there of the revenue mix as such, and this is the breakup coming in. It's kind of even Stevens. Automotive is on the higher side, that's around 22% coming in, followed by general engineering, infrastructure, consumer durables, and I think more industries are there. The smaller ones includes cable, agriculture, poultry as well. These are the other industry companies where there is kind of a support coming in, but a miscellaneous revenue mix is also in place. Apart from the revenue mix, let's go ahead and see what else is in store. Yeah, just show the other thing. Yes, see the revenue mix. Largely the domestic one is 90 odd % coming in, and just a smaller number, that's around 10%. That's the revenue mix coming from the export markets. Also, the business update was there and stock was of course buzzing on that. The numbers year-on-year basis looks strong. Both of them are 30% odd momentum growth coming in. Sequential, however, on the lower side. But whenever you judge a company, there is lumpiness. So I have taken the year-on-year basis. The next phase of growth, this is very much important for the company. You should understand induction, hardened and tempered wires. We'll understand more from Pranav on this, why they are going into this segment. And this is the second one where the announcement and the capacity expansions are taking place. So this is something which we will be watching out for. But before we start, I would like to give you the rating parameters for the show. There are roughly 8 rating parameters where we judge a company. This also includes your income statement, your balance sheet, cash flows, the return ratios. These are one of the most important things which we take in focus. And now, of course, we see this is the important 4 parameters coming in. Apart from that, the remaining 4 parameters, they also include shareholders, street cred, analyst take, and even outlook. Analyst take is nothing but how much analysts are bullish on the stock, while street cred, to define, it's how the stock has moved, be it 1 month, 6 months, or even the last 5 years, to show you what the returns have come in. But the most important rating parameter is the outlook parameter. Also, apart from the outlook parameter, let's move into the first parameter, that is the income statement. And largely the history is just 2 years. That's why I've taken the 2 years CAGR numbers for this. Revenue and EBITDA, both of them, look at the numbers, what the growth has come in. 121% for revenue, and even for EBITDA, it's 100% growth. The H1 numbers also I'll get you in, but Q3 numbers were also rock solid, which I had mentioned earlier. Net profit has been significantly good as well. And Q2 numbers, look at it, revenue, that's up almost 12% sequentially on a year-on-year basis. These numbers are showing a good tick. But the profit, there has been some impact, and that is where my little bit of concern comes in. But net, the elevated margin levels is something what the company is coming across. And over the last 3 years, they have maintained this band around, that 7.3 to 7.5% margin band. So we'll ask Pranav, will this go and touch the 8%? So overall, for the income statement, I'll give a very, very strong thumbs up when it comes to Bansel Wires. Also, let's see the second parameter. This is also very much important, the balance sheet. And of course, the balance sheet itself, the company is going through a big capacity kind of a spending as well. And there might be some pressures also in the balance sheet. That's where, I kind of have a neutral rating on this parameter. Largely, we see the borrowings, they have remained somewhat similar, but from FY24, it has come down around 700 odd crore rupees to around 600 crore rupees. You expect this to be a bit elevated only. The reason is company is going through big capacity expansion plans, and at times there are pain in the balance sheet, and eventually the return ratios you will see will be very dismal because of what the construct is happening. There are cycles, when you understand a company. Cash bank balance, nothing much to be there, and so it's a neutral rating for the balance sheet. And the cash flows also nothing very significant coming in, but a little bit of concern definitely comes in from the operations and the PAT as well. And so overall, we have seen, given that a neutral rating, the return ratios which are coming in, those ROC, ROE numbers, that's where my concern also comes in. And from FY24, it's gone down to 15 odd %, and the ROE numbers also that we see, that's also gone down. So now I will be giving this a strong thumbs down when it comes to the return ratios. Also, apart from the return ratios, the shareholding pattern, let's look at over here. That's around the promoters is stable around 78 odd %, and nothing much has changed for the FIs and DIs as well. But interestingly, the concern, for this public, that's very low, and because of that, I think I would be giving this a thumbs down when it comes to the shareholding pattern. Also, apart from this, let's move on and show you something more for the shareholding pattern segment. After that is the street cred. That's also something we'll look out for. And just pull out the street cred, how the stock price movement has happened, and that's where the concern starts coming in. Last 6 months, stock is down 20%. Also, let's see stocks, how it has performed. Last 1 year is down 29%. So after 2024 September, most of the small caps, mid caps have fallen, and this company is also not that different from them as well. And that's why 5 years, of course, the listing history is less, so we have taken it around down 13 odd %. So this is the street cred also, and it's coming in with a kind of a thumbs down. But return potential is very much important, and around 5 analysts are tracking the stock. They have given a buy rating for it, and still from the current prices, a 44% return potential is expected. So that's why I've given a strong thumbs up when it comes to the overall analyst take on it. But outlook is something which everybody wants to talk about. Companies giving a lot of future related statements, and that is where a lot of our conversation will lie around, because future what lies for Bansel Wire is very much important. They're expecting a 30 to 40% volume growth in FY26, and also looking at the other growth parameters, they are reiterated the 20 to 25% long-term growth for the revenue and the EBITDA front as well. That's all we'll be talking about, and also looking at how the ROC numbers are panning out. They are looking at some good strength over there. If you could just show the other outlooks also, and that's where we'll show how the company is moving. EBITDA per ton, that's targeted to reach double digits within the next 3 to 4 years, and that's something to look out for. Around 600 crore positive cash flows are expected in FY26 and 27, and also a 25% plus ROCE business is expected by FY27. So these are the important outlooks for Bansel Wire. But to give it in perspective more, talking with the management, I'd like to give you a small hint about the management for Pranav. Pranav himself, he started entering the business at a very young age. The promoter I'm talking about, Pranav Bansal, he's the MD and CEO of this company. In the last 10 years, he has been associated with the company, and he started off as an operator of machines in the company. So that's a very interesting history, and he has focused only on the business as for my conversation with him. But this conversation goes more now. Now I'm joined in by Pranav Bansal. He's the MD and CEO at Bansel Wires. A warm welcome and a happy 2026 to you, Pranav. To start with, Q3 updates. They have been on a very strong, momentum which has come in. The volumes are coming at lifetime highs. My first question to you is the volume growth outlook, what you have given earlier. Will you reiterate that guidance, or with a very strong performance, can we have an upward movement of this guidance for volume growth?
Sure. Thank you for having me. So as far as volume is concerned, we started the year thinking that we would be able to do 30% additional volume. But after the first 2 quarters, we increased our guidance from 30 to 40%, because that's what we are now looking at. And it looks positive. As of now, demand is good. We have good capacities coming on stream every quarter. So as of now, I think I would like to stick with the 30 to 40% kind of a volume growth. Definitely, we will try to achieve the exact 40% number as well.
Pranav, that's an important update coming in. But Pranav, there's a concern also. Looking at the financials, the ROC, the ROE numbers, they are constantly under the pressure. And that's where my concern has also come in. And of course, you are expanding, and that's why we are seeing those numbers getting impacted. But when will these ROC, ROE numbers, which are down, when will they bottom out? Can you give us a period, next 1 year, 2 years, when will that happen?
Sure. So in fact, as a company, if you look at our history, we've grown at 20-25%, but that has always been through debt. Now, in the first 2 quarters, we have taken a very strong target for ourselves, wherein we are now looking at a 25% ROC number that we want to achieve within FY27. And the journey for that has already started. This is the first time ever this year that we have generated cash. That too, in the first 2 quarters, we've generated about 150 crores of free cash already. Our target of 600 to 700 crores for these 2 years, I think we are on track to achieve this or to better that as well. And as and when we do that, our ROC, ROE numbers would anyways improve. ROE, of course, because we have just gotten an infusion of equity, we are not tracking that as much as the ROC numbers, because that's the core business. And 25%, I think, is a reasonable target. We should be able to achieve it within 27. We have already been seeing upward movement on that trajectory now, quarter on quarter.
All right, Pranav, that concern is definitely ticked down. But apart from that, the company is moving to specialty products, and whenever there is a company moving to the specialty products, the margin profile also changes. So I have two questions to it. What are these specialty products? There are some expansions also which have taken place, the IHT and the steel cord. So give us the more details about this, and how will the margin profile change once they start coming in?
Sure. So IHT is a new vertical that we've added only this year. These are very highly technical products and used for growing industries like for EVs, we've gotten IHT, and steel cord is one major product that is used in tires. And we are the only company in India manufacturing it now, the only Indian company today to manufacture it. So yes, these are high growth areas for us. As a company, we've grown at 20-25%, and in the future also we want to grow at 20-25%. Is where specialty will really add value for us. These products are products which take a longer approval process. So we are looking at maybe 1 to 3 years of approval, but we should start seeing numbers from specialty within the next year, definitely. And once you see those numbers, our margin profile will definitely increase. Our per ton EBITDA and the percentage of EBITDA both will start increasing.
We have spoken about the percentage growth, Pranav, but if we had to quantify that, don't give me an exact number, give me a range. You know, like right now, if your margin is at X for FY26, for FY27 or for FY28, you know, what will be the margin change? And this will be a consolidated margin, if you could just give us that.
So, see, our business is structured in such a way that percentage of margin is always dependent on my raw material price. We have a cost plus model. So if there is an increase or decrease in my prices, the same is passed on to the customer. So we are essentially acting as a converter of products. My margins are intact. Therefore, percentage is not something we track. On a per ton basis, we are at about 6,000 to 7,000 rupee a ton. And our target for the future in the next 5 years maybe should be to reach double digit here. From 6 to 7, we would like to go to 10,000 plus kind of a margin in the future. But that being said, honestly, the way we want to look at it, we want to grow at 20-25% even on the absolute EBITDA front. That's the main target.
All right.
From 5% or 10% does not make a lot of difference as long as I'm able to get 20-25%.
Correct, Pranav. But since you spoke about a lot of raw materials which are there in your company, the key raw materials, what are those, and are these prices also elevated as how most of the, you know, global prices are elevated across most of the assets? Is it same for you? Is any pinch coming in?
Sure. So for me, I have only one raw material, and that is my majority of cost overall. That's steel. And for steel, we have a pass-through model. We are a largely B2B business, wherein any increase and decrease there is in my raw material price is passed on to the customer with maybe a lag of 1 month, or in most of the products the very same day. Therefore, if there is an increase in raw material or decrease, my business is not really impacted much.
All right. So there is a pass-through models. You know, a lot of our viewers at KYC had written about, you know, how this business model of the company is working, and a lot of, you know, queries came on your customers. One of our viewers stated that 5,000 plus customers are there, and it's very difficult to track which are whose. But if you have a big customer, what does the customer profile actually looks like? These are all Fortune 500 companies, or these are basically your, you know, Indian companies which are, you know, the top 500 companies by market cap. What are these companies, you know, and if any big addition has happened over the last 3 odd months?
Sure. So we are very well diversified when it comes to our customer base. We are servicing today customers from different industries, whether it is power and cable, automotive, consumer durable, general engineering, infrastructure. So we have customers all across. And one good thing here as well is that we have no customer centricity. So there is no customer that accounts for more than 5% of my sale. Therefore, that gives me a lot of power when dealing with a customer. I'm able to get the right price for the kind of service that we provide and the quality that we provide. Customers here would range from maybe a company buying 500 kgs a month to 1,000 tons a month. So that's maybe a 1 lakh kind of a 1 lakh product a month to about 20 crores a month. Those are the customers that we have.
And Pranav, the debt levels are elevated, and of course, company is going through important transformation as well. But will you be taking some more debt in FY27, or that's it? Some debt reduction will start now.
Hello.
Yeah, Pranav, you can hear me? Yeah, Pranav, I wanted to know about the debt reduction strategy for the company. It's still at elevated levels.
So as far as debt is concerned, as I said, till now we have grown through debt. This is how the 20-25% has come in. But from here on, our focus is completely shifted to cash flows. Therefore, now we want to make enough cash flows to reinvest in the business and keep growing at the same pace. To grow at 20-25% every year, we need about 150 to 200 crores that we need to invest every year. And more than that should be our free cash coming in. So in this year and next year, if we are able to generate upward of 600 crores, I think that should be enough to fund all our expansion. Therefore, we are looking at, in fact, a debt reduction going forward, even after growing at this pace from next year.
Yeah, and Pranav, one more query is there. Like what happens to your core business? Of course, stainless steel wire manufacturing is definitely there. You're going to value added. What's the ratio looking like, current profile, value added and your normal products? And maybe in the 2 years down the line, what will be the revenue profile if you just have value added and your normal business?
Sure. So today we have three main verticals that we operate in. Stainless steel is one of them. Stainless steel, high carbon and low carbon products. So high carbon is a product majorly for automotive. Stainless steel is more consumer durable side of things. And low carbon is more agriculture and cable related, power and cable side. Now the fourth vertical is specialty wire, which will start next year. And if everything goes well, this has a potential to contribute a large chunk of my EBITDA and my revenue going forward. If a very aggressive or a very optimistic figure is that I would want specialty wire to contribute maybe 30-40% of my total business in the next 5 years. And I think if our approvals are, if we get approvals from our customers timely, I think we should be able to achieve that.
All right, so 40% revenue target is coming in for the specialty wire segment. That's what Pranav has stated. But for our viewers, I want to revise the KYC ratings which I had done earlier. I had given 8 parameters where I had judged the company, and largely I would like to say the income statement has been very strong, balance sheet cash flow largely neutral, but the concern for the street is return ratios, and maybe that's why the street cred also is under pain, because largely we saw a big sell-off in the last 6 months in the stock. Stock is down 20-odd%. Shareholding neutral, but analyst is still bullish, all 5 of them, and the outlook, that's where the strength lies. So total KYC rating of this entire company comes out at 4.5 out of 8. But yes, the outlook is bullish. The management has also given a bullish outlook going ahead, but it will take time. 2 years, 3 years for important capacities to come, the change in the product profile also. But just to end our conversation, Pranav, I would like to get you back in to this conversation. And Bansel Wire Industries, we spoke about the entire specialty segment, the commodity segment or the core business which was there. But the Sananand integration, the company has actually put the plans off. That's what is there, if I'm not wrong. But will you try to regain this integration? Because whenever an integration project is there, that also helps the margin profile, or too many things at once for the company?
Sure. I think as of now, this was a very good decision that we took to hold off on that backward integration. That is really helping us focus on our core business. And in fact, I think that is the main reason why we've been able to increase our guidance and being able to perform better than our expectation. And without backward integration, I think our focus is now more on cash flow and return ratios. So first, I think our target would be for the first 2 years is to get 25% plus ROC. Once we achieve that, then we will start discussion of that.
All right. So there are 3-4 odd things, in this industry. But Pranav, this is a query for some young folks who always ask in KYC that if they want to start and come in your area of business, like you are also yourself a college dropout and you choose your passion. If somebody wants to chase their passion, what they do in your industry? in short?
Just work hard. That's all.
All right. It's very simple, 2 words, work hard, but it makes a lot of sense. Thanks a lot, Pranav, for your views on that, and the management showing their candor for the company and the growth outlook going ahead. Of course, the stock has taken a punishment. The stock is down 20% in the last 6 months, and the street might be taking the stress of the lower return ratios coming in as companies are going through capex. And interestingly, the company's utilization levels is at roughly 70 odd percent. So the expansion capex makes sense. So these are how cycles play out when you do a business. So that's the entire management talking about it, and we have given 4.5 out of 8. So that's all, folks. For KYC, stay tuned to NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
इम्तियाज जी के फादर को बीमारी के कारण अचानक हॉस्पिटल में एडमिट होना पड़ा। पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर लाखों का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
Punjab government, foremost in public welfare. High-tech ambulance brings speedy help. The government led by Bhagwant Singh Maan has deployed more than 400 high-tech ambulances to provide rapid emergency assistance across villages and cities. Equipped with GPS tracking and digital communication systems, besides medical equipment like oxygen cylinders, ventilators and ECG machines, these ambulances provide critical care similar to the hospital emergency ward. This helps the doctors and paramedical staff to provide the best care to critically ill patients while in transit.
325 ਐਂਬੂਲੈਂਸਾਂ ਜਿਹੜੀਆਂ ਨੇ ਉਹ ਮੁਫਤ ਸੇਵਾਵਾਂ ਪ੍ਰਦਾਨ ਕਰ ਰਹੀਆਂ ਪੰਜਾਬ ਦੇ ਵਿੱਚ। ਸ਼ਹਿਰੀ ਖੇਤਰ 'ਚ 15 ਮਿੰਟ ਤੇ ਪਿੰਡੂ ਖੇਤਰ 'ਚ 20 ਮਿੰਟ ਔਸਤਨ ਟਾਈਮ ਹੈ ਉੱਥੇ ਪਹੁੰਚਣ ਦਾ। ਕੋਈ ਕਿਸੇ ਕਿਸਮ ਦੀ ਜੇ ਕੋਈ ਰੱਬ ਨਾ ਕਰੇ ਇਸ ਤਰ੍ਹਾਂ ਦੀ ਐਮਰਜੈਂਸੀ ਹੋ ਜੇ, GPS ਸਿਸਟਮ ਲੱਗੇ ਹੋਏ ਨੇ, ਆਪ ਵੀ ਅਸੀਂ ਚੈੱਕ ਕਰ ਸਕਦੇ ਹਾਂ ਕਿ ਗੱਡੀ ਕਿੱਥੇ ਹੈ।
In order to run this high-tech ambulance service efficiently and provide rapid assistance in villages and cities, the government has established a network where a dedicated helpline number 108 and 24/7 call centers help direct immediate assistance to patients in an emergency situation.
ਐਂਬੂਲੈਂਸ ਦਾ ਤਾਂ ਬਹੁਤ ਜ਼ਿਆਦਾ ਫਾਇਦਾ ਹੈਗਾ। ਐਮਰਜੈਂਸੀ ਦੇ ਵਿੱਚ ਐਂਬੂਲੈਂਸ ਦੇ ਥਰੂ ਆਪਾਂ ਪੇਸ਼ੈਂਟ ਨੂੰ ਬਚਾ ਸਕਦੇ ਹਾਂ।
This is proving very helpful in saving lives in critical cases of road accidents and heart attacks. Punjab government, foremost in public welfare.
70-75 वर्ष के हम ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करनी। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
माही भाई, कोई कूल बैंक बताओ ना जो कस्टमर के साथ हर कंडीशन में हो।
फिर तो SBI कूलेस्ट है। हाँ? 50 डिग्री में, -40 डिग्री में, घने जंगलों में, भूकंप वाले टापू में भी हर कंडीशन में कस्टमर के साथ है।
Really cool.
SBI, the banker to every Indian. Truly.
Hello, Moto.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. An important change in the law that relates to inheritance has taken place, and that has to do with one word. It's called a probate. What is this probate? Why did it lead to a little bit of a complication of process? Where was it relevant? And what happens now that the compulsory probate has been pushed out of the window? Joining me to talk about all of those aspects is Shashvi Kadakia, who's a partner at Cyril Amarchand Mangaldas. Shashvi, thanks so much for taking the time and wish you a happy new year. Let me start by asking you, what is a probate and why is it relevant in the context of inheritance?
Sure. So Alex, probate, the word probate is derived from the Latin word to prove. Over the years, over the centuries, this has now come to mean a certificate of a court certifying the genuineness of a will. So when a person passes away and they have left behind a will, then a court will certify through a probate that that will is genuine.
Okay, so explain to me in the form of an example how this would take place. Let's say that I have left a will for my imaginary children, and in that case, if I have passed on, in order to execute this will, what needs to be done in conjunction with this probate?
Right. So if you were to leave behind a will, you would name an executor under your will.
Okay.
That executor is someone who implements or executes the will, as we say. After you pass away, the executor can go to a court. If you are in Mumbai, they would go to the Bombay High Court and apply for a probate, saying, look, this is the will. Can you examine it, examine the witness affidavits, and confirm that this will is genuine? It is, it has been validly executed, and because it is genuine, then I can now act on it. Once the court certifies that this is valid, then your executor can go ahead and distribute the assets as per your will to your children. This is what we would, sort of typically look at in a compulsory probate situation, but we'll get to how the law has changed now.
Let's, in fact, talk about that. How has the law changed? And as I understand it, the requirement, compulsory requirement of a probate was only in a few geographies, the old British principalities, and also, as I understand it, in Pune, because somebody just told me, I was discussing it with them, and they said that probate existed in Pune as well. Is that right?
So Alex, let's break that into three things. So what is the law? What has changed? So interestingly, this is a 150-year-old law that not too many people sort of know about. This provision has existed and now it has been amended. So way back in the 1870s or so, the British decided that for wills of certain religions, there should be compulsory probate in certain geographical locations, like you have said. So what we would examine is three things. Has a person passed away with a will? If yes, was the person of a religion that is relevant for this purpose, which is Hindus, Jains, Sikhs, Buddhists, and Parsis? If yes, was their will executed in a specific area, and I'll come to that area, or did the will deal with immovable property in those areas? And now what are those areas? Those are Mumbai, Chennai, and interestingly, and not too many people know this, people think it's only Calcutta, but actually the law says for Hindus, Sikhs, Buddhists, and Jains, it covers all of the area which on 1st September 1870 was subject to the jurisdiction of the Lieutenant Governor General of Bengal. So that includes not just Calcutta, but in fact there is some judgments in jurisprudence to suggest it goes as far as Patna and other places in Orissa, Bihar, and Assam. So if all of these three tests are met, then the provision said that you need what is called a compulsory probate. If any of these tests are not met, for instance, if the person is Muslim or Christian, or the will was executed outside of these places that I have mentioned, and didn't deal with immovable property, then probate was not compulsory. So just to give you an example, if there is a person who is living in Delhi and has family in Mumbai, if they had executed their will or signed their will in Delhi, then the compulsory probate would not apply to them. But say if they had family in Mumbai and went to meet their family and signed their will in Mumbai, then without their knowing possibly, the compulsory probate provision would apply to them. And so what is compulsory probate? Compulsory probate doesn't mean that the will would be invalid. Like a will which is generally valid would not become invalid merely because a probate has not been obtained. The law is slightly nuanced and technical. What it says is that if you were an executor under the will, or a beneficiary, or a legatee, a person who receives benefits under the will, if you had to go to court and claim your right under the will, then you would not be able to do so unless the will was probated. So it's slightly technical, it's a slightly nuanced situation. With effect from December 20th, 2025, which is some days ago, this provision has now been amended and repealed, which means it no longer exists, which means irrespective of whether you're Hindu, Muslim, Christian, or whatever religion you belong to, where you sign the will or where your immovable property is, you will not be required to get a compulsory probate.
So functionally, therefore, Shashvi, how does this change things? Because I've heard situations where people have to wait for months together to get a probate approved. And this goes to 6 months, 7 months, and it's time consuming, especially in a situation where sometimes this is a time sensitive matter.
Yes. So 6 months, 7 months, if you're lucky, Alex, I've known of situations that go on for many, many years, unfortunately. What this changes is, let's think of how it changes for the different stakeholders. For people who are inheriting under a will, the heirs under the will, the process potentially could be quicker for them because now the executor doesn't have to go for a probate. But, and this is where all of the nuance comes in, is there are still some assets for which a probate may be required. For instance, if the person has passed away, leaving a bank account, for instance, or a demat account, where there is no nominee and no joint holder, then as per the RBI and SEBI guidelines, above a certain monetary threshold, the bank or the depository participant is entitled to seek a probate. Or for mutual funds above a particular threshold, or if you are trying to claim PPF. So in all of these situations where there is a nominee or joint holder, then a probate may not be required. But if there is none, then those institutions are authorized to do that to ensure that they're releasing the money and the assets to the right person. The other place where we sort of need to think about this is immovable property, real estate. Till now, if a person had inherited property in any of these places that I had mentioned, and they had a probate and they wanted to sell that property onwards, the buyer would ask for a title report. The lawyer who makes the title report would examine whether there is a probate or not. If there is a probate, then very often the title report would be clean. Banks would also rely on such a title report when financing, giving a house loan for the buyer to buy that property. If the probate provisions are gone and there is no probate obtained by the person who wants to sell this property, I think it remains to be seen how buyers and banks are going to look at this. Would they be uncomfortable buying a property or lending to a buyer who is going to buy a property where probate has not been obtained?
Okay.
So that's,
So therefore, in that scenario, so just to complete that point, Shashvi, and I'm trying to understand how it would work right now. If I'm, so you would look for the title document, right?
Yes.
So you're saying that it would not be possible to make a title document without a probate now?
No, I'm not saying that. I'm saying that if there was a probate, then the person who's buying it would be very comfortable saying this will is genuine. Without a probate, they don't know if the will is genuine. And so then they also don't know if there is potentially a likelihood of a challenge to that will. Is someone likely to get up and say, no, this will was invalid, and therefore the person who's claiming to sell the property was not entitled to it? And the interesting thing there is that typically these title reports are also run for 30 years because if there is a minor at that time when the person died, that minor has 18 years of his till he becomes a major and 12 years after that. So it's pretty much a 30-year question mark on whether that title is valid.
So and this is a layperson asking a question, Shashvi, so I'm just trying to understand this. Hypothetically, if
Yes.
a transfer through a will has been done, I have gone through the necessarily legal steps to get it registered in my name, okay?
Yes,
So
correct.
therefore, the ownership has shifted to me.
Correct.
Would I still, therefore, in that title, require probate, or can it? No, in that case, I would not, right?
You would not. So the law as it stands right now, you would not require. So that is a very helpful amendment that has been made. Even if you look at, say, the Maharashtra Cooperative Societies Act for flats in Mumbai, that was amended a couple of years ago to provide that probate will not be required. You can do a transfer, the society or the authorities are permitted to do a transmission of the property on the basis of a will without insisting on a probate. I think where the practical aspects of this will come in, and not the legal aspects, the title report aspect is more of a practical aspect. If a buyer is buying a property where, say, a probate is not there, are they likely to be slightly wary if there is no stamp on that property that the will is genuine?
Okay. And final point, is there a monetary aspect to this? Because as I understand, there's a court fee involved in acquiring a probate as well, right?
Correct. So, Alex, just to say that what we've discussed till now, we've said compulsory probate is out, but you can still apply for a voluntary probate in situations where, like I said, a bank asks for it, or DP asks for it, or if there's likely to be a challenge to the will, you can seek a probate. When you make that probate application, there is a court fee that needs to be paid. In Mumbai and Chennai, there is a cap on the court fee. In Mumbai, it's 75,000 and 10,000 for widows. In Chennai, it's 25,000. But in other parts of India, there necessarily isn't a court fee cap. For instance, Calcutta and Delhi don't have court fee caps. And the court fee then depends on the value of the estate, which could run at anything from 2% to 5 or 6%, which is quite high.
Wow, that's quite dramatic. Okay, so, but I think the good part is that the choice now rests with the individual. And you can choose, therefore. And therefore, it's a relevant update to the legal system. Shashvi, thanks so much for explaining this. You've also explained why someone might still want to go out and get that probate done.
Yes.
So thanks so much for taking the time.
Thank you. Thank you so much, Alex.
When it comes to mutual fund investing, in the past, people have gravitated towards specific fund managers, the so-called star fund managers. In today's context, you would talk about somebody like Rajiv Thakkar of Parag Parikh Flexi Cap Fund, or and S. Narain. And you'd be forgiven for gravitating towards them because they've got a storied history, a legacy. But the question that we're asking today is, how important is the fund manager in the larger scheme of things? And what should you do if the fund manager of the fund that you've invested in changes? Does that affect the performance of the scheme? Has it in the past? We'll talk about all of that on this particular chat. I'm joined today by Harsh Kumar, who is the managing partner and co-founder of Zvest Financial Services. Harsh, thanks so much for taking the time. First questions first, and Happy New Year to you. How important in today's context is the fund manager?
Alex, Happy New Year to you and all the viewers. Let's set the context first. At the beginning of the millennium, in the year 2000, the AUM of the mutual fund industry was around 1 lakh crore. And out of this, one mutual fund house, which is UTI, used to dominate around 60 to 65% of the assets. Come to year 2010 and 2014, the AUM increased to 10 lakh crore. But from 2014 till 2025, the growth has been exponential at the rate of 20% per annum. We ended 2025 with an AUM of 81 lakh crore. Now we have fund managers which manage more than 1 lakh crore, and there are close to 500 fund managers in the industry. Now, when you see such a huge growth in any industry, you're bound to see changes. And within the mutual fund industry also, we have seen a lot of changes, and fund management is also a part of this. Now, from a system of star-based fund manager, now we are looking at system-based fund manager. From intuition-based decisions, now these are institutional-based decisions. So, if I have to give you an analogy, in the year 2000, 2010, the fund manager used to be a chef running his own kitchen, and his temperament used to decide what the food would be at the end of the day in the table. But now it's all like a modern kitchen process where it's not one individual, but a team of experts supporting that individual, which help take the decisions. Now, having said that, I would not say that fund managers are not important. There are fund managers in the industry who are visionaries, who think laterally, who have a way of thinking which is beyond most of the other fund managers in the industry. You named a few examples like Rajiv Thakur of Parag Parekh, Naren in ICICI, Vasan in SBI Mutual Fund, Chirag in HDFC. Now, these are the guys who are important to the system, despite system being very, very strong. But most of the fund houses over a period of time have institutionalized things. And today, if you look at fund manager, where you have more active fund manager still matters the most, but where you have more of benchmark hugging portfolio, still you can say that the team justifies the job which the mutual fund manager is doing.
Yeah, and the research desks are also fuller than they were even a decade back. The bench strength of fund managers is also larger. So it's a more collaborative effort that is involved in selection of schemes. But let's talk about the last decade perhaps, and talk about a few of the notable exits. A lot of the star fund managers of years past have actually ventured out and started their own firms, haven't they?
Yes. So let's see first the reasons why you would have an exit from a fund. Now there are 3-4 reasons. First reason is within the fund house, fund manager is being promoted, or the fund manager moves to manage different schemes. That is fairly well accepted because that is a career progression for the fund manager. Then there are instances where, let's say, a fund manager retires, which is also well accepted. Third is a situation where the fund manager leaves and joins a competitor. Now, that is something which an investor needs to watch closely. And the last is, which is the current trend, where a lot of fund managers have left and started on their own as well. Now, to give you a few examples in the last decade or so, where we have seen some fund managers leave, say the notable amongst them has been Prashant Jain. He was in HDFC AMC for 28 years, and he was the CIO for 19 years. He was one of the longest serving CIO. And definitely when he moved out, industry was to keep a close watch on that. He started on his own. We had Kenneth from IDFC Mutual Fund. He left and he started Pine Bridge. We had Sunil Singhania, who left Nippon and started Abacus. We have recently seen Pankaj Tibrewal, who left Kotak and started Ikigai. Then we had Gopal Agarwal, who left Mirai. He didn't start on his own. He moved to DSP, and from DSP, he moved to HDFC. And recently, in December 2025, we had Roshi Jain, who was a senior fund manager of HDFC. She left. Now, most of the names which I have mentioned here are either CIOs or senior fund managers, and many of them have started on their own. And yes, I concur to what you're saying, that the trend is that, if you are a star fund manager, you can start on your own and assets would flow to you.
Yeah, and invariably the course has been, particularly in one of the names that you mentioned, Kenneth and Old Bridge Capital, they've started off with a service and then moved to the mutual fund space. So that seems to be the trajectory as well. You start with a PMS or maybe an AIF, and then you move towards the mutual fund space. But the question, and ultimately the most important point to the retail investor, to our audience here, Harsh, is, does it matter for me if a fund manager exits? Has that proven to be negative for the fund performance?
Okay, so the first point for the investors is that, like I mentioned at the beginning, there are close to 500 fund managers in the industry. Now, when you have this high a base, even if 5% fund managers leave in a given year, you're looking at 25 fund managers leaving, and that can look to an individual investor to be a very significant number. But since the base is increasing, that's bound to happen. Now, looking at the exits, I would not want to go into all the exits because that would the time would not permit. But let me take 2-3 examples from last 5-7 years, and I would try to take both the examples where the fund managers continue performing, funds continued performing, and where the performance did not live up to the mark. So first is, let's take an example of HDFC. Now, Prashant Jain, like I mentioned, was in HDFC for 28 years. He was managing 3 funds, HDFC Flexi Cap, Large Cap, and Balanced Advantage Fund. And it's not that he didn't have periods of underperformance. There was a period from 2017 to 2020 when the market depth was very, very narrow. And I think you would remember, and the audience would also remember, the era of Ritik stocks, where all these HDFC, Reliance, ICICI, and Kotak, they were only running. And at that point of time, Prashant Jain had a phase of underperformance. But towards the end of his career, when he left HDFC, the performance of his fund was very envious. And for the entire tenure that he managed these funds, most of these funds, rather all these funds, had benchmark beating performance in late teens, which is something which is very, very rare. Now, after he moved out, his funds were distributed across 3 different fund managers. And from a style which was a very deep value style and concentrated style, the new fund managers moved more towards diversified and balanced approach. Though the time period is very, very small, I mean, 2-3 years is not a time frame for us to judge the performance of the new fund managers, but the performance has really been continuing and investors would not have any complaints about it. Now, let's move to the next one, Sunil Singhania. Sunil Singhania is known for fundamental stock picks. His primary strength is mid cap and small cap. In fact, he's closely related to Reliance Growth Fund. Whenever people talk about Sunil Singhania, they talk about Growth Fund, which grew in 22 years, it grew 100x. Now, he was also, concentrated stock picker, fundamental guy. When he moved out, at the same time, after after a brief period, Reliance stopped being Reliance and it became Nippon Asset Management. And since Japanese are very obsessed about processes, not just the funds which were managed by Sunil Singhania, but all the funds in Nippon now have fund casing. They have benchmark deviation rules as to how far they can go from benchmark. There is a lot of focus on what calls a fund manager cannot take. And the performance in these funds has also been continuing. So again, no complaints from the investors. Third is a scenario where I would take an example where the performance lacked a bit. And here I'm talking about IDFC, which is now Bandhan. Kenneth used to manage Premier Equity Fund. And he had a very unique style of managing where he would buy and hold stocks for a very long period of time. He was not concerned too much about taking stocks which were from the benchmark. And at times he was also okay with not having position which his peers were having. Now, when he left, there are a lot of changes which happened in the fund house because the fund house, like Reliance became Nippon, this fund house became Bandhan. But at a fund management level of the fund also, there were a lot of changes. And that's the reason we have seen the alpha in the fund, which is now a flexi-cap fund, shrinking. The fund has now become very cyclical. It is not a very differentiated fund, what it used to be during Kenneth's time. So I would say that more than the fund manager leaving, it's about how the transition is managed that decides how things go in future.
Okay, and we're out of time, but I'm still going to ask you this because this is the most important point. Harsh, what period, in your opinion, is justifiable for an investor to wait to look at this transition? Is it 6 months? Is it 1 year? Is it more? And when do you pull the plug? When you pull the plug, is it a wholesale exit or is it incrementally shifting to something else?
So Alex, this is a very important question. If I can take 2 minutes. So there are three elements to this question. One is the fund manager who's leaving. So investors should look at whether that fund manager was the process or was a part of the process, which means how dependent was the fund on that particular fund manager. So typically for a fund house, which has a large analyst team where the research is very broad based, there I think investors can stay put for some time. But where it's a very idiosyncratic fund, where the fund house is very small, maybe investors need to look at close watch at that. Second is the new fund manager. If the new fund manager is coming from the same fund house, then the research philosophy and everything is same. Investors can stay put. But where the new fund house is coming from a different part of the business, where he has not managed the similar stocks or similar sectors, then maybe investors need to keep a watch on that. Third is the fund house itself. If a one fund manager or 2 fund managers are leaving in a year, it's fine. But if you see multiple fund managers leaving, if you see top management changing, then you need to keep a close watch at that. To give you time frame, this business is like, orchard, where if one gardener leave, it doesn't mean that, the next day the trees will start coming. One needs to give a decent time frame for 1 or 2 seasons to go through to figure out the performance of the next fund manager. But in my sense, first 6 to 12 months after a transition are just about clearing the fund in the way the fund manager would want. 12 to 24 months, you would see the style of the fund manager coming into picture. But after 24 months, you would start seeing the performance of the fund being reflected by the effort of the new fund manager. So ideally, if you don't have any red signal, which I mentioned on a qualitative part, maybe you should stay put for at least 2 to 3 years before taking a decision on what needs to be done.
Fantastic. All right. On that note, Harsh, thanks so much for joining in. Pleasure speaking with you.
Thank you, Alex. Thanks a lot.
And that brings us to the end of this edition of Your Money Matters. Thanks so much for watching, and do stay tuned. This is NDTV Profit.
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
वैसे रिस्क प्रोफाइल के हिसाब से मुझे इक्विटी म्यूचुअल फंड्स में इन्वेस्ट करना चाहिए, पर स्मॉल मिड लार्ज इतने सारे सेक्टर्स समझ नहीं आ रहे हैं इन्वेस्ट कहाँ करूँ।
मल्टी कैप फंड, इनकी मदद से स्मॉल मिड लार्ज तीनों मार्केट कैप्स में एक साथ आसानी से इन्वेस्ट कर सकते हो। अगर एक फंड से मल्टीपल सेगमेंट्स और सेक्टर्स में आसानी से इन्वेस्ट करना है तो तुम्हारे लिए मल्टी कैप में निवेश हुआ।
सोचा समझा निवेश।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना से संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
Nowadays, fake UPI handles are posing as trusted brokers, advisors and trading platforms. और अगर आपने डबल चेक नहीं किया तो your money goes straight into the scammer's pocket. SEBI is stepping in with two major shields, जिसे डिजाइन किया गया है to protect you, the investor, from shady intermediaries and fly-by-night scammers. यूज कीजिए validated UPI facility और safeguard करिए अपना hard-earned money.
An investor awareness initiative by SEBI.
To give away the first award of this evening, we would like to invite on stage
Sachin Seth, Chairman, Griff Highmark Credit Bureau. Sachin brings nearly 3 decades of global experience in fintech, digital and tech.
Award goes to Ahan Pandey.
देखा, म्यूचुअल फंड्स रिस्की है।
हाँ, लेकिन जैसे तू अपनी कैपेसिटी के हिसाब से वर्कआउट करता है, वैसे ही रिस्क प्रोफाइलर मुझे अपनी पर्सनल रिस्क टेकिंग कैपेसिटी बताता है और रिस्कोमीटर फंड का रिस्क बताता है बिफोर आई इन्वेस्ट। यानी रिस्क है,
लेकिन सोचा समझा रिस्क। म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
70-75 वर्ष के मुँह ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर की महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करने की। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
भाई कोई कूल बैंक बताओ ना जिसके लिए हर कस्टमर इम्पोर्टेंट हो।
SBI कूलेस्ट है।
What?
किसान से NRIs तक, Gen A से Gen Z तक, SBI सबके लिए है।
Very good.
SBI, the banker to every Indian. Truly.
Transformational Leader of the Year. And to give away the award, we would like to invite on stage
Pranav Adani.
Dr. Sanjeev Goenka, Jury Chair of Indian of the Year and Chairman, RP Sanjeev Goenka Group.
Transformational Leader of the Year goes to Jay Shah.
ये स्टॉक कल अपर सर्किट हिट करेगा, ट्रस्ट मी। जॉइन आवर प्रीमियम चैट ग्रुप फॉर गारंटीड प्रॉफिट। 40% in just 4 days. These self-made experts are not regulated, not accountable, and are definitely not working in your interest. Once you're in and you've paid, the advice either fails or they disappear. So don't get scammed by such false promises. Hamesha deal kijiye only with SEBI registered intermediaries.
An investor awareness initiative by SEBI.
बोनस म्यूचुअल फंड्स में इन्वेस्ट रिस्की है ना?
ऑनलाइन शॉपिंग करती है ना सब डिटेल्स चेक करके, वैसे ही इन्वेस्ट करने से पहले रिस्कोमीटर मुझे फंड का रिस्क दिखाता है और रिस्क प्रोफाइलर अपनी रिस्क टेकिंग कैपेसिटी, यानी रिस्क है
लेकिन सोचा समझा रिस्क।
म्यूचुअल फंड निवेश बाजार जोखिम के अधीन है। योजना संबंधी सभी दस्तावेजों को सावधानी से पढ़ें।
Alright team, our new auto show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions,
Expert advice, the latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
Are you ready for the best show in town? NDTV Golf Pro-Am, we are coming to your city. Stay tuned.
Presented by The Bold Look of Kohler. Co-presented by Royal Ranthambore Premium Golf Accessories. Foundation partner Kamala AGG Trust. Associate partner Charge Zone, powering the future, and MG Select.
.1% people जिनको पता ही नहीं आप कौन हो. Who are you?
Interesting question. For the 0.1% people who don't know who I am, I think I'm a childlike, curious person who just wants to do things. That's it.
That's it.
That's it.
Nothing else defines you कि मैं Zomato का फाउंडर हूँ, मैं एक बिलियनर हूँ, मेरे पास ये है, मैंने रैक्स टू रिचेस कर दिया, मैं I don't know, identities that you give to yourself.
I don't have any of those things.
कभी खुद को ऐसे डिफाइन नहीं करते in your head?
लोग करते हैं और whenever they try to do it, मेरे को अपने आप को रोकना पड़ता है कि ऐसे नहीं करना डिफाइन अपने आप को.
क्यों?
Because then you lock yourself into just that. Then you can't become anything more than just that, no?
But isn't it कि उसी के लिए तो मेहनत करके काम कर रहा है कि that's something that you should be like you should own, right? कि यही मेहनत करके बनाया है ना, यही आइडेंटिटी के लिए इतनी काम करी.
ये मेहनत करके बना है, लेकिन वो आइडेंटिटी के लिए नहीं बनाया था मैंने.
Okay.
तो I didn't do this for fame, didn't do this for money. I was just curious. मतलब one step after the other, this happened.
So, never in your life you have had कि fuck it, मुझे बहुत पैसे कमाने हैं.
Never.
You had, but आपके बचपन में आपके दीवार पे एक पोस्टर लगा था ना.
I was born to lead. Heard my dad say this last couple of months ago. I was
born to lead. I was never born to be ruled.
Something like that, yeah.
तो ये पोस्टर लगा था ना, तो फिर तब से तो एस्पिरेशन तो होगी, एम्बिशन तो होगा कि मैं तो लीड ही करूंगा, मैं बड़ा ही बनूंगा, सम शॉट.
इट कुड ऑल्सो बी कि मैं बुली होता था बचपन में all my life, so it could also be my revolt towards that. I don't know, I don't remember वो पोस्टर क्यों था, कैसे था.
So bully for what? क्या bully होते थे?
So right now you can see I'm like 6 feet tall, but I basically gained about 1.5 feet when I was 12 years old.
Okay.
So I used to be a very short, dark, stammering kid. तो मतलब छोटा है, काला है, stammer करता है, and I used to be bad on my studies as well. So all of those things combined is like nobody, like my friends' parents used to tell them don't be friends with him.
क्यों?
बिकॉज इंटेलिजेंट अच्छे मार्क्स आने वाले के बच्चे के दोस्त होने चाहिए ना तुम. सो आई थिंक ऑल ऑफ दोज कि अच्छा आई वाज, मतलब वो पोस्टर भी थोड़ा सा स्टूपिड है होना, बिकॉज 10+1 में आई गॉट 42% मार्क्स और समथिंग लाइक दैट. सो दैट पोस्टर एंड दैट जस्ट डजंट मेक सेंस.
इट डज मेक सेंस बिकॉज ऐसे मार्क्स वाले ही लाते हैं. बट what used to bother? सबसे ज़्यादा प्रॉब्लम क्या होती थी जब लोग ऐसी बातें करते थे कि क्या है, तो तू काला है, तू हकलाता है, तू छोटा सा है के लिए? सबसे ज़्यादा क्या पिंच करता था उस टाइम?
आई थिंक मोस्टली ये पिंच करता था कि जब भी मैं कुछ बोलता था तो लोग सुनते नहीं थे. तो मिड सेंटेंस पीपल यूज्ड टू स्टार्ट टॉकिंग अबाउट समथिंग एल्स और स्टॉप लिसनिंग एंड लुक अवे, राइट. एंड इट्स लाइक कि ये जो बोलेगा कुछ काम का नहीं है, और ये बोल भी पाएगा ये जो बोलना चाहता है कि नहीं, राइट. सो दोज थिंग्स कंबाइंड, आई थिंक दैट वाज द
like you never
biggest
heard
hurt.
probably.
Yeah.
And कभी घर पे ऐसा हुआ कि मॉम डैड ने भी कुछ बोल दिया हो which disappointed you?
Of course, it was all part of the package.
तो घर वाले भी they were talking about it? They used to point this out?
They didn't used to point it out. They were actually supportive in terms of stammer कि this is in your head, हो जाएगा ये solve. Easily बोल, आराम से बोल, हो जाएगा. Whenever I used to sing, I could sing. तो stammer नहीं करता था मैं उस वक्त, right? So they like, देख तू गा तो रहा है, तेरे को बोलने में क्या दिक्कत हो रही है. So my home was actually supportive.
Okay.
But you know, even if your home is supportive, you don't think of that as valid. राइट. यू लाइक कि दुनिया सच बोल रही है, तुम्हारा तो काम है मुझे करना प्यार, तुम्हारा तो काम है ये बोलना, तो तुम तो झूठ ही मतलब बोल रहे होगे. आई थिंक दैट माइट हैव आल्सो बीन गोइंग ऑन.
डज इट स्टिल बॉदर स्टैमर?
मेक्स मी नर्वस. तो फॉर एग्जाम्पल दिस वन ऑल्सो, मतलब इट्स नॉट ईजी एंड कंफर्टेबल फॉर मी टू डू दिस. दैट्स व्हाई आई डू लेस ऑफ दिस. बट नाउ आई एम लाइक ठीक है यार, मतलब अटक जाऊंगा, फाइनली तो वर्ड बाहर आएगा ही आएगा ना, मतलब.
बट अभी भी ऐसे देखते हो कि मे बी ये एक इनसिक्योरिटी है या इट्स अ चैलेंज दैट आई हैव? डू यू सी स्टैमरिंग एज दैट?
Not really, not anymore. As I'm very at peace with it. कि ठीक है, होगा, अटकेगा, देखी जाएगी. I think that also comes with कि even if I stammer, people will now listen to me, right? So that I've earned a little bit of that. तो ठीक है, now I don't care. Otherwise I used to care कि अच्छा I will get judged. People will stop me. People will stop sort of like listening to me. Attention tune out हो जाएगी. वो सब कुछ used to make me nervous and bother me. Now I'm like ठीक है, 5 सेकंड का pause doesn't matter, right?
When did it change?
I think it gradually changed over the last 5 years or so. अभी भी fully खत्म नहीं हुआ है, मतलब
थोड़ा है अंदर,
रहेगा ही अंदर, कभी भी पूरा तो नहीं जाएगा.
बट यू सेड कि मैं इंटरव्यूज़ नहीं करता, मैं ज़्यादा पब्लिकली बात नहीं करता. हाउ डू यू लीड अ कंपनी देन? अगर स्टैमरिंग दिमाग में है कि इसकी वजह से मैं इंटरव्यूज़ नहीं करता, इन अ कंपनी एक बोर्ड मीटिंग में बात करनी पड़ेगी, लोगों को इंस्पायर करना पड़ेगा एट लार्ज टाउन हॉल्स, इन्वेस्टर को पिच करना पड़ेगा. सो तब ये बॉदर नहीं करता?
एक ट्रिविया पूछता हूँ, गेस हमारी लास्ट टाउन हॉल कब हुई होगी जहाँ पे मैं बोला हूँगा?
I don't know, 1 month ago, 1 quarter ago?
Stretch it.
A year ago?
Stretch it.
क्या बात है? तो नहीं करते हो?
No, I think it's been 7-8 years since I did it all.
So you've not addressed everybody at once?
No, I have
in
not.
7 years?
I just maybe I think the 7-8 years ago town hall was also something that I was forced to. I mean, bad time. I had to really put things back in shape, but I just cannot. I do Slack town halls. तो chat पे करता हूँ मैं town halls. Like so, one message and people like reply to them. Threads में बनते हैं and then next message. I do town halls on text.
The reason is stammering?
Yes. I just cannot. I mean, there's too much effort. Stage, public presence. It's just not my thing.
Interesting. And for investor pitches?
Investor pitches, तो they're one-on-one. It's cool. चलता है.
अच्छा, that you're fine with.
One-on-one.
Was there any point जहाँ पे एक investor pitch करी and because of your stammering you felt nervous and शायद वो deal चली गई या somebody pointed that out?
Not really. Maybe people chose to not invest in Zomato because of that. Maybe, I don't know, because they would never tell you on your face, right? But I didn't feel that.
But have you ever felt कि एक room में हो और you want somebody's, maybe you want a client or you want investments, and उस time पे you sensed कि इनको मेरी ability पे doubt है कि मैं शायद इतनी बड़ी team inspire कर पाऊंगा, lead कर पाऊंगा?
नहीं, ऐसा नहीं मेरे दिमाग में कभी नहीं.
You've never felt it?
Never felt it.
Are there words जो अभी भी बहुत difficult होते हैं, stutter करते हो जिस पे?
It's very random. I just like कुछ syllables पे I would stutter, like this, like double L's, like something like that, like so.
अच्छा, ऐसे list नहीं कि ये word
नहीं है,
ऐसा नहीं बोल सकता, for नहीं बोल सकता, ऐसे कुछ नहीं.
ऐसा नहीं. And on a good day I can talk about anything. So it's not like it's a chronic कि ये structural issue नहीं है, mental issue है.
Have you tried to fix it?
I'm done fixing it. If I try to fix it, it also means that I have to tell myself that I'm still bothered with it. So I've just stopped telling myself that I'm bothered with it. So I just moved on.
But कभी ऐसे नहीं किया? बहुत सारे founders और public figures, celebrities, वो classes जाते हैं, doctors के पास जाते हैं, stammering के exercises करते हैं to improve themselves. All of that, was that a part of your life ever?
ज़रूरत नहीं पड़ी. And I think that also made me learn how to write really, really well. So I think what I lack for in terms of being able to talk, I can more or less cover up in terms of how I write. So
fair.
चलता है.
आपने बोला कि ये it has helped you turn you into a better writer. Right? So that's but then इसके बीच में you said something कि अब मैंने अचीव कर लिया तो शायद अब लोग सुनेंगे, अब कोई फ़र्क नहीं पड़ता, मैं कुछ भी बोलूँ, whether I stammer, not stammer, doesn't care. Do you think that is something that has shaped your life? कि मैं अचीव करूँगा तभी लोग मेरी तारीफ करेंगे, तभी मुझे सुनेंगे, तो मुझे अचीव तो करना ही है regardless.
I think so. कि that was the primary factor why I wanted to do a startup, why I wanted to do a successful startup, right? And there was not कि यार अच्छा मुझे दुनिया को अपनी बात सुनानी है. It was not about that. It was about कि यार मेरा immediate social circle, the people who I wanted to call friends, they would value what I say. So what happened was way bigger than what I wanted.
What you wanted. But initially start ऐसे ही हुआ था कि मेरी इज्जत नहीं होती, थोड़ी इज्जत करें लोग, तो मुझे अचीव करना है.
In hindsight मुझे ऐसा लगता है. But उस वक्त मैंने I didn't know with clarity कि ऐसा क्यों कर रहा हूँ.
Maybe you knew ना, क्योंकि एक क्लास में एक बार आप चीटिंग करके टीचर के साथ आप थर्ड आ गए and you did some whatever you achieved and उसी दिन उस टाइम पे आपकी गर्लफ्रेंड बन गई, दोस्त बन गए, घर में तारीफ हो गई. सो यू गॉट सम वैलिडेशन ना कि अचीवमेंट से तारीफ होती है और लोग सुनते हैं तुम्हारी बात.
हाँ, बट वो भी अब मैं हाइंडसाइट में बोल रहा हूँ कि ऐसा हुआ था, लॉजिकल ये हुआ था, राइट? उस वक्त लाइफ वाज जस्ट हैपनिंग. आई डिडंट कॉन्शियसली थिंक कि ये करना है, क्यों करना है, मैं ऐसा हूँ, मैं इसलिए ऐसा करूँ. आई थिंक यू गाइज नो, your age generation knows this a lot more about yourself. At our age we knew nothing about ourselves when we were 20s, teens. Nothing, zero self, कुछ भी नहीं होती थी awareness.
Even we know jack shit about life. We are just better at pretending. We're just trying to make sense out of our life, but
at least not. You know words like anxiety, but we didn't even know words like that back then.
You know, there's a research कि really big public figures and celebrities and founders जो stammer करते हैं, उनको social anxiety होती है कि लोग मेरे बारे में क्या सोचेंगे और मुझे कैसे जज करेंगे. Do you think it's true in your case? No? कभी सोचते नहीं हो कि लोग क्या सोचेंगे मेरे बारे में?
मतलब ठीक है, सोच लें.
तो इससे लेना देना नहीं.
Fine. Yeah.
But okay, so stammer has nothing to do with anxiety.
No.
It's just been there forever.
It's just been there forever, and I've just like consciously avoided being in situations where the nervousness of that stammer would make me fall sick, for example. तो मतलब I have sometimes said yes to conferences कि अच्छा मैं आ जाऊँगा, feeling brave, and then 2 days before I used to fall sick. Okay, this was my body revolting against that thing that I had to do 2 days from now. So now I just like stopped saying yes to anything. I was like, क्यों करना है, छोड़ो.
So when you were a kid, non-achiever, किसी को कोई मतलब नहीं, कोई सुन नहीं रहे, छोटे हो, बुली हो रहे हो रोज, घर वाले भी sort of package में part बना रहे हैं, right? What was going on in your head? What used to go? What do you think? कि उस टाइम पे क्या चलता था? मैं useless हूँ कि मैं फोड़ के दिखाऊंगा?
Yaar, I don't think, as much as I know, I don't think that I have ever thought about the long term. I have always been focused on the next day or the next week. So which also comes down to building companies.
Okay.
तो मतलब अगर आप मुझसे पूछोगे Zomato की next 10-year vision क्या है, I don't know. So we are very much focused on these are the problems we need to solve. Let's just solve them. तो
बचपन से ऐसे हो?
बचपन से ही 1 week ahead देखा है मैंने, उसके आगे नहीं देखा है.
And do you feel inferior अभी?
In what sense?
In any sense. Have you ever got an inferiority complex that maybe I'm not good enough, maybe someone's better than me?
Imposter syndrome तो चलता रहता है.
क्या होता है? Explain imposter syndrome for you. What is it?
Imposter syndrome is like कि you got here. Were you actually good enough to get here, right? So, or because you know whatever you do, success किसी का भी होता है ना, तो there is like a huge element of luck in it.
Yeah.
Like you can't dissociate luck from anybody's success.
Agreed.
People don't like to say that, but that's true for everybody. So when you consciously think of, oh, I got lucky in so many places, and then you get all the like credit for building this, it sometimes feel like थोड़ा सा dystopian सा लगता है कि यार ये मैच नहीं कर रहा है ये सब कुछ.
Tell me one place where you think in hindsight कि जहाँ पे you have gotten absolutely lucky, one incident.
I think that my introvert nature, and this all like comes with like me stammering, Asperger's, ये सारा कुछ, like the combination. I have a very like introvert nature. I think I got extremely lucky with that. So
क्यों? Why do you think it's feeling of? Why is it a feeling that कि ये बहुत अच्छी luck है यार कि मैं introvert था, मैं bully हुआ, वाह. ये कैसी feeling है?
हर चीज के pros and cons होते हैं. I think so the kind of connections or relationships that I've had with people, right? So they run very deep. So like Zomato is a system built on trust. Right? So the people trust me, I trust them. So I mean the kind of rapport we share is not something that you see in companies. So and that comes from me being just me, right? So and that introvert nature, like I open up very easily. Vulnerable होने में it doesn't take me that much effort to be vulnerable in front of anyone. So and that builds bonds, and those bonds last forever. So I think I've been very lucky with that around me.
True. Do you think your father in the beginning when you started Zomato, उन्होंने आप पे ट्रस्ट किया होगा कि यार ये तो कर लेगा कुछ, कि नहीं उनको डाउट ही होगा?
So when I quit my job, he actually sent me 2 lakhs, which was almost all his savings, to let me run this business.
Okay.
None of us knew उस वक्त startups क्या होती हैं, valuations क्या होती हैं, no idea, right? So and like अच्छा कुछ करने की कोशिश कर रहा है, करके देख लेते हैं, बेटा है, okay, if I don't back him, who else would I back, right? So I think he had, and it must have been a mix of confidence and fear. I don't know.
बट कभी उन्होंने ऐसे बोला है कि यार इतने एम्बिशियस नहीं होते, इतना मत उड़ो तुम, बिकॉज टीचर थे वो, राइट? तो टीचर के लिए ये सोचना और कॉम्प्रिहेंड करना कि मेरे बेटे ने एक अच्छे IT में गया, बहुत बढ़िया जगह नौकरी मिली, और वो छोड़ के ये क्या मेन्यू कार्ड स्कैन कर रहा है.
आई डोंट थिंक मैंने बताया उनको भी मैं कर भी क्या रहा हूँ और क्यों कर रहा हूँ.
अच्छा.
तो ही वाज लाइक अच्छा कुछ कर रहा है. एंड देखो माय मॉम एंड डैड have probably like have had restaurant food 20 times in their life. Correct. So they didn't even know this space, like they don't understand this. So they're like ठीक है कुछ कर रहा होगा, it's fine.
And how was your relationship when you were a kid with them? Mom के साथ, dad के साथ?
Yeah, I think so. I actually got out of home when I was 15 years old.
Okay.
So 15 years old and 10+1, 10+2 hostel. So I've been disconnected since forever. So we as a family are connected. We are close, but we're not like रहे नहीं साथ में, हम अलग ही रहे हैं तब.
Does it bother you?
Never have the time to think about it here. I actually don't think about these things. It's like अभी क्या काम है, करते हैं, काम खत्म करते हैं. I'm very much focused on the now.
Mom, dad अब साथ में रहते हैं?
They live very close by, so.
Okay, so you keep visiting them.
I keep visiting them.
And you never think कि maybe साथ में रहते तो ज़्यादा अच्छा होता, नहीं होता, all of that?
Me and my dad can't put up with each other.
Why? Tell me this.
I mean, the apple doesn't fall very far from the trees. Siddhi मैं भी हूँ, वो भी है, and you put us in the same room, like if we have a difference of like opinion about something, it just like blows up. So
tell me an incident जहाँ पे हुआ लड़ाई कर ली दोनों ने.
It's very simple things कि this was couple of years ago. ये गाड़ी क्यों ले ली, तू पैसे बहुत करता है खर्च. I was like पापा ले ली, मन किया था, I was having a bad day. You had a bad day और तूने 3 करोड़ की गाड़ी ले ली. तू पागल हो गया, तू निकल जाओ तू यहाँ से, मेरी शक्ल मत दिखा. And he's like got like furious at it, and then I also got furious first, and then I hugged him. It's cool. It doesn't matter. Chill. The car will sell for the same money whenever it wants to.
That's you making up shit. It's not going to sell for the same price.
More or less. You have to make up shit also.
So even today he has these problems.
Yeah. I mean,
तो अब तो बेटा मतलब इतना बड़ा हो गया, इतने पैसे कमा रहा है, तो 2-3 करोड़ से फर्क थोड़ी पड़ेगा.
I think it's about the mindset, and I also still have that mindset. मैं पैसा फेंकता नहीं हूँ, more or less. तो
nice. What is one thing जहाँ पे फेंका हो पैसा?
I think the only place जहाँ पे I really feel that I wasted money is buying cars.
क्यों?
I don't drive them. They're just those like childhood dream of buying toys. तो having a bad day, emotionally ups and downs चलते रहते हैं, right? So sometimes you're feeling vacuum, and then I buy them. Luckily, cars also sell for almost the same price. These ones.
The cars that you buy.
No. So sometimes more than the price.
Because rarely.
Yeah.
कभी ऐसा हुआ है कि okay, forget कैसा हुआ, ये बताओ. Tell me a low day जहाँ पे you were feeling something, and what were you feeling जिसके से कार खरीद ली?
I don't remember. I would not have that memory.
You know, people say that कि जिनको बचपन में ऐसे किसी चीज़ के लिए प्रेस किया जाता है for XYZ thing, और उनको बताया जाता है कि तुम कितने बढ़िया हो, अचीवमेंट बेस्ड लव इज़ अ थिंग, और फिर बाकी टाइम उन्हें लव नहीं मिलता, सिर्फ अचीवमेंट पे लव मिलता है. दे एंड अप ग्रोइंग अप वेरी रिच, वेरी सक्सेसफुल, एंड बीइंग वेरी एम्प्टी. कोई भी चीज़ सॉल्ट ही नहीं करती, वो बस नेक्स्ट चेज की तरफ ही भागते रहते हैं. डू यू थिंक यू आर लाइक दैट?
You can say I used to be like that.
Okay.
But I have enough acceptance and love in life. I mean, I have had phases of it. तो कभी आता है, कभी जाता है. But अभी right now I'm happy.
Right now there's nothing which is interesting. Okay. And talk to me about that day जब आपने चीट किया एक टीचर के साथ. Did you feel कि यार ये चीटिंग से मैं थर्ड आ गया तो चीटिंग इज ओके इन लाइफ? as long as it's making me win.
I don't think I got to that point. So it was very funny. I fully remember the visual. मैं कौन से एग्जामिनेशन हॉल पे लेफ्ट से तीसरी सीट पे राइट पे बैठा था, अब क्या हो रहा था. आई करेक्ट लाइक विविडली फुल्ली रिमेंबर. एंड आई हैव नो आइडिया व्हाई दैट टीचर हेल्प मी आउट. आई हैव zero clue. It was out of the blue. That guy helped me, and he left after a couple of months. He was on transfer, right? So, and then he left, and so my dad always, like, you know, government job. So he always used to keep fighting against corruption, etc., etc. So I've grown up with values.
So morally righteous,
morally very, very righteous, and so I never turned towards a point of कि यार cheating करना okay है, right? But for a moment, out of desperation, I tried to cheat the next time myself consciously, because पहली बार भी मैंने नहीं cheating करी थी, किसी ने करवा दी थी. So second time I tried to cheat, I couldn't find a way to find a question paper, anything, right? So and then somehow last minute I could get to a decent place, and then it's like, okay, this is the kind of effort it takes to score well. It wasn't, my learning wasn't even back then was that, okay, it takes less effort to score well. I think that would be stupid to say that. It's not about less effort or more effort.
Okay.
It is about the right kind of effort. कैसे फोकस करोगे, फंडामेंटल्स पे जाके समझ लोगे तो सब कुछ बिल्डअप कर लोगे बाद में, राइट? So I think that was what I sort of softly learned.
Agarwal Packers and Movers Limited. Man with the cap. Now 300.
नफीस जी 45 साल की उम्र में हार्ट अटैक से अचानक चले गए. टर्म लाइफ इंश्योरेंस के पैसों से उनके बच्चों की पढ़ाई में सहारा मिलेगा. पॉलिसी बाजार ने क्लेम के वक्त फैमिली का पूरा साथ दिया. पॉलिसी बाजार पे 1 करोड़ का टर्म लाइफ इंश्योरेंस सिर्फ 400 रुपए महीने से शुरू.
Next category is Science Icon of the Year.
And to give away the award, we'd like to invite
Adya Ajay Singh, Vice Chairman, Darwin Platform Group of Companies.
Aishwarya Shinol, the Head of Marketing, Hindustan Pencils.
Awardee is G. Madhvi Lata.
Moving on now, our next category is Climate Impact of the Year.
To give away the award, we'd like to invite on stage
Ram Agarwal, Full-Time Director and CEO, ProStar M, one of the leading companies engaged in the manufacturing and supply of power solution products in India.
And the winner is Manvendra Singh Shekhawat.
Punjab government, foremost in public welfare, campaign to enrich youth through libraries. The Punjab government has taken a far-reaching decision to build modern libraries in the villages of Punjab in order to inculcate the habit of reading among the youth. The aim is to bridge the gap in the level of education and general knowledge in the rural areas. Since the inauguration of the first village library in Isru in Ludhiana on 15th August 2024, 275 modern libraries have been opened and 58 more are under construction.
घर कई बार माहौल नहीं बनता पढ़ाई का, सिटिंग नहीं बनती. इतने सानू ये फायदा है कि जो इतने असीं आउने आ, खास तौर ते कुड़ियां एक गल दस रही सी कि असीं 4-4 5-5 कुड़ियां इकट्ठियां होकर इत्थे आ जाने आ. तां सिलेबस दी किताबां सानू इत्थों भी मिल जांदियां ने, घरों भी ले आउने आ, तां साडी सिटिंग बन जांदी है इत्थे.
Each library costs about 35 lakh rupees and offers books on literature and diverse topics, besides those related to competitive exams. These modern libraries offer services like Wi-Fi, solar backup, digital, and analog resources so that the youth can connect with the world of knowledge right in their villages.
मैं इस लाइब्रेरी में डेली आती हूँ 7 से 8 घंटे के लिए पढ़ती हूँ। मुझे यहाँ पर आना बहुत अच्छा लगता है क्योंकि यहाँ का वातावरण बहुत अच्छा है। मैं और मेरी जैसी जो लड़कियाँ घर पर नहीं पढ़ पाती थी वो यहाँ पर आकर पढ़ सकती हैं।
यहाँ सारी किताबें मिल जाती हैं जो कंपटीशन के एग्ज़ाम की तैयारी के लिए ज़रूरी होती हैं। यहाँ का इंफ्रास्ट्रक्चर बहुत ही अच्छा है और यहाँ पे वाईफाई भी लगा हुआ है। अगर हम पढ़ना चाहें तो अपने फ़ोन या लैपटॉप को वाईफाई से कनेक्ट करके ऑनलाइन भी पढ़ सकते हैं।
The Village Libraries project is not merely about constructing buildings. It's a campaign for the intellectual and social rejuvenation of rural Punjab. Punjab government foremost in public welfare.
माही कोई कूल बैंक सजेस्ट करो ना जो सोशली कॉन्शियस हो।
फिर तो SBI कूलेस्ट है।
Really?
SBI ने होनहार बच्चों को स्कॉलरशिप्स दी, गांव के यूथ को ट्रेन किया, स्पेशली एबल्ड को सपोर्ट किया, विलेजेस को अडॉप्ट किया।
That's so cool, man.
SBI, the banker to every Indian. Truly.
Right, our next category is Actor of the Year Female, and to give away the award we would like to invite Dr. Payal Kanodia, Chairperson and Trustee M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janvi Kapoor.
Well, our next category is Director of the Year, and to give away the award, we would like to invite Mr. Mayank Agarwal, CEO, Gallant Group. Gallant Group is a conglomerate with a diverse portfolio spanning steel and cement manufacturing.
The Director of the Year award goes to Neeraj Gewan.
To give away the first award of this evening, we would like to invite on stage
Sachin Seth, Chairman, Griff Highmark Credit Bureau. Sachin brings nearly 3 decades of global experience in fintech, digital and tech.
Award goes to Ahan Pandey.
Good evening, I'm Ramoza. Tonight on The Big Question, we're asking here on NDTV Profit about these big deals in the entertainment sector. We're talking about Dharma and Bansal and XL, all of them laying out the red carpet, as it were, for corporates. So are legacy Bollywood studios going corporate is the question we're asking, because something fundamental is changing in Bollywood, and it's not just about box office hits or star power anymore. It's actually about stakes and structure and scale. And yes, there is serious money that we're talking about. So let's look at the deals that we are considering for this discussion. In October 2024, Karan Johar has sold half his stake in Dharma Productions. 50% of Dharma Productions has gone to Adar Poonawalla. And this is a 1,000 crore rupee transaction. It values one of Bollywood's most influential studios at 2,000 crore rupees. Not a distressed sale, at least that's what Karan Johar says, but it's a bid for growth, for global platforms, for big budget franchises and multilingual scale. Then what happened? Besides the Dharma Productions deal in December 2025, Saregama stepped into Sanjay Leela Bhansali's world, and they've committed 325 crore rupees. They're locking in exclusive music rights for this, for all future Bhansali films. A roadmap to potentially take majority control by the year 2030 has been laid out. So it's a clear bet over here that Saregama is making on IP. Not just individual films, but there is IP, and we're talking exclusively about music a lot when you talk about these deals. And we'll come to that. Now, in the very first month of 2026, in January, the big news. Universal Music Group is picking up 30% of XL Entertainment. The consideration over here is 800 crore rupees. It links Farhan Akhtar and Ritesh Sidhwani's creative engine, which is XL Entertainment, now to one of the world's biggest music companies, and that is Universal. So this deal spans films and digital and publishing, and yes, again, music dedicated new music label as well when it comes to this deal between Excel and Universal. So 3 iconic names, 3 very different deals. One common thread though, which is corporate capital moving decisively into Bollywood's living room. So why is this happening now is the question. Is it because the business of Bollywood itself has changed? There are fewer theatrical releases. There is uneven box office outcome. The rising production budgets, and we know about the star power and the kind of budgets that those require. And also the costly short-term borrowing that has gone up, and which is why perhaps we're seeing this phenomenon. Is it because OTT platforms have altered our viewing habits? Regional cinema continuing to punch above its weight. And there is, this is all about forcing Hindi studios to rethink scale and risk and reach as well. And of course, the contradiction, which is worth looking into, if the box office is bouncing back, going by the way that films like Dhurandhar and Sayyara and Chhava and Kantara, all of these films, how they've done, then why the rush for corporate capital? Now that's a legit question as well. So is volatility rather than volume now the real problem? And is that what's making informal financing uncomfortable? So when Karan Johar says, I will always be artistic, but it is important to be commercial, is that just personal honesty or a broader signal that profitability has become a prerequisite to do business? It's not a choice for Bollywood's future. And zooming out even further, now the question is also whether Bollywood is simply following a global playbook where legacy studios are being absorbed by platforms. Yes, very specific reference to the Netflix bid for Warner Discovery. It's quite clear that IP has become king and data is driving decisions, and entertainment is no longer run on handshakes, but now will it be run by boardrooms and balance sheets is the question. And that's what this debate is about. Joining us to take these on, let me introduce you to our panel tonight. Shivashish Sarkar is joining us. He's president of the Producers Guild of India. Along with him, we have Karan Taurani joining us as well. He's EVP at Elara Capital. Great to have you both, gentlemen. And a bit, we'll have more members in our panel. But Karan, I want to begin by asking you, why are we seeing so much corporate involvement in Bollywood now? Is it because there is financial distress or there is this aspiration for global growth?
Hi, Vikram. I think film business is just like any other business. End of the day, it's about profitability. It's about making money and ROI. Over the last 2 to 3 years, we have seen many films struggle because in terms of cinema and box office, these films haven't done well or scaled up. So I think one very big reason is that films have to make money, have to make ROI, and they made hefty losses. So this actually gives them access to a lot of deep pockets in terms of corporate capital. What is happening also from a customer standpoint in the post-COVID era, you are seeing a change in preference. Consumers are not going to watch small, medium budget film content on cinemas. They are only watching large scale content. Now, this large scale content is made at a hefty cost. It involves big amount of budgets, which maybe the small production houses cannot raise that kind of capital. So to kind of diversify the risk, it's very important for them to go to the corporate way and actually tie up with larger, companies, MNCs, or larger corporate conglomerates to actually have the deep pocket situation here. That's the first thing. Second thing is that films are going on OTT platforms. Earlier, back in the day, the share of revenues for a particular film was extremely high from cinemas when the film would do very well on box office. But nowadays, you are getting a higher share from OTT platforms in case the film doesn't do well in cinemas. So the dependence on OTT platforms has kind of increased for these films, and that is not working in their favor. So there are certain films which go directly on OTT platforms, but there's a certain cap in terms of monetization what these films will make. In terms of cinema, there's no cap on monetization because OTT platforms won't pay beyond a certain point in terms of premiums or digital rights. A third very important trend to note here is that there's a scarcity of music content. So many of the music labels are not able to bid for films because the number of films releasing has actually come down. And within that, the successful films have also come down. So when music labels go and bid for acquiring music rights of these particular films, they have to pay a hefty premium. So to balance that factor out, it makes more sense for music labels also to kind of come into this business. And last but not the least, we are talking about scale, distribution at a very large scale. Hindi box office, as you clearly see, it is dominated only by the Indian markets. Our global share is less than 10%. So these kind of partnerships will enhance the scale of the films and will also enhance distribution models globally and also scale up the global Indian box office revenue as a whole.
So that is the aspiration, and you've laid out the factors. Prahlad Kakkar is also joining us, adman, and of course someone who's tracked the media world so closely. When you consider the way the legacy production houses have moved over the years, and yes, it has been concentrated, Prahlad, to a large extent on star power. That model seems to be crumbling or not delivering the way it used to. Is that the primary reason why we are moving towards corporatization? Because now we need to not spend so much on our stars and ensuring that there are 20 vanity vans serving them and all of the costs involved over there. Is that the primary reason, you think? Because there is a shift that is palpable right now with 3 big deals getting cracked.
No, I don't think so. I think it's basically because there's a lot of threats. The Hindi movie industry as such, regardless of the fact that the couple of films that make hits, the fact is that 70% of all films made are flopped. And that 25% of those films only recover their money. 5% of the films made are actually hits. So when you look at ROI and look at it as a business model, it becomes very difficult for a private label to sustain that kind of activity without understanding that it's all about content and not about stars. And because they're doing that and because they can't afford it, they are now looking at diluting their equity to corporates who are dying to get into the business of the romance of entertainment because they think that it's lucrative, it's interesting, it looks so much more interesting from outside than it actually is. You know, so once they come in, like they did in the past, a lot of corporates came into the thing, had their hands bitten and went off and immediately left the playing field. This is a similar thing. The point is that creative control, who is going to have that? Everything depends on who has creative control. Now look at Adi Chopra, for instance. He has complete creative control of everything that his company makes. And his company is one of the few that has actually kept its head above water. Because the guy who understands the business is in creative control.
Correct.
As far as the distribution and everything is concerned, those are logistics.
Correct.
You know, and they make money, and efficiencies of corporate factors will actually make them better and more efficient.
So why were the others not being able to do that? It's a logical question. If YRF was able to crack that code and become a corporate studio of sorts, then why were the others not able to reach that?
Because they didn't have complete creative control over everything. They were selective about creative control. And they probably didn't have the kind of instinct that Adi has over how markets are changing and what the market demands.
Right. So that instinct does corporate India now bring to the table? Shivashi Sarkar, how is it fundamentally likely to change? Is that going to happen? Because instinct is something that is fundamental to people who've been part of the industry. And we're talking about certain stars as well. So, and they've led production houses, and Amir Khan Productions, even a Salman Khan Films and Ashutosh Gowarikar. All of these are filmmakers who've led production houses. Now, how does this shift happen? If these are the ones with the instinct, what does India Inc. really bring to the table that is going to change that entire game?
So, first thing first, that my point of view is that this is not happening for the first time here. If we just trace back few decades, we have seen corporatization, and the corporatization is probably, I think here we are more talking in terms of bringing in institutional capital into the industry. And the corporatization, the culture and system and process can be a different part of discussion altogether, right? So I'm not mixing up the both. We have seen in the early 2000 and subsequent next few years, companies like UTV, companies which got listed, then Disney picked up. We have seen Raghav Bell starting film businesses, which finally went pivoted into Viacom and now the part of Jio Studios. We have seen Jio Studios as a large organization which has invested there. They have multiple labels. Of course, there's a Jio Studio as a label. They have invested in Dinesh Vijan, in Maddox. We have seen investment in Balaji in the last few decades. Of course, last 1.5 years, 3 very interesting deals which happened. And I think this is all for good at the end of the day. I completely agree with Prahlad that this industry or this business, unlike many other business, needs a balance of creative and commerce. You can't run it like only a creative-driven organizations without necessarily a focus on where the commercial end is ending up with. At the same point of time, it is not a transaction. It is not like another FMCG or white goods or another manufacturing business where you can deal with completely like a transaction-based focus. So that balance is very important, and it is not easy to have that balance because everybody probably strives to have that balance.
Yes.
I feel that the examples what you gave, like Wires is a great example. I mean, there will be very few organizations like that across the country who have been able to maintain that balance. But bringing in institutional capital, bringing in fresh money, which is all for good because the business will be scalable. The box office definitely has been doing better. India's box office in compared to the global box office, if it takes many other countries, like even in compared to US or many other countries, our footfall is in a much better position in compared to pre-COVID to now.
Right.
So I think these are the great signs.
So you think they are great times, but here we are seeing, Karan, and you pointed out music, but whether it's music or talent management or distribution, now these are the important legs on which some of these deals are getting cracked. And music especially, you're not looking at it film by film, but it is actually music as a whole. If you consider this deal as well with music rights, the Bhansali Saregama deal, it's a particularly music deal. It's not a film deal. Saregama is buying music IP over here, which is monetizable across streaming reels and live performances and catalog licensing as well. So it is a deal. Even the Excel Universal deal is building a dedicated Excel Music label. So there is this specificity to how you're approaching films, and you kind of breaking it up over here when it comes to distribution and talent management and very importantly music, like you pointed out.
So I think there's a very big strategic shift. Every production house today has got its own music label. So take the example of Yash Raj Film, take the example of Z Studios, which has got its own music label, even Sony for that matter. Or there are music labels in the likes of P Series and Tips Music, which have got their own production houses. So I think there's strategic importance here where production houses and music are somewhere coded and linked to each other. And the point I made earlier is that there's a scarcity of the number of films being produced here. And within that, there's a scarcity in terms of the films doing well, or large-scale films rather. So because of which the other music labels, which don't have any alignment to a production house, are finding it tough to buy this kind of content, or they are paying a very hefty premium. So this will kind of rationalize the prices as far as music content acquisition is concerned. And as we all know, music is a very big strategic factor which drives success of any film, right? So in the case of films, if you see footfalls, when the initial box office or the opening happens, if the music of the film does well, you do see good numbers in terms of opening, right? So I think music is of strategic importance, and 15 to 20% of your cost rather is coming from the music cost in terms of the production cost and talent cost, everything put together. So because of this, there is a shift which is happening wherein music labels and production houses are both getting aligned on a strategic basis.
And what about talent management, Prahlad? It's turning out to be a big deal as well. You talk about Dharma, they've acquired their talent JV and they're rebranding it as Dharma Collab Artist Agency. That move towards owning talent relationships and influencer IP, endorsements, the digital first creators, the brand collaborations. How big a part do you think that's going to be about this entire move towards corporatization of Bollywood?
Potentially, it's huge. But the problem here with the industry versus the corporation is that corporates don't have a single creative bone in their body. The production houses have the creative instincts to be able to judge what might work, what might not work. But it's also a fluke. Okay, so they are not also completely bulletproof or foolproof. The problem with the industry is that they're completely indisciplined. So they don't bring in films in the budgets that they're supposed to at the time that they initiate them. They initiate a film for 50 crores with a storyline and a star cast which is recoverable. And the film goes into 150 crores. How the hell is it going to be recoverable after that? So there's complete lack of answerability and discipline as far as the industry is concerned. There's complete lack of creative intuition as far as corporates are concerned. So hopefully corporates will bring some discipline into the whole business and make it into a contractual business so people can't just play ducks and drakes with dates.
Of looking at it, and Shubhashish Sarkar, maybe you can weigh in on this, because when you talk about corporatization, you're talking about ease of finance, and one can say that once you have that, then it sparks creativity, or sometimes then commercial compulsions come into play, and that would essentially mean that creativity gets squeezed. So when you're talking about instinct over here that Prahlad is alluding to, what happens with corporate capital entering Bollywood? What does the process of filmmaking, what kind of changes does it go through?
The sensible corporate capital will always enter this industry with the buy-in of the creative leaders. If this business, unlike many other businesses, cannot be driven only through capital infusion systems and processes, I completely agree with Prahlad that ultimately it ends up with a gut call of the creator. You build in systems, you build in process, you build in budgetary disciplines, which by and large, honestly, I mean, I slightly disagree with Prahlad that last 25-30 years, I think the industry has moved a lot towards from the time when I have seen to now. But by and large, the industry works towards the setup goals, and we have all learned these practices. We have learned these practices from the platforms, from the corporatization, from the systems processes. All the global studios at one point of time were in India between Fox, Disney, Universal, Sony, all of them. So there's a lot we have also learned in the last 25-30 years. But this business can never be, the capital can never replace the creativity. There has to be a balance. While there has to be a discipline of that creativity, that it does not cost, that the creativity also should not be completely uncharted journey, that there is no boundaries or no parameters.
Yes.
At the same point of time, you can't replace creativity with the capital, because this is the peculiarity of the industry. And I mean, your leader has to be a creative leader, supported by the best capital, best resources, and best scalability opportunity.
What about building that distribution network? We're talking about creativity, we're talking about music rights, but the distribution part of it, because we're trying to achieve global scale. Karan, what's your take? Because I was seeing that Dharma, their stated goal after the Poonawalla investment includes building this independent distribution network. So there is a lot of value in that, which is a direct challenge to that old studio exhibitor kind of model that we had. That dependency between studio and exhibitor, that perhaps is going out of the window. What replaces it now with corporate interest in Bollywood?
So there have been studios in the past who have dealt directly with the exhibitors rather than dealing with distributors or some kind of agencies which actually they attract hefty amount of commissions. And that is a strategic change which is there. I think another thing to watch out is the Netflix Warner deal. How will that pan out? Because there could be windows actually coming down in terms of the films from going from theatrical to the OTT platforms, which is currently about 8 to 12 weeks today for Hindi and English films put together. There could be a certain amount of disruption there. Another important point is that 80 to 90% of box office in Hindi today is dominated by large budget films, right? As I said earlier, there are 12 to 13 films which dominate the box office, and this dominance is only increasing in the post-COVID era. So this gives ample amount of runway or leeway for the companies to invest into high budget franchise films, because the audience today has become very demanding in terms of what they want to actually watch in cinemas. They are not just going and watching any particular film in cinemas the way they used to earlier. There's a behavior shift over here. And last but not the least, I think many of these companies, for example, Universal Music, or for example, in Saregama for that matter, you will see a lot of shift happening in terms of the way these films are distributed globally because of ample amount of capital. Because most of these films do require capital to promote the film. So first step is to kind of create the nature of content which doesn't appeal to the Indian audience, but also globally. The audience has to be, this film has to be accepted globally by the audience. And the second is distribution costs, doing proper marketing, promotions, everything put together, which will actually happen because of the deep pockets of these larger conglomerates and studios.
They have deep pockets, there's no taking away from that. So Prahlad, 5 years from now, where do you think power centers in Bollywood are going to be? Are they still going to be with filmmakers? Because you still have the stars holding some of those production houses. I don't know if you're going to see a quick shift over there, but 5 years from now, will it still sit with them, or are films going to be decided in boardrooms and based on balance sheets?
If it's so, if the films are going to be decided in boardrooms, the whole pack of cards is going to collapse. And we'll be back to square one, like we were. I mean, we started the corporatization of Hindi movies 5 years ago, and it failed miserably. I mean, the corporate people didn't have a single bone in their body which understood what was good cinema, what was bad cinema. They just understood a formula. And formulas are not working anymore. Audiences are not consuming formulas. They are consuming original content. And that also of an international scale, because they've been exposed by OTT to so much international cinema that the tastes have become better. They're no longer into the song and dance and running around trees and everything piled into one.
Yes.
And illogical kind of thing. Down to have strong storyline. Without strong storyline, there is no film. So the point is that I'm very skeptical about this corporatization business because I don't know where the line will be drawn. Who will have creative control?
So the very fact that you're saying that OTT has so much of a say and so much of power to be able to decide the course that Bollywood takes in the future, yes. And we're talking about an important deal that Netflix has probably got in its hands. We'll have to keep tracking what happens with their entire bid for Warner Discovery, and that perhaps is going to change the game, as it were. So if you zoom out that much more, but what's clear from this is that Bollywood is not abandoning creativity. It is rewriting the business of creativity. So corporate capital is moving in. It is happening. The industry is shifting towards IP, and there is scale and profitability and global reach that we can expect. But the big question is no longer whether money is going to shape movies, but how much control it's going to have over the stories that are told. My thanks to our guests for joining us, Shubhashri Sarkar, Karan Taurani, Prahlad Kakkar. This is going to be an ongoing discussion, and we'll keep circling in for more of these. But thanks very much for your insights tonight. And that's about all we could pack into this edition of The Big Question. The questions keep rising and we try and find you answers. But for the moment, from me, Vikram and the entire team, good evening.
जब विकास जी के लिवर का ऑपरेशन हुआ तो पॉलिसी बाजार की टीम ने हॉस्पिटल पहुंचकर 50 लाख रुपए का क्लेम अप्रूव करवाने में पूरी हेल्प की। पॉलिसी बाजार पर 1 करोड़ का हेल्थ इंश्योरेंस सिर्फ 550 रुपए महीने से शुरू।
एक नए भारत की शुरुआत, a healthy nation, a healthy India. Possible with one simple habit, hygiene. Dettol बनेगा स्वस्थ इंडिया, unites us all.
लेकिन ये जिम्मेदारी किसी अकेले की नहीं, हम सब की है।
क्योंकि जब हाइजीन बनेगी हर घर की पहचान,
तभी तो होगा एक स्वस्थ और विकसित भारत का निर्माण।
I am the change.
I am the change.
I am the change.
I am the change.
70-75 वर्ष के हम ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को अधिकार दिया गया उसके नाम पे जमीन करने। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
To give away this award, we'd like to invite on stage Rajiv Memani, Chairman and CEO at EY India and member of the Indian of the Year jury, and
Mr. Rohit Khanna, Head Corporate Communications, and Jatin Khanna, Head Corporate Development, Raymond Group. As Raymond celebrates its centennial year, it has been a custodian of craft style and a pioneer in India's journey from fiber to fabric and fashion.
Hi, Disruptor of the Year, Sridhar Vembu.
Right, our next category is Actor of the Year Female, and to give away the award we would like to invite Dr. Payal Kanodia, Chairperson and Trustee, M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janvi Kapoor.
Rangla Punjab means more than just development projects. It is a vision to bring back a Punjab that is healthier, drug-free, greener, more educated and truly developed. To turn this vision into reality, the Punjab government, under the leadership of Chief Minister Bhagwant Singh Mann, has launched the Rangla Punjab Society. This unique initiative brings together non-resident Punjabis, which are NRIs, local citizens, corporates and well-wishers to directly participate in building a better tomorrow for Punjab. The core of Rangla Punjab is transparency and public participation. Every contribution goes straight to verified high-impact projects without any middlemen or political interference. These funds are used to strengthen healthcare, improve education, upgrade sanitation, power and water facilities, build better roads, support agriculture and boost rural development, all with the aim of making Punjab cleaner, safer and more livable.
ਰੰਗਲਾ ਪੰਜਾਬ ਜੇ ਬਣਾਉਣਾ ਉਹਦੇ ਵਾਸਤੇ ਸਿਹਤਮੰਦ ਪੰਜਾਬ ਪਹਿਲਾਂ ਚਾਹੀਦਾ ਹੈ 96 ਤੋਂ 97% ਲੋਕ ਜਿਹੜੇ ਨੇ ਉਹ ਮੁਹੱਲਾ ਕਲੀਨਿਕਾਂ ਚੋਂ ਠੀਕ ਹੋ ਕੇ ਘਰੇ ਵਾਪਸ ਚਲੇ ਜਾਂਦੇ ਨੇ ਸਰਕਾਰੀ ਹਸਪਤਾਲਾਂ ਤੇ ਬਰਡਨ ਬਹੁਤ ਘਟ ਗਿਆ
Beyond physical infrastructure, Rangla Punjab supports innovation, startups and research that create jobs, empower youth and help build a drug-free, future-ready Punjab. Rangla Punjab is not just a fund, it's a people's movement.
ਮੈਂ ਪੰਜਾਬ ਨੂੰ ਦੁਬਾਰੇ ਪੰਜਾਬ ਬਣਾਉਣਾ ਚਾਹੁੰਦਾ ਸਾਨੂੰ ਲੰਡਨ ਪੈਰਿਸ ਕੈਲੀਫੋਰਨੀਆ ਬਣਾਉਣ ਦੀ ਲੋੜ ਨਹੀਂ ਰੰਗਲਾ ਪੰਜਾਬ ਬਣਾਉਣਾ ਚਾਹੁੰਦਾ
It invites every Punjabi from villages to global diasporas to join hands in creating a prosperous, modern and people-first Punjab.
Moving on now, our next category is Climate Impact of the Year.
To give away the award, we'd like to invite on stage
Ram Agarwal, Whole-Time Director and CEO, ProStar M, one of the leading companies engaged in the manufacturing and supply of power solution products in India.
And the winner is Manvendra Singh Shekhawat.
Next category is Science Icon of the Year.
And to give away the award, we'd like to invite
Adya Ajay Singh, Vice Chairman, Darwin Platform Group of Companies.
Aishwarya Shino, the Head of Marketing, Hindustan Pencils.
Awardee is G. Madhvi Lata.
Well, our next category is Director of the Year, and to give away the award, we would like to invite Mr. Mayank Agarwal, CEO, Gallant Group. Gallant Group is a conglomerate with a diverse portfolio spanning steel and cement manufacturing.
The Director of the Year award goes to Neeraj Ghewan.
Hello, Moto.
Hello, good afternoon and welcome to Market Express. I'm Makshi Bhogna. Markets have wrapped up trade for the day and we are now bringing you a clear snapshot of what really moved the Dalal Street, the key stocks in action and also the global cues that could really shape tomorrow's session. Let's get straight to the top stories and see how the markets have fared today first. So markets were under pressure on the expiry day amid a volatile trade. Nifty has failed to defend its 26,200 level, which broader markets also underperformed, ending with mild cuts. And in terms of the sectoral trades today, pharma and PSU bank stocks have seen fresh buying, while on the losing side, oil and gas stocks have witnessed selling pressure, with oil and gas index ending with near 2% cut. And Reliance Industries is under heavy pressure on the street, plunging over 5% intraday in its worst fall since April 2025. So this sharp drop has erased nearly 1 lakh crores in the market capitalization. rattling investor sentiment, and the sell-off comes amid swirling concerns over the Russian oil purchases and also mixed brokerage actions, even as the company denies the recent crude deliveries to its Jamnagar refinery. With valuation still commanding a premium and volatility rising, Reliance's slide marks one of the most dramatic moves in recent months. Next up, we have Trent that is taking a beating on the street after a dismal third quarter. So the stock has now logged 6 straight quarters of sub 50% revenue growth, with sales per square foot shrinking and also competition heating up. So valuations remain far from cheap, even as the stock is down 41% in 2025 and 44% since joining the Nifty 50. So technically, it's deep in oversold territory, and it's below 30 and also trading below Citi's lowest target of 4,350 rupees. So with growth slowing and pressure mounting, Trent's premium story is clearly losing momentum here. Now let's look at some brokerage notes. So brokerages are divided on Trent after its weak Q3 show. UBS is maintaining a buy with a target of 6,200 rupees, but warns that there's no respite from the weaker growth trajectory. And on the other hand, Citi is saying that it stays bearish with a sell call and also a target of 4,350 rupees, flagging rising competition in the Tier 2 and Tier 3 cities. So what's the verdict here? Street remains split as Trent battles slowing growth and also mounting pressure. And viewers, Indian Energy Exchange has surged after a key development in the market coupling case. The Apple bench has ruled that it has no power to make regulations, paving the way for the CERC to act independently on the matter. And this clarity is seen as a positive for IEX, which has been under pressure amid regulatory uncertainty. Now, with the ball now firmly in CERC's court, investors are betting on a more favorable outcome for the exchanges. And it's a third straight day of losses for Swiggy as the gig worker strike takes a toll. Shares have slipped below their QIP price of 375 rupees, raising concerns among investors. An analyst estimate the strike could really dent the EBITDA by 1.4 crores to 2.8 crores, adding pressure to margins at a critical time. So with operations disrupted and sentiment turning cautious, Swiggy is facing a tough road ahead as it works to resolve the standoff and also restore stability. And MV Group is sounding upbeat on its growth trajectory. The company says that the order inflows have been consistent, with a 5 gigawatt order book translating to 8,000 to 9,000 crores in revenue. So the normal execution timeline for these projects is 12 to 18 months, giving strong visibility ahead. And MV also highlights a drastic change in solar module prices, and to stay competitive, it's moving deeper into the backward integration and expanding into the ingots and also the wafers. With a robust pipeline and also strategic integration, MV is positioning itself for the next phase of India's solar revolution. And InCred has turned cautious on Larsen & Toubro, initiating a hold rating with a target of 4,187 rupees. So the brokerage believes near-term order flow has likely peaked, with core domestic orders down 19% year-on-year. Global order inflows are also expected to dip in H2 of FY26 and FY27, adding to concerns. So InCred further flags a risk of sales growth modernization in Saudi Arabia, and this is signaling potential headwinds for L&T's growth momentum. Let's look at some brokerage notes again. Motilal Oswal has initiated coverage on Grow with a buy rating and a target price of 185 rupees. The brokerage calls Grow the #1 brokerage player, highlighting multiple growth levers at play. A structural shift towards discount brokers is driving the momentum here, with Grow's broking business steadily gaining market share. So new segments are expected to accelerate growth, while its existing customer base provides a strong foundation for the wealth management and entry. So Motilal Oswal is seeing that these factors creating a powerful runway for long-term value creation. And Citi is betting big on Divi's Lab, maintaining buy rating with a target of 9,140 rupees. The brokerage calls 2026 an inflection year, naming Divi's its top India pharma pick. So key drivers include a strong pipeline with multiple CS products maturing and also nearing commercialization, alongside a recovery in the generic segment. Citi also believes that the medium to long-term story remains intact, and this is supported by catalysts expected to play out over the next 12 months. Citi has reiterated its sell rating on LTI Mindtree with a target price of 5,480 rupees, citing an unfavorable risk-reward profile. So the brokerage has flagged a 30-day downside catalyst watch, expecting near-term pressures to weigh on the stock. Citi believes achieving double-digit exit revenue growth in FY26 will be challenging amid a slowing demand environment, and it also sees limited scope for meaningful margin improvement. Valuations, according to Citi, remains it's stretched compared to large cap peers and also closer to faster growing mid caps. And next up, we have Kotak Mahindra Bank that has delivered a robust Q3 business update, signaling strength in its core operations. The lender expects CASA growth to ease funding costs, while NIMs are set to improve from this quarter onwards. So on the numbers front, if we talk about, net advances have surged 16.2% year-on-year to 4.66 lakh crores, while the CASA deposits have climbed 9% to 2.1 lakh crore rupees. So total deposit also has grown 14.7%, which is nearly 15%, to 5.26 lakh crores, underscoring healthy traction and strong balance sheet momentum for the Kotak Bank. And Axis Bank has also reported an improved business performance in the December quarter, with advances and deposit growing faster compared to the previous quarter. Total deposit have risen 15% year-on-year, while gross advances have increased over 14%. So the bank also expects net interest margins to bottom out during the quarter, indicating potential stability ahead. The update suggests steady balance sheet growth despite margin pressures seen earlier. So overall, Q3 trends points to improving operating momentum. Next up, we have Devyani International and Sapphire Foods, and they are joining forces to create India's largest food and beverage company, with the merged entity expected to clock a turnover of nearly 8,000 crores, crossing the $1 billion mark. So management is saying that this merger will unlock the capital deployment efficiencies and also strengthen the growth capabilities, setting the stage for a dominant presence in India's QSR space. Next up, we have L&T Finance that has reported a strong business update for the December quarter, led by sharp growth in disbursements and also the loan book. Total disbursements have risen nearly 50% year-on-year, reflecting robust demand across retail segments. So this overall loan book also expanded over 20% compared to last year. Retail assets under management continue to outpace the broader growth, in reinforcing company's retail-focused strategy. So this update points to sustained momentum in lending activity through this quarter. Let's shift focus to IndusInd Bank that has reported a weak business update for the December quarter, with both advances and deposit declining on a year-on-year basis. Net advances have fallen over 13%, while the deposit growth has also remained under pressure. Brokerage Citi has maintained a sell rating on the stock, citing muted loan growth and also asset quality concerns. So while deposit outflows were relatively contained on a sequential basis, elevated slippages and also higher provisioning are expected to weigh on the profitability here. So core margins are seen remaining largely flat in the near term. Viewers, Supreme Court has ruled in favor of Adani Power, holding that no customs duty can be levied on electricity electricity sold from a special economic zone to the domestic tariff area. So the court has set aside a 2019 Gujarat High Court order and also declared that the duty levy illegal and unconstitutional. So as part of the ruling, customs authorities have been directed to refund about 500 crores to the Adani Power, and this refund must be processed within 8 weeks. So this verdict brings clarity on the tax treatment of power sales from the SEZs. And let's begin with a big regulatory relief from the Reserve Bank. The RBI has eased its norms on lending to related parties, allowing existing non-compliant exposures to continue till contractual maturity. So the key caveat is that there can be no enhancement, renewal, repricing or change in terms. The central bank has also excluded the equity investments in the related parties from the scope of these rules, though debt instruments will still be covered. So in another relief, select NBFCs, including those that don't access the public funds and also the core investment companies, have been exempted altogether. So this move brings clarity and also avoids sudden balance sheet stress while still tightening governance for the future transactions. And from regulatory easing at the central bank to a major shift in how Delhi manages its finances, the Delhi government has signed a landmark MOU with the Reserve Bank of India, allowing the RBI to act as its banker, debt manager, and financial agent. So this will enable Delhi to raise funds through state development loans, invest surplus cash automatically, and also access low-cost liquidity facilities, all within the framework of the RBI Act. Now, Chief Minister Rekha Gupta has called it a long overdue reform, saying that Delhi was earlier denied the benefits of structured RBI banking. The move is aimed at improving the fiscal discipline, transparency, and also professional cash management for the national capital. And staying with the government policy support, there's a relief now for India's deep tech startup ecosystem. Central government has removed the mandatory 3-year existence requirement for the deep tech startups to gain recognition under the Department of Scientific and Industrial Research's Industrial R&D Promotion Program. So this change, announced on the DSIR Foundation Day, allows early stage innovators to access support without waiting years. So Union Minister Jitendra Singh has said that the move aims to accelerate India's deep tech ecosystem and also provide early momentum to startups. Now, the exemption is expected to help the founders secure incentives and also scale faster. It also aligns with the broader efforts to boost the research, innovation, and technology commercialization in India. And from policy relief to a key legal development in one of India's biggest banking fraud cases, the Supreme Court has granted bail to former Amtech Group chairman Arvind Dham in a money laundering case linked to an alleged 27,000 crore bank fraud case. So the top court has set aside a Delhi High Court order that had earlier denied him bail, citing the gravity of the offence. The case stems from a 2022 CBI probe following complaints by the IDBI Bank and also Bank of Maharashtra alleging fraudulent loan defaults by the Amtech Group companies. So this ruling marks a significant turn in a case that has long been, under judicial scrutiny. And from food safety to public safety connectivity, gaps are now in focus on India's highways. So the National Highways Authority of India has reached out to the Department of Telecommunications and TRAI, seeking urgent intervention to improve the mobile connectivity across the national highways. So NHAI says that it has identified 424 critical locations spanning nearly 1,750 kilometers where mobile networks are either weak or unavailable. So these gaps are especially prominent on the greenfield and remote highway stretches, impacting emergency response and also digital services. The authority has flagged public safety concerns and also called for a coordinated effort to fix this issue quickly. And bank employees and officers in Chandigarh have took part in a protest demanding the immediate implementation of a 5-day work week for India's banking sector. The demonstration was organized by the United Forum of Bank Unions, which represents multiple bank unions across the country. Unions say that the demand was agreed with the Indian Banks Association during wage talks, but has not been implemented. And they argue that most of these institutions already work 5 days and there would be no loss of productivity if Saturdays were made holidays. And this agitation is, part of nationwide actions, and it also includes a planned strike on January 27 if the demand isn't met. And Uttarakhand High Court has ruled that in check bounce complaints, courts can now serve summons via WhatsApp and email in addition to the traditional methods like the postal delivery. Now, under the new Uttarakhand Electronic Process Rules 2025, complainants must provide digital contact details when filing cases. So the step is aimed at speeding up the proceedings in a system burdened by large numbers of pending check bounce matters, and the court also allowed online payment options to settle the dues quickly when summons are issued. So judges said that misuse of digital details could really attract penalties to ensure the authenticity. Now, this marks a shift towards digitization in judicial procedures as well. And India has rolled out a new e-production investment business visa aimed at Chinese nationals looking to engage in specific business activities here. So called the EB4 visa, it can be applied for entirely online without visiting the embassy or any agents. Now, according to an advisory on the Indian Embassy's website in Beijing, the visa will be issued in about 45 to 50 days, allowing a stay of up to 6 months. So the visa covers a wide range of activities from installation and commissioning of the equipment, quality checks, and also essential maintenance to production. It also, and the ERP ramp-ups as well, training and even supply chain development. Indian companies, inviting the Chinese professionals can apply through the DPIIT's national single window system, while the applicants can submit visa requests on the Indian Visa online portal. Now let's look at Delhi's air quality. That has remained in the poor category as shallow fog and cold condition persisted in the morning hours, affecting visibility and also the outdoor conditions. And according to the data, the city's air quality index continued to linger in the unhealthy levels, raising concerns for residents with respiratory issues. The Meteorological Department has also noted fog in early hours, which can trap pollutants near the ground and also slow dispersion. So while winds and sunlight may improve the readings later in the day, pollution levels are still above the safe thresholds. And authorities and health experts are advising limiting, prolonged exposure outdoors, especially for vulnerable groups. Now on to some somber news. Senior Congress leader and former Indian Olympic Association President Suresh Kalmadi has passed away in Pune after undergoing treatment. A former Indian Air Force pilot, Kalmadi went on to become one of India's most influential sports administrators for over 2 decades. He played a key role in bringing major international sporting events to India, including the Commonwealth Games. However, his legacy was also marked by controversy following corruption allegations linked to the 2010 Games. His last rites will be held today. And authorities have imposed a curfew in Birgunj, Nepal, and also sealed the India-Nepal border after unrest has erupted over a mosque vandalism incident. Now, the tension began in Sakhuwa Manar village of Dhanusha district in Nepal, where reports of vandalism and burning of holy scriptures sparked protest. Hindu groups later alleged derogatory remarks against their deities during demonstrations, further aggravating the situation. So many Indian migrant workers are returning home as shops and markets remain shut. Security forces have also stepped up patrolling at the Maitri Bridge and also other border points to prevent any sort of untoward incident. Now on to some more global news. Venezuela crisis redraws global fault lines. The Venezuela crisis has taken a dramatic turn after former President Nicolas Maduro and his wife have pleaded not guilty during their first U.S. court appearance following their capture. So back home, Vice President and Oil Minister Delcy Rodriguez has been sworn in as the interim president, facing the dual challenge of asserting control domestically while negotiating with the U.S. President Trump, even as American warships remain deployed in the Caribbean. Now, Trump has warned Rodriguez of severe consequences if she refuses to cooperate, remarks that, contrast sharply with earlier signals suggesting partnership. And Rodriguez has since called Maduro's capture a barbarity. The U.S. action has triggered global pushback. China has condemned the operation, while European allies, including Germany and the UK, are demanding clarity on its legal basis. In Washington, lawmakers remain sharply divided, underscoring the high stakes of America's bold move in Venezuela. An H-1B elimination bill introduced in Congress, a bill seeking to completely eliminate the H-1B visa program, has now been formally introduced in the U.S. Congress. The proposal goes far beyond tightening rules and also aims to scrap the program altogether by amending the Immigration and also Nationality Act. And at this stage, the bill has only been referred to House committees, including Judiciary and Ways and Means, with no hearings or votes, scheduled yet, placing it at a very early stage stage of the lawmaking process. So still its introduction signals that immigration remains a flashpoint issue, especially for the skilled foreign workers. With that, viewers, we wrap up Market Express. We'll keep tracking all the developments that could really set the tone for the next trading session. Thanks for watching. Stay tuned to NDTV Profit for more market updates.
To our next category, which happens to be Health Leader of the Year. And to give away the award, we'd like to invite back on stage Kiran Nadar, founder, Kiran Nadar Museum of Art.
Anurag Chauhan, Director, General Counsel and Company Secretary, Axis Max Life Insurance, which is one of India's leading life insurers with operations spanning over 2 decades.
The Health Leader of the Year award goes to Dr. Ashish and Kavita Sadab.
For decades, Punjab has been celebrated as the food basket of India, but today, the state is undergoing a transformative shift, emerging as a powerhouse of industrial innovation and opportunity. This is the story of Punjab's industrial resurgence. Under the visionary leadership of Chief Minister Bhagwant Singh Mann, Punjab is not just attracting investment, it's cultivating an ecosystem where industry can thrive. The focus is clear: ease of doing business, robust infrastructure and a skilled workforce.
ਇੰਡਸਟਰੀ ਲੱਗ ਜੂਗੀ, ਸਾਡੇ ਨੌਜਵਾਨ ਮੁੰਡੇ ਕੁੜੀਆਂ ਨੂੰ ਕੰਮ ਮਿਲ ਜੂਗਾ। ਇੰਡਸਟਰੀ ਤੋਂ ਹੀ ਅਸੀਂ ਸੁਝਾਅ ਲਏ ਨੇ ਸਾਰੇ, ਬਹੁਤ ਸਾਰੇ ਇੰਡਸਟਰੀਜ਼ ਬੈਠੇ ਨੇ। ਇੰਡਸਟਰੀ ਤੋਂ ਅਸੀਂ ਪੁੱਛਿਆ ਵੀ ਕੀ ਕਰੀਏ। ਸਰਕਾਰਾਂ ਤੰਗ ਕਰਨ ਵਾਸਤੇ ਜਾਂ ਸਰਕਾਰਾਂ ਕੋਈ ਮੁਸ਼ਕਲਾਂ ਪੈਦਾ ਕਰਨ ਵਾਸਤੇ ਨਹੀਂ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਹਮੇਸ਼ਾ ਸਹੂਲਤਾਂ ਦੇਣ ਵਾਸਤੇ ਔਰ ਲੋਕਾਂ ਦੀ ਤਰੱਕੀ, ਲੋਕਾਂ ਦਾ ਜੀਵਨ ਪੱਧਰ ਉੱਚਾ ਚੱਕਣ ਵਾਸਤੇ ਬਣਦੀਆਂ। ਸਰਕਾਰਾਂ ਦਾ ਕੰਮ ਹੀ ਇਹ ਹੁੰਦਾ, ਜਿਵੇਂ ਲੋਕ ਕਹਿਣ ਉਵੇਂ ਸਰਕਾਰਾਂ ਨੂੰ ਚੱਲਣਾ ਪੈਂਦਾ, ਔਰ ਚੱਲਣਾ ਚਾਹੀਦਾ ਵੀ, ਕਿਉਂਕਿ ਸਰਕਾਰਾਂ ਲੋਕਾਂ ਨੇ ਚੁਣੀਆਂ ਨੇ।
The government has streamlined processes, cutting red tape and ensuring faster clearances through its single window system. Key sectors like agro-processing, IT, pharmaceuticals and textiles are receiving unprecedented support. We are seeing a surge in startups and SMEs, many led by dynamic women entrepreneurs, diversifying Punjab's industrial base beyond traditional sectors. This is Punjab's promise. A land of enterprise, innovation and sustainable growth. The government is not just building industries, it's building a prosperous future for all. Come, be a part of Punjab's industrial success story.
Moving on now, our next category is Climate Impact of the Year.
To give away the award, we'd like to invite on stage
Ram Agarwal, Whole-Time Director and CEO, ProStar M, one of the leading companies engaged in the manufacturing and supply of power solution products in India.
And the winner is Manvendra Singh Shekhawat.
Well, our next category is Director of the Year, and to give away the award, we would like to invite Mr. Mayank Agarwal, CEO, Gallant Group. Gallant Group is a conglomerate with a diverse portfolio spanning steel and cement manufacturing.
The Director of the Year award goes to Neeraj Gewan.
Transformational Leader of the Year. And to give away the award, we would like to invite on stage
Pranav Adani,
Dr. Sanjeev Goenka, Jury Chair of Indian of the Year and Chairman, RP Sanjeev Goenka Group.
Transformational Leader of the Year goes to Jay Shah.
Foremost in public welfare, transformation of land and property registration. Punjab government has transformed the process related to registration of land and property in Punjab. The complete digitization of easy Jama Bandi and easy registry processes has significantly curbed red tape and corruption in the state. Online tools like Draft My Deed and Calculate My Fees has helped almost 40 lakh people avoid queues at the offices of Patwari, Sub-Registrar and Fard Kendra or Land Revenue Records.
ਜੇ ਸਾਰੀਆਂ ਸਰਕਾਰਾਂ ਨੂੰ ਹਟ ਕੇ ਕੰਮ ਹੋਇਆ ਜੋ ਈਜੀ ਰਜਿਸਟਰੀ ਹੋਈ ਆ ਇਹਨੂੰ ਹਰੇਕ ਬੰਦਾ ਬਹੁਤ ਹੀ ਸਖਾਲੇ ਢੰਗ ਨਾਲ ਸਮਝ ਰਿਹਾ ਹੈ ਇਹਨੂੰ ਯੂਜ਼ ਕਰ ਰਿਹਾ ਹੈ
The digitally certified Jama Bandi receipts have QR codes and digital signatures. Besides downloading them from the website or WhatsApp, these receipts can also be received from Seva Kendras or helpline number 1076. In cases of death, citizens can apply for mutation or registry in any sub-registrar's office in the district. Online tracking and time-bound resolution has been set up for every application. For instance, a time limit of 2 days has been fixed for registry and 30 days for mutation.
ऑनलाइन रजिस्ट्री आप भी लिख सकते हो गवर्नमेंट वालों लिखा हुआ एक ड्राफ्ट माई डीड एक आंदा उते क्लिक करके तो उते विच सीधा सौखा पंजाबी च करती रजिस्ट्री भी आ बेचण वाला है आ खरीदण वाला है इन्ने पैसे ਇਹਦਾ कलैक्टर रेट है इन्ना ते हुण ਇਹਦਾ मालक आ हो जाऊगा तुसीं आप सबमिट कर दो ਜਾਂ ਫਿਰ ਸੇਵਾ ਕੇਂਦਰ ਉੱਥੇ ਖੋਲਤੇ ਤੁਸੀਂ ਉੱਥੇ ਕਰਵਾ ਲਓ ਲਿਖ ਕੇ 1 ਮਿੰਟ ਚ ਆਨਲਾਈਨ ਹੋ ਜਾਊਗਾ
Punjab government foremost in public welfare.
To give away the first award of this evening, we would like to invite on stage
Sachin Seth, Chairman, CRIF Highmark Credit Bureau. Sachin brings nearly 3 decades of global experience in fintech, digital and tech.
Award goes to Ahan Pandey.
Hello, Moto.
Market extends decline on expiry day. Nifty ends above 26,100 while Sensex loses over 350 points. Trent and Reliance are the top losers on the Nifty. Sectoral indices finish mixed. Broader market indices outperform the benchmarks. Trent ends more than 9% lower after reporting weak growth in the third quarter on the back of aggressive store expansion and reduction in revenue per square feet sales. Supreme Court grants bail to Amtech Group Chairman Arvind Dham in a money laundering case arising from an alleged 27,000 crore rupee bank fraud, sets aside Delhi High Court's order from August 2025. IEX rises around 9% at close after the Electricity Tribunal resumed hearing in the market coupling case. APTEL observes that it was told the market coupling order was done only for some officers to make money. CERC's lawyer says it's ready to take instructions from APTEL. NVIDIA unveils a new AI logic tool for self-driving cars, Alpha-Meo. This technology gives autonomous vehicles something closer to human-style reasoning, announces that it has begun producing a driverless version of the Mercedes-Benz CLA powered by its own technology. Congresswoman Marjorie Greene introduces the bill to amend the Immigration and Nationality Act, aims to completely eliminate the H-1B visa program, allowing exemption for medical professionals such as doctors and nurses with a 10,000 per year cap on visas. Deposed Venezuelan President Nicolas Maduro and his wife plead not guilty in their first U.S. court appearance after capture. Opposition leader Maria Corina Machado dedicates the Nobel Peace Prize to President Trump, says Venezuelans want to share it with him. Unrest in Nepal after a mosque was vandalized after the communal tension flared up in Birgunj, India-Nepal border has been sealed. Hello and welcome. Good evening, viewers. This is Malika Mishra on NDTV Profit, and you're watching Profit 360, a show that gets you a 360-degree perspective on news when it comes to markets, national as well as international domains. Today, we focus on NVIDIA. At the world's biggest tech showcase, NVIDIA has dropped what it calls a ChatGPT moment for cars. The chip giant has unveiled Alpha Mayo, an open-source AI model designed to power self-driving vehicles, not just to see the road, but to think, reason, and explain its driving decisions. The technology is set to hit US roads later this year, starting with the Mercedes-Benz CLA. So this brings us to the big question. If cars can now think like humans, is India ready for self-driven vehicles? To help us find answers to questions like these and a lot more, we have Hormaz Sorabji, editor, Autocar India. Thank you so much, Mr. Sorabji, for joining us. Looking forward to this exciting conversation because we're talking about something that India hasn't experienced before. Let me set the stage by asking you first that NVIDIA is calling Alpha Mayo a ChatGPT moment for cars with reasoning and explainable AI that will debut in the Mercedes-Benz CLA later this year. How significant do you see this leap in autonomous driving tech compared to current systems?
Well, I think, the tech in autonomous driving has been driven by these very powerful chips, which, and GPUs or graphic processor units, which kind of can process information and images at lightning speed. And, they create a library of events and situations for the vehicle to react accordingly. So it's really the computing firepower that has made these cars almost human-like in the way they operate. But I still think, before we kind of expect that we can make our chauffeurs redundant or stop driving ourselves and sit at the back, I think there's still a lot of kind of, let's say, other hurdles that there are. A big one of them is legislation. I think that also needs to be worked out in the case of an accident. Whose fault is it if someone gets killed? We've seen Tesla been very successful with their FSD systems, which I think they've deployed very successfully in the US, but there have been some accidents. And I think in India, of course, the conditions are very unpredictable. So I think, the way this works is the algorithms. And, you have to kind of log every unique situation so that the computer or the brain of the car can pull up that situation and react to it accordingly. So I think it'll be a while before, self-driving cars come to India. In fact, a long while.
Okay, even if that's a long while and a long wait away, I'd like to understand in a hypothetical scenario, if today we were to get these self-driven cars and we're talking it in the context of the fact that we always thought AI would be software driven, and now we'll have a physical version of AI. Set aside robotics, but look at how AI is now helping us drive these cars autonomously. What infrastructure do you think at the moment India lacks, and what do you think India should do in order to welcome such a move?
Well, I think, firstly, just a couple of clarifications. AI is frankly just software. It is very, very powerful algorithms, and driven, as I said, by these very high performing chips, which only very few manufacturers design and even fewer make. So they're the very, very advanced microchips. In fact, they've become a real big geopolitical issue, as we know, even in NVIDIA's chips. So I think, it's really, let's say, the software which is driving this possible. The hardware is there. Basically, there are LiDARs and cameras and sensors and radars. But it's when you gather that information and process it, that really is the secret sauce of any autonomous vehicle. Now, I mean, theoretically, these things are not really dependent on infrastructure because they are just learning the road the way humans are. And even we are not so dependent on lane markings or proper lighting and things like that. So I think that's the beauty of AI, which it literally learns a situation irrespective of what the infrastructure is and responds accordingly. But as I said, you have to kind of develop or let's say build up this massive library of unique situations in India. If there's a person standing on the road, AI has to kind of figure out that that person is likely to jump across, which may not happen in other countries where they're much more disciplined. Or you'll suddenly see a scooter that will careen in your way. So that can also be an issue. Now, to your question, can AI work? Can these cars work? Actually, they can work, but you won't get anywhere in a hurry. They'll be so slow because they'll literally be stopping for any perceived danger that there is. So, I think that's the way they would be programmed, to have these safety and measures built in with huge margins. And that, in effect, would make, literally crawl from point A to point B.
Okay. All right. Thank you so much for getting us clarity on that point. So, open source models like Alpha Mayo could accelerate development by allowing more companies and researchers to build on them. How might this benefit or disrupt the Indian automotive industry? Could local players like, say, Tata, Mahindra or startups leverage it to leapfrog, or will it remain dominated by global giants?
No, I think I think open source is one way to democratize the technology, and we've seen that is happening. Everyone has a base platform that they have, and then they build on top of that their own kind of unique platforms. We've already seen that in ADAS 2, which we are having, and people are rolling that out quite successfully. I mean, don't forget a very basic form of autonomous driving, not autonomous at the ADAS level. We have ADAS 2. What you're talking about is level 5. We're at level 2 right now. So I think the principles are the same. It's just that, it's just the kind of reaction time, the kind of being able to understand the environment, especially at speed. I think that, again, as I said, is all about computing power and way the algorithm reads. So I think, it's really, frankly, a software game at the end of it, powered by very high performance chips.
So a software game powered by high performance chips. Thank you so much for bringing us so much clarity on this topic. Of course, many angles can be explored and spoken of, but at the moment, this is all the time I had with you. Thank you so much, sir, for giving us your time.
Thank you. Thank you.
And viewers, as Mr. Sorabji highlighted, one point remains to be catered to, and that is legislation. Legislation needs clarity in this case, because say if an accident happens, who is to blame? Can you really pull the strings on AI? Well, that question is for the future of technology to explore. But let's now check how the Indian markets fared today. The markets ended on a lower note. The Nifty closed below 26,200 mark, underperforming broader indices. Reliance Industries was the biggest drag on the Nifty, falling over 5% intraday. It was also its worst single-day drop since April 2025, losing more than 1 lakh crore in market cap. Trent was another top loser, plunging over 8% in a single day. Sectorally, indices were mixed, with Nifty oil and gas dropping over 1.5%. But for a detailed analysis on today's market action, let's go across to my colleague Varsha.
Well, yes, benchmark underperformed broader market indices. Nifty closes below 26,200 mark. Reliance Industries remains the top dragger, while Trent and Reliance, if you see, are top losers when it comes to Nifty. Trent falls over 8% in a day. Reliance falls over 5% intraday. Worst intraday falls since April 2025. Reliance loses over 1 lakh crore market cap in a day. Nifty mid-cap 150, if you see, falls for the second consecutive day. Cummins India and SJVN fall the most when it comes to Nifty mid-cap 150. IEX jump over 10% in last hour of trade. Next hearing date over market coupling cases on Jan 9th. All sectoral indices close on a mixed note. Nifty oil and gas falls over 1.5% for the day. MGL and Reliance Industries falls over 4%.
Thanks so much for that, Varsha. And as Varsha highlighted, Trent was under pressure, and Trent had a rough ride through the course of 2025, emerging as the worst performer on the Nifty 50 with a 41% drop and 44% slide since its inclusion in that index. Growth has been sluggish for 6 straight quarters for the company, and guidance remains muted. Add to this the fact that valuations also remain steep despite the correction. However, despite these red flags, viewers, analysts still see an upside in the stock. Therefore, is a Trent turnaround story possible, or is there more pain waiting ahead for this company? Let's get in my colleague Mahima for a deep analysis on the Trent story.
the rebase numbers, the growth appears to be around 15 odd %. Now, even in terms of the store additions that have happened this quarter, they've opened 17 new Westside stores and around 48 new Zudio stores. Westside store opening is strong. Zudio tracking is lower versus what it did in FY25. In terms of the average revenue per square feet, that is also still weak, and this is of course on account of how they are going very aggressive in terms of where store additions stand. In terms of where brokerages view stands, UBS maintains buy with a target price of 6,200. They're saying there's no respite from the weak growth trajectory, and Q3 weak at 17% and misses their estimates. Citi on the other side maintains sell with a target price of 4,350. They're saying Q3 updates higher store additions have driven the revenue beat. They remain cautious on trend given a still weak revenue per square feet trend, and see increasing competition impact of cannibalization and new store expansion in tier 2 and tier 3 city towns. Now the last one which is from Morgan Stanley, they've maintained overweight with a target price of 5,456. According to them, Q3 business update is in line with what their expectations were. They expect standalone EBITDA margin to decline around 97 basis points year on year at that 17.5% mark of Q3 versus that of 17.2% in Q2. So this is the overall view of how one needs to interpret Q3 business update for Trent.
Thank you so much for that, Mahima. And viewers, we also mentioned that Reliance was another stock, another loser in the Nifty 50, in fact. And that's because Reliance Industries has now issued a clarification with a media report claiming that 3 vessels laden with Russian oil are heading for Reliance Industries' Jamnagar refinery was incorrect. The company said its Jamnagar refinery has not received any Russian crude oil cargo in the past 3 weeks and is not expecting any deliveries in the month of January. RIL has said that there's no linkage between share move and news articles stating company's denial on receiving Russian oil in the very first place. It claimed that the news article was published despite the company's earlier denial on receiving Russian oil in January. News report was corrected stating that Russian oil cargo earlier linked to company discharges elsewhere. Another company that we want to bring your attention to is Dr. Lal Path Labs, as it has marked its foray into premium preventive healthcare with the launch of Sovaka, a high-end wellness center in Gurugram. Positioned as a shift from illness to wellness, Sovaka offers 360-degree preventive health checks with packages priced between 11,000 rupees and 35,000 rupees based on the number of tests. Speaking to my colleague Rishabh Bhatnagar, Executive Chairman Dr. Arvind Lal said the idea isn't about premiumization, but hyper-customization aimed at early detection and disease prevention. And this is what he had to say when asked about the rationale behind launching the store as well. Listen in.
The idea came from getting to move testing from illness into wellness. So it's not necessary that only when you are ill and you go into hospital that you start getting tested. The idea is to stay away from the hospital or keep most of the people. And the idea also originated from the #1 killer diseases which are, seen in India now. Mainly the NCDs, what full form is non-communicable diseases or lifestyle diseases or chronic diseases, which are led by diabetes. As you know, India is the diabetic capital of the world, and more than 10 to 12 crore of diabetics. An equal number is also in pre-diabetic shape. This is closely followed by hypertensive or high blood pressure, in which I think the number is nearly 19 to 20 crores. So if you see the segment of diabetes plus, high blood pressure, this tantamounts to nearly 40 crores. And this is closely followed by heart disease, closely followed by strokes.
Let's take a look at an important fundraise now. Adani Enterprises has successfully raised 1,000 crore rupees through a public issue of non-convertible debentures, also referred to as NCDs. The bond issue was fully subscribed in just 45 minutes after opening. The base amount of rupees 500 crore was snapped up in only 10 minutes, and with the green shoe option of another 500 crore, the total crossed 1,000 crore very quickly. Investors can get an effective yield of up to 8.9% per year. The issue, which opened today, closes on January 19th, and the allotment will be done on a first-come, first served basis. The bonds are in fact rated AA- with a stable outlook by ICRA and CARE Ratings. Note that they will be listed on both the BSE and the NSE, and this is Adani Prices' latest successful bond raise following a similar 1,000 crore issue in the month of July 2025, and that was, by the way, fully subscribed in just 3 hours on the first day, reflecting strong investor confidence in the company. Now, shares of Indian Energy Exchange moved higher today after the Appellate Tribunal for Electricity resumed hearings in the market coupling case. During the proceedings, the tribunal made strong observations critical of the CERC's market coupling order, which is being challenged by IEX, and that appears to have lent support to the stock. That said, IEX has now issued a clarification saying it is not aware of any undisclosed information, adding that the share price movement seems market-driven based on publicly available details of the Appellate hearing. The company also clarified that no order or direction has been passed by the tribunal that would have a material impact on the company. Let's get more details on what transpired in the court today by my colleague Danish Anand.
Today was another day of the hearing of the matter between IEX and CERC. Well, if you look at the overall matter first, the IEX is basically challenging the CERC's market coupling order, and it has clearly stated that they were the oldest power exchange in the country, and after a few years we saw 2 more power exchanges coming up, and they feel that the order by CERC is just to take IEX off the market leadership, and they want the other power exchanges to also gain certain market share. So this was all that was being challenged in the court. But there were certain interesting arguments that were made by the IEX lawyer. He said that this particular order passed by the CERC was based on a Grid India report, and that report was also made public. And they said that whatever was mentioned about the report, it was clearly stated that that report by Grid India was based on 29 months historical data, whereas when the final order came out, IEX alleged that the data was of only 4 months. So even the other data of the other months is missing. So technically, they cannot pass an order without giving the proper historical data. But later on, during the argument, the CEO, RC lawyers alleged that if IEX basically wants everything to be fair, they can go back to CERC and they can check that whether something can happen on the order or not, whether certain modifications can happen or not. So for that, they saw certain time from the court. And now the hearing is set to continue on Friday. And the bench has also indicated that just in case if CERC decides that they will be likely changing the market coupling order, or they will be tweaking it a bit, then there is a high possibility that on Friday itself, this matter can get through. But we'll have to wait till Friday, and we'll have to see that what the arguments will lead to.
Let's take a look at some news headlines from the Western Hemisphere. A bill calling for the complete scrapping of the H-1B visa program has been formally introduced in the US Congress, marking the strongest legislative move so far against the employment-based visa system. The proposal has been brought forward by Republican lawmaker Marjorie Taylor Greene of Georgia and seeks to amend the Immigration and Nationality Act to abolish the H-1B program altogether. Now, this goes well beyond earlier attempts that focused only on tightening eligibility norms or increasing application fees, signaling a far more hardline approach to the visa regime. Moving on, toppled Venezuelan President Nicolas Maduro pleaded not guilty to US drug trafficking charges, calling his capture a kidnapping, and insisted that he should remain Venezuela's legitimate leader. Appearing in a Manhattan court in prison garb and shackles, Maduro denied all charges, including narco-terrorism and cocaine importation conspiracy, amongst many other crimes. His wife, Celia Flores, also pleaded not guilty. The next hearing is set for March 17th. Outside, crowds of protesters clashed over the case. In Caracas, Vice President Delcy Rodriguez was sworn in as an interim president. A US intelligence report suggests she is the most viable figure to lead during the volatile transition. On to some news making headlines back home. Authorities have imposed a curfew in Burgunj, Nepal, and sealed the India-Nepal border after unrest erupted over a mosque vandalism incident. The tension began in Sakhua Manar village of Dhanusha district, where reports of vandalism and burning of holy scriptures sparked protests. Hindu groups later alleged derogatory remarks against their deities during demonstrations, further aggravating the situation. Many Indian migrant workers are returning home as shops and markets remain shut. Security forces have stepped up patrolling at Maitri Bridge and other border points to prevent any untoward incident. Bank employees and officers in Chandigarh took part in a protest demanding the immediate implementation of a 5-day work week for India's banking sector. The demonstration was organized by the United Forum of Bank Unions, which represents multiple bank unions across the country. Unions say the demand was agreed with the Indian Banks Association during wage talks but has not been implemented. They argue most institutions already work 5 days and there would be no loss of productivity if Saturdays were made holidays. The agitation is part of nationwide actions and includes a planned strike on January 27th if the demand is not met. And on that note, viewers, it's the end of this edition of Profit 360, but I do urge you to continue watching NDTV Profit. For all the news and updates, this is Malika Mishra. Thanks for watching.
Agarwal Packers and Movers Limited. Man with the cap. Not 300.
Transformational Leader of the Year. And to give away the award, we would like to invite on stage
Pranav Adani,
Dr. Sanjeev Goenka, Jury Chair of Indian of the Year and Chairman, RP Sanjeev Goenka Group.
Transformational Leader of the Year goes to Jay Shah.
Punjab government foremost in public welfare, transformation of education. Thanks to the Punjab government's new education policies, Punjab has made its way to the top bracket of the National Achievement Survey 2024 in the categories of class 3, 6 and 9. Free books and uniforms distributed to about 27 lakh students of government schools have led to a decline in the dropout rate as well as social discrimination.
हमारी जो बुक्स हैं वो भी हमें स्कूल के द्वारा ही प्रोवाइड की जाती हैं और हमारी यूनिफॉर्म वो भी हमें फ्री ऑफ कॉस्ट ही मिलती है और जो हमारा बस फी है वो भी गवर्नमेंट ही पे करती है।
केमिस्ट्री लैब है, बायो लैब है, फिजिक्स लैब है और कंप्यूटर लैब है, जिसकी वजह से हम प्रैक्टिकल करके देखते हैं, अच्छे से समझ भी आता है। इंफ्रास्ट्रक्चर बहुत ही अच्छा दिया है, बैठने के लिए पॉजिटिव एनर्जी मिलती है, पढ़ाई में जी लगता है, अच्छा लगता है पूरा। मैं पंजाब सरकार का बहुत बहुत धन्यवाद करता हूँ।
Regularization of contract teachers and transparent appointments to vacant posts have led to tremendous improvement in the educational environment of schools. More than 52,600 permanent posts of teachers and teaching staff have been filled in the past 3.5 years. 118 schools of eminence are paving the way for a bright future of talented students from underprivileged communities.
ਹੁਣ ਸਾਡੇ ਬੱਚੇ ਸਕੂਲਾਂ ਦੇ ਵਿੱਚੋਂ ਪੜ੍ਹਾਈਆਂ ਕਰਕੇ ਜੇਈ ਐਡਵਾਂਸ, ਜੇਈ ਮੇਨ, NET, ਫੌਜ ਦੇ ਵੱਡੇ ਵੱਡੇ ਐਗਜ਼ਾਮ ਪਾਸ ਕਰਕੇ ਸਾਡੇ ਸਰਕਾਰੀ ਸਕੂਲਾਂ ਵਿੱਚ ਜਵਾਕ ਟੌਪ ਕਰ ਰਹੇ ਨੇ। ਹੁਣ ਸਾਡਾ ਅਸੀਂ ਕੰਪੀਟੀਸ਼ਨ ਚ ਆਏ ਹਾਂ। 98.9, 99.4, 99.5, 99.6 ਹੁਣ ਸਾਡੇ ਬੱਚਿਆਂ ਦੇ ਇੰਨੇ ਨੰਬਰ ਆਉਂਦੇ ਆ।
Punjab government foremost in public welfare.
Moving on now, our next category is Climate Impact of the Year.
To give away the award, we'd like to invite on stage
Ram Agarwal, whole-time director and CEO, ProStar M, one of the leading companies engaged in the manufacturing and supply of power solution products in India.
And our winner is Manvendra Singh Shekhawat.
70-75 वर्ष के हम ये कोई कागज नहीं थे। अब जो है अपन साइट हुई अपन ले अपन धरो।
Sia Kali is not alone. In Uttar Pradesh, there are more than 1 crore people like her who have received a property card or Gharoni under the Prime Minister's Swamitva Yojana. Now there is no worry about illegal possession of property nor any fear of other disputes. Those who have received the property card are also eligible to get loans from banks.
हर भी महिला सदस्य को यह अधिकार दिया गया उसके नाम पे जमीन करनी है। अब उस भूमि के नाम पर वह कर्ज ले सकती है, व्यवसाय कर सकती है।
The Yogi Adityanath government started work on the Swamitva scheme in the year 2020. Under this scheme, 90,573 villages were identified for drone surveys. In normal cases, the Gharoni or property card is prepared after the survey and a meeting of the Gram Panchayat. While in cases of objections, the concerned officials resolve the issues.
Right, our next category is Actor of the Year Female, and to give away the award we would like to invite Dr. Payal Kanodia, Chairperson and Trustee, M3M Foundation, and business entrepreneur Manav Gangwani.
The Actor of the Year Female, I'm sure you all know, Janvi Kapoor.
Next category is Science Icon of the Year.
And to give away the award, we'd like to invite
Adya Ajay Singh, Vice Chairman, Darwin Platform Group of Companies.
Aishwarya Shinol, the Head of Marketing, Hindustan Pencils.
Awardee is G. Madhvi Lata.
Well, our next category is Director of the Year, and to give away the award, we would like to invite Mr. Mayank Agarwal, CEO, Gallant Group. Gallant Group is a conglomerate with a diverse portfolio spanning steel and cement manufacturing.
The Director of the Year award goes to Neeraj Gewan.
Hello, Moto.
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. Also, let's guess the company which will be coming today in KYC, and the first hint I would like to give you is it's one of the largest steel wire manufacturers in the country. Also, the second important hint which would be there, that would be that the company operates in the infra and the automotive segments and a lot of other segments as well, but these are the new areas which they are focusing as well. They recently came out with their quarterly sales number and they were at the highest levels in the third quarter. So we will be asking the management what led to this growth. And the stock, however, is on a punishing mode. It's down 20% in the last 6 months. Why that has happened? But keep guessing the company, and I would like to point out the company which we are in focus is Bansel Wires Industries. This is the company which we are talking about, the Bansel Wires, and this is what we will be looking after. But there are key questions. Why have we called this company? A lot of news flows are coming in, and likely their volume growth guidance, that's what I'll be interested, because they have posted some good numbers. Also going ahead, other important guidances which will be important will be the revenue and the EBITDA guidance which we'll be looking out for the company. And interestingly, the company shifting to its specialty product portfolio as well. So that's something which we'll be looking out as well. The margin and the revenue guidance ahead, we'll ask Pranav, where does the company actually go from these important levels, and also apart from this, the expansion and the capacity plans, that's very much important. Company is going through some specialty products which are there in that capacity additions which are happening. Also, apart from this, why we have called this company is that Sanand backward integration. What are the key timelines? Currently it has been scrapped, but will there be any other future outlook whether this integration will go up or not? That's what we'll be asking, and here it is. Pranav Bansal, the MD and CEO of the company, where we will be asking him a lot of questions. But apart from this, let's understand the details about the company. What's everything all about, and what are the key details you should know before you go ahead of this KYC segment. Okay, so the company itself, let's just put out the key numbers. It's the largest stainless steel wire manufacturer in India, and in terms of volumes also we see as it is a big player as well. The company is second largest steel wire manufacturer in India by volume, and looking at the installation, it's around 6.1218 million tons per annum installed capacity, and currently as per the Q2 numbers ending, 74% of capacity utilization has come in, and roughly 5,000 odd customers are also there. And also let's see how the industry breakup is there of the revenue mix as such, and this is the breakup coming in. It's kind of even Stevens. Automotive is on the higher side, that's around 22% coming in, followed by general engineering, infrastructure, consumer durables, and I think more industries are there. The smaller ones includes cable, agriculture, poultry as well. These are the other industry companies where there is kind of a support coming in, but a miscellaneous revenue mix is also in place. Apart from the revenue mix, let's go ahead and see what else is in store. Yeah, just show the other thing. Yes, see the revenue mix, largely the domestic one is 90 odd % coming in, and just a smaller number, that's around 10%, that's the revenue mix coming from the export markets. Also the business update was there, and stock was of course buzzing on that. The numbers year on year basis looks strong. Both of them are 30% odd momentum growth coming in. Sequential, however, on the lower side, but whenever you judge a company, there is lumpiness, so I have taken the year on year basis. The next phase of growth, this is very much important for the company. You should understand induction, hardened and tempered wires. We'll understand more from Pranav on this, why they are going into this segment, and this is the second one where the announcement and the capacity expansions are taking place. So this is something which we will be watching out for. But before we start, I would like to give you the rating parameters for the show. There are roughly 8 rating parameters where we judge a company. This also includes your income statement, your balance sheet, cash flows, the return ratios. These are one of the most important things which we take in focus. And now, of course, we see this is the important 4 parameters coming in. Apart from that, the remaining 4 parameters, they also include shareholders, street cred, analyst stake, and even outlook. Analyst stake is nothing but how much analysts are bullish on the stock, while street cred, to define, it's how the stock has moved, be it 1 month, 6 months, or even the last 5 years, to show you what the returns have come in. But the most important rating parameter is the outlook parameter. Also, apart from the outlook parameter, let's move into the first parameter, that is the income statement, and largely the history is just 2 years. That's why I've taken the 2 years CAGR numbers for this. Revenue and EBITDA, both of them, look at the numbers, what the growth has come in. 121% for revenue, and even for EBITDA, it's 100% growth. The H1 numbers also I'll get you in, but Q3 numbers were also rock solid, which I had mentioned earlier. Net profit has been significantly good as well. And Q2 numbers, look at it, revenue, that's up almost 12% sequentially on a year on year basis. These numbers are showing a good tick, but the profit, there has been some impact, and that is where my little bit of concern comes in. But net, the elevated margin levels is something what the company is coming across, and over the last 3 years they have maintained this band around that 7.3 to 7.5% margin band. So we'll ask Pranav, will this go and touch the 8%? So overall, for the income statement, I'll give a very, very strong thumbs up when it comes to Bansel Wires. Also, let's see the second parameter. This is also very much important, the balance sheet. And of course, the balance sheet itself, the company is going through a big capacity kind of a spending as well, and there might be some pressures also in the balance sheet. That's where I kind of have a neutral rating on this parameter. Largely we see the borrowings, they have remained somewhat similar, but from FY24 it has come down around 700 odd crore rupees to around 600 crore rupees. You expect this to be a bit elevated only. The reason is company is going through big capacity expansion plans, and at times there are pain in the balance sheet, and eventually the return ratios you will see will be very dismal because of what the construct is happening. There are cycles, when you understand the company. Cash bank balance, nothing much to be there, and so it's a neutral rating for the balance sheet. In the cash flows also, nothing very significant coming in, but a little bit of concern definitely comes in from the operations and the PAT as well. And so overall, we have seen, given that a neutral rating, the return ratios which are coming in, those ROC, ROE numbers, that's where my concern also comes in. And from FY24, it's gone down to 15 odd %, and the ROE numbers also that we see, that's also gone down. So now I would be giving this a strong thumbs down when it comes to the return ratios. Also, apart from the return ratios, the shareholding pattern, let's look at over here. That's around the promoters is stable around 78 odd %, and nothing much has changed for the FIs and DIs as well. But interestingly, the concern for this public, that's very low, and because of that, I think I would be giving this a thumbs down when it comes to the shareholding pattern. Also, apart from this, let's move on and show you something more. For the shareholding pattern segment, after that is a street cred. That's also something we'll look out for. And just pull out the street cred, how the stock price movement has happened, and that's where the concern starts coming in. Last 6 months, stock is down 20%. Also, let's see stocks, how it has performed. Last 1 year is down 29%. So after 2024 September, most of the small caps, mid caps have fallen, and this company is also not that different from them as well. And that's why 5 years. Of course, the listing history is less, so we have taken it around down 13 odd %. So this is the street cred also, and it's coming in with a kind of a thumbs down. But return potential is very much important, and around 5 analysts are tracking the stock. They have given a buy rating for it, and still from the current prices, a 44% return potential is expected. So that's why I've given a strong thumbs up when it comes to the overall analyst take on it. But outlook is something which everybody wants to talk about. Companies giving a lot of future related statements, and that is where a lot of our conversation will lie around, because future what lies for Bansel Wire is very much important. They're expecting a 30 to 40% volume growth in FY26, and also looking at the other growth parameters, they are reiterated the 20 to 25% long-term growth for the revenue and the EBITDA front as well. That's all we'll be talking about. And also looking at how the ROC numbers are panning out. They are looking at some good strength over there. If you could just show the other outlooks also, and that's where we'll show how the company is moving. EBITDA per ton, that's targeted to reach double digits within the next 3 to 4 years, and that's something to look out for. Around 600 crore positive cash flows expected in FY26 and 27. And also a 25% plus ROCE business is expected by FY27. So these are the important outlooks, for Bansel Wire. But to give it in perspective more, talking with the management, I'd like to give you a small hint about the management for Pranav. Pranav himself, he started entering the business at a very young age. The promoter I'm talking about, Pranav Bansal, he's the MD and CEO of this company. In the last 10 years, he has been associated with the company, and he started off as an operator of machines in the company. So that's a very interesting history, and he has focused only on the business as for my conversation with him. But this conversation goes more now. Now I'm joined in by Pranav Bansal. He's the MD and CEO at Bansel Wires. A warm welcome and a happy 2026 to you, Pranav. To start with, Q3 updates. They have been on a very strong, momentum which has come in. The volumes are coming at lifetime highs. My first question to you is the volume growth outlook, what you have given earlier. Will you reiterate that guidance, or with a very strong performance, can we have an upward movement of this guidance for volume growth?
Sure. Thank you for having me. So as far as volume is concerned, we started the year thinking that we would be able to do 30% additional volume. But after the first 2 quarters, we increased our guidance from 30 to 40%, because that's what we are now looking at. And it looks positive. As of now, demand is good. We have good capacities coming on stream every quarter. So as of now, I think I would like to stick with the 30 to 40% kind of a volume growth. Definitely, we will try to achieve the exact 40% number as well.
Pranav, that's an important update coming in. But Pranav, there's a concern also. Looking at the financials, the ROC, the ROE numbers, they are constantly under the pressure. And that's where my concern has also come in. And of course, you are expanding, and that's why we are seeing those numbers getting impacted. But when will these, ROC, ROE numbers, which are, down, when will they bottom out? Can you give us a period, next 1 year, 2 year, when will that happen?
Sure. So, in fact, as a company, if you look at our history, we've grown at 20-25%, but that has always been through debt. Now, in the first 2 quarters, we have taken a very strong target for ourselves, wherein we are now looking at a 25% ROC number that we want to achieve within FY27. And the journey for that has already started. This is the first time ever this year that we have generated cash. That too, in the first 2 quarters, we've generated about 150 crores of free cash already. Our target of 600 to 700 crores for these 2 years, I think we are on track to achieve this or to better that as well. And as and when we do that, our ROC, ROE numbers would anyways improve. ROE, of course, because we have just gotten an infusion of equity, we are not tracking that as much as the ROC numbers because that's the core business. And 25%, I think, is a reasonable target. We should be able to achieve it within 27. We have already been seeing upward movement on that trajectory now, quarter on quarter.
All right, Pranav, that concern is definitely ticked down. But apart from that, the company is moving to specialty products. And whenever there is a company moving to the specialty products, the margin profile also changes. So I have 2 questions to it. What are these specialty products? There are some expansions also which have taken place, the IHT and the steel cord. So give us the more details about this and how will the margin profile change once they start coming in?
Sure. So IHT is a new vertical that we've added only this year. These are very highly technical products and used for growing industries like for EVs, we've gotten IHT, and steel cord is one major product that is used in tires. And we are the only company in India manufacturing it now, the only Indian company today to manufacture it. So yes, these are high growth areas for us. As a company, we've grown at 20-25%, and in the future also we want to grow at 20-25%. That is where specialty will really add value for us. These products are products which take a longer approval process. So we are looking at maybe 1 to 3 years of approval, but we should start seeing numbers from specialty within the next year, definitely. And once you see those numbers, our margin profile will definitely increase. Our per ton EBITDA and the percentage of EBITDA both will start increasing.
We have spoken about the percentage growth, Pranav, but if we had to quantify that, don't give me an exact number, give me a range. Like right now, if your margin is at X for FY26, for FY27 or for FY28, what will be the margin change? And this will be a consolidated margin, if you could just give us that.
So, see, our business is structured in such a way that percentage of margin is always dependent on my raw material price. We have a cost plus model. So if there is an increase or decrease in my prices, the same is passed on to the customer. So we are essentially acting as a converter of products. My margins are intact. Therefore, percentage is not something we track. On a per ton basis, we are at about 6,000 to 7,000 rupee a ton. And our target for the future in the next 5 years maybe should be to reach double digit here. From 6 to 7, we would like to go to 10,000 plus kind of a margin in the future. But that being said, honestly, the way we want to look at it, we want to grow at 20-25% even on the absolute EBITDA front. That's the main target.
All right.
From 5% or 10% does not make a lot of difference as long as I'm able to get 20-25%.
Correct, Pranav. But since you spoke about a lot of raw materials which are there in your company, the key raw materials, what are those, and are these prices also elevated as how most of the global prices are elevated across most of the assets? Is it same for you? Is any pinch coming in?
Sure. So for me, I have only one raw material, and that is my majority of cost overall. That's steel. And for steel, we have a pass-through model. We are a largely B2B business, wherein any increase and decrease there is in my raw material price is passed on to the customer with maybe a lag of 1 month, or in most of the products the very same day. Therefore, if there is an increase in raw material or decrease, my business is not really impacted much.
All right. So there is a pass-through models. A lot of our viewers at KYC had written about how this business model of the company is working, and a lot of queries came on your customers. One of our viewers stated that 5,000 plus customers are there, and it's very difficult to track which are whose. But if you have a big customer, what does the customer profile actually looks like? These are all Fortune 500 companies, or these are basically your, Indian companies, which are, the top 500 companies by market cap. What are these companies, and if any big addition has happened over the last 3 odd months?
Sure. So we are very well diversified when it comes to our customer base. We are servicing today customers from different industries, whether it is power and cable, automotive, consumer durable, general engineering, infrastructure. So we have customers all across. And one good thing here as well is that we have no customer centricity. So there is no customer that accounts for more than 5% of my sale. Therefore, that gives me a lot of power when dealing with a customer. I'm able to get the right price for the kind of service that we provide and the quality that we provide. Customers here would range from maybe a company buying 500 kgs a month to 1,000 tons a month. So that's maybe a 1 lakh kind of a 1 lakh product a month to about 20 crores a month. Those are the customers that we have.
And Pranav, the debt levels are elevated, and of course, company is going through important transformation as well. But will you be taking some more debt in FY27, or that's it? Some debt reduction will start now.
Hello.
Yeah, Pranav, you can hear me? Yeah, Pranav, I wanted to know about the debt reduction strategy for the company. It's still at elevated levels.
So as far as debt is concerned, as I said, till now we have grown through debt. This is how the 20-25% has come in. But from here on, our focus is completely shifted to cash flows. Therefore, now we want to make enough cash flows to reinvest in the business and keep growing at the same pace. To grow at 20-25% every year, we need about 150 to 200 crores that we need to invest every year. And more than that should be our free cash coming in. So in this year and next year, if we are able to generate upward of 600 crores, I think that should be enough to fund all our expansion. Therefore, we are looking at, in fact, a debt reduction going forward, even after growing at this pace from next year.
Yeah, and Pranav, one more query is there. Like what happens to your core business? Of course, stainless steel wire manufacturing is definitely there. You're going to value added. What's the ratio looking like, current profile, value added and your normal products? And maybe in the 2 years down the line, what will be the revenue profile if you just have value added and your normal business?
Sure. So today we have 3 main verticals that we operate in. Stainless steel is one of them. Stainless steel, high carbon and low carbon products. So high carbon is a product majorly for automotive. Stainless steel is more consumer durable side of things. And low carbon is more agriculture and cable related, power and cable segment related. Now the 4th vertical is specialty wire, which will start next year. And if everything goes well, this has a potential to contribute a large chunk of my EBITDA and my revenue going forward. If a very aggressive or a very optimistic figure is that I would want to want specialty wire to contribute maybe 30-40% of my total business in the next 5 years. And I think if our approvals are, if we get approvals from our customers timely, I think we should be able to achieve that.
All right, so 40% revenue target is coming in for the specialty wire segment. That's what Pranav has stated. But for our viewers, I want to revise the KYC ratings which I had done earlier. I had given 8 parameters where I had judged the company, and largely I would like to say the income statement has been very strong. Balance sheet, cash flow largely neutral, but the concern for the street is return ratios, and maybe that's why the street cred also is under pain, because largely we saw a big sell-off in the last 6 months in the stock. Stock is down 20-odd%. Shareholding neutral, but analyst is still bullish, all 5 of them, and the outlook, that's where the strength lies. So total KYC rating of this entire company comes out at 4.5 out of 8. But yes, the outlook is bullish. The management has also given a bullish outlook going ahead, but it will take time. 2 years, 3 years for important capacities to come, the change in the product profile also. But just to end our conversation, Pranav, I would like to get you back in to this conversation. And Bansel Wire Industries, we spoke about the entire specialty segment, the commodity segment or the core business which was there. But the Sananand integration, the company has actually put the plans off. That's what is there, if I'm not wrong. But will you try to regain this integration? Because whenever an integration project is there, that also helps the margin profile, or too many things at once for the company?
Sure. I think as of now, this was a very good decision that we took to hold off on that backward integration. That is really helping us focus on our core business, and in fact, I think that is the main reason why we've been able to increase our guidance and being able to perform better than our expectation. And without backward integration, I think our focus is now more on cash flow and return ratios. So first, I think our target would be for the first 2 years is to get 25% plus ROC. Once we achieve that, then we will start discussion of that.
All right. So there are 3-4 odd things, in this industry. But Pranav, this is a query for some young folks who always ask in KYC that if they want to start and come in your area of business, like you are also yourself a college dropout and you choose your passion. If somebody wants to chase their passion, what they do in your industry, in short?
Just work hard. That's all.
All right. It's very simple, 2 words, work hard, but it makes a lot of sense. Thanks a lot, Pranav, for your views on that, and the management showing their candor for the company and the growth outlook going ahead. Of course, the stock has taken a punishment. The stock is down 20% in the last 6 months, and the street might be taking the stress of the lower return ratios coming in as companies are